up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hola.
Oh my God, you guys. Okay, so I'm going to use my 30 seconds of allotted time
that
I get about a week. Yesterday, you started off about some brain shit your car. Ain't nobody care about that. Listen to me, okay? Last night, 12:12 a.m., Dr. Taylor Allison Swift gave birth to a new album. It's called The Life of a Showgirl. The internet broke yesterday when the Kelsey Brothers podcast posted a silhouetted photo saying that we're going to have a special guest on tomorrow's show, and it had an orange glittery background. Swifties were like, oh my God, we clocked it. Taylor Nation, Taylor Swift's official marketing, 12 minutes later, because this is her 12th album, then posted See You Next Era with 12 photos of Taylor in orange. And then last night at around 9 p.m., we got the update that there would be an announcement at 12:12 a.m. And that announcement is we're getting a brand new album. Taylor Swift, for the first time, will be on the New Heights podcast tomorrow. Get long Google here, get long Spotify, get long UMG. I am not kidding. UMG and their corporate results were like, look, our quarter was bad. Our year, UMG, Universal Music Group. They're like, our numbers are bad because Taylor Swift, because Taylor Swift didn't have an album. I have a clip for you here. Beth, roll it.
So I wanted to show you something.
Okay, what do we got?
We got,
A briefcase.
Yep.
Mint green with TS on it.
Yep.
What's in it?
This is my brand new album, The Life of a Showgirl.
And to be next to Travis, who on that same podcast just expressed his wish to give her a bracelet and to have a man so supportive of her by her side. Oh my God.
I've never been happier to have a 15-year-old that listens to rap.
They say the album colors are orange and mint green to reflect the oxidative process of copper. So when you're a shiny new thing, right, when you're like a copper, right, like a showgirl, and then the degradation that women have to go through because of the brutality and the misogyny of being a pop star, I am locked in for all of it. It is going to be a glitter pen album. Max Martin, Shellback doing the production. You can... Oh my God, I'm so excited. If you'd like
I peed on a copper door that was the front door of my nightclub that was copper to oxidize it in 1986. I did all this.
I am so excited. I am levitating. This is Taylor Swift's economy.
Did she get a nose job?
We are just living in it.
No, she got a boob job. Her nose looks big. It looks smaller.
Okay. And again, just talking about the misogyny. Just literally proving points left and right. So the New Heights podcast will be tomorrow at 7 p.m. Eastern time. You can watch it. So her announcement, just the social teasers, 100 million views already on social media. So people give an F.
I've seen it.
Yeah.
Could hit your feed.
Yeah, hit my
your feed. That hits your algorithm. That's what you like to look at. I haven't seen it.
It's very hard for all the corporate Swifties right now because we are trying to like act normal in our jobs, but we can't be. I have Tay-Zoomies. Do you have any questions?
I really don't.
I'm questioning my.
I already bought it, and I already bought it. I already pre-ordered it. We think maybe it'll come out October 3rd. Because she's been dropping hints and Easter eggs, but definitely an October release. So I'm super excited.
Will you put that album the album cover next to the picture, signed picture of
the album's actually gonna go where all my other Taylor albums are, because I need space like where I have my albums. But I do have the picture hanging up in my office, and it's framed. It's very nice from you. So
too funny.
Yeah, I'm probably not gonna get the album.
So this is gonna be a great day for you.
I am so excited. I'm levitating. Me and all the other office Swifties are going to have a
Who is another office Swiftie?
Casey in HR. Casey is a Swiftie. So
don't out them.
I was looking for her yesterday. And Brittany's a Swiftie. So I'm here for it. Let's go.
Beth, are you a Swiftie?
She appreciates Taylor. Her daughters are Swiftie. Her little daughter Cam is a Swiftie.
Little poser, but yeah.
Well, she can't stay up past 8 o'clock, so it's hard for her to be.
But look, so now all I have to do is I just need to get independently wealthy so I can afford tickets to her new tour.
Didn't you go see her?
I did, but I had to leave the country. I literally had to fly to Germany to go see her. So, but I'd do it again. So
Very nice.
I'm so excited.
Well, it was cheaper for you to fly to Germany.
It was cheaper. I used points in my miles because they have caps on what resellers can
I
charge.
wonder what she would charge to do a birthday party.
You can't afford her.
Yeah, if you have to ask, you can't afford her.
But she's the only major artist. She turned off dynamic pricing for the Eras tour. So Beyonce, and I love Beyonce. This is not shade to Beyonce, but Beyonce had dynamic pricing engaged, and so you saw huge variations and fluctuations. But Taylor did not even use. So she could have gotten more money from her tour, and she paid out $197 million in bonuses to the tour crew and her dancers on top of their salaries. In terms, and also giving to food banks to every city that she visited.
Nobody's been shamed in the making of this.
She
should be a guest on the show.
She's always been generous.
Yes. She's a good billionaire. So
yeah, she's a good.
Look, if you're gonna be in a cult, at least be in a good cult. So that's how I feel about it.
Person.
But if you have kids in your life who care about Taylor Swift, this is the news that they care about. So now you're cool. You can't tell me nothing
Just like
today.
that's odd enough. You too can be cool.
Yeah, you can't tell me nothing today. I am sat. I am ready for the merch. I'm ready for the titles. I'm ready for the artwork. I'm ready for the interview. I'm ready for the love lyrics. I'm ready to be called single in 10 different languages. I'm ready for it all. Eat it up. Okay, how was your evening?
It wasn't that exciting.
What'd you do? You skedaddled out of here early.
Because I had a meeting.
Oh, who was your meeting with?
Very important people.
Big brain energy?
Big brain energy. No, we were working late last night. It was a late night, and then it was hot out.
It's 94% humidity this morning.
Is it really?
Did you get woken up by the thunderstorms?
No.
No, because you're deaf. But it was good. In the later years of my Chihuahua's life, she was deaf, and it was so good because she wouldn't bark at every little thing. So I like that for you.
The one benefit of my dog getting her 3 teeth pulled out, she doesn't bark anymore. She just goes, eek.
Aww.
It's the greatest thing to ever happen. It's awesome.
Did her nosebleed stop, though?
Yeah.
Oh, that's good. Oh, good.
Yeah, no, she looks great.
That's good. Yeah,
Running around like a little
$6,000
girl.
later.
Yeah, great.
Yeah.
She just can't bark.
Aww.
Been awesome. Yeah.
So you didn't do anything last night? Seriously, at all?
No, because I didn't get home till like 7 o'clock last night, and and at that point I was tired.
You were tie-tie?
Yeah.
Yeah.
I was tired. It was a long day. It was hot out, so I had stuff to do. So.
Yeah. All right. That's okay. Queens need their rest.
Yeah.
You need your beauty rest too, because you are behind.
Tonight. I got to go out Thursday night. I got to go out Friday night. I got to go out Saturday night.
Oh, no.
I know.
Oh, no.
And Friday afternoon, to lunch with all the people.
I mean, I don't know what I'm doing yet, but I've got like.
Oh, yeah. Are you taking me out to lunch on Friday? Are we going out to lunch on
He
Friday?
needs a cat wrangler, so you're on.
Wow. Okay. Cool.
Sure.
Are we getting margs? Are we getting margs and apps in Pilsen?
Probably Chinese food or something like that.
Margs in that. What is that?
Margs,
Margarita.
margaritas, and apps.
Oh, margaritas and
Come
apps.
on, you don't understand the
Margs
language?
and apps? I didn't know what you're talking about.
Margs and apps. Yeah, like all
You're
the
having
girlies
5
do.
Rabanitos today, so you don't want to go there tomorrow.
No, Friday.
Friday.
Yeah.
Nah, I think maybe China.
I could eat tacos every day. That's just north of there, or south of there, 22nd Street. So Pilsen is at 18th, and then Cermak 22nd is Chinatown.
Right.
So just south of there. Yeah, I live right there.
Yeah, I've got to get some good recommendations.
For Chinatown, talk to Jason.
We had this conversation before you came in. He says Jason's not qualified for many reasons. I don't want to repeat them all.
Chinese experts.
Who?
Jajun.
Oh,
He
how
doesn't
is
look at
Jajun? How is Jajun?
He's good. But he doesn't eat
Yeah,
out.
he's not from here.
Yeah.
Yeah.
I need like a.
I think Jason is your best bet. You called in Jason to make me look silly. Why don't we call in Jason to make you look
I
silly?
might need some recommendations. I gotta go deep into my.
You're like, I need to go deep to my Asian connection, Mike Butler. I was like, no, that's...
He is a good Asian connection. He is.
He's a good, yeah, I know. But it's just funny that either Jason Chow or Mike Butler.
Those are 2 possible. I got a few others.
Or Kai Zhang.
Kai is in Europe right now.
Oh, that's right. On his Italian summer.
Whirlwind Italian vacation.
That's great. Good for Kai.
Yeah.
Yeah.
That's fun.
Right now, he's taking pictures of the Duomo in Milan.
Domo.
Sending you something?
No, just kidding.
Is he going to bring you back your shoes from Dylan?
No.
Oh, I mean, he's right there.
No.
He should pick them up for you.
He should. Yeah, you save
He really
on the,
should. I mean,
you save
I know
on
he's
the
watching.
shipping there.
Save on the shipping. Like, had Dylan bring him back.
Tariffs. I don't know. Because you get hit with that import duty and duties.
Import-export tax.
Yeah, that import-export tax.
I'm an
the duties.
import-exporter.
I'm importer-exporter. All right, how about you, Bat? What'd you get up to last night?
Heavy rains last night.
Was it bad on the north side?
Yeah. Tree coming down on Saturday, so out there monitoring, moving my car.
Monitoring.
Make sure no more limbs fall on. Limbs, you said limbs. The thing had to weigh 800 pounds.
Oh no, that's the dad thing to do. When the tree fell in my parents' yard, I would get the horizontal filming from my dad. He's just standing in the yard, and I'm like, and I'm like, Dad, there's like 20 minutes of this footage. He's like, I know, it's great.
So I was on Tree Watch last night. That's
Tree Watch.
Yeah.
Tree Watch.
Tree Watch.
And
Tree Watch 25.
The funny thing about Tree Watch to me is, what does one do when they're
One
watching?
moves their car is what one does.
So you're
Tree Watch really just made me move my car. I saw the
Tree Watch means you moved your car to the street.
move my car to the street. That's correct.
Okay.
That's,
Nice.
that's
Did any other
Are you
trees
allowed
come
to
down?
park on the street?
No.
Are you allowed to park on the street overnight?
Yes.
Oh,
Yes.
okay.
Not in the wintertime, but in the spring, summer, fall,
Yeah.
you can. Snow, you can't. Snow, you can't.
All
I
right,
get on
there you go.
So that was my.
Is Vinny locked in with his drip
Thursday school.
for his drip for school? That's for his outfit, for his fit, for his first day. Because that was a big deal to me. Like that first day outfit sets the tone for fashion for the season.
They're casual chic kind of thing. You know?
Yeah,
It's kind
teenage
of like
boys just look like they rolled out of bed.
Yeah. Some sort of a flip-floppy kind of slide or something like that.
Yeah.
With white sneakers and.
I'm surprised they're not Gucci. I'm surprised he doesn't have the Gucci slides.
Yeah. He would probably like that.
Yeah.
Probably like that, but he doesn't have those. So that's probably what he's going to go with. I don't know about that. But he was up late again last night. I'm trying to explain to him that 6:30 in the morning comes real early.
Yeah, he's got to get on that site.
Thursday.
Yeah, well, he's going to find that out the hard way. And then you're
He was-
going to get a note from his teacher that he fell asleep in class.
Well, they got a soft schedule Thursday, Friday, so it's really just walking around to your classes and stuff.
Sure.
Like that. And then Monday.
and that's why China dominates.
That's correct. That's correct. Handedly, by the way.
Right? Yeah.
Yeah.
Because we're soft here. Anyway.
But he is the first
Those
Batiste
Chinese
to be an
kids are
honor
solving
English.
Rubik cubes in 13 seconds.
Have you not seen those videos where they're like 5-year-olds and they're like dribbling ball like in sync? or
All of them,
whatever?
the whole class.
Right, yeah, the whole class.
is doing it.
Right,
It's not
yeah.
like one prodigy.
Yeah, no, yeah.
They're
It's
lo-
legit.
They're light years ahead of us.
They are locked in for real, for real.
Yeah. Light years ahead of us.
Do you know in China they turn like the internet off like when it's time to study? Like the whole
Yeah, they
country.
should.
Yeah, they just turn it off. So like all you can do is study
If
because
you're not going to school.
why? Well, it's China. You have to be in school.
Right,
If
they
you're
kill
50.
you.
Oh yeah. Well then I don't know.
Oh, okay.
It's China, man. Hey, we got a great show for you today on this terrific Tuesday here on TC Live at the top of the 8 o'clock hour. We have an options jive, reducing cost basis, the trader's edge.
Ba-da-da-da.
What does that mean?
Reducing cost basis.
Yeah.
That means like you can either sell a put against a short position or sell a call against a long position to potentially reduce your basis.
Okay.
It's called improving your basis.
Okay. All right. There you go. That's going to be the options jive at 8 o'clock. Then 8:40. Let me explain. We got Chris Vecchio in the house. What are you talking about with Chris?
Well, we're gonna have a lot to break down today.
About Taylor Swift. Her whole
It's going to be like this for the
discography.
next half an hour.
When you're off the show, our Taylor Swift conversations will be done. But
Never say never.
sure, I like Taylor Swift.
Yeah.
I know you do.
Josh, also a Swiftie, so willing
Yeah.
to go with you
I mean-
to the show.
Yeah, I like her.
No, what are you talking about with Chris today?
With
What's
Chris-
one Taylor Swift song name?
I don't know.
Great.
I could tell if I listened to him.
Sure. So could I, but I don't know one of their names. I don't consider myself a Swiftie.
But I watched the video a bunch of times when she came on stage with that, that guy.
At Tight End University,
It's like,
yes.
hey, that's the dumbest name for a bar ever.
No. It's not the name of the bar. It was the program with George Kittle
I saw
and
that, yeah.
and Travis Kelce and a
Yeah.
bunch of the other tight ends. So that's not the name of the bar.
Oh, okay.
Okay.
Yeah, it was a stupid name, but that was a great scene.
Yeah, tight ends and friends. That was
Yeah.
good. It's a good time. I like how our algorithm's the same. But you still don't know what you're talking about with Chris today. You're going to get CPI today. That's what you're going to talk
We're
about.
going to be talking about what the market does this morning. And
Yeah.
right now, S&Ps are basically unchanged. Bonds,
They're waiting for CPI.
I understand.
Okay.
And
Bonds down 10.
Bonds are down 10. They just sold off, but S&Ps have been pretty much up a little bit last night, down a little bit last night, but pretty much
Really
unchanged.
tight range.
Unchanged.
20 handles.
9 a.m. for market measures. Expected move bias. How far prices go? Who wrote this?
One of our math.
That sounds like Tracy's toddler. How far prices go?
And then you go like this.
Yeah. How far prices go, mama? What? Tracy has cute kids. But what I don't understand. This is just bad grammar. I don't know what. How far can prices go? How far will prices go?
No, how far prices go.
How far prices go?
It's a good segment, Tom.
Well, why is there a question mark then? I don't know. It's just
Yeah, don't try
breaking
to-
my brain. It's
Yeah.
fine. I'm going to leave it alone. That's going to be 9 o'clock. And then Scott Sheridan, surprise return yesterday. He's like, why is everyone surprised that I'm here? His triumphant return yesterday from his whirlwind trip to New York City. Scott has the best stories. But Scott's going to be in today,
That's
blessedly.
the best stories. He talked about a piece of French toast that he had that was fried, not grilled.
It was great. It was a great story.
He did.
I was locked in.
He did.
That was
like
his
it was
big
revolutionary. Like they've been doing that in Greek
Oh my
diners
God.
in Brooklyn.
I was riveted.
60 years.
I was riveted.
His
Maybe
biggest
100.
story. His biggest story was he had a good piece of French toast.
Yeah.
Okay, what's
They've
your
been doing that with
biggest story?
challah bread forever.
I mean, that's
By
his
the way,
biggest
is one of the
story.
best
You
French
think that's a
toasts.
good story?
What's your biggest story when you had to eat gristle the one time after spooning
I got
jewels?
this. I have
Good story though.
It is a good story.
That was a good story.
Yeah, but after a night of
mean,
spooning jewels.
I mean, but Scott's great story was a piece of French toast.
Okay, all right, Bitter Betty. Scott's going to be on at 9:30. And then, hey, 10 a.m. today, live from the SIBO, Liz and Jenny. It's always electric when the ladies are live from the floor. So tune in for that at 10 a.m. So that is a run of show for today.
Traders do it on the floor.
Do you want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading
In
story.
today's
Breaking
headlines.
news. Coming across the wire. Leading story. Top story. Jump in.
In today's headlines.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's August the 12th. This is a part of the show that's called The Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news?
Any earnings today, Mr. Bat?
No.
Okay, great.
No, sorry.
Yeah, it's fine. I know they're winding down, so it's kind of just
They are.
hit or miss. Pick them. July CPI report due out in a scant few minutes is expected to show inflation accelerated amid tariff pressures. According to Bloomberg data, headline CPI is expected to have increased 2.8% year over year, up from 2.7 in June. What are you anticipating is going to happen, and what do you want to happen to make certain trades more palatable for you?
I think what Tom is really looking at is the Bitcoin Greystone Doji. I think that's what he's looking at.
I'll get into that. I got a ton of crypto stories today, but
What I'm looking for today is the perfect world for me would be stocks lower, bonds higher.
okay.
So prepare for the opposite, ladies.
Prepare for the opposite. Right now, bonds are lower, stocks are unchanged, but that would be the perfect scenario.
Okay.
I'll take one of the two,
Okay.
For
but
100, please.
I would prefer to have stocks lower. That would be the bonds. My position's pretty small.
Sure.
My position's a decent size.
Well, Wall Street's biggest bear is expecting a 14% stock market pullback before the end of the year. Investors are whistling past the graveyard, according to a Stifel equity strategy team. Do you agree with this sentiment, and how would you forecast us as we head into the end of the year?
Who is Wall Street's biggest bear? Did they at least name who it is?
Barry Bannister and Thomas Carroll.
Who is Barry Bannister?
I don't know.
And
They work
Thomas
for Stifle. It doesn't matter. That's not
Where are
that-
they from? And what?
Stifle. I told you where they
So
were
they're
from.
they're self.
I've already lost my voice. I can't yell at you anymore.
So they're self-proclaimed. Like, it's such a stupid headline.
I don't want you to get wrapped up in that. What's your forecast for as we head down into the end of the year? It's like, let the headline go. It's never been about the headline.
I think we're going to close the year lower.
By how much? 5, 10,
Right now,
15?
I'm going to say right around 5,900 to 6,000, which would be about maybe 8% lower.
See, now this is interesting. So aren't you sad you threw a little mantrum before we got into this?
I didn't throw.
Well,
a
he's
mantra-
saying 15, almost 14%. You said 15. What? 14%.
I mean, 14% is a pretty big move.
450
No,
point
14%.
expected move for the E-mini S&P.
Right, and these guys are saying double that.
Right. You know, E-mini S&Ps are 6,400.
Yeah, they're saying
so
double it. They're saying 14% of that is almost 1,000 points.
Yeah. Yeah.
What do you say? What do you feel, Bat? I know no one knows, but
Nobody knows. It looks like volatility is anemic here. It continues to go lower. I'm saying sideways. I believe my number for the year is going to be spot on.
oh, okay. Look at you.
You can look at that.
We'll check that out. Have to run that back.
Yep.
Hey, well, some good news. The United States and China yesterday extended a tariff truce for another 90 days. Hooray! Staving off triple-digit duties on Chinese goods. The rate will remain at 30% as U.S. retailers get ready to ramp up inventories ahead of the critical end-of-year sort of holiday eleganza. So we're kicking the can down the road another 90 days. What say you?
Nothing.
Are you doing anything in Chinese, like FXI or
We're not.
Baba, Baidu, PDD?
No.
You're pretty light in there, Saz.
Pretty light. And yesterday, all the Chinese stocks.
Why don't you want to play with China anymore?
They've been going sideways.
They've been doing nothing. Unless yesterday, all the Chinese stocks were actually down. I mean, this news really didn't move the market at all.
Okay. What about for the dollar itself, like currencies?
Dead today. So, I mean, they're always going to be dead prior to a number.
Okay.
We have, let's see, the dollar's up small this morning.
Euros
but it's
unchanged.
Yeah. It's
Yeah.
Pound is up. Euro's down. They're all basically.
Yeah, it's nothing this morning. They'll wait till the CPI number comes out.
Okay.
The yen is down small.
Well, I told you the world's strongest economic indicator is Taylor Swift, so.
Sure. Is that a good indication that she came out with the album for the
No, it's
market?
good because Swifties are flush with cash, and we run this
Saving
economy.
their babysitting money?
Yeah.
Okay.
Hey, I want to talk about the softs. Grains are on the move to start the week. Corn, soybeans, wheat. I just put up a corn headline, but all the grains were kind of moving yesterday.
They moved a little higher. Soybeans moved higher yesterday, but they're down.
Soybeans the only one that really moved higher.
And they're
all
down
down today. I mean, soybeans down 1%.
Well, I'm trying something new here. It's
I hear
something.
you. I hear
it's
you.
something. Let's talk about the softs.
Yeah, they're a little softer this morning.
Yep.
Okay.
Yep. Doesn't make them bad.
Do you have a particular standout right now between corn?
IV
soy,
ranks
and
are okay
wheat?
in there, by the
I
way.
have positions on in every one of them.
Okay. All right. Good.
Corn, wheat, and soybeans. We're short premium across the board. It's like pulling teeth. We're trying to make a few shekels here and there.
Yeah.
But so far, it's been really slow going.
You are talking about products that have a 15 to 17%
understand.
monthly implied volatility. Usually have single digit implied
I
volatility.
roll them
So there is
month by month
volatility
and
there.
try to eke out a few pennies.
Oil gains a little bit last night as U.S.-China tariff pause extension boost trade hopes. Brent crude futures gained around 26 cents last night. Let's talk about
I mean, you're
oil.
reaching for straws here. I mean,
Yeah, they're down 50 this
they're
morning.
down
so
50 this morning.
they
Oil's
gave it
gone
up.
from $70 to $70 to under $64 in
Oh, no.
2 weeks or so. So oil's mid-range. I mean, if you want to say
Mid-range.
anything for the whole year,
Mid-range.
very low end for the last 2 months.
What about natural gas?
On its butt.
Okay.
Nat gas, thank you. It's been a warm pool summer this year, Sadhna. Sorry you've missed most of it. There's still a little bit of time to come.
Still plenty of time left.
Yeah.
Yeah.
291 on nat gas. It's about as low as it's been for the last calendar year and more.
Nice.
Heat's on. Come on by.
Hey, in other commodity news, gold logged its biggest daily price drop in 3 months yesterday, as Trump says that gold will not be subject to tariffs. So that's good news, I guess. But the price of gold did fall by the most in 3 months as traders sold the asset. What are you doing in gold?
Nothing. Just trying to play a little defense. Rolling down calls this morning. Stock. It's down another
$16 or so,
$16.
0.5%.
Oh no. Okay, that's serious.
dropped
Yeah.
$100 the last 2 days.
Yeah. Oh.
But I mean, it's had a great run, right? I mean, but since April, it's been kind of in this pretty tightish range of 3,350, let's call it, to 3,500, and it's just under 3,400.
I love how Trump says gold will not be subject to tariffs. Who are you going to tariff?
Well, like gold, but if you're buying gold bars.
From where?
From London.
What if? I mean, that's the most ridiculous thing.
From Costco.
buying-
I don't know.
I'm
Gold
just
from
saying.
Canada.
Yeah, how are you going to be subject gold to tariffs?
Okay, look, dude. I'm just reporting the news.
It's just so.
You gotta hide it in your teeth, is what you have
It's
to do.
so
you don't have to
moronic.
get
That's
tariffs.
All right.
the point.
Yeah.
Hey, I got a bunch of crypto stories. This is interesting. Harvard University's endowment has disclosed a $116 million position in BlackRock's iShares Bitcoin Trust. That's IBIT, I believe. Giving it more exposure to the top-ranked cryptocurrency. That's actually Harvard's stake in crypto is now larger than its stakes in NVIDIA and Google.
Okay, let's put some context around this.
Okay, clear it up, girl.
I will. They have a $65 billion endowment.
Sure.
They have 117 million in Bitcoin.
In IBIT. I don't know about any
Wait,
other.
in IBIT.
Right, yes.
That's not even. Let's just put some context around that. That is one. Is that what is that? 1/10 of 1%.
Yeah.
Less than 1/2 of 1%.
Right, and I wasn't trying to
nothing.
compare it
No, I
relative to the
understand.
size of the endowment.
more relevant to me is IBIT's on its highs.
So
they're getting
the
in.
title is so ridiculous. They pour 117 million into it.
I remember when Harvard said Bitcoin at 20,000 had a better chance of going back down to 1 than it did going to 40, but they like it at 180.
No, not in relation to the
Par on
entire
course,
size of their
I'm trying to
endowment,
say.
but in relation to other positions.
Well, the difference is that obviously they think Google and NVIDIA are too rich.
Okay,
They're doing something with their $65 billion.
doing something. What would you have you been trading IBIT? Do you trade IBIT?
No, I don't.
No, I looked at IBIT's markets. They're not bad. I mean, it is tradable.
Brown University boosted their stake to 13 million. So I know it's in the whole scheme. I just thought it was interesting. That's all. All right, I'm gonna move on.
Brown, how embarrassing for an
Okay, Paxos. Remember Paxos Gold, whatever?
I know them well.
They are joining a spate of crypto companies applying for U.S. trust bank licenses. They are the firm behind PayPal's stablecoin, and they are applying to create a national trust bank in the U.S. What say you?
They're one of a number of companies trying to do the exact same thing.
Yes,
So
as I said. That's what spate means.
yes,
Okay.
yeah, I mean it's pretty. Every company that has money transfer licenses now is also trying to get into banking.
Yeah.
So that they can have both sides of the trade, so they don't have to use a middleman for their their stable, basically their banking service.
Sure. Well, crypto exchange Bullish has raised their IPO size, and they are now seeking a $5 billion valuation. They want to raise $990 million by offering 30 million shares priced between $32 and $33 a piece. What do you think about that?
I wouldn't buy this company with your money.
You wouldn't get fired. All my money is dedicated to Taylor Swift.
Taken now, Saz. If you had asked yes,
It has been allocated. Those funds have
Right.
been allocated, and there will be no rescission
if you
of
asked
those
yesterday,
funds.
she would have
I
done
told you I don't trust the CEO of this company, Tom Farley,
Sure.
as far as you can throw him.
Okay.
And I think this company is complete, not bullish, bullshit.
Oh, I see what you did there. Ooh, shots fired, girl.
I wouldn't trust this company for 1 second.
Do you want to pause? Because now I'm in between stories as we wait for the number to come out.
Do-do-do-do.
Do-do-do-do-do.
Even the S&P's up 275 prior to the number. Bonds are down 8 prior to the
I've got my finger on the bond trigger, Tony.
Woo!
We're a buyer below.
Bonds are down 10 at the moment. Even the S&P's are up 3.
We're a buyer below. We're a seller
About
above.
5 seconds before the number comes out. I've never been more excited in my
We're
entire
a
life.
buyer below. We're a seller above. We're a buyer below.
Oil's
We're a
down
seller
40
below.
cents. Gold is down $11. The number
higher.
is
Bonds are
out.
higher.
First move is higher. Even the S&P's up 23. Do you fade the move, Sosnoff? Volatility in by 30 cents.
Do I fade the bond move? I think so.
Bonds are up 12, 115.17. They've had about a 20 tick move. Even the S&P.
I'm offering them at 20.
Okay.
I don't like the S&P's up 26.
They got up to 21 on the bonds.
I watched them. I didn't see the 21 print. I saw
Just
17.
telling those people who might be driving in their cars who are not able to watch because
I saw a 17 print.
They trade up to 21. They're at 12, 14, kind of settling in. Even the S&P is up 24.
Yeah, I wish the S&Ps were down 24 in the bonds.
Anticlimactic, much like Thomas on a Saturday night.
Offering bonds at 20, nothing with S&Ps.
All right, we'll give
You're
it some
9
time.
ticks away from the offer right now. I mean,
Right now.
Yeah,
Right now. Give it some time.
I might become a Swifty just so I can make fun of him with you.
Yay!
Yeah.
Give it some time.
Uh-huh.
Are you all good? You're all settled over there? Are you still just
think
like watching it and won't take it? Take it.
I think so. I don't think there's much else to do right here.
Okay.
I'd like to sell some S&Ps, but I'm going to wait
Okay.
a little bit.
S&P's up 28.
Way to exercise
Pretty near the highs.
restraint, me lord.
Oh, yeah.
Yeah.
Yesterday's highs weren't far off of here. I think yesterday's highs were around 64.31. We got up to 29. We're 26 right now.
The tech sector hasn't been this top heavy in decades, but that could be an opportunity for investors hunting for bargains. The gulf between the U.S. stock market's winners and losers is growing wider by the day. What are you seeing as some opportunities in the tech sector? Like some stocks that you're really liking that obviously aren't the ones that are dominating.
Well, there's not a lot of stocks that I really like.
Yeah, right. I know. There's not a lot of anything that you really like.
I mean, there's a few stocks that are, I guess, cheap relative to everything else.
Okay, what are those? Point those out for me.
Sure. Happy to point out
Please
some.
don't start with Intel. Please don't start with Intel.
Some of the stocks that we have that are cheap relative.
Yes.
CMG, ENPH,
Oh, in phase. Okay.
IBM,
Okay.
Intel. I'm just going in order. Lilly. Let's just see.
Lily, what?
Lilly.
Oh, okay. Lily's not cheap.
Cheaper than it was.
Okay, well,
Other than that,
must be nice to have your account size.
That's all he's telling
yeah, I'm
you.
just
I
giving
know.
some loan to TTD.
Okay.
Crappy stocks like that. I'm just
No,
looking
but I'm asking you, right, because I don't care what
I'm
this
just looking
headline
at my
says,
own-
but I wanted to know, like, what some opportunities
some of
were.
the Chinese stocks look cheap.
Okay.
Relative.
That's it. That's all I wanted to talk about. How about for you, Bat? What's been on your watch list that you think has been interesting? Because you got a podcast today.
Every
So.
Tuesday and Thursday,
Yeah.
trying to find more stuff. I've been really going kind of shorter term, taking quicker profits with all,
Nothing wrong with that.
and losses too. I mean,
Sure.
Costco was a losing trade for me. I'm in GDX right now. I think
Okay, little gold.
gold miners.
Gold miners.
Ivy rank at 30, and there was interesting to me. I played it for a little bit to the short side. It's unchanged, up about 10 cents or so. That's all.
Okay.
Yeah, we'll find something for today though.
Micron, speaking of some tech news, Micron's raising their forecast as AI boosts memory chip demand. Yesterday, Micron raised their forecast for fourth quarter revenue and adjusted profit, banking on surging demand for its memory chips used in AI, sending shares up around 3%.
Ba-dum-bum.
Micron was up was up a bunch yesterday.
Okay.
MU's trading 123.90, basically unchanged, maybe up 15 cents this morning, but you are correct. A big move last couple of days from 111 to 123.
What's the IV in there?
18. That's
Well,
the
it's not
problem. You
the
got a lot of
worst.
low implied volatility. You got volatility down 45 cents this morning, 16 and a half. It's going to hurt finding new trades. Help with your old trades.
Consumer prices rose 2.7% in July, which was less than expected. So that was the official number. I know we were trading around the number, but we didn't say what the number was.
Oh, but this number was good, so we don't have to fire the guy this time?
Nope. It's all good. He performed well.
He performed well.
Yay! His family gets to live.
That's right. You want a job? You got a job.
Hey, StubHub's IPO is back on for September after the ticketing company delayed plans on tariff concerns. StubHub updated its IPO prospectus yesterday, effectively restarting the process to go public. They expect to kick off their IPO roadshow after Labor Day and then make their public debut later in September. What are your thoughts on this?
I'm not a huge fan of their model. Easy to disrupt, lots of competitors, ridiculous fees that I don't see how they can ever get higher. They got to get lower.
Sure.
I don't love it.
But that's kind of just endemic in the system. Like, that's like, it's just,
I agree. I just
it's
don't love
hard. I don't know.
For some reason, I thought somebody owned StubHub, but I guess not.
Somebody must own it.
The company originally paused their IPO plans in April as the stock market was reeling from Liberation Day. So they spun out of eBay in 2020. Maybe that's what you're remembering?
Oh, yeah. Okay, got it.
Okay, great. Love that.
Makes it better now.
Hey, sad news to report from an iconic brand, Kodak, is warning investors it might not be around much longer.
Ooh.
I thought they were getting into the blockchain. No, they issued a going concern warning as Kodak reported their second quarter results. Yeah, that's not good. Don't you have memories of back in the day getting the yellow boxes of film and loading
You
it
ever had
into
one of
your
those
camera?
cameras, though? I never had one of those.
Not one of these, but
I know,
like
but those were
different.
cool. Those people, when I was growing up,
Yeah, that's
people
like
had
a
those cameras.
Yeah, like a medium format camera, but like a 35 millimeter, like a Pentax or like a Fuji.
Come on, you had one of
I
those.
never had a camera.
Like a Fuji.
Are you serious?
Are you serious?
Nope, never.
Wow.
Wow. You were deprived.
No, my dad was a
No
photographer.
TV, no camera,
Growing up.
no
and then,
bat, no balls.
I'm
What
not a
did you
camera
do
guy.
with
And then I picked it up. I had this is a true story. When I was 7, I'm gonna date myself here, but I had a Fisher Price camera, and it used the Kodak 110 film, and that was my first camera. And then I always had cameras after that, and it was this.
You didn't have a Polaroid camera?
Polaroid we had.
But you could take the
I'm sure he has
away.
Polaroids of you. They're in his safe.
100%.
Why would I save those?
I don't know. You,
You
guys
know
have
why.
some weird trader pact or
You know
something.
why? How do you think you got me in the seat?
Right?
You know
Yeah.
why.
Like it's called leverage.
You know why.
That's why.
Had to
but
burn those memories.
KODK is Kodak, but sad if there's not, because I know people have gotten back into it. You know how much it costs to develop a roll of film now? You have to send it away. It costs like $25-$30.
Oh, I never would have guessed that. I would never have known. $6.40 down 40 cents for Kodak. Ooh,
Yeah.
big move low.
But film, people shooting on film is coming back. I still shoot digitally, but I'm sad about something else. I'm sad about. Claire's announced that they could close over 1,100 locations if a buyer isn't found soon. The mall jewelry claim filed for bankruptcy for the second time earlier this month, and they've also identified 1,100 stores. They're looking for a buyer for 800 remaining locations. I got my ears pierced at Claire's. I love to buy headbands at Claire's. I'm a little sad.
So, have you ever bought a headband from Claire's?
No.
Would you go get your ears pierced at Claire's?
He's
Probably
thinking about
not.
it.
Let's
That-
go. Oh.
That you're thinking about.
You need a slutty little earring.
Yeah, for sure. For sure, you do, Saz. That would complete the look.
Yes.
At the very least.
Yes.
You need
It's
that.
making me sad. Hey, this news broke yesterday, but I was still on the show. Paramount has bought the rights to the UFC in a $7.7 billion 7-year deal in the first major move post Skydance merger, effectively killing pay-per-view.
This is so cool.
now if you want to watch UFC, you have to have a Paramount Plus subscription. What are your thoughts?
I love it. Instead
You
of paying
do?
$50 or $80 a fight? Yeah, sure. I love it. It's absolutely
So the
great.
TKO group owns the UFC, and then so Paramount
Best thing ever.
brought the rights to it. What do you think?
I don't really care. I don't have a Paramount. I don't have Paramount.
Yeah, but you watch UFC sometimes. So like if Logan Paul fights someone else now, like how are you going to watch it?
I am not giving them that click.
Logan Paul's not a
Screw
UFC
Logan
fight.
I was just
I
making
know.
a joke. Like I don't.
He's very little.
I really don't care that much about this one way.
Okay.
Oh, come on. It's the greatest thing for
All right.
people who love the sports.
Well, would you trade Paramount, PARA, or no?
No, Larry Ellison can go
Okay, nope.
F himself for all I care.
Okay, there it is.
I prefer free speech over Larry Ellison deciding what I want to watch in the
Okay,
future.
there you
no-
pipe down over there.
It's halted at $11. Now it was.
Is it really?
It was $13
Oh, wow.
in early July. It sold off yesterday down to around $11. Early indications look unchanged. Obviously, those are old quotes, so be careful with that.
In other sports bundle news, ESPN and Fox One are going to bundle their direct-to-consumer streaming services. They're going to offer that as a bundle beginning in October. And for the privilege of that, you're going to have to pay $39.99 a month. I hate all of this
what do you get for
piecemeal.
that?
So you get ESPN and Fox One. So
I know, what does that mean? What's on ESPN
it
and
means
Fox
whatever you want it to mean. So you get ESPN and Fox.
Doesn't
So
matter. You don't
get the
have TV
NFL.
anyway.
You
Your
get the
TV's
NFL
not
on
working.
Fox, and then NFL stuff like on ESPN and.
You haven't
all the
paid
other
my guy
sports,
his
so.
retainer yet. It's not working, your TV. You know
So
it's not.
I think
'Cause
this
didn't
is
get my
great.
cut
Like
yet.
how much? Like I hate getting nickel and dimed for every little thing, and like you got to have 30. So like just bring back cable. Like bring back cable.
So we're gonna have to pay
Bring back the black box. I want-
$39 to watch football, $29 to watch the Cubs.
No, it's a lot more than that. I
Yeah.
something else that it might be close to like $175 to
I can't
watch
keep
every
up.
game.
I can't keep up. Or you could buy YouTube Premium,
In
and that's like
every
it's like
sport?
Yes.
so you could also buy NFL Plus. You could buy YouTube Premium.
You got to buy
There's-
hockey games, then you got to buy basketball games. You're gonna have to buy every single sport.
You might as well take up gymnastics.
You may as well just get into Taylor Swift
You
because.
might as well get to Taylor Swift. Yes, this is right. This is correct.
But here's the thing, though: Swifties are watching football, so we're also buying these packages because the new docuseries "The Kingdom" episode 3 talks about Taylor Swift, and I got rid of my Disney Plus, and now I might have to get it again because I don't have ESPN, but I want to watch The Kingdom.
I heard the first Hard Knocks was absolutely the worst ever.
Oh, really?
It was the Bills.
Did you hear it from a Bills fan? Because our office is full of them. So
Oh, I heard it from the guys on sports radio. They said it was unwatchable.
here's something that's gonna be watchable, maybe. Teen heartthrob Noah Centino is going to star in a Rambo prequel. I don't know a whole lot about this, but I like Noah Centino. He was in To All the Boys I've Loved Before, which is great. It's teenage girl
This is
stuff.
gonna be a disaster.
Whatever. Here's the thing. I've never seen Rambo.
Oh, it's good.
But here's the
I
other
don't know if it stands the test of time, but it was good for
It
its
was
time.
good.
Can I ask you a trivia
Great.
question?
Sure.
Do you know how many screenplays has Sylvester Stallone written?
Screenplays?
Yes, this is why I'm impressed as hell
Probably a
by
dozen
Sylvester
or more.
Stallone as a writer. Like I've written 0 screenplays.
I have no idea.
Do you want to guess? You say a dozen?
Doesn't, yeah.
23.
Yeah.
Sylvester Stallone's written 23. What have you ever done? No, I'm just kidding. That's impressive.
I don't know. Is writing a screenplay that impressive? Jules wrote 4 of them.
It's hard. It's hard.
Well, no. But how many is Sylvester Stallone?
These have been produced, right? Yeah, these are like
Come on,
movies.
that's impressive.
That's impressive. Like,
Okay, great.
Come on, give credit where credit is.
I'm
due.
not.
It's like how many shows have I carried here over the last 14 years, right?
I liked
mean,
Rambo, and I liked
3,000
well, anyway,
change.
if they're gonna make this movie, it depends. There's a ton of ways that this could go, but maybe this will reignite Rambo fever for a whole new generation. I don't know.
I don't know.
I don't know why they keep doing the prequel, sequel, the reboots, but
I'm not sure.
we'll see.
I'm not
I don't know.
sure.
No, I'm trying to remember which was the original Rambo. There were so many of them.
There's First Blood.
First
what-
Blood's good.
Okay.
I can't remember the original Rambo though.
And then I don't know. Again, this is all.
First Blood, I believe, was the original one. Came out.
Yeah, I've never seen
First
any
Blood,
of
the original one.
I've never seen any of these movies.
Thinks I don't know.
You know, the internet exists. You can go to IMDb.
There's one when he's hiding in the mountains. There's one when he's like fighting
What's
the Middle
the?
East. There's one when he's like
Oh no.
Vietnam.
Yeah, 82 is the first one. It's Rambo First Blood, and then it's Rambo First Blood Part 2 is in 85. Then
Yeah.
Rambo Part 3, 88. And then 08, all of a sudden, you just got more Rambo.
Sure, because he
And then
needed the money.
Last Blood in 2019. That's the last
Oh, I
one.
didn't see that one. Thank
See?
you.
Yeah.
There you go. Hey, keeping it moving. This is funny. Gus, who works here, he came over to my desk. He's like, Vanetta, did you see this? And I was like, I did not, but this is the breaking news that I like, Gus. Cristiano Ronaldo proposed to his longtime girlfriend, and this is the biggest friggin' ring I've ever seen in my life. You get that bag, girl. Like, I don't know how long that she was waiting for this, but come on, dude. It's like $1 million ring. I don't even know how many carats
buy a
this
million.
thing is. What do you?
buy a
How much
million.
do you think this is? You think
Way
it's lab
more.
grown?
Way more than $1 million.
Oh, okay.
How long
It's
they been?
multiple.
How long has she been waiting for this?
That's what I'm saying, for a long time. So
A
those
long
carrots
time.
adding up.
She
Yeah,
put
she's
her
had
time
his
in,
stupid
son.
babies.
Oh no, this
yeah.
girl put her time
This
in.
girl
Yeah, she put her
has
time in.
perseverance.
Yeah.
It's like
This girl-
water on a rock.
This girl waited through like 2,500 other girls.
Yes.
Yeah,
Yes.
let me just
yes,
see.
Yes. She
What is
deserves
this?
it.
Ronaldo's.
Good on you, young lady. Good on you.
30 to 35 carats. Georgina Rodriguez's engagement rings. 30 to 35 carats. So
He must have done something horribly wrong.
that is
He did a lot of
amazing.
things.
I think it was a culmination trade here.
That is
I don't think it was just
amazing.
one event.
Valued at $5 million. So my bad.
Oof,
My bad.
yeah, I told you by 1 million.
11 to
Sure.
13 million.
Oh, you say 11 to 13
I just
million.
read it on
Oh, okay.
ChatGPT. 11. When you said a million, I'm like, I'm a million bid. 11
Okay.
to 13 million.
All right. Anyway, well, congratulations to the happy couple. Hey, finally today for my viral video of the day.
The happy couple.
I mean her and her ring. The happy couple.
Yes, for sure. For
13
sure.
million for the ring. 12 million of it was for, I'm sorry.
Yeah, but you can't even wear that out. Like, you need security all the time.
He's got security.
Like, I'm just saying.
I'm just saying, he's got security. Everyone
Hey,
knows.
finally today for my viral video, Bat, you inspired me since you...
I may have seen this. Does the rod break?
Yeah, so you might have seen that. So you inspired me since you keep showing me your fishing videos and keep posting them. So then this popped up in my algorithm. This is the craziest video I've ever seen in my life. What are y'all doing out here trying to fish? Watch this.
One sec, Vanetta.
Oh, okay.
See, this guy reminds me of when my mom would take me back in Brooklyn in Sheepshead Bay. We would go on a boat that, you were fishing with 50 other people. You were shoulder.
Oh, no, this is like off a
shoulder.
bridge. Yeah.
I know, but you have so many people.
Oh, I see what you're saying, yeah.
They'd all have to move their lines. If you caught a fish, they'd have to reel them in. It was...
But this is like aggressive.
Grandma Beanie, thank you, would take.
I don't know.
Started my fishing career. I think we have a little frozen fishing.
Oh, that's
video
okay.
here.
If we can't show it, that's okay. Oh, we got it.
John, you're back.
Because at first you're like, what is he doing? So then the reel break, the rod breaks.
Rod, yeah.
So he's pulling and pulling. The sea was angry that day, my friends.
This is off of Peter South.
So look at the size of this monster. So then he jumps off
That's right.
like a man.
What is it?
It's a Goliath. They call it a Goliath.
Yeah, it's a Goliath. But then it's like, there's sharks though, because then there's blood in the water. So he sticks his hand
This guy's a real man.
in the fish's mouth. And so then he compassionately releases it.
Yeah, they're docile fish.
Right. But look at the size of that.
Yeah.
And then he's like, America, F yeah. And then he climbs up I was like, how is the homie gonna get back up here? Climbs up the ladder. Like, it's far. Like, he just yeeted himself
He doesn't
off
even
the
use
bridge.
his legs to get up the ladder. That man was just using all arm.
Oh, yeah,
upper
that
body.
guy's
That's bonkers.
He's a real man. He jumped in just to let the fish off the...
Yeah, because it broke. Like, because
Come on,
otherwise
most
it's
fishermen
inhumane.
are
Yeah, otherwise
love
it's
to see.
inhumane.
I mean,
Yeah.
Vinny caught and released his Goliath 20-pound carp.
Yeah.
What is that called? A Goliath?
Goliath.
Is it a carp?
I think it's a form of grouper, but don't quote me.
Oh, don't look at me. I don't know.
I don't know, but it has grouper like.
Can't eat it?
I don't believe so. No.
Tom's like, can I eat that fish?
That'll feed a family for 2 weeks.
Bat, what's coming up next?
Portioned correctly. We're gonna take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We'll be back in 90 seconds. Someday you're gonna get it right. Good job out of you.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim
will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. It doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do so, let's take a quick look at the market. Even the S&P is up 37, trading about 6 handles off of their high. Sadnov up over half a percentage point. NASDAQ up 155, but that's not even the leader in the clubhouse. That's the Russell. Sadnov up 29 on a percentage basis, 1.33%. The Dow up 250, in line with the even the S&Ps, and NASDAQ a little over half a percentage point, 250 and change. Volatility in by 62 cents, back down to 16.28. That would be a new low there, trading 16.33. Bonds only down 4 ticks out enough. They've had a decent sized range. I know you tried to sell them at 50.
It's crappy.
Well, the range there says 15.21 to 14.20.
I know what it says, but you couldn't sell them anywhere close to 15.21, and you couldn't buy them anywhere.
Yeah, an offer in at 20, you would have gotten filled.
Maybe.
No, 100% if they traded 21.
I think they traded a one lot.
Bitcoin with the Doge, well, here, it's better to see it this way. With the Gravestone Doji here, Sadnov, what do you think about that? Opportunity of a lifetime to sell them? No? Okay. Oil down 53 cents, gold down $5, silver bucking basically unchanged, up 2 cents. Net gas down almost 2%. That's another 5-cent move to the downside, taking back everything it made from yesterday. Corn, wheat, and soybeans all lower. Soybeans the one that had a little bit of two-sided action. If you look at wheat with a good IV rank of 39, it's been lower. You look at corn, it too has been lower. So I don't know if that's all I really have. I think
the whole story today is, can the market hold this rally?
You're right.
More than NASDAQ. Can the NASDAQ hold this rally? I think the S&Ps probably will, but I don't know about the NASDAQ.
Well, if the S&P's doing the NASDAQ, probably.
Well, we'll see. Can the NASDAQ hold this rally? Because the bonds, I don't think they're going to do anything all day. I think they're going to be wrapped around unchanged. And I needed the bonds to be higher, and I needed stocks to be lower, so I didn't get either.
Well, technicians are having a field day here because this is about the second time we were up, or almost third time we were up. We got as high as 23,845 back on, what does that look like, July 31st. That was the old-ish trading highs, and now we are right there again, so...
Well, I haven't sold any yet, and we did cover everything yesterday. So the question becomes, what do we
do now?
Do we whack them in how? Oh, that was too easy. I'm starting.
You sold 797, 23.7.
23,797 in the
Did you ever?
Yeah.
Okay.
Nothing surprises me. We're probably going to sell some. Is this the high in the S&Ps now?
Even the S&P's highs are 42. They're trading 37, almost 38 right now. They got up to 42.
I'll keep an eye on them. All right. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live, and let's go.
And that's a Goliath grouper. but you can't eat them. They're
You said that
legal to
already.
keep.
I wasn't going to order a Goliath grouper. Excuse me, do you have Goliath grouper? Okay, I'll have the Dover sole.
What do you with Scott?
No, what you should do today is when you go to your restaurant tonight, you should go, Scott Sheridan told me to order the Dover sole.
See, nobody orders the Dover sole, Tony. They know me. They say nobody orders the Dover sole. You sure you want to do this?
Nobody would ever order Dover sole. All right, let's do this. Tuesday. Oh my God, it's my son's birthday.
Wow. You haven't
Just realized it. August 12th.
Yeah, I haven't. Let me text him right now, by the way. And
hold on.
Before you. No, I'm doing it first. I'm doing it first.
What do you mean? I just realized. It's a pretty good memory.
I got it.
I didn't even get a
reminder. I did it already. I'm in. I knew it would do it before you. I win.
I got to do it before my wife reminds me. And then so she can go later. You forgot your son's birthday, right? And I'm like, no, I got him early before you.
I can't believe you put the date up there, Beth. What's wrong with you?
What's wrong with you, Beth? I would have never known.
You ready for an adulting helper yet?
You know what? I really don't think I would have known. I'm not so sure I would have got that. Anyway, let's do this. Okay, now I have served my purpose. I had sold a put spread in AMD for earnings. Initially, it didn't work out as the stock fell. So then I sold a call spread to defend the position, and like clockwork, the stock rallied the next day. Had I done nothing, the put spread would have worked out fine. But instead, the call side ended up being tested. Do you think for earnings, it's best just not to do anything initially and give the trade time?
Well, I mean, obviously subjective, and I don't want to play Monday morning quarterback here. You outlined what AMD did, very well. So I will say this. You sold a put spread. Let's assume it's a relatively tight put spread, $174 stock, $5 to $10 wide, and you collected 1/3 the width of the strikes. So you have a synthetic, it's a defined risk trade, synthetic stop in there in AMD for earnings. You were bullish, you got the direction wrong, and went lower. Now, if you continue to remain bullish, I too, even with that scenario, continuing to remain bullish, would have probably sold a call spread too. It doesn't use any extra buying power. It's fairly mechanical, and you're collecting another $1 or $2 on the spread that you sell. You take your risk down from $3 to $7, from $7 down to $5. You give yourself a 50-50 shot. Now, AMD rallied back. Sometime when you cut down that delta, you had probably an unchanged trade or significantly lower loss or even a profit. And I might have looked at that time to close the trade. I'm not playing devil's advocate here, but you had a loss, you make it into a scratch or significantly less of a loser. I'd probably take it off and put on another strategy in AMD. The IV rank, I'm sure, is lower, probably would have something diagonalized. Saznoff. I have no problem with what you did. It's a mechanical thing to do. I would have done it myself.
You did everything perfect. And you did exactly what you're supposed to do. And the idea, just so you know, the chances of that stock coming back like the next day, it's somewhere, we did a bunch of studies on this, it's like 5%. It's somewhere between 5 and 8%. And the chance of a stock coming back eventually, it's like 60%.
Right.
But the chance of it coming back the next day or the next 2 days, whatever it is something like, let's call it somewhere between 5 and 8%. So the answer is, of course you don't wait. It's just weird that it did that. But don't overthink this. You did exactly the right thing.
Yep.
I would do the same thing 100 times out of 100 times.
Yep. And now I would probably sit, to be honest with you. I don't know, I'd probably sit with the avocado.
I'd sit. That's what I do. Let's go next slide. Last week, you did a 0 DT iron fly in the SPX. Yes, we did. However, the short put and the short call you used were different strikes. I thought an iron fly used the same strikes. So my question is, when does an iron fly become an iron condor, and how much does this impact the results of the research?
Yeah, the stock SPX,
it was in between strikes.
It was in between the two strikes. So, we synthetically sold the just out of the money put and the just out of the money call, which synthetically gives us basically where the stock really is, and it was just an iron fly. I mean, it's a rose by any other name. If you're one strike off, even if you don't go, if the stock really is at the money, you go one strike under, one strike over. I mean, it's a rose by any other name. Still smells as sweet.
Yeah, what we did is essentially a straddle. Even though we used two different strikes, we middled the at the money. It's a straddle.
Yep.
Yeah. A strangle will go really wide on. That's as close to a straddle as we get. So the answer there is don't overthink. You're picking pennies here. It's overthinking this. The results, it doesn't impact the research at all. Let's go to the next slide. Is there ever a time you would roll the tested side of a strangle closer to the money?
Strangle? We do this all the time. Yeah. I mean, ever roll the tested side. So sorry. I read it too quickly. Yeah, most definitely. So I'll give you a scenario. You put on a strangle that's delta neutral. It goes a little bit lower. You're collecting a little bit of long delta, but you're comfortable with that long delta, or it hasn't met your parameters. Mine are around 15-ish deltas. Maybe it was 10, 12 delta. You decided to stay with it. Maybe you were bullish on the overall market, and this stock has a high correlation to the overall market, and it rallies back, and it rallies a little bit too far, and you want to kind of get a little bit of short delta, or keep your long delta instead of rolling up the untested side. You move the call spread. I have no problem with that. Yeah. It was an offensive roll. Not often, but it's an offensive roll.
It's not something that's very often. I would think that the time you would roll the tested side of a strangle closer to the money is if you are trying to get some more deltas.
Yeah, you would do it a lot in like SPY or Qs.
If you're trying to get some deltas, or which may be trying to help your other positions or that position, or if the premium has come in a lot and there's no juice left, so you just move it closer to collect a little bit more premium. So the answer is yes, there are a few scenarios where you roll the tested side, but it's not part of our mechanics.
Very good.
Let's go to the next slide. I'm new to your platform. How do you find good stocks to sell premium? Do you scan for high IVR?
I do scan for high IVR, not in a curated IVR list, but I'll go to the high option volume list, NASDAQ 100 list, S&P 500, pick the one that you like, and just click the IVR button, and then you can sort them from low to high or high to low, depending on the strategy you're looking at. So that's how I scan for IVR. And I do it every time I do my podcast, Option Trades Today, for Tuesday and Thursday, wherever you find your podcast, or right here on Tasty Live.
We have a really cool scanning feature on the platform, and it's in the center of the platform in the middle tab. And you can just go to watch list, and then you can scan any single one of our watch lists for literally hundreds of different things. And you can do them in ascending, descending order. You can pick and choose what you want. Super simple to use, all built into the platform, all instantaneous.
Beautiful.
Let's go to the next slide. When you do a pairs trade, do you adjust the pair based on the notional values, or do you do it based on the IV adjusted notional value? What's the benefit of one over the other?
Adjusting the pairs trade.
Should have kept those NASDAQ futures. They just dropped 50.
I see they're up 110. And even the S&Ps are, let's just call it.
They dropped 10.
10, 12 handles.
Yeah.
We don't adjust the pairs trade by either the notional value or anything else that's IV adjusted once we have the trade on already. Really, it's just the way the two products have moved. So, yeah. I mean, it's either on as a pair and off as a pair is the way I would look at this. I'm not looking at this.
When we are initially putting the pairs trade on, we do it on IV adjusted notional value. You have to. Mm-hmm. IV adjusted notional value is the only way you can accurately do it, a pairs trade. But once you have the trade on, it would be extremely rare unless we're just trying to get deltas. So like if we have an S&P position on and we, an S&P versus NASDAQ and we want more S&P deltas, we can add some short S&P contracts or some long S&P, whatever direction you want to go. But it would be really rare. When we put the trade on, we're usually good with the trade, with the notional values that we've established. it's rare that we will adjust the pair. Some people, when they use options and they trade pairs using options, they have to adjust their strikes because you lose value on certain strikes. But we don't usually use options. We usually use futures, and occasionally we'll use stocks. That's about it. Let's go next slide. So what sources or inputs do you use to form your market opinion? I can't imagine it's only price. I assume you have a different opinion on a company that sells burritos versus a company that sells chips for AI data servers.
Wow, I'm really going to surprise you here. Now that's it, man. It really is just price, implied volatility, tight markets on the options. That's really it. I'm sorry to disappoint. Now,
yeah, I'm sorry to disappoint, but there's no difference as a trader whether I'm looking at an index, a commodity, a burrito company, or a chip company. I'm looking at based on the perception of price extreme, either oversold or overbought, volatility, how rich are the options, how liquid is the underlying. Yeah, we don't really care. Most traders don't care what the underlying is. They really don't.
And the view of why it's doing it, it's already.
Yeah, I mean, we're efficient market people. We believe everything's already priced in. So whether or not we love burritos or hate burritos, or love Chipotle or hate Chipotle, we're still going to trade Chipotle.
It's just opportunity, right? Where is there an opportunity? Where a perceived opportunity. Very good. Even the S&P's up 25, NASDAQ up 100, Russell up 18, Dow up 190, volatility in by 60 cents, and bonds down 7 now, under 115, 114.30. We'll take a quick 90-second break and come back. We got an option jive next. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Hi, I'm Tony Batista, and I've been trading for more than 30 years. I've picked up quite a few shortcuts along the way. I call them trade hacks. Traders for all eternity have been looking for the reason to make a trade. Whether they were looking at charts or they were looking at fundamentals, they just had to figure out what direction the trade had to be. With the research that we provide now, we kind of take the direction out, because it's just a 50-50 shot, and say, what's the best strategy that we can apply? By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
It's Option Jive. Tomas, we are back, my friend, and that's right. It's time for an Option Jive.
Option Jive.
Bonds over 115 again. 115.01.
Oh, no. No, it's fine.
Russell was the leader in the clubhouse. It still is by a small smidge of a margin, but they're all up around the same, little over a third of a percentage point.
I think down on the day.
Over half a percentage point.
Down on the day.
I don't know. Volatility 1635.
I don't love that either.
I don't think you're going to see that yet.
I don't think you're going to see much.
Mm-hmm.
It is expiration week. It is
expiration week.
August 12th, 2025.
Happy birthday, Cole.
Happy birthday, Cole, my son. What year was he born?
Hey, this is not The View. We don't say birthday.
I know. Well, it's son. Son, you can do it. Okay. Let's see. What year was he born? Had to be born 92. He must be 33.
He said with authority.
He must be 33. Right now, my wife's rolling over going,
hey, you took 20 handles on your NASDAQ futures. 27. Well, 26 and a half. But you could take a lot more if you would just wait till now. Now you should go for
I'm just fooling around.
Mm-hmm.
Yeah, no. Happy birthday, kid. He's coming home tomorrow, so it's going to be fun.
Oh, that's nice.
Yeah.
Good, that's good. So I expect to see him at the show on Friday.
Will we expect to see him at the show on Friday?
Yes, I expect to see him. You don't have to answer it. I expect to see him. Come see Uncle T.
I wouldn't bet a lot of money on it. Not bet a lot of money on it. He's coming home because one of his friends is getting married.
Oh, that's cool.
So, all right. Anyway, let's do it. It's 8:13 in the morning. If you're wondering, the Bat and I have a show here in Chicago on Friday. We've got a lot of local celebrities coming out for this event. I'm looking forward to it.
Mm-hmm. Me too.
Yeah. So it should be a fun one. We haven't picked
Bloomberg will be there again. Maybe they can take a picture and see that there was two people on the stage.
Oh, the woman from Bloomberg called. She said...
You don't even give her props to say her name. Boy, what? Are you horrible. You don't even give her props and say her name.
Justina Lee, I think is her name. And she called and she said to me...
You're dead to me, by the way, lady, all right?
She said to me, hey, what's that guy's name who he works with?
Never mind.
What's the other guy's name? What's the Italian kid's name?
Never mind. The also ran.
Yeah, what's that guy's name? Somebody asked.
Yep. Always the bridesmaid, never the bride.
We haven't picked our trades for Friday yet. We won't pick those.
Why would we? We need them, to be timely for Friday.
I know.
That's a Thursday thing.
I'm saying we haven't picked our trades for Friday. That's how current it's going to be.
Mm-hmm.
We're going to pick our trades for Friday on Thursday. It's a very...
scientific
very scientific process. The Bat and I will go out and we'll take shots of tequila and we'll just pick our trades. No, we can't do that anymore in our lives.
Not anymore, like we did it in the past, right?
Guys do shots of tequila all the time.
Not before they pick trades for a live show.
How do you know?
Well, not the ones that, at least not under my watchful eye.
I'm going to be in Mexico next week. And
I'm going to be in Mexico next week.
Oh, that's right. And we're going to do, they drink...
Caprinas. No, that's Brazil.
No, full glasses mezcal.
Mezcal.
Oh,
full
that's
glasses.
too much for you.
Not shots, full glasses. They come here, like this.
No.
I swear to God.
No.
Okay, I swear to God, maybe not this. This is like 20 ounces, maybe like 10 ounces. Oh my God. 10 ounces.
I know you don't. That's for sure.
I'm a
Do
drinker.
you like mezcal?
Yeah, I do.
You do?
Yeah.
Kind of smoky for a
Yeah.
guy like you to
It's
like.
better there for some reason. It tastes good. And yeah, big glass of
It's like Vegas. What happens in Vegas stays in Vegas. The mezcal's better there.
better there.
Okay. All right.
Listen, I'm still not going to sleep with you, just so you know. But whole glass of mezcal. That's what we're having.
You could do a lot worse, by the way. Do a lot worse.
I really couldn't.
Yeah, you could. Yeah, you could.
I really couldn't. Anyway, it's going to be fun, and looking forward to my glass of mezcal and my escamole. Those are we're having
escamole.
Yeah, those are our
what's escamole?
Ant eggs tacos.
What is it?
Ant egg tacos. I'm going to introduce you to them.
All right. I don't know about that. I think I had chocolate covered ants, but I don't think I had.
No. Chocolate covered ants are gross.
Well, escamole, it's probably like a brown chocolate sauce on it. Oh, no?
No.
Okay. I mean, I don't know. I've never had
Butter
it.
and garlic. Do
You know, I worked very hard when I was young, so I didn't have to eat ants. You know that, right? I mean, I put in a lot of hours, bell to bell, drove 1,000 miles by myself. You know, I put in my time, so I didn't have to eat ants. So if you're gonna make me eat ants, that'd be good. I'm gonna watch you do it
I said
first.
ant eggs.
Ant eggs?
Ant eggs. Yeah, it's good. You believe me, we're gonna have some really interesting food next.
I'm in. I'm ready.
Pat and I are going to be in Mexico City. If you want to come and see the keynote I'm giving, it'll be Wednesday night, August 20th. And Beth, what place is this again? What's the venue?
Am I your handler for this event?
I'll check with Brittany, Tom. One
Okay.
sec.
Yeah, just check and see because I got to give you.
I still can't get over every time I see this picture. I need talk to production. I need like a big cutout of this. This is the new Sosnoff cutout. I want to travel with this.
Beth, just find out what hotel. Anyway, we're going to be in Mexico City next week, Wednesday night and Thursday night, and then we'll be in Guadalajara on Monday night. So
I just go wherever my boo tells me.
if you're down in if you're in Mexico and you want to come out and see the event, happy to give you a ticket.
Beautiful.
Anyway, let's go on and do the option jive.
I'm ready.
We got a bunch of events coming up in this week, next week, the following week, and then all through September, and then into early October. A bunch of different events. So, yeah, the next show will be in New York City after Chicago. So we're really looking forward to getting back to New York.
Do you eat the worm with the Moscow? If you know, it's like
I never had it.
You are this time.
I don't know about that.
I already spoke to my guys.
Reducing cost basis.
Then we're going to take advantage of you.
The trader's edge. So one of the reasons that when we got into the retail side of this business, one of the first things we did to kind of popularize options was talk about improving cost basis. And that can mean if you're short, to sell puts against a short position. If you're long, to sell calls against a long position. What is basis and what strategies improve cost basis? Let's go to the next slide. Because the reason we can't say reduce cost basis is because you could have it either way. You can, if you're short something, you could raise cost basis. So basis is the effective price that a trade is placed. It's like it's your trade price. Using stock as an example, if we were to buy 100 shares of SPY, our effective cost basis would be the price paid to acquire the shares. So if we're buying 100 shares of SPY at $636, then our cost basis is $636 a share. Let's go to the next slide. The purpose of a covered call position is to reduce the basis of the long the purpose of a covered position is to reduce the basis of a long or short stock position. The collective.
The purpose is to make money. It's still a bullish position.
It's to improve your probability of profit.
Sure.
So the collected premium reduces the relative purchase price of a stock while increasing the probability of profits. Let's go to the next slide. Pretty straightforward. So one way basis can be reduced is by a covered call, which is the purchase of a stock with the sale of a call option. So the stock's $100, the call price is $1, your new cost basis is $99. Why wouldn't everybody do that? Because it limits your upside. So why wouldn't everybody do that? Well, if you sell the call at or above the expected move, why wouldn't everybody do that? Good question.
Because they don't know usually. They just don't understand it.
Maybe they don't. Okay. But there's always a way to improve your cost basis. If you're buying a stock, you can sell an out of the money call. If you're selling a stock, you can sell an out of the money put. And if you go to the expected move, which is the best spot to go to if you don't have a strong opinion, that's where we place our short call or short put. If you have a strong opinion, you want to reduce some of your delta risk, you can go to a higher delta strike, like the 30 or 35 delta. It's up to you.
Sure. Doesn't use any more buying power.
Doesn't use any more buying power. 45 days out, all the same rules apply, all the same mechanics. Nothing else changes. Let's go next slide. A covered put improves basis in much the same way as a covered call. Stock's trading 100, you get short it, you sell a put for $1. Your new basis is 101, and you'd rather be short at 101 than 100.
Sure.
Let's go to the next slide. A short put or a short call reduces or improves basis before buying or selling stock with the potential of being assigned stock. Higher probability of profit than a covered call. Absolutely. And higher, it's a higher probability of profit than just buying stock outright. It's a higher probability of profit than just selling a stock outright. Again, because you have a higher probability of profit, you have a limited.
You got to give up something, right?
Yeah, you have limited profitability. Let's go next slide.
I know, but if you're doing it at the expected move or around even the 30-ish delta, but the premium,
you're not giving up anything except unlimited profitability. That's
right. And if the stock goes to where it's supposed to go on a full bullish move, it's basically the same money as if you just held the stock.
Yeah, sure. Let's go to the next slide. And the reason it's so important to do it at expected move, because you would have got out of the stock there anyway. It doesn't matter. That's what Tony's saying. So you could also do a diagonal. You can buy the long dated in the money call, which is synthetic stock. We call this kind of like a poor man's covered call. Sell an out of the money call and also reduce your buying power. Improve your basis at the same time, reduce your buying power. Let's go to the next slide. It's kind of our PMCC. Covered call with a fraction of 100 shares is another way to do it. So a traditional covered call requires 100 shares of stock per contract, but you can sell a call against a fraction of 100 shares. Then it's a little more expensive to make the trade because you have to put up the money, the capital for the call, but you can still do it. You can do it delta neutral if you want. You can sell a 30 delta call and buy 50 shares of stock.
Sure.
Why not?
Sure.
Let's go to the next slide.
We're still America. You do it.
There is an advantage, though, to doing the stock and the call or the short stock and the put at the same time because you can do it as a single trade. So you can also do a covered strangle, not as a single trade, but as two separate trades. You can go long or short the stock, and then you can sell a strangle around the long or short stock position. It's just another way to collect more premium. Let's go to the next slide. So for some of the takeaways, to maximize an active trading strategy, efficient use of capital allocation, along with strategies that reduce basis, are of great importance. By improving basis, we collect a greater amount of credit and increase our overall probability of success, and many strategies are very similar. Therefore, focus on delta, vega, it's a volatility, and theta, your premium exposure.
So the world is your oyster really here, right? I mean, as long as you're doing something
It's a basic piece.
That's called a complex option strategy.
Basic piece, but always try to improve your pop.
Awesome. Let's take a quick 90-second break and come back. Even the S&P's holding steady, up 21. Volatility in by 52 cents. NASDAQ, Russell is the lead in the clubhouse. NASDAQ up 89. We'll be back in 90 seconds. We've got more Tasty Live with the opening bell next. Sadnov, back in 90 seconds.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Put it on the Underhill account. Put it on the Underhill account.
Somas, we are back, my friend. Even the S&P's up 23.75, holding steady. NASDAQ up 100. Russell up almost 15.
Do they trade down in the day?
No. I know. Volatility in 3%, 50 cents. I don't think so. Although I will have the finger on the trigger, but I don't.
Now that would be a more fun DraftKings market.
Yes.
You know how they do like they make like halftime markets. That'd be a fun little DraftKings market.
Yeah, I mean even the S&Ps for the day have about a 23 handle range, so that would get us right to unchanged.
It's not a great. It's really tiny range.
Yeah.
Yeah. Post CPI. You're talking about a minuscule range.
Yep, $23, 36 for the full day of into tomorrow, and that's volatility.
Which is nut and honey.
Yeah.
I'm not buying this. I think they're gonna. I don't like the bond action. I don't like the action of the bonds down 16.
Bonds lower could be the canary in the coal mine, Sosnoff.
It could be.
Maybe
I'd like to see.
Going lower.
I mean, I know I'm a little long bonds, but I'd really like to see them go into the 13 handle, so they get a little more attractive. Because I'm not going to buy any right now, so I'd like to see them get into the 13 handle. And I don't have any notes, and I really want to see the notes. They're only down 5 ticks.
I mean, TLT correlation is only 0.32, so it doesn't
correlation to what?
To the market, to the S&P. So it doesn't have an inverse correlation. It doesn't have it doesn't move.
I would like to see the 10-year notes get into the under 11, get back into the 10 handle. And then I think you buy a few.
Bitcoin about $1,000 off of its lows, trading near its recent highs after this And I only see this gravestone doji because I got a bunch of emails with people telling me.
Who told you it's a stupid gravestone doji?
I had a bunch of emails saying, Bat, you're always asking for it. You got it in Bitcoin, so there it is, so you know what it looks like. Well, there you go.
I think that's really annoying when you talk about.
Well, it's up $155, so place your bets. Even the S&P is up 25, NASDAQ up 107, Russell up 14, Dow up 200, volatility in by 52 cents. Bonds trading near their lows, 114.20. Bitcoin up 200 to 119.6. Oil down 44 cents. Gold down $6 and change. Silver down 6 cents and change. Nat gas down about 8 cents and a half. That's about almost a 3% move. Corn, wheat, and soybeans are also lower. Let's see what's moving this market to the upside or the downside. Downside, you got CRWV down $4 and change. Marvell down $2. HIMS, Sadnoff down $1.33. AppLovin down 90 cents or so. AMD down.
Hey, what had earnings last night again? I forgot. It was what did we trade? Oh my god, I can't believe it. Oh, Circle.
Circles. That was
It was up, right?
CRCL. It's up $21. SE had earnings too. It's up $27. We didn't trade it.
Thank God I didn't trade that one because I don't think that was a $27 move. Was it?
No, not a 18-20% move. No, it was not priced into the options. No, those are your two big movers for the day. I mean, obviously SPX also up 29. Meta up almost $10. Coin up $6. Netflix up $6. Tesla up $5. Microsoft, which was weak yesterday, up $3. Palantir, which was down yesterday, up $3. They're coming from all.
What did I do in Circle? I sold some calls, 235 calls.
Yeah, told you.
For 54 cents. Sold.
CRCL, I sold them for 54 cents. It looks like
235 calls.
They're trading right around there. Market's a little wide. Maybe they're a nickel, 15 cents higher, something like that. The market in there is 10 cents a dollar.
What did I say? 235 calls.
Yeah, you sold them at 54 cents. The market's 10 cents, $1.40.
Well, I'm at $1.
You're at $1 or you dollar bid?
I'm at $1.
Oh, got it. Well, you're filled at $1. There you go.
Holy.
Now they're 90 cents, $1.20.
Holy guacamole. Who would pay $1 for those things?
With 3 days to go, the expected move is only $18. That would get you at around $2. It's a huge sale. You should be loading the flotoler here, Southnorth.
I'm trying to think for a second. Who the hell would pay $1 for those?
Somebody who's selling like the 200s at $5. That's who would buy those. You need it for buying power.
235 calls are paying $1 for them. That is the most. Okay, I can't take it. I mean, I'm going to probably get myself in a bunch of trouble, but if somebody needs to have...
Oh, please, baby cheeses, if you're listening, please make the stock go to 240 immediately, if not sooner. Please, I just want to watch him squirm. Please, please.
If somebody,
never ask you for nothing.
If somebody needs to have these calls at $1.10... Here, I'm selling more at $1. If you need to have these calls at $1, you can have more.
Oh, the stock downticked. Now you're selling the 3-day options at $1, 235 calls.
That's what I was selling all 3.
Yeah, I understand. Well, the stock was higher, is all I'm saying. Stock traded up to 189 is 181.
Well, there's a 70-cent bid in, and I'm shocked by that.
They are a 70-cent bid at $1.
Who would pay 70 cents?
Well, the 230s are 70 cents at $1. I mean, everything's 70 cents at $1 up there. I mean, it's really just a shot.
All right. Well, I guess I'm not going to get
offered at 98 cents. Enough. Now they're in front. In front.
Okay. Well, I guess I'm not going to get filled any more of those. So I'll just take my. So now my average is 77 cents.
Good job out of you.
77 cents. All right. Let's see what else.
Whatever. Even the S&P's up 31 as foretold.
All right. Let's see what else we got here. What problem children do we have? Bonds, problem child.
Bonds, problem
Qs,
child.
Spies. Nothing else. Maybe a little RBLX.
RBLX, Roblox?
A little RBLX.
Up $1.92, traded as high as 132 and change where it is right now. So enough just a skosh off of its highs.
RBL.
Volatility in by 65 cents. That's a big 4% move in volatility. It's a pretty big move. NASDAQ up 135. Leader in the clubhouse, still a Russell, up 19. Dow up 247, as foretold.
Let them rally a little bit here, and then we will let them die the slow death that they deserve. Let's see what stocks. What do we have stock wise here?
What do you have stock wise, Sadnoff? What are your problem children?
I'm not sure.
Taking back your profits from yesterday a little bit here.
ETHA, but not taking back yesterday.
That doesn't mean anything.
But not a hell of a lot.
It's really just in the SPYs and the Qs. You don't have any outlier moves.
Yeah, I don't have any.
Although you do have a sea of green. Commodities lower, stocks higher, as foretold.
Yeah.
Yes.
Nothing. I'm just hanging on.
Just hanging out.
For a second, just to see what we got here, just to see if there's anything that's gonna scare the children a little bit.
ETHA, you rolled up some putties.
Yeah, I don't really have a lot of.
No problem, children.
No, I don't have a lot of problems here, but
you have some delta.
I don't like the
coin rolling up some putties.
Yeah, kind of want to get short right around here.
Circle, you bought back some calls at 52. Put them all back.
The ones I sold.
Made you 25 cents. Boy, did they make you work.
What?
Boy, did they make you work.
Well, sold them at $1, bought them back at 52 cents, whatever.
But you bought them all back, didn't you?
Yeah, the ones I sold last night.
Right.
Yeah, those were a scratch.
Yep.
I don't like to lose, Pat. That's why we do that. Turned out to be a winning trade, so we'll take it.
Yes. Earnings continue to pay.
Yeah, I guess. Looking at today's trades, we don't really have any. Like I said, we don't really have any problem children. Just in the index, it's just where we're short. I don't know. Trying to decide how short do we want to get? How much effort do we want to put into this?
Well, right now you got volatilities on its lows. You got even the S&Ps about 10 handles off of their highs. All obviously subject to change, but there really looks like no pressure to the downside at the moment.
Yeah.
Bonds down 15, 114.22. That might be your best.
I'm looking for signs, for some signs of weakness. I mean, every stock on my board is pretty much higher. Literally every stock is kind of higher. Nothing's down. NVIDIA down a couple of pennies.
NVIDIA, what are you doing, you big animal? You're down 54 cents, 52 cents.
Nothing. All right.
You ready to take a quick 90-second break?
Yeah.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Sadnoff? That's right. Let me explain. Good job out of you. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I'd started to disrupt my trading career like really early on, probably 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grotta, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called, oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. Hey, Tasty, we're delivering babies.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like in horse racing, they would call it wire to wire. And in trading, they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means? Well, enough out of you. We've got this man. Let me explain. Chris in the house. What's up, Chris?
Tom, Tony, good to see you both again.
Good to see you, my friend. Welcome to the show.
Thank you for having me. We could do two different things today. Tom, do you want to break down the CPI report?
Welcome back, my friends, to the show that never ends. No, I do not want to break down the CPI report. I mean, I wouldn't want to steal all the thunder you and Ilya are going to have this afternoon, breaking that down.
So, let me do the narrative. Soft CPI, bond should be higher. The number's cooked.
I don't think the numbers are being cooked.
Oh, I was just trying. I was doing my best.
Well, the numbers were being cooked, but today they're real.
Okay, there we go.
They were being cooked.
They were being cooked. Got it.
Right. Thank you for clarifying.
We fired Erica. What's her name? And now everything's good.
Everything's good in America.
Everything's great.
Everything's great in America.
So,
except for bonds.
Except for bonds. I was interested in talking today about some high-level concepts here because we've seen that this summer melt-up more or less has continued. There's been a little bit more bigger price ranges over the past week or so, but we're effectively looking at a market that's close to closing at new all-time highs today, at least if you're looking at the triple Qs.
Sure.
So I want to build on the conversation you and I had on Sunday night, Tom, talking about frothiness versus bubbles. I noticed yesterday that CTA positioning, trend followers, in equities has reached the 100th percentile over the past 20 years. Basically, everyone who's long is long in this market. How does
hold on one second. When you say CTA, commodity trading advisors?
Yes.
Okay. I just want everybody to know what that term means. So that's people that manage commodity funds, futures funds, not equity funds.
Right. So futures traders are basically levered to the hilt right now, long stocks. And so we talk about a market that's getting frothy here.
CTAs, not futures traders. There's a big difference.
CTAs operate in the commodity space, and
they totally operate in the commodity space, but they're not traders. These are money managers. But I agree with you, and I'm listening to your point. Go ahead.
But what are money managers supposed to be? I mean, when do they? I mean,
no. Go ahead, Chris. Keep going. Then Tony. Then we'll listen to Tony's part.
So positioning is stretched, right?
Yeah.
I can't help but see that the breadth isn't strong, though. The Russell's obviously taking the baton a little bit today. If interest rate cuts are coming and the September cut odds look like they're firm right now, then small caps have a little bit of a tailwind. But at what point do we say that this is going to a point that it's frothy enough to start shorting? Because at the end of the day, low volatility, positive technical drift, it's very difficult to ignore a bull market in those regards.
I think we're there right now. I think we're about to get to a level that, well, here, I'll let Tony, because he had a point. Go ahead.
Well, I mean, they're all supposed, I mean, anytime I've ever given or family members have ever given who don't trust me any money to any type of money manager. When do they get you in the market? Typically immediately, if not sooner. Like that's when they allocate you into everything that they have. Now they might put you a little bit more aggressive or a little bit more conservative, but as markets go to all-time highs, they got to play catch up with it. So they're always, chasing the tail of the dog if they're behind the 8 ball by going less aggressive. That's why they always basically cut it down the middle and go somewhat moderate to aggressive so they can keep up with the market and really not overperform the market. So I think they're just playing catch up in my eyes. But I agree with you. I think the market, has gotten to a point where you're going to see you would expect to see a little downside capitulation, but volatility's telling you not yet, even though the even S&Ps just sold off 20 some odd handles.
I think we are about to get in. I think today is going to be this morning. I said it earlier to Tony when the number came out.
We were going to be unchanged, right?
I think this is going to turn into something that's not very pretty, and I think this is going to turn into something that's not very pretty. I'll just leave it there. And I think that is what you just talked about is probably one of the more interesting statistics, because I don't remember a time when commodity trading advisors were all in.
All in right now. And you have that feeling. If we had broken down the CPI report, I could give you some numbers to support that feeling, but we're not going to do that. I'll save that for Ilya.
That's fair.
It's not so much that. I think what Chris and I talked about Sunday night was he asked me if he thought we were in a bubble. And I said, no, I don't think we're in a bubble. I think...
You said frothy.
I said 1999, 2000 was a bubble because you had a lot of cheap-ass, crappy companies that were just stupidly priced. I think in 2008, we were approaching bubble-like conditions because we got volatility down into the 9 handle. I think in 2018 was really weird because we had no sell-off in 2017 of even 1%. So we had this pent-up sell-off demand. And then I think in 2020, the pandemic, the timing of everything, that 35%, sell-off in basically just, 5 or 6 weeks was the violent reaction to having had no sell-off in 4 or 5 years. And then, obviously 2022 was kind of a little more of an extended sell-off, but then you had the real damage, last August and then this April, when you saw kind of what a violent sell-off can look like. But we've had nothing that has been sustained. And I think that this market has been given a grace period, and it's gotten to the point now where I don't think, because the companies that are leading this market are big names, and they're big names, they're real companies, and I don't see them as bubbly. I see them as frothy. And I think there's a very distinct difference.
Tony, wouldn't you say that in a bubble market, everything inflates, not just pockets?
I mean, historically, sure. I mean, but haven't we seen that? I mean, I think when we had the meme stock mania, that was more bubblicious than anything that we've seen in the equity markets here. Volatility's low, but not low enough to get into the 9-10 handle like Tom discussed. So we're kind of in like a Goldilocks here. I mean, it seems like it. I mean, until further notice, like I've always said, I'd rather miss the top 2 days of the market than continually look to sell the market and get the top, because I think fortunes are.
Well, even if you missed the top 2 days for the last 15 years,
100%,
you didn't do very well because the market turned around and rallied.
No. Even when we went down in April, I thought we finally were going to get some two-sided chop sideways, maybe even make lower lows and then go higher. I didn't think we were going to have another one of these kind of V bottoms that we've had. 100%. 100%.
Yeah, I remember you took a spike trade after you and I spoke on Let Me Explain a few months ago. Got long ES at 51.71.
Yep.
So I do think there's a difference between froth and not froth, but I also think that the market has, there's an incredible amount of across the board complacency. Otherwise, you wouldn't have commodity trading advisors at fully invested, and otherwise you wouldn't have. I think the the amount of institutional cash on the sidelines is really small right now. But I think that the amount of retail speculative cash is actually quite large. And so I do think that there's that. I think retail investors are smarter than institutional investors. I think the public can see it, and I think they are sitting on a lot of cash. I can tell you right now, like just from my position, Tony's position, and a lot of other customers I know, everybody's sitting on a lot of cash. So I think retail investors are sitting on cash. I think institutional investors are fully loaded. As your CTA argument, it kind of supports that argument, and it also, I think it goes across the board. So I think that retail investors are actually in a pretty good position. They're just looking for more speculative bets, and I think that the other side of the market is very different, and the institutional market is knee-deep because they're all playing catch-up with each other. You can't sit it out.
It's interesting that you talk about money on the sidelines here, because there was a chart that was going around last week that cash on the sidelines has hit a new all-time high. I think that's one of the most toxic bull narratives that's out there. I'll give you an example. Let's say I have a box that can put 10 things in it, and I have one thing that goes into the box. It's taking up a tenth of the size of the box. If all of a sudden I have now 10 things in the box, I have to wonder, is the box the same size? What if it's now able to fit 100 things? As a percent of overall money floating around in the system invested in stocks, in bonds, in crypto, blah, 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 cash on the sidelines is not at a high level whatsoever. As a percent of the overall equity market cap, it's actually quite low.
I think the distinction here is that retail cash, from what we can see with retail traders, because I don't know, whatever Tasty has retail trader wise, $7-8 billion of retail customer, funds. I see that a lot of it is on the sidelines right now, waiting for opportunity. I think on the institutional side, it's a very different game. I think if you're an institutional money manager, if you're not fully invested, you underperformed, and B, you don't have the ability to pick and choose. You're pretty much trapped by your peers. So if Chris Vecchio misses a move in the market, nobody gives a crap. Okay, it's Chris Vecchio. If Tom Sosnoff misses a move, nobody cares. Okay, it's my own money, it's my own life. Nobody cares. Okay, but if Chris Vecchio, the money manager, misses a move in the stock market, you're out of business.
Yep.
And so there's the motivation for CTAs and RIAs and everybody and every other portfolio manager is that you have to keep up with the Joneses. For individual investors, I don't give a rat's ass what how much cash Tony Batista has on the sidelines.
Sure.
And nobody does. There's no customer anywhere. So the customer, that's why I say there's a ton of customer capital seeking speculative upside. And when they think there's an opportunity with like high volatility underlyings like Ethereum or some crazy, IPO or whatever it is, they're all freaking in. But if it comes to other stuff, I think those are mostly institutions and they're not retail. And I think that is the distinction. And I think, you hear that on Tasty, but you don't hear that anywhere else because nobody else can distinguish because nobody else really understands it.
Now, this is a point that Ilya and I talk about all the time. If you lose money in a bear market as a money manager or hedge fund manager, everyone's losing money. If you lose money in a bull market, you lose your job. The incentive structure is a little bit different.
You don't even have to lose money. You have to just not, you have to underperform the whatever the tracking index is. There's only a few money managers. So one of the reasons that Warren Buffett is Warren Buffett is because he earned the right to underperform. Because people that put money in with Warren Buffett 50, 60 years ago, they don't care. Okay? Right. They literally do not care. I mean, Warren Buffett doesn't have to keep up with the averages because all they know is I put money with Warren Buffett. I put $100,000 in 1972 and now I have $100 million. I don't give a crap what that guy does. And that's exactly how they should think. But everybody else, you're only as good as your last quarter. So if it's Tony Batista, money manager, or Chris Vecchio or Ilya Spivak, money manager, you have one quarter to prove yourself. If you're Warren Buffett, it doesn't freaking matter. So that's why somebody like him, he can wait it out no matter what. But everybody else, You got to be all in. You have no freaking choice. And the way the market's been over the last 15 years, you can't even afford to get out on a down move. And that's why they all panic at the bottom, because then they get scared at like 10%. But between where we are today and 10% lower, there's nothing you can do. You got to just ride it. You can't get out. Because if you get out, you're going to look like a fool.
Well, that's what happened in April, right? And then the market, basically people had to pile in and chase the market higher to,
of course,
fix their underperformance.
Of course.
So
that's another reason why I'm so bearish right now is because I don't like the dynamics of where we are. I don't like the fact, I think the retail investor is going to be right. I think the retail investor is going to be pretty much on the sidelines until there's really a good opportunity. And I think it's going to be the institutional investor here that gets caught.
You mentioned that retail traders have a good deal of money on the sideline right now. And given the low volatility, that kind of makes sense. That's our ethos, right? When it's raining, that's when you go out. But when it's sunny, put up the barriers before the floodwaters come in. Terrible analogy. Let's just go with the question, which is, what's the most common mistake that you think retail traders are making right now in this low volatility environment?
They might be chasing stuff, but let me explain why that is, because I think people...
Sure.
And NASDAQ's actually down on the day now. Pretty wild. So let me explain this for Chris, because it's interesting.
Mm-hmm.
Over the last 25 years, since we originally built Thinkorswim, since we got the retail side of the business, there has been this huge transition from being like traditional stock investors to being much more strategic for retail investors, because they become capital efficient. Markets are too expensive for retail investors to just buy stocks now. Nobody wants to spend, you're not going to buy 100 shares of Spiders for $64,000. That's bigger than most accounts. So people have become smart and they use derivatives now. They'll buy a call spread, they'll buy a call, they'll sell a put, whatever. They're much more capital efficient now. So for the customer that used to put all this money in the stock market, they now have a different approach where they're much more capital efficient. So they use their capital much smarter and they use other products. So it's hard to really judge what the retail investor is doing. But I know over the last 25 years, we have made the retail investor really freaking smart. We've made them capital efficient. We've made them understand products and strategies. And we've made them smart about investing. The institutional investor is in 2025 just as dumb as they were in 1975. They're still Neanderthal, like they're knuckle draggers. The institutional investor hasn't moved a bit because they've just been paid by a bull market, so they think they're geniuses. I think you're going to see a rude awakening for the institutional investor. I think the retail investor, they have better technology, they understand strategy better, they go play all the different markets, and they understand what's going on in the marketplace, and they're able to transition so much quicker that the next ugly move in the markets, the retail investor is going to be just fine. The institutional investors are going to get their fingers chopped off. and I'm just telling you, they haven't,
because of the duration of their trades, you're saying.
They haven't evolved. Tony, they do the same crap they were doing in 1985.
Mm-hmm.
The retail investors got like the coolest technology you've ever seen. They're all over the place. They're doing every strategy. They're totally capital efficient. And they are truly Neanderthals on the institutional side. They should be ashamed and embarrassed, but they're not, because the bull market has made them into millionaires and billionaires in some cases. But it's all garbage. All right, enough of a rant.
We've been doing Let Me Explain for a while now. That was the first time I was able to get you to say the words "Let me explain" in one of your answers.
That's fair.
But are you trying to explain the bull market? Is that what you're trying to say?
I'm not trying to explain the bull market. I'm just saying where we are.
Criticizing the bull market?
No, I'm not even criticizing it. I'm just saying, I'm saying.
It is what it is. We treat what's in front of us.
Right. I'm saying it's a little frothy now. That's all. I'm trying to explain. If the market turns, I'm actually making a very strong case for the retail investor. Like, I think they're going to do okay. And if the market turns, I think the institutional investor is going to get caught. That's all.
Very good, sir. Listen, I consider it a win. How about you, Chris?
Big W. Raise the flag.
We're going to take a quick 90-second break and come back. We got more Tasty Live. Sosnoff, NASDAQ down $1. Even the S&P's up 15. We'll be back in 90 seconds. We got more Tasty Live after this.
I'm going to take that as a win on my bet earlier, by the way, just so you know.
Well, it wouldn't be a win. You'd be actually 14 handles away from a win, which is a significant move in implied volatility. That's 16. But you can take it whatever you like because you're the boss. We'll be back in 90 seconds. This is Tasty Live. We got Market Measure next.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, Tasty Live in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
So
my day is
close.
starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
What color of jeans? They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 million.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. So is the market. Even the S&P is up 23, NASDAQ up 46, Russell up 32, Dow up 371, volatility in by 55 cents. I will take that a win for me, Sosnoff.
You know, next time we advertise for a job opening, we should just hire whoever figures out how to do spam email. Like this,
you get spammed on stuff all day.
The spammers
long.
are the best. You could block them. You can. It doesn't matter what you do. They find you.
You're not on X anymore. Every time I or other people that have some sort of following put something out there, you immediately get 3 to 6 spammers who will add your name in there and say, hey, Tony_Batista, great analysis on this. You know who else does a great analysis? This guy. And they put like arrows to them. They're almost all this, but they're genius in the way they do it now. Like they make it like they know what you're talking about because they must use AI or something like that. That was a great study, Bat. But you know who else does great studies? This guy.
Oh, yeah.
I mean, it's incredible. It's incredible.
I'm getting some studies now from people that like just get the stuff from AI. So you can pump out a 60-page study in like 30 seconds.
Sure, yeah, like it's nothing. Yep.
Yeah.
Crazy. It reminds me of my dad back in the day. If he would have just focused...
He would have just had AI. You know what he could have been?
No, not just that. If he would have just focused on doing the right thing the hard way, he would have been very successful. But he wanted to take the easy road. I don't know why. It just takes a little bit of work. I don't know. Anyway, even the S&P's up 23. I digress. Market measure.
Yeah. Yes. I mean, sometimes the internet's kind of a funny thing. Yesterday, I showed you a thing somebody else that said they created Tasty Trade.
No.
Thinkorswim.
Thinkorswim. Yes.
I find that's about the 5th founder of Thinkorswim that I.
Yeah. Heck, I'm going to start saying I was the founder of Thinkorswim.
Sure?
I say it enough times. I mean, I'm a better representative than any of them.
Hey, if you can work for a presidential election, it could work for founding a company. I'm going to say I'm the founder of Microsoft. What the hell?
Why not? Long lost brother of Microsoft founder.
You can say you won the U.S. election, and you can also say you founded NVIDIA.
Sure.
I founded NVIDIA. I had that idea before.
Right. I had the idea for Uber before anybody else. I mean, I was car service. I could do it in Brooklyn. I did
Car
it.
service extraordinaire. It's 9:14 in the morning. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live, and we're getting like a little punch drunk here. We got a bunch of stuff. We got Scott coming in about 15 minutes. We got a really good piece on expected move coming up. Before we do that, this is our last chance to tell you that the Chicago event this week, if you're signed up already, awesome. If you're signed up and you can't make it for some reason, please go to the site and tastylive.com/events. And if you could just take your name off the site, that would be great, because we are full, and we want to let some other people we're going to a wait list today. So we want to let some other people get on there. So it'd be awesome if if you signed up and for whatever reason you can't make it, just take your name off the list. It's just, it'll open up some spots for some other people. So that'd be great. Doors open at 8 a.m. on Friday morning, and the show starts promptly at 9. It's 90 minutes long. We're going to trade pretty much nonstop from right about 9:15 all the way till 10:30, and
As fast as my little fingers will permit us. I mean,
I try to do this as well as
I was best available. And now my name's on the marquee. I mean, to change that and all the other art cards that we have, it would be too expensive. So you're stuck with me at this.
I could do this with voice AI. I could probably make twice as many trades. With Tony, it's a little slow, and he puts a lot of things in backwards. But we'll get as many as
Never put anything in backwards, but I do work the order for you, Sosnoff.
Oh, that was Rich.
Rich puts the things backwards. That's right.
But Tony, he's a little slow.
You want me to just bang him out from now on?
You know what's funny is he goes, I was working the order. He wasn't working the order. But it's okay. We're going to try to do as much as we can. We don't know what we're going to do yet, but we'll see what's happening by Friday, and we'll get all over that. So let's see.
Now I'm going to be on Do We Whack 'em and How? That's it.
Yeah. So we'll see.
Are you bringing bagels?
Are we bringing bagels? Ooh, I don't know. She usually does donuts.
Nice.
Yeah. Britt's a donut person. So my guess is
Do right?
I don't know. She doesn't do Dunkin', which is good.
Yeah.
She's probably, my guess is, I don't know who she's going to use.
Do right? I don't know. They do. On the south side there, you might be doing.
You know what's funny? You have to. Sometimes you don't have a choice. You have to do whoever will deliver at 6 a.m. With fresh donuts.
This is true. Best available food.
Yeah, best available. But we usually do donuts and coffee, tea, that kind of thing. Anyway, we'd love to see you on Friday. It could go to wait list. So if you have a chance, and hopefully there'll be a few people that say they can't make it, and then we'll open up some spots to other people. tastylive.com/events. We are having an open house in our Tasty Studios on Thursday from 12 to 1. So anybody that wants to come on by, but you got to just drop us a note because we have security. So it's just drop us an email at support@tastylive.com, and we'll show you the studios and walk you around the trade desk, and you can see the Tasty Studios if you want to come by and just bullshit with everybody. Everybody should be here. Liz and Jenny will be here. I think Dr. Jim will be here. He'll be at the event for sure. Jamal, the research team, Josh, who else will be here?
All this cast of
the whole cast of characters.
Liz and
Nikki,
Jenny,
Mike, everybody, Katie, everybody will be here. That's on Thursday, but you just got to sign up in advance. Support at tastylive.com, and that's almost full also. And then what else do we have? And then next week, one last thing. Next week, again, one last time, we'll be in Mexico City at the let's see, where we're going to be at the JW Marriott in Santa Fe, which is it's like kind of the business area of Mexico City. So we'll be at the JW Marriott in Santa Fe.
Business. I'm
doing a talk on AI, digitization, and the future of risk-taking. It's a fun one. something brand new. Never given this one before. Looking forward to it. And we have a few free tickets left. It's a pretty expensive event, but if you'd like to come, because you're our customers, you can go for free. That's it. And then that's all we got on the calendar for next week.
It's a big week.
It's a big week. Yeah. After that, we have a bunch of events coming up in September. I'm going to be in New York at a conference that I'll tell you about more. Then we're going to be doing the show in New York. What else we got? We got some other things too.
Beautiful.
A couple different things. We'll get into them. S&P's up
32, Sadnoff as foretold.
And NASDAQ up 100. It was down in the day. Thought we had a chance.
$1. Yeah, it was down $1.
Yep. Thought we had a little bit of a chance. Gold's down 25.
Gold is down 25, getting a little bit of weakness there. You got a little bit of weakness in net gas. That's down almost 10 cents now. Market continues higher. I mean, really, to the downside, you don't have any of the usual suspects until you get to Netflix, down $6 and change. Tesla down $5 and change. Coin down $3 and change. This is why the NASDAQ is lower. Lower, still up by 95. But the Russell's the big leader in the clubhouse, up almost 3 times as much. Russell stocks leading the way here, which is kind of the weakest for me when the Russell is the strongest of the group.
Yeah, me no like this. Me no like this.
Mm-hmm. Meta up 18, UNH up 9. FIG up $5. It's a 25% move in there. Untradeable stock.
Yeah, this UNH move.
UNH. Yeah, UNH up 261 now, up $9.
Yeah, I was long it for the longest period of time.
Tough hold.
Tough hold. Very, very tough hold.
Mm-hmm.
All right, let's
get going here. 921. We got a market measure. You've been sitting there yapping. You're yapping and yapping. Hello?
Expected move bias. How far can prices go? How far can prices go? Let's take a look.
Typically too far.
Always further than you think. That's all you need to know about trading. Always further than you think. An expected move cone estimates the one standard deviation expected price range over a certain period of time. You know, it was a while back, and a guy comes to me and he goes, we were doing a show somewhere, and he walks up to me and he goes, I got this. I designed this, not the expected move cone. I designed a volatility cone.
Really? It's been there for what? 50 years? 40 years?
I don't know. He said, I designed the volatility cone. And I go, okay, what's that? And he shows me. It looks a little like this.
Mm-hmm.
And he goes, he was so excited. And I'm like, okay, and you're showing me exactly what? So it was all about expected move.
Mm-hmm.
So I think this is probably like 40-ish years old or something. Something like that.
Mm-hmm.
But I remember the first volatility cone. Anyway, an expected move cone estimates a one standard deviation expected price range over a certain period of time. So basically, you know, what's going to happen just under 70% of the time? We're going to live in that world. So 45-day, one standard deviation expected move, plus or minus 5.61%. Let's go next slide. So since every time frame has an expected move based on implied volatility, what is the realized volatility we've seen over the same time frames? And how does it compare to the expected move? Well, obviously the expected move should be greater than the actual move, because that's how everything's priced. The expected move is greater than the actual move, and that's why there's a little extra juice in what we do.
Correct.
Let's go to the next slide.
It was perfectly priced. It'd be nothing.
So we looked at 25 years worth of history. We observed the average of all the expected moves over 7 days, 14 days, 21 days, 30 days, and 45 days. We observed the average realized move over the same time period. So then we conducted a study for longer durations of 60 and 80 days. So we go from 7 days to 80 days. This study can be thought of as measuring implied volatility to historical volatility overstatement for various time frames. We're basically just talking about overstatement. How much does imply, which is expected, the expected move, compared to what actually happened? Let's go to the next slide. So the average of expected moves in SPY will be very similar to an expected move in the SPY with an implied volatility of 19.8, since that is the long-term average, since that's the long-term average of implied volatility. And all percentages are implied to be a plus or minus move. So what's interesting here is that some people say, well, it's not 1980, it's 19.1. Other people say it's 18.7, whatever. I don't care. But you can see the the plus or minus implied moves right in front of you on the screen for 7 days, 14 days, 21 days, for 30 days, and for 45 days. I'm choking on something.
He has a do not resuscitate. Remember that.
Anyway, so if you want to go out and look at 7 days in the future, what did that say, Beth? Go back one slide for a second. Is that 2.6, 2.1? Okay. So in something like the S&Ps on a normal basis, it's like almost 100 and something points. Now we have very low volatility, so it's a fraction of that. Now go to the next slide. So when comparing the SPY's expected versus realized moves over different periods, we found that the 45-day period was the only period where the expected move consistently exceeded its realized move. And that's why our mechanics are geared towards 45 days. Because people say, well, why 45 days? We always say, well, that's the optimal point in the decay curve. It's the optimal point in the decay curve because that's the point where it's the only point where the 45-day period was consistently the implied volatility or the expected move exceeded the realized move. And that's one reason that we tend to stay away from longer dated options. So if you look at the 7 days and the 14 days and the 21 days, and compare that to the 45 days, that's essentially where we are. Let's go to the next slide. However, once we get into the longer dated options, past the 45 days, the expected move continues to overstate the realized move. So why don't we trade options with expirations greater than 45 days?
Question?
And the answer is we tend to stick with the 45-day time frame because we see an inflection point of expected move overstatement coupled with a higher average premium buying power compared to longer time frames. In other words, the 45-day time frame is the middle ground for a higher P&L and consistent expected move overstatement. We posted it down here. So you have the 25 delta, short strangles, managed at 21 days since 2005, because we only have 20 years of really good data for this. And you can see that 45 days is 12%. And if you go out to 60 days, it drops to 10. And if you go to 80 days, it drops to 8.9. Does that mean 80 days is bad? No. Does it mean 60 days is bad? No. No, it just
trying to look at good and better, right, over a long period of time here.
And if you do the 45 days, you can make a lot more trades.
Sure.
And the more trades you make, the closer you're going to be to whatever your expectation.
You take more advantage of that. Right.
It's all about kind of the, again, number of occurrences, law of large numbers. 45 days gives you the chance to make more. And if it has the highest percentage and a chance to make more trades, it makes the most sense in our world.
Yep.
Let's go to the next
slide.
slide.
If you were to probably narrow this down to a shorter time frame, year by year by year, you'd probably see a little bit of difference in between all of these. And maybe the 90-day would do better than the 45-day. But all you can do is over time, right? Till the end by 65 cents, making new lows. Cancel crash.
Yeah, cancel crash for now. We look like we had them. I thought we were crashing.
Bonds 114.13. So
they stink.
24 ticks.
Takeaways. On average, longer dated options priced the expected move slightly higher than the actual move when compared to shorter dated options. And the 45-day time frame carried decent expected move overstatement with a reasonable outcome when compared to longer and short durations. You can see here, the differences are not that big sometimes, but it's also the difference between hitting in baseball between hitting 290 and 310. It's a big difference. 310 goes to the Hall of Fame. 290,
goes to the Hall of Fame.
I guess my point is, there's all we can do at Tasty is find like these little optimizations that you can do And that's why the 45 days comes into play. And here's the rationale behind it.
Let's take a quick 90-second break and come back. We got more Tasty Live with Joy, your friend and mine, Mr. Scott Sheridan, next. We're back in 90 seconds. 90 seconds. We're back in 90 seconds. This is Tasty Live. Sorry.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now.
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
It'd be nice?
The best part.
You gonna be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early, because we're going on the field most likely before the game.
You're going on the field most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live.
We're already out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live and enough out of you.
And I'm taking everybody out to the fucking...
Tasty Trade World Headquarters, your friend of mine, the very popular, that's right, Mr. Scott Sheridan from the Scott Sheridan Studios. This is what happens when you make all-time highs, and I called it, and he didn't. It's all
You
my
didn't call anything.
It's all look.
If you could just send me like a heads up, just a little emoji, like a head up, anything.
How about this?
Yeah.
I'm going to send you one. Take this as notice.
Yeah.
It's always like this until further notice. I will tell you when he's the opposite. Okay.
I second that.
Ooh,
Yep.
Jumping in on that. So I was told everything was good. And then I walk in.
Everything's always good.
And then the beehive got a little stirred up.
Everything's always good.
The hornets
I just
came
can't
up.
believe what you people have become. Like, you used to be normal.
We people.
You people. You people. Use people. I'm throwing Beth in there, too. Like, you used to be
I
normal.
know.
Now you're like...
Speaking of which, are you watching Hunting Housewives?
Oh, my God. Hunting Housewives now?
Okay, because they
I've heard about that.
Okay, they have a great line. There's a great line.
How do you hunt a housewife?
It's hunting. Like they go hunting. So it's so far it's pretty good.
Housewives go hunting.
Just listen. So it's in Texas somewhere, and this couple moves from Cambridge, Massachusetts. Not okay. So anyway, they make a comment. She says something about, "Do you have an open marriage?" To which she says, "No, open marriages are for liberals." Okay. We just find a woman that my husband and I both like and go for it. So there we go. So apparently, I didn't know that open marriages were a liberal thing. See, Tony's gonna watch this show now.
Now I have to.
Right.
That's what they're Maybe I feel like I'm watching these Mormons or something.
What are they hunting
This is
for?
good.
I don't know. The show, I think it's gonna get really dark. Is my guess. They did go skeet
What's
shoot.
the name of this?
Hunting Housewives. So I'm not going to call the person out who told me, but somebody on the desk.
I saw it. I watched it. I watched the whole thing. It's supposed to have been. It's on Netflix.
Oh my God. What's wrong? You're just.
I just watched it all last night. My son was out until 11 o'clock. My wife wanted to watch something.
Did you hear the line about the
The liberals? I thought that was right up your alley.
I'm not hyper like sensitive to that crap.
So you weren't really paying attention.
I was worried about the pegging. Okay, that was the one. Oh, have you watched it yet?
No.
Okay.
Oh, then you don't. So it was supposed to be on Spike TV. My wife told me it's supposed to be on Spike TV. That's why it's so spicy.
Because somebody on the desk who's going to remain nameless, the wife made him turn it off.
Okay, I can see that. So Netflix picked it up. So it's extremely spicy, provocative, and very nipply. It's very nipply. It's extremely nipply.
It did end with a good nipple scene yesterday, I will give you.
Okay. I don't lie. But it gets a little whacked out.
See?
On the last one.
Well, how many episodes are there? You burned through the whole thing.
Not many more. I don't know.
I've watched 2. Is it 5?
6? Yeah, 5, 6.
You got through 6?
Did 40 minutes or less. I mean, like, you know.
You watch them
it's
all.
not, I mean, it's 9. It's
watch all night long.
What's that?
When you sleep.
Well, my kid was out till 11, and we had a thunderstorm. So he had his bicycle, and he had his skis with him because they were doing something to the skis. So
skis?
Skis. This is pumpkin spice latte season already, so you can have your skis out. He's dying to go skiing, like, you know.
Skis? Downhill skis?
Yeah.
Not water.
Well, this is Illinois. Downhill skiing is you take a lot of liberty with downhill. I mean, it's hill maybe, not mountain, but sure.
Like Alpine Valley.
Like Alpine Valley stuff. But we're going to Denver or somewhere. What's that?
Well, it's not Denver.
I'm going when you're going. I'm taking my family with your family. We're going to have a family Sazno Batista trip. It's going to be great. You got a house. You got extra bedrooms.
Wait a minute. This is a really bougie. I haven't heard about this.
Yeah.
You got a house. Which side?
We're going the same weekend.
Which side of the fence? Because there's 2 sides to Big Sky.
It's just the 3 of us.
I'm going to Big Sky.
Well, it's going to be 4 of us.
How did I not hear about this?
Been planning it for a while, but
yeah, it's going to be 4 of us. Bring it from. We only need 2 rooms.
Is this a 36-hour Sazna family trip?
72.
We're staying longer. We're staying longer. We're gonna.
Nice.
We're gonna
72.
stay for
Are you
4 or 5
guys be able to stay together for 72 hours?
That's our absolute max.
Right. We're staying for 4 or 5 days.
48 is normal.
Grandson too?
Yes.
Whoa. When is this occurring?
Yeah, we need a room away from the grandson.
Next year?
Going to be any
like ski season.
Crying.
Ski season.
Okay. I will be a few states below you. Not hard.
Where are you going to be?
And evidently you liberals peg. I should get that back in there. Sorry, go
Where
ahead.
am I going to be? Where do I go in the winter? Arizona. So I'll be a few states below you. I can just pop up. It's supposed to be beautiful.
Oh, now, okay. I had 2 rooms. Now you just took them. Now I'm sleeping outside.
Big Sky.
You want me to take Vinny for you? Because you're not skiing.
Vinny and a friend.
Big Sky's
Vinny
supposed to be amazing.
Yeah.
Heard. Yeah. That's what I'm.
Yeah.
Last trip we went to Park City. This trip we're going to Big Sky.
And the other kid's a caddy, so he's not opposed to holding your bags.
He's a caddy. I like caddies.
So he'll hold all your stuff for you, cases, stuff.
Because I've seen Vinny.
And Vinny's trainable.
I've seen Vinny in action. I don't think he's trainable. and he carries a big suitcase. He's
Vinny's trainable, but he does carry a big suitcase. He has enough work with his own suitcase. This other kid,
what does he need?
A pack rat.
What does he need a big suitcase for? I mean, I get the.
Vinny had a suitcase. Vinny had like Coming to America suitcase.
Why?
He did.
Why?
He did. When we went to London and Paris, yeah.
Outfit changes?
The man's got style. He's got flow. I mean, come on.
He had a suitcase that was half the size of him.
He's got drip. He's got to take care of stuff. Yeah.
The Batistas.
You teach him?
I don't know if I'm teaching him. You be honest. I travel light.
He travels light, but the rest of the Batistas, they carry their suitcases are like they have the big. Like they're moving to that country.
They're the ones that if they're nice to you, you don't have to pay the extra 50-pound fee for. If they're not nice to you, you pay the 50-pound fee.
Nice.
Yeah,
those people.
They got where you can fit 3 suitcases in one.
Yeah. Yep.
And they expand.
And you have to tie them up with ropes.
Can we get back to, do I have 2 rooms?
I don't know. I have to check.
We can squeeze into one if you really want to.
Do they have a hotel there, or you're renting a house?
No, I got a house.
No, it's a hotel.
It's a hotel that has houses attached to it. It's one of those places, if you know.
It's a hotel.
It has auberge next to it, like, you know what I mean, that kind of thing. Yeah.
No, I didn't say it's cheap.
It's Sheraton worthy.
Nice.
Yeah.
Because there's the private side and there's the public side.
Not the private side.
I would expect more from you.
You know what? I'm telling my friends about this. We're not on the private side.
Right. It's a.
The private side you can't go to. You have to be a member.
It's a who's who of home.
You owe me. You freaking owe me. You know you do.
What do you mean? What do you?
Have you ever been to Montana?
What do you mean?
I've never been to Montana.
I've never been to Montana either. I have friends that.
I'll bring out those pictures, you SOB. I'll bring them out.
Montana? Oh. Oh, this is when Corinne says she's been 3 times.
She said,
And then
With supporting evidence?
And then when she's complaining, what do you mean we're not on the private side? How'd you know there's a private side? Oh, I don't know. I just heard. I heard there was a private side.
I heard there's a private side. I never know a private side.
It's a crazy story about that place. They went bankrupt, and then somebody bought it, and now it's like you could have bought land there, obviously, 10, 15 years ago for nothing. And I don't think you can buy. I don't think you can buy a lot in there for under $10 million.
I'm going for 72 hours. I'll be fine.
We're going to rent it for a little bit longer because we plan on being there 4 or 5 days.
And I have to say, you have always said to Tony, like, if you're willing to go there, I'll pay for it. I'll pay for it.
Right.
He's willing to go.
Put your money where your mouth is, you cheap SOB. You got alligator arms.
I said if he's willing to go to India, I'll pay for it.
Oh, India, Montana, what's the difference? Okay, it's close enough. Tony, he's paying for it.
You know what I'm going to do, too? So I'll make my family go the first 2 or 3 days so they'll be used to, oh, yeah, this is nice. What is this? What is this, a Motel 6? This is very nice. Thanks, Dad. I really, really love it. And then the next 2 days, we'll uptick to where Sosnov's going. And then they'll be thinking, Dad, you're amazing. It's going to be great. I'm not going to do it the opposite way.
No.
They won't talk to me.
No. It's nice. Yeah, don't worry.
Appreciate it.
I'm not
Thank
offended.
you.
I'm not offended.
We're still not even,
Yeah.
but thank you. I appreciate it. Very nice.
I'm not offended.
I mean, you got
I
the
didn't
extra
get the nod,
room.
but that's okay. Tony, maybe you and I'll go skiing.
That'd be nice.
Yeah, that'd be nice.
I would go with you.
Yeah, thanks.
I'd even pick you up.
Appreciate that. Do you ski?
I used to.
Border
I haven't skied in a long time.
Border ski.
No, skis. I was too old for boarding. I mean, that came way after my career was done.
Should we go over Tom's boarding story?
No, we don't need to go over the boarding story.
Well, I was smart enough to get the
I never
instructor.
heard this.
Never heard
So
this?
you board? You
No, he doesn't.
I ski. So we were with, are we allowed to talk about Jules?
Sure. I have no hard feelings towards
So
Jules.
we were at Jules. We were with Jules, skiing at
Big Sky.
No, Yellowstone. I'm like Jackson. We were in at Jackson. So the mountain gets shut down because it was too windy. Now Jules the whole time was on the bunny hill.
That's okay.
And we're skiing. The mountain gets shut down. So
I mean, the bunny hill there is alpine here in the.
I'm sure it is.
No, it's a bunny hill.
No. You're going to make yourself sound worse. So just say yes.
Jules
just
was
say yes.
rolling down the hill.
Okay, so
If you
now
caught some speed. That would be.
We decided to get snowboards because I'm like, let's try it. Right?
The bunny hill was still open.
Yeah. So we're going to get snowboards. So I get an instructor. To which Tom, I can't say the word, calls me a something because only a something will get an instructor.
This is Mary, which is bad enough.
So be a man, figure this out on your own. I said, you know what, you go do that. I'm getting an instructor. So I get an instructor, we go to the chairlift. Now, we look down, the instructor looks at me and says, is that your friend? I said, yes. Okay. He's got his blue jeans on with gaiters. For those
Probably
of you,
the same pair he's wearing today.
For those of you who don't know what gaiters are, please look it up because they went out in like the 70s, but Tom still wears them. So he's lying in a tree well, okay? And the instructor said, do you think we need to go help him? I'm like, probably. So we go down, we come back up, we go back down. He's still lying there. He says he's fine, gets back up, somehow I think makes it down and says, this is not for me. And then that was the end of the snowboarding experience.
Snowboarding is stupid.
That's so good.
It's a true story. We won't get into the snowmobile story of that trip, but
I hear you.
he didn't need the mask. Real men don't wear masks. Face was a little chilly. So was the.
Oh, he's the best. He's the best.
Did you still have that yellow Old Navy fleece?
Oh, somewhere for sure.
For sure. It's with your baseball mitt
sure.
signed by Mark Burley.
I don't know where that yellow.
The yellow fleece. I have to have a picture of that somewhere. Priceless. All right. Get to some business?
Sure.
Top 20 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you. Number 20, AAL at a 15. For everybody else, Tesla at a 6. Meta at a 5. NVIDIA at an 18. AMD at a 16. PLTR at a 10. Apple at an 18. Circle at a 17. HIMS at a 23. UNH at a 27. Google with an L at a 23, Amazon at a 4, TQQQ at a 15, ETHA at a 67, ASTS at a 14, TLT at a 5, SoFi at a 7, Hood at a 17, Coin at a 10, OKLO at a 19, and number for 20 for Tom, AAL at a 15.
What do you say about that, Sadnoff?
He wasn't listening. Oh, that's how he knew. See, he looks up, and then he can see what 20 is. He actually looked to see in case you asked him he was going to get it.
I'm surprised anybody's trading AAL. What's it doing today?
AAL. Why would you with even the S&P's up 30? Well, up 90 cents. I don't know if a big 8% move. That's pretty big.
That's a big move.
Let's see what Love is doing so that my sister could be doing well. Up $1.15, Sadnoff, but near its lowest, $30.21. That has to be over $30. That's her cost basis. Sadnoff, can you do something about that, please? I mean, the woman's trying to retire, okay?
Does she work there?
Yeah.
Oh, nice.
Yeah.
Wait, which sister?
My newfound one, the one who's younger than me.
I thought you had more than one.
I do. I have an older one who's retired, 10 years older than me.
Who had the wedding?
The younger one's daughter had the wedding.
Florida?
In Florida. Well, yes, in Florida. Well, now she has another one.
A lot of sisters.
A lot of sisters.
Yeah, a lot of sisters. Yeah.
A lot of sisters.
Yeah, 3 boys, 2 girls.
Are you one of the 3?
Boys. Yes.
Got that.
Okay. Yes. Yeah.
So we're the 2 brothers. But are the sisters the 2 sisters are not the same? Mom?
Everybody's different.
Oh yeah.
Dad was a Rolling Stone. Everybody. There's 2 that are alike. 2, 1, 1, 1.
Where were you?
2, 1, me. But I always thought I was an only child. And then 1, 1.
Do you ever ask them? Do they think they were the only child?
She didn't even know that she was not her dad's child.
Does anybody know? Did anybody know your dad? Any of these kids know him?
The older son, who I never met, he passed. Kind of had some memory of my dad.
Nobody else knew him.
Nobody.
But were they all?
She didn't even have my younger sister did, and the older one never even had a picture of him.
But was this? Did he travel, or this was all in New York?
It all stemmed from New York, if that's what you mean. I mean, yeah.
Back then, they didn't get on a plane, okay?
Yeah, no.
They weren't flying in the Townsend, okay?
No.
They were driving.
You know, back then, if you were in Queens or the Bronx, you might as well have been in Wyoming. I mean, you know, it was the same thing.
They never crossed the East River.
No.
I promise you that.
No. Mm-mm.
This guy wasn't jet setting down to Miami, okay?
My older sister only lived about 1.5 miles from me in my entire life. I never met her. My older sister and brother. Right by LMB Spumoni Gardens.
Maybe you did meet him.
Maybe. Passing kind of thing.
Kind of crazy when you think about it.
Oh, just I'm glad it all happened after my mom passed, because my mom would not have been very happy.
You don't think she knew?
She knew about the 2 older ones. She didn't know about everybody else. I'm 100% sure of that.
Was he with her for the 2 older ones?
No, my mom was kind of like the side piece to the 2 older ones.
She was then.
Let's call it the way we see it. I mean, I'm fairly honest that way. But my younger sister's 14 months younger than me.
Oh.
That's a tough one.
That's a tough one.
And then the other one's 10 years younger than me. Mom and Dad had already said.
So you would have just told your mom that she was 14 years older.
I would have lied.
You would have had to.
For sure. She looks great for her age, Mom. Great for her age. It's great for age.
Great.
Enough about me. Do you have some dirt that you guys would like to settle? If you're going to give me that.
I'm good. You're not getting anything out of him.
I know.
No,
nothing.
Steel trap.
I don't have any unknown brothers or sisters
that you know about.
Right.
Wait until somebody does 23andMe, and then you find out you got like 6 of them.
I think everybody's already done it.
We're going to take a quick 90-second break and come back. Mr. Sheridan, you all right? Liz and Jenny next on the floor of the SIBO. Immediately following these messages. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
And welcome to the Liz and Jenny Show. I'm Jenny Andrews. This beautiful blonde is Liz Deerking. It is a crazy Tuesday down on the SIBO floor.
Barely a blonde. We were just talking about it. I can't get my hair colored until Friday.
I was just telling the guys, I may not look too hot right now, but I'm getting my hair colored tonight, so wait till you see me tomorrow.
No, it is. So this is our favorite day of the week. We are live from the SIBO in the middle of the SPX pit, which is wonderful. It's very quiet here today. This is unusually quiet.
Okay, we've got a few, well, other than the guy who just burped over there, right? Did you hear that?
I hope that got it. There we go.
It is quiet. I blame it on the lack of interns. Most of the interns are gone. There are still a couple doing all the work. A couple interns doing the work
we saw one bringing up 20 cups of coffee. Well, 10.
He had so many cups of coffee, he couldn't carry them. I don't know. Why do you think it's quiet? SPOO's up 43. What came out today? CPI? Yeah.
CPI, yep. So let's take a look. So SPOOs are up 43. It is quiet on the home front. We walk in by the VIX pit, and VIX pit was like pin drop quiet.
Well, in the VIX, okay, let's jump into the platform and take a look at what we're talking about. So we have SPX up 46. You can see that right here. But we've seen both ways, right? It was up 20, then 30, and then at some point in time, SPOOs were only up 10.
Yeah, they were only up 10 because, my internet was just connecting here and we were up like 12 and I was like, whoa, at least I can see the board.
And so when SPOOs were only up 10 and we thought, and the NASDAQ actually turned red, we thought, let's take a look at the VIX and what the VIX is doing. At that point in time, VIX was 1550. Guess where it is right now? Don't look.
Okay, I won't look. It was 1550 when SPOOs were where?
Only up 10.
1505.
14.90. 14. Can you?
Are you out of your mind?
14.99. Are you out of your mind? Are you?
It's in the 14 handle.
I can't believe that. You would think. I would expect this in like the doldrums of summer.
It is the doldrums of summer.
No. Do you know?
What do you consider the doldrums of summer?
Well, all I know is we had our last sunset.
Meaning weather-wise, not market-wise.
Doldrums of summer, I can think like June, July, 4th of July week, like real low, like boring summer trading time. Now we're August, which is usually busy, and we had our last sunset after 8 p.m.
What?
Yeah.
It's all downhill from here, ladies and gentlemen. All downhill from here.
And VIX is 1888 now. 1488. 1488. It's ticking It's crazy, right? Crazy.
Yeah, that is crazy.
So
Can
I
we
don't
take
know.
a look, CPI, let's take a look at what bonds did. I actually didn't look at it when the report came out. What say you, did the bonds do, Jenny Andrews?
So I, like you, we were in transit, moving to the train.
So I think the bonds were up a lot higher than this, weren't they?
So they,
Oh, yeah. Look at that bar.
And I could go on the minute bar if you want to see what.
No, what does that high say?
The high today was 115.21.
Okay, it's significantly higher than this.
Right,
Full
we're
point
at 114.20.
Yeah,
But
significantly higher.
it's tricky. With the bonds at 114.20, to me, it's not like I'm jumping into the long side or jumping into the short side. It's kind of just like sit and wait.
I get long bonds in the 113
handle.
Yeah.
Now it's got to go a little bit lower.
Currently, I think things change when times change, but if now they're percolating.
Hey, you know what I'm gonna?
Do you want to see where they are?
I'm gonna pull this up on Twitter. Hang on, everybody. Hang on. Here we've got this visual. This is a visual of the pit. We are standing right here.
Well, we're sitting right here. I want to stand, but Jenny refuses to stand, so we're sitting.
I'm 5'7", she's 5'10". If we stand, I have to stand on a box. Chances are I'm going to trip and fall off that box.
If the 3-inch box might take her out, and I agree.
I mean,
no, it's okay.
So we sit. So I don't have to stand on a box every day. I'm sorry.
It's true.
I'm so sorry.
No, I just had to correct because you said we're standing right here. We're sitting right here, but the rest, they're all standing. They all have to stand, and we get to sit.
Anyway,
I'm putting in a petition to get us permanently added, the Liz and Jenny set, right there.
So here's the pit, and when we hear noise now, we can kind of look and see, oh, where did that come from? Who is that? What's going on back here? Take it out. Tell me who's back there.
Yeah, and Frank, I will tell you, this came from your nephew. I saw your nephew with this behind him, and I asked to take a picture of it, and then somebody else produced a printout for him, which is fantastic. Now, I just wanted this because we've been talking the whole time about people like, oh, there's nobody in the pit. This is a jam-packed pit. You can't tell it from our set. So we're right there. It's deep behind us. It's deep.
I know. I can't remember who we were talking to, but we were over in the Tasty Live offices, and someone was saying like, oh no, there's like one guy in the pit. No. There's like hundreds of guys in the pit.
And honestly, one of my friends from that I used to know from the trading floor, he's not here anymore, but and he's with us. He's not gone.
I'm sorry for your loss.
He's with us. So he invited me to he's like an old pit party at this pizza place near us, and I was like, I'm in the pit. He's like, no one's there. I was like, you have no idea how many people are still here.
Right, there are a lot of people here. And you can see how busy it is. Every box on this is actually like someone on a badge or a clerk or a broker.
Or sometimes those boxes.
There he goes. There he goes,
Jeff. Jeff, thanks for the map.
Thanks for the walk by. One of these days, folks, we'll get Frank the Great's nephew on.
He's camera shy. He's just a little shy. He's too handsome for the camera.
He's so handsome, he would break the lens.
He'd break the lens. That's right.
All right. There's a couple things I want to go over. Number one, I want to talk about what's going on this week.
Mike, Nick, and Katie did a great job. They were Sunday.
And they were amazing.
They were in not Denver.
Seattle. They were in Seattle.
They did an amazing job. We've got nothing but great reviews. So check out their Mike and his Whiteboard and Friends tour.
They were great. So Friday is at Work by 11 here in Chicago. What I want to talk about, which maybe John could flash the art card below us or give some information below us.
Zero pressure, super producer.
Thursday is our meet and greet in our studios. If people want to come by, it's a set time. I believe it's 12 to 1. In our Tasty Live studios this Thursday, you have to sign up to come, and it was support@tastylive.com. To you email if you want to come by Thursday, 12 to 1 for the in-house meet and greet.
And the reason she's saying that you have to sign up. Now, if you are a Tasty Trader from 14 years ago, we were a free-for-all. You can come and go as you pleased.
Not
we
anymore.
owned the building. We do not own the building that we're in. There's heavy security, and we almost couldn't get in the other day when we forgot our badges.
Badges. The lady said, where are your badges? And Liz said, we don't need no stinking badges.
We don't need no stinking badges.
Well, we did. And you can't get in without being on the list. So it's tight security over there now. There are a lot of other people in our offices. One being Dyson.
Oh, the hairdryer place.
Yeah, one of these days I'm going to try to get a discount on hair.
Do you think they can color my hair?
Do you think we can get a deal on the Dyson hairdryer?
Yeah.
Or curler?
What do you Dyson people think the Tasty Live studio is? Chef show?
Food Network?
Food Network.
Food Network, maybe.
Yeah.
I don't know. Yeah, Food Network. Well, they don't get to see ours because, if we go up the elevator, we stop on the Dyson floor. It's on our way up, and I could peer in and see it. They never get up to our floor, so they don't have never looked in.
True.
Yeah.
True.
Anyway.
Do you believe in all the technology and all the land that's what's happened is we don't press buttons in elevators anymore? You just put your key card badge, it tells you what elevator to go, and you don't touch anything.
You don't touch anything. It just takes you to where you have to go.
But you don't need people in the elevator anymore.
No, but that's the high security of these.
That's true.
This day and age. You know, someone else sends you. You get in, and someone else sends you.
Yeah, that's true.
You're not getting in. Like, I was walking in the other day into the building with someone I thought, because sometimes they film the bear from our building.
Oh, they do.
And I saw...
Not in our studios. And there's a restaurant in our building that they film it from. Yeah.
Right. So we've seen filming going on at our office, at our building. And so there was someone walking in, and I thought, I wonder if they're from the bear or from, getting ready to produce something. And I crossed my fingers, and I thought, I hope we get put in the same elevator.
Nothing.
Nothing. I was alone.
Like, come in this elevator.
Anyway, if you want to come and check out the Tasty Live studios, you have to sign up. Support at tastylive.com. It's this Thursday. It's in 2 days.
And it is only an hour. It is from 10 to 11. Or, I'm sorry, from noon to 1.
Noon to 1.
And then also sign up for the Outwork by 11 in Chicago. It's going to be in Pilsen. I think they've got room for people. It's in a big hall, Talia Hall.
Yeah, it's going to be great. And Tom and Tony, they're always good. Tony's funny. Tom's always inspirational.
They're a dynamic duo. They're a force to be reckoned with. I highly suggest going. We will not be there because we're doing our show, but some other tasty talents will be there.
Yeah. Got it. All right, that was my public service announcement.
PSA.
Back to the platform. We have a lot to do today, but I do want to get to Twitter, too.
Do you know what I'm kind of mad at? I attempted to do a Jajun today, meaning I thought the market was going to pop, but I put it in backwards, so I have a short call spread in.
Right now, you still have it on?
Yes.
I got crazy on the train at 8:30. I threw at 8:30.
And I said, you can't do that.
Rules be damned. I did an Iron Condor at 8:30. I just put on the Iron Condor at 8:30.
What are your strikes?
My short strike is my short call is the 64.25. We're just about right there.
Oh, you're fine.
Yeah, we're just about. It's right now we're 64.23. My short call is 64.25.
Yeah.
I did it. 8:30.
Certified badass options trader. Give yourself the card.
Give myself a card. Let's see if I have one. Oh, Liz, here. You can give it to me.
Oh, Jenny, I'd like to formally present you with the certified badass option trader card.
I'll take it. I did my trade at 8:30 today, Liz.
We should bring some of those with us to Germany.
I'm sure the Germans would love it. I don't know. Some things don't translate the same.
We're sitting there with Jamal and Tom, and we're talking about handing out German translated books. And Jamal's like, wait, are you going to do your presentation in German? Because I think everybody speaks English there. I was like, yes. It was so funny.
Right. It's almost up 50 now. And you have a short call spread on?
I have the $5 wide Jajun. I was going to do a traditional Liz and Jenny Jajun, and it would have worked had I put it in right, but I wasn't paying attention.
I want to look at a few things that had earnings. I believe CRCL did Circle
did, and it's up 7%.
Okay, Circle's up $11, 7%.
Yep.
Great.
Circle did. Okay, LO did.
Wait, I want to see what happened to these December puts. They were the 110 puts, and they were $8, so like $2 came out of them.
2 came out. Yeah, I mean you got the move. You can take a little bit out of it. Yeah.
I wanted to see if they would blow up in a big down move, but we didn't get that big down move, so I didn't see.
Oh, you wanted to see them blow up?
I wanted to see if they would, how much they would, how much margin would, but it didn't happen.
None of that stuff happened.
Okay, so also we had OKLO, and it didn't move that much because
it was down a wee bit, like a smidge this morning.
Between our show and the end of the day, it fell a little bit.
Yeah.
Between our show and the end of the day, because yesterday you can see fell a little bit, and then today it opened down a little and now kind of bounced back.
Now it's unchanged.
So we had said we'd wait for after earnings if we wanted to get in.
And OKLO is in 19 ranks, so let's take a look at the...
If I were to get in as a new subscriber, I would probably maybe look at a diagonal, and you're going like October. So it's not cheap, but here's the $75.95, $15 wide for $7.50.
So that's bullish. It's not bad.
Or a put spread just in. We could just do a September put spread.
Let's go simple put spread. Just go 60.55 maybe.
I don't think we'll get enough.
Yeah, 160. There you go.
65.60.
I don't mind getting an OKLO at 65.
Okay. This is our after earnings trade. We didn't want to risk it through earnings in case they had a big fall.
It's the back of the pit heating up.
There. One basic, simple put spread. I'll put in a GTC for 50%.
Yeah, and then push that bad boy out.
I don't know what else was on the move today.
We also want to take a look at our ETHA. ETHA, only because it's a Jade Lizard type position, and I saw it. It was almost, crossing through our call spread.
We just put this on yesterday. We sold a call spread and a Jade Lizard, but the call spread was close because we couldn't get enough, like going for a little bit further. I almost wish we would have just sold the put, because now, the put's winning, the call spread's losing. It's going through our call spread, and we almost have to take this off, or we won't make anything if it keeps going up.
No, but that's the nature of a Jade Lizard, right?
Yeah.
So if it's going to go through your call spread, and we're in the 38 day, you got to take this off.
Yeah.
Let's take a look at our IBIT too, because that's weekly.
But IBIT's not having the move up that it's having today.
Etha, make sure you're pushing everything out.
Oh yeah, sure. Let me get right to that. So
just because we like to push them out real time. And while she does this, I want to show here. So she's going to push that to follow page. She's going to push this to the follow page. We're the best team in the business, and then I will hit this. And then Jenny, show where you can go see where things get pushed out.
So if you want to follow some of the Tasty Trade personalities, you can go right here. So our trades just came through. Oklo, we sold a put spread. ETHA, we closed. This was a close. This was an open, and it tells you the pop too. We sold that put spread in Oklo, pop 66%.
Hey, I didn't know that. Did you know that?
No, I didn't. I just, first time seeing that. And looks like Jamal's been busy. Oh, this close.
Yeah.
And look, Shark Jeep. He's trading ES.
Yeah, that's awesome.
Okay,
so
they could sort and just look, okay, what's high pop? What's a high pop trade here? And then, so here, what did he do? Sold, let's take a look at what Shark Jeep did.
Sold an option.
Sold the 63.50 put. High probability.
Yeah.
And then if I wanted to duplicate it, I would just hit duplicate this trade.
And no one on here is a trade recommendation. No one. Not a single person on here is a trade recommendation.
I want to see how far this takes me. I hit duplicate this trade, I hit agree, and it pulls it up. So I see what he did. Sold the 63.50 put. This is in the 3-day. He's trading the weeklies. He's in the 3-day, selling a put, 725, buying power 33,000.
Big by big.
Big by big. So I guess we complain that we have a small account on this show, but there are enough people on the follow page that have big accounts.
Yeah, for sure.
So you want to follow big trades? You can find them on the follow page.
I'm telling you, though, everything can be replicated, sized up or sized down. No matter what size your account is, you can always size things up or down.
Sure.
By different product, by defining your risk.
Yes.
There's lots of things that can be sized up or sized
down.
down.
Yeah, if we wanted to really do that, we could go to MES.
Correct.
And instead of getting, $300, we'd get $30.
Correct. And that's just it, is you can size it. Say I want $60. You can then do two of those. There's lots of things that you can do. We're just here to provide, I don't know. We're just here to be the noise in the background.
When we started this, I never minded the idea of teaching. I had a class. I had people come to my house and I was teaching them options. I never minded teaching. And when we started this, Tom kept saying, you're not teachers. You guys aren't teachers.
No, he kept saying people need to rise to your level. And it is hard to, and don't get me wrong, you're a good teacher, but basics are tricky.
Basics are tricky.
I love teaching very complex things. It's hard for me to do the basics.
I've always wanted to go on my covered call tour. One of these days, Liz, when they turn the lights off on the Liz and Jenny show, I'm going to go on a covered call tour.
I hope more people know what a covered call is than have to take your class.
Hey, I think I can do my ideas. I've always brought them to the office. Nobody's followed through. Take the covered call tour on the retirement home circuit. Hit every retirement complex in the United States.
I do hope that more people understand what a covered call is than you have to teach. That's my goal. That's my ultimate dream, is to have everybody kind of understand what a covered call and a naked put are before you get to them.
Before I get to it. All right, I'm going to go to Twitter because we have a handful. Ajit, we will get to this. Ajit's posting names with the highest IVR. So we've got a lot on here. Adobe, CRM. There's quite a few on here that we might trade.
And we are kind of coming up. There's not a lot of earnings today, correct? So I don't know if a lot of these are going to have earnings coming up.
No, I feel like. Do you think we're already at the end of the earnings season?
Lulu bats cleanup. Let's see where it is.
Okay.
In my mind, Lulu always bats cleanup.
And look who's back. Look who's back. Vacation Profits hit different, made 62.50 on the CPI pop with a long ES call spread.
Congratulations on your wealth.
Nice, Mikey. So he must be back. Here they are, last leg from Newark back to Chicago. Been traveling now for 18 hours. Where were they?
Took Tony Batista to South Africa. So,
and he's got his shirt on. I'm not happy unless I'm unhappy.
I love it.
Love it. South Africa. 18
That's amazing.
hours.
They were on a safari.
Yeah, that's right. Well, you guys are looking good. Looks like you had a wonderful trip.
So I just looked. Lulu is September 4th. So I think we've got 2 or 3 more weeks of just peripheral earnings.
Yeah, that's a week from Thursday.
Yes.
2 weeks from Thursday.
Yeah, it's right.
We still have a while.
Yeah.
That's my sister-in-law's birthday, September 4th.
Oh.
Okay. Option volume. 55.6 million contracts, 6% below recent average. Calls leading puts.
And this is yesterday's.
There was something I wanted to get to from yesterday.
Okay.
Well,
Dan the Crypto Man.
Once Liz and Jay give you a nickname, you know you've made it. Well, I loved having Dan on, and we have some questions for him. He's going to go over some basics next week.
Because he said a word that both of us
Staking.
were. Yeah.
Staking.
He kept saying he's comfortable staking, and we kept being like, make us comfortable staking.
What is it? Yeah, I emailed him after the show. I was like, hey, he kept saying staking, and we have no idea what that means or how to do it.
Yeah.
Because we have crypto positions, but we're not staking.
I don't believe I'm staking unless I'm accidentally staking. But I hope he can show us how to do it on the platform. I think you might not be able to, but that's okay.
Oh, so he's gonna go over staking for us. And Cupcake, and this was 22 hours ago. What I wanted to show was this.
Who we got?
We talked about how we have a small account. We talked about switching to maybe using a different account to have a personal account to have a larger account than this show account, which is small. And Ashvin says, I appreciate you two using the smaller account. It helps actual small accounts greatly. So
I agree. Jenny's always threatening to use her own account, and I'm always like, I'm using this one.
Well, it bothers me. Like, personally, we both do much better than this show account.
But I will say the problem is you can scale in your account and you can't here. So just like how we put in that OKLO put spread, say you wanted to put, and I'm just making this up, but say you allocate $3,000 to OKLO. You're not going to say, you might still do the put spread in your account. You might do multiples of it, but we don't do that here.
I know.
One put spread isn't equal to any of the naked puts that are trouble for us.
Right.
All the naked puts we have in here are trouble.
Yeah, they have been. They have been. So Ashvin, we hear you. We know that we've got a lot of viewers with smaller accounts. And so today we decided to take the time to walk through some of our positions and talk about buying power, talk about using less buying power, how to use synthetics to help your small account,
Yes.
help give yourself some buying power
Yeah,
back.
we're going through we're going to talk about synthetics and buying power today, so I appreciate that, Ashvin. I wanted to go to Frank Walsh, Punish Pixels. I appreciate you. I think you're trying to put on sell a call spread to finance a put spread. That's a Delta Buster.
Yeah, buy put spread, sell call spread to pay for it. Yeah,
That's a Delta Buster, which I do love, and we might look at that. But I want to say this, that I love that he did this. The Intel CEO, because I didn't know how to say his name, Lip Boo Tan. I don't know if it's spelled right, but Frank, I love that you put it in there.
Thanks for putting it on like that. Yeah. Okay, so, and I'll go top down, make sure we got to everyone, and then we're going to walk through some synthetics and free up some buying power in our account.
Yes, thank you, Jeff. I can't believe how many of my friends don't do covered calls. It's the simplest thing ever.
But that's what I'm talking about, the covered call tour.
Well, that's what I'm saying. I really hope more people do it before the Liz and Jenny show lights out. I hope the world knows about covered calls.
And do you remember when my mom called me once about, she heard a guy on the radio, he was charging like $700 and he was going to teach covered calls. She's like, I might sign up for that. I'm like,
well, because the way they put it up is like it's income on the stock that you already own. That's a lie. It's not a lie. It's a cost basis reduction, but it's okay.
Yeah, right. It is income. I mean, it is extra.
Yeah, but it's kind of like the buffer trade, or when you do this on paper, when you try to teach people how to sell puts. Your friend was like, okay, so how much do I pay for that? You're like, no, you don't pay. You collect.
Right. People need to learn, which is, again, why when the lights go out, I'll be ready for them. I'll be ready to hit the retirement centers and do the covered call tour. I mean, you can come with me if you'd like.
I do not want to.
You don't want to?
Nope.
You don't want to teach covered calls?
I want to teach complex option trading strategies.
What if we could teach covered calls on a cruise line?
I would like to be... Complex option trading strategies. That's my jam.
You'll be if we they were going to have to do. So one of our viewers just signed up for a 61-day cruise. We'd have to be on the 61-day cruise to get to the complex option strategies.
I want complex option
We'd start
strategies.
with the covered call, and then by day 60,
I want the Smarties.
complex. All right, Jackie, likely no trading day for me. I think if Liz's short call spread shorts 64.35, statistically it should be okay. So
yeah, I think I'll be okay. I just put it in.
Yeah.
I tried to do a Jajun regular, and I just wasn't thinking and just put it in. I'm fine with both. They're both defined risk.
Event days are generally unpredictable, and we had the CPI today. So
who's up 49?
So Jackie took a day off.
Jackie took a day off, yeah.
And then Eric, what did he do? Done for the day, sort of. 14.45 after fees, but then I stuck a 1 lot 4.5 credit if at 64.10. So we'll see. So he's got.
Here, I'm going to do the genie move for you. 64.10.
And we did get back and forth.
Hey, I'll get out of mine at 64.10 too.
You know, we had back and forth, and I looked at this. At some point, you know, we were up so high, I could have bought my put spread back for very little, 50 cents or something. Then when it dropped back down, you could have, like, we have been ping-ponging around where you could have gotten out of one side and then the other, which I might start to do in the future.
Well, on event days, like Jackie says, on event days, you do get the two-sided action.
And Keaton, a nice SPX trade on Double Down Monday.
Oh, this was yesterday.
That was yesterday. Yes, that was yesterday.
Double Down Monday. I love it.
Okay. All right. Now, do you want to get into our...
complex option trading strategies? Yes.
Buying power reduction day? BPR day?
So we're going to show a synthetic covered call.
Yes, we're gonna.
So get your helmet on.
We're gonna. There's a lot we're gonna do. It's 10:24, but I think we have time for it. Okay, here we go. We're gonna take some of our positions that are using a decent amount of buying power, and we're going to change them into synthetically the same position that uses less buying power.
Yes, DocuSign is first on our list because it was number 1 on our buying power list. So if you open up DocuSign, we have the 70 put, which is an in the money put. So clearly it has not been going up.
14 days ago, it was after earnings. 14 days ago.
So we put in the 70?
Oh, here. So this was the earnings drop, or it was after this drop, we got in with the 70 put. And now it's trading 68, or no, 75 put. Where's our put?
70, 75. 70. So we're $2 away. So we have, this isn't going to be as good, I don't think, was what we were doing on the train. But that's okay. We can still do it. So taking a look at this. Now, let's go through all of this.
It's using a lot of buying power.
So if you're going to, let's go through the covered call versus the naked put. Let's do the whole kit and caboodle.
Okay. So this naked put, I know if I buy this back, it's going to give us back $1,300 in buying power.
Okay.
So how can we replicate this?
But just do the stock with the 70 call too, so they can see exactly what everything is.
And if I were to do this, a covered call, I'm buying the stock and selling that 70 call, that uses $3,000 in buying power.
Correct.
So $3,000 in buying power for the covered call with the stock is about $1,500 in buying power for that naked put.
Those are identical positions. If you buy the stock and sell that 70 call, you have the exact same position as selling that 70 put, and that is less capital.
So we just want to create a synthetic stock position that uses less money than that naked put. Then we could go in and add on that short call.
Yes.
And we want to use less money than this 70 short put is using. We're just trying to free up buying power.
Yes. So we know how to create a stock position using options that will be very, very beneficial in the buying power department.
So let's see. Let's hope.
It was earlier. I don't know if it's going to be there now with the little move up in DocuSign.
Well, look. I mean, either it's going to work or it doesn't.
Correct.
Like, either we're going to do it or we're not.
That's correct.
Okay. Start us off, Liz.
So you're going to put on a zero extrinsic back ratio. So you're going to sell the 67.5. Call one and buy 262.5. Yeah.
So
and then you're going to sell that 70 call. It's going to be a lot less capital then.
And then we're going to sell that 70. So here's our stock, right? This is a synthetic stock, the 62.5, 67.
Can you toggle that a little bit? I think it gives you some extrinsic value. Toggle it so I can see. Yeah, no, it's exactly where the stock is trading.
So you buy 270 deltas, sell 150 delta. That's a zero. This is a synthetic stock position. And if we want to replicate the covered call, we sell that 70 call. So this is using $727 instead of $1,350.
And this is the exact same trade. I wish we could go through. Do you want to go through and eliminate all this and then go look at the
P&L?
The P&L.
Sure. Okay, so I'm gonna go to the curve view analysis.
And sometimes it works, sometimes it doesn't. But here, let's talk about this. So you're creating a covered call position that if you were using the stock in a margin account is $3,000, right? $3,000.
If you have the stock in the call.
If you have the stock in the call. Now, this can be done in an IRA as well if you're using those calls to create that stock replacement and then sell the call against it.
So you could see here, this green flag is where the stock is.
It's right there, right where the stock is.
Right, yeah, we're pretty much right there. Our break even is like right there.
Yes.
Which we would look at this position and say, this isn't a terrible position. We don't necessarily want to get rid of this position, but can we keep the same position and use less buying power?
And define your risk.
So now what I'm going to do is I'm going to take off the put. I'm going to take off the put, okay? And we see when I take this put off, it's giving me back $1,360.
Just under 14, correct.
So I'm buying that back, getting $1,400 back for that.
Correct.
Now we want to create that same position for less.
Yes. Way less. So you realize buying the stock and selling the call is the most expensive option on the board.
Mm-hmm.
Then you can sell the put. That's your number 2, which will save you some capital.
Right.
Still the same position. But wait, you can use options and layer them together to create the exact same stock position.
Now, the P&L graph is not going to look exactly the same.
It'll look close.
No, because you'll see. So we're, again, buying 270 deltas, selling 150 delta, and then selling this call. We've got our synthetic stock.
So we got back just under 14. We're paying just over 7.
Yeah, we're getting half the buying power back.
Half the buying power back.
Yeah, or we're using half the buying power and replicating a trade with the same profit potential.
Same profit potential, and you defined your risk actually.
I know, but so if I go to the analysis page now,
no, that looks right.
The reason it's slightly different is you have
more room to be wrong because we got a little extrinsic value in the call.
Well, we had that.
Yes.
So, and maybe if I would have with the naked put, you'll have a slope, a narrower slanted slope. Here we go steeper slanted slope, but then defined risk. In the naked put, you have a narrower slanted slope because you only have that one put, where here we have those 2 calls. So you have a steeper slanted slope, but then it levels off. So it's defined risk, but a steeper drop. There's a little bit of difference. It's not, but the profit potential is the same.
And keep in mind, this is how many days left in this? 38 days. So that steep slope is if it goes there quickly, because this is at expiration. You can also adjust it. You can also adjust your trade.
These charts are always at expiration. But if you see here, the profit, the P&L at expiration, $514. That was all we could make on that naked put was what the put was worth, and that put was worth $500 and something.
So the zero extrinsic back ratio is a true stock replacement if done right. It doesn't always work. It doesn't always save you capital. It'll always work. It won't always save you capital.
It might be. Sometimes zero extrinsic back ratio or zebra, sometimes those are very expensive. If it's a stock that has very high vol, where you're paying a lot for those options. If you have to go really deep for a 70 delta, like here we didn't have to go too deep for a 70 delta.
No.
But if you have something with a super high vol and you have to go so deep for a 70 delta,
it's trickier.
It's trickier.
That's what I'm saying. I just want to say, none of these trades that we do are the end all be all for each particular underlying. Each one gets treated a little bit differently.
Just got a message on my phone. Summer's over. Summer's over, Liz.
It's from Birkenstock. Birkenstock stock just sent her a message being like,
summer's over.
Take those shoes off.
All right, so I'm going to push this because we didn't mind having this trade on. We just wanted to get some buying power back.
We did. And we thought it was a good lesson on how, if you understand your synthetics of this, there's usually a better way. This is risk defined. Like you said, the slope is a little bit different. Good, you're filled.
All right, so we have it on. Again, profit potential, $516. And if I go to this put, that put, 70 put, $540. So
that's the profit potential.
Close enough.
Yep. That's your profit potential.
So we've created the synthetic covered call using a zebra and a short call. The naked in the money put is a synthetic covered call. Both would be synthetic covered calls.
Yes, 100%.
So I think that was a good.
So it didn't work. Where didn't it work?
Maybe Hims?
Oh, it was Hims, yes. So we have a situation here very similar to our DocuSign where we have an in-the-money put. What put do we have in
And
Hims?
did we get
You're
into
still in
Hims?
DocuSign.
Oh.
We got in after earnings.
After earnings. So we talk about not wanting to take a hit in earnings. We got in after earnings. So I'm pretty sure this was earnings. This was earnings.
Yep.
Then we got in, and it's continued to fall. So Hims, we have a 55 put. It's pretty deep in the money.
So let's take a look at this. That 55 put has $2.41 extrinsic value, and I just assessed it by looking at the corresponding call.
Yeah.
So that's what we have here. So in Hims, we have a 55 synthetic covered call by using the in-the-money put.
Yeah.
There's still extrinsic value in this. Sometimes we'll look at it and be like, there's no extrinsic value, we got to change this trade. Here, we put a bullish position on that had a high probability of success. The stock continued to go down.
I know.
And so now we have a 55 synthetic covered call. There's still profit to be made there.
If I look at changing this, if I buy this back, number one, it's only giving us $1,000 back, which it's not. It seems like it should be giving us more, but it's only giving us $1,000 back. The buying power is not bad in him.
So it's holding up the capital. When I went to the capital required on here, it's holding up the loss, which is going to be and the buying power.
Okay. If we changed it and I look at, how much is a zebra in Hims, sell a 50 delta, buy 270 deltas, the zebra in Hims is $1,000.
Yeah, that's not saving you any money.
Well, and then we'd sell that 240. So it's like...
Well, it'll always save you a little bit, but this isn't so glaringly obvious.
It's not so glaringly obvious. Like, okay, we could mimic this trade for $776 and get back $1,000, but it's going to save us $280 in buying power. I don't know if that's worth it.
So sometimes the zebras also in a crash situation have helped me, and I'm not saying we're crashing, because you have to decide if you want to get back in. That naked put will have unlimited risk to the downside.
The naked put will have unlimited risk to the downside, and if we drop, this will just start losing one for one. If we drop here, our two longs of the zebra
become the
at the money, and then they kind of blow up with extrinsic value. So it can help you in a big down move.
Correct. So but this isn't what our point here was. We wanted to show that it's not the end all be all. It's not like change every in the money covered put to a zebra with a covered call. This is not any cost savings.
No.
So sometimes the simplest way is the best. Now I don't mind switching this if you wanted to say, okay, I'm tapped out. I only want to lose another $700 in this. Then I'm done, because Hims could go to 20.
So you could do that. I'm just trying to think of like other ways if I want buying power back that sometimes I'll do. I mean, sometimes I'll
buying a put, but you can't go down and buy a put here.
Sometimes I'll go shorter term, because when you're shorter term, there's less. Like, let's say you just did not a zebra, because we don't like the zebra short term, but let's say you just did a call spread where you're giving up $1, but you're collecting $2. So you're getting $1 extrinsic value in a call spread, and you did that week by week by week by week. And you just...
It's not bad, but you just got to say, in the words of Dr. Jim, for every gimme there's a gotcha, you're capping your upside here.
Right, you'd have to keep...
I mean, the covered call's capped too, but it's capped so far up. You can make still $700 in that. Here you can make what? $240.
$240. Only $240, but then the idea would be, hopefully if it moves up a little bit, you can keep following it up week by week by week by week. But then you only have $250 into it instead of $1,000. It's just if you're struggling for buying power and you are looking for a way to keep a position on-ish, is keep something on, so if it goes up, you're making some money back, but not have a lot of buying power in. The weeklies do offer the ability to, buy something and not give up too much extrinsic value.
Correct.
And then you get out, because like when in September, we would have the other position in September, and even if it went up and through, we're not making that full amount, not at all, until we get close to expiration.
In DocuSign?
Oh, yeah, in any of them.
But any of those situations, the naked put, the covered call, or the synthetic covered call, which I do like the synthetic covered call, the extrinsic value is not going to be pulled out of there until expiration.
No, so let's say your profit potential, like we just saw, was $500. We get an up move to that strike now, or through that strike, or beyond that
it's
strike.
At expiration.
We're only making maybe half.
But that's with all three of those. Unless you do not sell that call against it in a zebra. Then it's unlimited profit potential.
So then when you look at something weekly and you have max profit 200, if it goes through, you're only making, could make that 200 because you're right there. It's going to expire, you're right there. And that's probably all you would be making on the September one because you have so much time left in the September one. It's just a way to use less buying power.
It is. No, that's not a bad way.
Because then it's like $200 instead of $1,000.
And that's a cost savings.
And we're getting $1. And I know the other trade, we have $2 extrinsic value in September, but I feel like you can get $1 this week, $1 next week, $1 the next week.
September's 38 days away.
I know.
So I wouldn't do this if you were just wrapping it around the at the moneys. But here you're using $1 and selling.
I was just trying to,
get some extrinsic value.
Get twice as much as I'm spending. Get $1.
So what does Frank the Great call them when you're watching extrinsic value? He calls them the in and out calls, right?
Oh yeah.
It's because you're in, and if it doesn't work, you're out. But here you've got extrinsic value. If it stays right here, they're heating up. What's going on?
Screws up 50. Screws are up 50. The crowd's getting wild.
The natives are getting restless behind
us. Pull out your map, see who it is. No,
it's
I'm
all
kidding.
of them.
I know, it's everywhere.
It's like a slow rumble on every single one of them.
I don't know what's moving. Let's see if I have any alerts on the news. And if you have any alerts or what's going on, what all the ruckus is, tweet us. Include the hashtag LAZJNY because I will be back and forth in and out of Twitter. Hold on. Let's see if I can get my Twitter lined up and see if we have anything coming in on Twitter. When I look at volume and what I see up there, Jan 5400 puts.
Somebody wants your covered call tour.
Oh, sign me up. Sign me up, Liz, for your course.
Oh, Jeff.
He wants. I do iron condors all day long. I'm sure there are many strategies I've never learned.
All right, Jeff. I'll put your number. You're penciled in as number 1.
And Skaven here, covered call tour will be legendary. Love the show. Thank you. Yeah, I think the covered call tour would be legendary.
That's what I'm saying. We each have our own separate skills. I want the complex options.
I'm going to pull out my dry erase board.
And I like I like it if Jeff comes based with a little. Jeff's got a lot of knowledge. We can. My favorite thing to do is when we would go to Tony from Mexico's house, and he would put this piece of paper down, and we would all just be like talking about how you can synthetically trade different ideas, and you can layer things on top of each other. It becomes like a Tetris game for me.
And that's why I prefer.
What I love.
That's why I always loved. And in the beginning, old days, I had a dry erase board, which I like the dry erase board so much more than like a slide. Like here's a slide of this, or here's the P&L of this. I like a dry erase board so you can keep like fooling with it and adjusting it.
Yeah,
you keep moving it, adjusting it. And I guess you could do that with technology too, but Liz and I are not that technologically advanced, so I need the old dry erase board.
Hey, and for the record, you had a dry erase board before Mike had a dry erase board.
Oh yeah, before Mike and his whiteboard.
And
go back to the old.
There's video footage of her. We were on 2 little stools. She fell off her stool trying to write on a dry erase board.
I couldn't wear like skirts or dresses anymore because we were on a stool. I was like trying to lean over again. I brought that from home.
I know you did. I know you did. You had a little easel in your kid's art room. You took it?
Took the kid's easel.
Yeah.
Okay, so let's go back to decision on hymns. Oh, wait, 2,000. 20 sold 22, no. Yeah, 2,200. It was like 5,200 puts.
I mean, we can look at the...
Yeah, we can take a look. What do you think of hymns? What do you think of changing to weekly call debit spreads versus having that naked put in September?
Hey, listen, you got to do what you got to do. And I like if hymns continues to fall, because the chat was the one who warned us about hymns. If it continues to fall,
we only have 250
you
at
only
risk.
have 250 at risk.
Yeah.
Put them in as 1 so we can see the cost savings. It'll make me feel better.
Okay, so we're going to pay $220 for this. So it's a $220 debit, and our profit potential's $212, and that's just a 10-day trade. And then we're going to buy back this put, and we're going to get $718 in buying power back.
That's a number I can live with.
Yeah, that's all we're trying to do. Like, it might not be it's not exactly the same trade. It might not have.
DocuSign was exactly the same trade.
Yes,
it's synthetically
yes,
the same trade. This is not.
This is
but
not.
But it's something where you're still going to participate in the up move if we get a little bit of it back.
Right. We'd still participate in the up move, but we don't have $1,000 in buying power tied up in it.
Agreed.
That's just what we have to eliminate. We have to have profit potential, but we can't have a ton of money tied up in some of these trades. Okay, so that's HIMS. How much do I don't want to pay. You know what, can I just put these on as two trades?
You can put them in separately. I just wanted them to see how it would go. You know what I mean?
So this call spread, again, all I was looking at is, giving up $1 in extrinsic value here and collecting $2 in extrinsic value here.
I like that. And so what you're doing, you're referencing the other side. So she's looking at the puts on both sides, or the out of the monies.
Giving up $1 on that 44.5 line, and maybe I need to make it.
You're fine.
Okay. I wasn't sure because there's no open interest here.
Oh, I see what you're saying.
But there's not.
There will be tomorrow.
Yeah. And then selling that 49, so 200 profit potential. So I'm pushing that through, and then I'm going to buy back that short put.
Yeah.
I mean, that thing is so crazy deep in the money.
Here, do me a favor then when you're done. Did it just say it's set for closing only?
No, it said we already have a closing order and cancel this. Okay. And even if you wanted more profit potential, you could do 2 call spreads, and you're still using half the buying power.
I agree. We need half the buying. We need this.
No,
this in.
So I'm going to buy this back. HIMS, and I like locked and loaded. I was like, you know what? I'm getting these HIMS ads. I'm locked and loaded in HIMS.
I know you are.
It's going into the.
All right, now given the fact that we're in the SPX pit, go to the SPX 0DTE options, okay? SPX, 0DTE.
And look at the volume.
Go volume, open interest in volume. So change delta to volume. Take a look at the wrapped around the at the monies.
Yeah.
So you're getting 50,000, 50,000, 62,000, 47,000. That's the volume that's happening today.
That's Jack Tucker and Alec.
That's Jack Tucker and Blue Wackadoo. So yes, so look at these numbers that are being put up in these 0DTEs.
I know.
And I feel like this is trying to go like the 0DTE SPX are trying to go mainstream. Everywhere I look, people are like, they try to have it be a little bit more.
Right, trying to. Well, it's easy in and out. You're in and out in a day. Like I'm not saying it's easy, but people understand the in and out in a day. People want the instant gratification.
Yes. So that's what I'm saying. I cannot wait until the pattern day trading rule goes bye-bye, because my son right now is using ES, which makes me more nervous. But I mean, he's doing a complex option trading strategy that he can do in SPX, and he's going to go like this.
And the only reason she says it makes her more nervous is because you can take actual physical assignment of the future. But in SPX, it's all cash settled, and we love cash settled.
Yes, we love cash settled because you don't have to worry about it. Whatever your profit or loss is, if he goes to class or goes and does whatever, he can do that instead of E-mini S&Ps where you have to take ownership of it.
Okay, so I'm still working. I'm out of the put. I'm going to pay a little bit more for this call spread.
Yeah, you can pay up a little bit for it.
So, trying.
Have you been pushing these through too? Because I've only got 2 things out.
I'll get to it. Time's flying by.
Because the last thing I have is ETHA.
Okay, so now we adjusted. Here, so far, DocuSign, we closed that deep in the money put.
Yep.
And then we replaced it with that synthetic position. And in HIMS, we closed the deep in the money put and replaced it with the shorter term call spread.
Correct.
So that's all out.
Okay, and then...
So that's pretty good. Like $1,500 in buying power just from those 2 trades.
Yeah, that's great. And then we were going to kind of take a look at Intel as well, right? We have 2 short puts in Intel.
Oh, yeah.
So if you take a look, we're up a little bit. It's on a positive day, so we've got 26% and 8%. But so keep in mind that 25 put is deep in the money. When we added the out of the money put, if you're going to close those, how much money do you get back for both of those?
If I close these, I get back $650 in buying power.
And the extrinsic value is 30 cents on one and 30 cents on the other.
Not much. That's the only reason. In Intel, the extrinsic value in Intel is not much at all.
No, it's not much at all.
So if we close these, we get back $650 in buying power. And I was only looking at, one zebra. If I put on
not capping it, not creating the exact same position.
So let me go back to Delta.
Because now I know how to say the CEO's name, thanks to Frank the Great.
How do you pronounce it?
I have to go back to it. He phonetically spelled it for us.
Okay, so if I go to sell a 50 Delta and buy 270 Deltas, you're paying $270. You're paying $270.
But we're not capped. Then we're making 1 for 1. If it was up 78 cents, you'd make 78 cents today.
Right. So, I mean, you have the question.
But you're
then,
paying $270, but you're buying those back.
What?
You're going to buy those back too. So we'll
no,
we'll get 50%
no, but what I want to compare is the Zebra's going to hold up 270 in buying power. Getting rid of the other two is going to give us back 600 in buying power. So we're going to get back 600 in buying power and use 270 in buying power. So we're getting back more than half of our buying power.
Yeah.
And then we just have 100 shares of Intel synthetically instead of 2 short puts.
Yes. I'm trying to figure out how to find.
What do
his
you
name. I think it's a great idea, Jenny Andrews.
So if I put it in as 1, you could see we're getting back almost $400 in buying power.
Okay, I got it. It's Lip Boo Tan.
And we're not laughing at his name. I'm laughing at Liz. I'm laughing at you.
I'm just enunciating it.
All right, so we're going to get back almost $400 in buying power. And then we're going to have synthetically 100 shares of Intel. And before, all we really had,
we added the 19. We synthetically had the covered call.
and we made some money on it.
Yeah.
It's fine. So I'm going to push this through. These markets are all pretty tight. And people might get confused if they see this in the follow page, but we're just trying to continue our position assumption and give us back buying. Honestly, that's what we need. We have what's your assumption tomorrow? We have 10 trades coming.
But Jenny, I do think when you understand these rules, like when you understand the rules of options trading and how they work and what you synthetically have and how if you layer 2 options positions on, you change your risk, you change your risk definition. If Intel falls out of bed and if Intel goes to 11, we can only lose $270. Otherwise, we have 2 lots, 200 shares of Intel.
Right. Okay, now we're in. So now we just have 0 extrinsic back ratio or a zebra, long 170 delta, long 270 delta, short 150 delta. This will act like stock 1 for 1. I'll go to the analysis page here and show you that this is we'll make money 1 for 1 to the upside, and it picks up pretty much just about right
there.
Yeah.
Yeah. It picks up right where it is and anywhere to the upside. Now it's only for 30 days. 38 days? What in September?
So we'll have to make some decisions when we get close to September expiration. We'll have to make some decisions.
Now, ideally, we have made these decisions as it goes. Can you keep it on there for a second, the chart?
Sure. I just wanted to push
So ideally, we've got 38 days left in this trade. Now, this is a perfect case scenario for us. Let's say next week Intel is trading 25. Jenny and I would then ratchet, which you can also look at our website, up the zebra, where you're going to take risk off the table and still have your 1 for 1 profit potential.
Or if it really plummets, we can buy back our shorts and leave 1 long, and then we leave our 2. We can buy back our 1 short, leave our 2 long. We did that in UVXY.
Yes.
Yeah.
Well, that one's really coming back.
Hey, you know what? It's a September trade.
I know.
It's a September trade.
There's lots of time. Lots of time.
So that is adjusted. So I think we did I'm gonna give you a pat on the back.
Oh, thanks. Go ahead.
I think we did a pretty good job today getting back some buying power.
Yeah, I think we did too.
I know, because now we're up to $8,000 or $9,000 in buying power.
Yeah, we are.
I know.
We're back, baby.
We're back. All right, that was good.
Yeah, we're back.
Archer, I'm just bringing it up because Archer was all over the place today.
They had earnings and we missed it. Let's roll this put.
Yeah, let's do something with Archer. So go to positions, go to the trade page.
You're not going to believe this. We have an in the money put.
It's like, what? All right, so that 12 put.
So when you close, you get back $200. It's a very low cost trade.
Now, if I don't know what we want to do.
Oh no, you're in 10 days. No, go all the way to September.
So we'll get 35 cents.
Yeah, that's fine. You're getting some extrinsic value for it.
Sure.
You're not going to go to the 10-day in Archer. You're not going to get anything. It's so cheap.
I know.
So this is rolling it out in time, and this is another thing that I had in my son's account. He's a very, very small account, very small. He started off with, a couple $1,000s when he turned 18. And this is one thing that he will always be rolling puts in. He did not like me for a while with this one.
But it's okay.
But getting an extra 40 cents isn't bad.
This morning, I bet he was not happy either because this morning it got as low as $9.15.
He was asleep. He didn't see that.
I woke up and I was like, ooh, Archer. It's been struggling, right? Struggling compared to Joby. That's been on a
rocket ship.
Yeah. Okay. What? Joby was in the 20s.
Yeah.
Settling down a little bit.
That's come down a little bit, but it's still higher.
All right, so back to Archer, ACHR, I will roll that put. Again, $10 product, if we're getting 40 cents every month rolling it.
It's not bad. I mean,
No.
so with his rolled put, he couldn't quite grasp the concept of it because that was a little bit trickier for him.
35
But we
cents
kept
for the
rolling
roll.
it and kept making money, and then eventually it popped.
Here's just one thing I want to ask you. With 35 cents for the roll, if we're getting 35 cents for 38 days, and I get it, but sometimes I'd rather just be long it.
Oh, I would too. But we're already in the put. I mean, 38 cents is something.
I know.
But you can. So let's go through that. Let's go kind of through. It's cheap. I'm long Archer. You're a long Archer.
I can buy, there's very, very little extrinsic value. I could buy the 8 call and I'm long 100 shares of Archer.
It's the same as the put, though. That's what you got back for closing.
Right. It's the same buying power, but there you're just long it in case some news comes out. If they get approval for something and something happens and this thing pops up to $14 or what, then we have more profit potential.
Your lips to God's ears, Jenny Andrews.
I don't know. It just came to me.
Come on. Big money, no whammies.
So I don't know. Sometimes I'd rather just be long it.
I mean, okay, let's go through this process real quick. So clear this out, and we know this, but how much is it to buy the stock?
$500.
So it's $500 to buy the stock. It is going to be less than that to do the combo, and it's going to be less than that to do the.
Let's see the combo.
The combo will wash extrinsic value.
And so the combo is only $294.
I like that better than just buying it.
I do.
We very rarely use combos. A combo is buying a call and selling a put. It's the old trader's trick on how you get long stock before there was the zebra.
So I'm going to show you a couple things, and we have a couple minutes. Curve view here. Here's the short put. If Archer goes up, great. The most we could ever make is $250.
Yep.
Now I'm going to get rid of that. I'm going to buy back that short put. Buy that back. And I'm going to go to the table. Hopefully get out of that short put. I might have to give up another penny or two. We're running out of time. I'm going to hit the offer. Now I'm going to go to September and I'm going to do the combo where I buy the 10 call and sell the 10 put and go to analysis here. Now, where is the analysis? Curve view.
There you go.
Here we go.
There's your stock position using a fraction of the capital.
Now, instead of only making $250, if it goes to 15, woo, $500. So if there's a big.
What if it goes to 20?
If they get some kind of approval or some kind of news comes out, because in Archer we've seen that happen. We've seen it happen in Joby, and it's possible.
This is a scenario where, I mean, we don't do the combo a lot because usually we're in higher price products. I mean, even a $20 product is higher price than this. This is one of those where I pulled up the zebra in September. It's more expensive than the combo.
Oh, I know.
Yeah.
So in my son's account, he has a smaller account, but it's getting bigger. I'm
gonna combo JD's. He's not doing the puts.
I was gonna say he has a combo in Archer.
Does he?
Yeah. Well, and he didn't come up with that.
He's like, I got an idea, Mom. You're not gonna. How proud would you be if your kid's like, look at this. You're not gonna believe what I came up with. That's a combo.
I'm gonna sell the put and buy the call, so I have unlimited profit potential to the upside, and it's not using as much buying power as that.
And can we talk about the risk? It's the exact same risk as owning the stock for 38 days, but a fraction of the capital.
So I'm going to put this combo in. 6-cent debit, but it doesn't matter. We're still washing.
You're still washing extrinsic value.
Yeah.
You can put the combo at any level. Can we show something real quick? Did you already ship it?
I sent it, and it's already 10:56.
It is?
Yeah.
Oh.
Yeah.
Okay.
Hang on.
Breaking news, my colors might be able to get me in tomorrow. I think I might drive here so I can get to her house.
Tomorrow?
Yeah.
Someone just tried to, leap over the railing.
Did they make it?
No. No, not at all.
All right, 10:56.
Okay, so we're in the combo. Let's get that pushed out.
Yeah, pop it out.
Is that the last thing? So I closed the in the money put in Archer.
I mean, that's a great closing trade, a combo.
And putting on the combo. Putting on the combo in Archer. So we were busy today, and now we're flush with cash. I don't know. Into
I wanna
Twitter.
make sure we got everything
I'm just
out.
going to make sure we got to everybody.
Breaking news from Frank Walsh. Calls are 2 times puts in the volume and 2 times puts in Archer.
Did that? I'm not seeing it come in Twitter, but maybe Frank came in.
Oh, no, he texted me.
Okay. Oh, you got the side text from Frank.
I got a side text.
You're never going to believe this. You got to sit down for this. Frank, calling list with breaking news.
Side text.
All right. That's it. 10:57. We're out of time. I think we got to everything.
I think we did. I like the
Who's
closing
up?
trade.
52.
I am still in my reverse Jajun, but I'm actually happy as a clam because the rest of my account's doing fine.
I am short my Iron Condor. At this point, I'm pulling my GTC and I'm going for
full profit.
All or nothing.
I like it. I like it. All right, everybody have a wonderful afternoon. We'll be back tomorrow. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, The action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Thomas. Thomas, good morning. How are you, sir?
Doing good, you know. It's been a quick week already, so
yeah,
just enjoyed some of that rain overnight. I don't know if you guys got it up here, but
that was insane.
It was very loud. Very loud.
I thought it felt like our building was getting just destroyed. It was because you heard like the, and then it would just explode. I'm like, what is going on right now?
Yeah, I had the dogs going crazy.
Oh, I bet.
We gave them some of their doggy Xanaxes. And, yeah.
Love that.
Yeah.
Yeah, it was crazy. There was like definitely sideways rain.
My plants needed it.
Oh, I'm sure.
They were not
probably
happy.
thriving.
They were not happy after the Seattle trip. It must have been pretty hot over the weekend.
How often do you water them?
Well, I was gone for like 2 days. 2.5 days.
Missing Daddy.
Yeah. So one of them was a little not happy.
Revolting?
Yeah, it was revolting a little bit, but it's okay.
Nice thing, you got a balcony. If it dies, you could just throw it over.
It's right in the street.
Yeah, right onto Ashland. And just a little too busy of a street for that, but yeah, it was good. Good to get a little rain on them.
Yeah, speaking of Seattle, thanks to everyone that came out.
Yes.
It was a glorious time. The old crocodile. We got lucky with some incredible weather.
Yes.
It was literally sunny, zero humidity, 75 degrees every day. Not a cloud in the sky. No rain.
It's supposed to be like gloomy there?
Yeah. All the time. Yeah. It is gloomy there all the time. Yeah. So we brought the sunshine.
The weather's really nice though. It's very like dry, not like humid, hot. It's really a good place.
Yeah.
How was the coffee?
It was really good.
Really good.
The cold brew there is unmatched. Yeah. Just a straight black cold brew. It just tastes like there's stuff in it, but there's not.
Yeah. And I think between the two of us, we probably got, I would put our over-under on oysters probably like 75 combined, me and you.
Yeah. We went back to the same place twice. They welcomed us back the second day. They're like, welcome back. We're like,
you're here again.
Yeah.
You guys.
Just hammering oysters. But yeah, they are extremely good.
They're
extremely
West
fresh.
Coast oysters?
Yeah.
Okay. All right.
We were told that we had some oysters that you're not going to find anywhere else.
Huh.
So that's how they sold us.
I thought the marketing for the East Coast oysters, the like Blue Island or whatever, they always hype that up. But
well, I will be going to Boston in a little bit, so I'm going to do.
Yeah, you'll compare.
We'll compare and contrast. Yeah.
Boston's always fun.
Yeah. But yeah, it was a great time. Met some new faces, saw some familiar faces.
Yes.
And yeah.
You're in the Chicago area.
Oh yeah.
Tom and Tony's
this Friday.
event on Friday. Mike and I will be hosting the show, the morning session. So you want to come out for that? That's still open, I believe. And then we have also the open house. So if you are coming to the event and you want to come to the office, please send us an email so that we can give you the link to sign up, because you gotta, it's all the security stuff and all that stuff.
Yeah. It's not like the old building where you can just walk in.
Yeah, it's we're corporate.
It's an actual
building. Business now. We're not just doing our fun thing anymore. So.
Mm-hmm. Yeah, and I'm actually allowing people to sit at my desk and do my work for me for an hour.
Yeah.
Perfect.
Anyone that wants to.
Yeah. A real live-in experience.
Yeah.
Yeah.
That's a good call. I like that.
That is nice. Smart. But yeah, it'll be a fun week, busy week. But yeah, sign up if you want to go to the show on Friday.
Yes.
Doors at 8, shows at 9, back to work by 11, as the title of the show says. Talia Hall's sick.
Yeah, it is a really cool spot.
A lot of really good taco places around.
5 Rabanitos right around the corner.
Yeah.
Is that what we have today too for lunch?
Good question.
I'm not sure. What do you got?
We do, yes.
5 Rabanitos.
Yeah.
Okay, good.
Always
Solid.
hits.
Yeah, it's a good one.
But yeah, if you like...
Of the Taco Tuesdays, it's far and away the best one.
Strong.
Yeah.
Strong offering.
Yeah.
But yeah, crazy week, busy week, but we are back. And it is Tuesday.
Yes.
We got some futures content for y'all. I haven't done anything in this portfolio. I'm trying to free up the buying power in this gold broken wing butterfly with gold selling off a little bit.
Yeah, I took gold off yesterday. Gold had a huge move yesterday.
Yeah.
It was down like $80, $90 at one point. I know there was some like other tariff on, tariff off, taco, gold taco thing, who knows?
Hattie gas going to 0. Maybe one day.
The gift that keeps giving.
This is why I've avoided it for so long, because now I'm back in the pain train.
Yeah.
But it's small. We'll be okay. We'll be able to hold it. Be fine.
I'll do a quick little market update. E-minis up 51. We're at the high of the session. I think this is a new high for the year, or just about there. NASDAQ up 215. You got the Dow up 460 and the Russell up 45. So the Russell and the Dow actually the strongest of the group, having the bigger moves of the four. Oil selling off a bit, / CL 63.29, breaking below that 65 handle that it's been kind of stuck at. Volatility futures are in the dumps. You've got / VX vol futures 16.15. The VIX itself below 15. Wow. Bonds down 19 ticks. Gold down $4, 3,400 on the dot. You got silver up 24 cents. And then Bitcoin having some choppy action, but staying around that 120 mark, I should say. Ethereum as well, new highs, 4,500. Certainly a risk-on day today.
Mm-hmm. Yeah. E-minis at 64.50.
Yep.
When moon.
Yeah,
Here it
this is moon. Is this not the moon?
This is the moon.
I mean, come on.
Even Starbucks, Pike's Place.
Literally doesn't matter.
We walked by.
It doesn't matter what you're buying, as long as you're buying.
Yeah.
That's what this market has been.
That's the one thing that will never change about Seattle. The line out the door at the Starbucks in the fish market, or right near the fish market, is just absurd. It's like an hour.
IPOs?
Yeah. It's like
Starbucks?
For Starbucks.
Oh.
Yeah. Mm-hmm.
Is it worth it to wait an hour for a coffee every day?
If you're a Starbucks collector, because they at that location they use all the original logos
so it's like a
and the
tourist
original. Yeah.
Okay.
Yeah.
I see.
Yeah. It is the original Starbucks, if I'm not mistaken.
Makes sense. Yeah.
But yeah, lots of stuff coming back. Eli Lilly, I was talking to a gentleman at the Seattle show about that trade. I said we just need a rally, and in the last 2 days, it has done just that.
Yeah.
So looking okay there. If this continues, we'll be able to close that one for a scratch or a small winner.
Mm-hmm.
Starbucks reversing. That one's down, basically a scratch now after some earnings gone wrong. But yeah, crazy moves. Yeah, the only thing I'm doing right now is trying to fly off this gold broken wing butterfly. So I've got the 3480, 3500, 3540, 20 by 40 in the 17-day cycle. And I sold that out for $2.60 initially. I'm trying to buy in the risk for $1.60 to lock in a $100 credit.
Very nice.
I think I'll get filled pretty soon here. It's right there. But yeah, plenty of cash on the side if you got any trade ideas. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. And yeah, you can throw in your trade ideas in the chat.
Mm-hmm. Cherry picks coming today too.
Yeah, it is Tuesday. Wow, I forgot about that.
Yes, no, I know. My days are all mixed up.
Yeah,
it's weird. Not only traveling, but then you come back and it's Tuesday, first day back. It's a little weird.
Yeah.
So, but yes, cherry picks coming out very, very soon.
Lovely.
Yes.
Should we get to some slides and you can tell us what we should focus on since we are fresh to this week?
Yes.
You were traveling yesterday?
Definitely.
Let's do it.
So the WASD, it came out about 11 minutes ago, top of the
Mm.
hour. Yeah, top of the hour. You know, this corn is really moving right now on it. I mean, I guess we'll go right into the first slide.
All right.
This yield on the left is what you're looking for, the average bar. The second one from the left. The yield actually came in, the bushels per acre, it came in at 188.8. That was far above the average estimate, which was at 184.4. So, you know, we're about 4.4 bushels per acre for yield over it, and corn prices are selling off right now. So, you know, this was a report. The August one is interesting because every WASD up until August is more of a model-based forecast. And the August one is important. It spurs a lot of volatility because it's the first one where they're doing like on-the-ground stuff, actually looking at the crop. They're using data from the National Agricultural Statistics Survey or whatever that's called. So this yield actually blew it out. And corn, you know, before that we were selling off in corn in anticipation for the higher yield forecast. So the past month, you know,
it's been a straight line down.
Yeah, and now
it's
we're
down,
getting
10% in a month.
Big red bar going here.
Yeah.
So I was kind of anticipating, I traded it long, sold a put spread because we had some good volatility in here.
Yeah.
That's already looking like it's in danger, so I don't want to tell anyone to go long right now. But this is, you know, we're in uncharted territory, pushing down 373. That's really low. I mean, farmers are going to get hurt by this. The one good thing it could do is export demand for corn has been pretty strong. And as these prices get lower,
they want
you
more.
can see that export demand getting even stronger. So Mexico, Japan have been big buyers this year. I'm not finding the production number yet, but I'm assuming production is also blowing out to the top side. And let's just go over the next chart. We'll keep talking through it. Then we can come up with a trade if there is one. This is the ending stock projections. So ending stocks, you know, it came in, you're looking at the right one here, and that survey average, the circle in the middle of that, you know, that's the average estimate, so 1918. It came in above that, 21, around there. So billion bushels that's in, and that's, you know, it's near the top. It's not above the survey average, the high ranges. So it's still in there, but above average estimates. You know, that's another thing pushing down the price. You get more production, you get, you know, more yield per acre. So you're getting more production. That's really, you know, weighing on the prices right here. We'll go to the next chart, look at how some of these trades play out after the August WASDs over the past 5 years.
Have they ever had like numbers that have come outside of the projections?
Yeah, I think that's happened.
Really? Because I would think, like, just intuitively, if things are within expectations, you wouldn't see as big of a reaction in the markets as you're seeing now.
No, yeah, and corn is down 3.25%.
And that's you know, a lot in a commodity where you have, you know, 18, 19, 20% implied volatility. I mean, like, is the reaction that you're seeing based on the numbers more volatile than you would expect, or?
This is a little more volatile than I expected. Trying to see if, so we've moved about 11.25 for corn right now. Trying to see, I think that was outside the expected move.
I mean, I would think so.
Yeah.
Let's see. I mean, the current expected move the next 10 days is $12, or is 12 points. So we're certainly outside.
You're at that.
I mean, you've had a day, you know, a 10-day move in a day. So it's certainly outside volatility. I'm just wondering, like, because a lot of times, I know the market's up 51 right now, and we had CPI this morning. But a lot of times when these numbers are at expectations, it's a pretty muted move, just because that's what's expected, priced into the markets. Number is exactly there, and it's a nothing burger.
Yeah, definitely. But again, the August one is usually a little more volatile just because you're using, the data models kind of change for how they're estimating it. So we are coming up, the next swing low is all the way from August 24th or August 26th, 2024 at 360. So, we got 13 points to go until that. So, we're doing 13 points right now. You're potentially one more day move from this swing low going back to 2024. And before that, you have to go all the way back to 2020 to get a move under that. So, if I was trading corn now after the WASD, which is probably what I should have done before putting that trade on, I wanted to have a trade on for the show, but I would probably maybe, with the volatility here, do something where you're not expecting those prices to go below that August 24 level at the 3.7 or
basically right where we're at.
360, yeah.
Like an at the money. Do you have a corn position on?
I did. It was the 420 call that was left over from a calendar spread, I believe.
Yeah.
No, it was a diagonal spread.
I have a wide put spread that's in August.
But I've had this on for 2 months. So I've been trying. I initially played to buy the dip, and the dip never was bought. So, I would get back in for sure. I think it's an interesting time with the way that the U contract is significantly lower than the Z contract, but the Z contract is entering into this new three option cycle situation where you've got the 45-day, the 73-day, and the 100-day all pointing to the Z contract. So you could do something like a calendar spread, diagonal spread, and with this depressed price, these are pretty cheap. Even if you do like a 70-day, 45-day diagonal spread or calendar spread, it's like $500.
Any specific stocks that are playable on this information?
Not with options. Not really with
there's
options.
Like nothing.
I think you have the corn ETF. I think it's corn. Which is that's down 2.4%. I did go long soybeans as well, though.
Okay.
So I bought a call spread 45 days out, the 10-10, 10-20.
Okay.
That's doing a little better after the report. Soybeans up about 1.3. Let me see the numbers. So the ending stocks for the new marketing year actually down to 290 million bushels. That's from 310, so a 20 million bushel drop there. Production down just a little bit. The bushels per acre actually up just a little bit. It looks like it came in under estimates, though. It came in at 52.5. Market was looking for an average of 52.9 with a high range of 53.6, which is right where it came in. Or actually, the August for soybeans, billion bushels per acre came in at 53.6. That was at the high mark, a little above, but still the ending stocks for last year and the new crop are down. So soybeans a little bit more of a positive report. Corn just really negative here. So, doing okay on that soybeans trade. The corn already taking a little pain there. So
wheat moving as well. Wheat's getting hit on this.
Yeah, wheat moving. I did not look at the wheat numbers that much. I'm guessing the numbers were pretty bad. Trying to pull up those wheat numbers. So wheat ending stocks for this year came in at 0.869. That's down slightly from 890 last month. The average was looking for 882. So we're a little bit below last month's. And we're also below the average estimate. So yeah, wheat looking, I mean, like a slightly positive report, but it's still selling off. So
All right. I dabbled some more corn.
yeah. I think
No, double down on the corn.
Yeah.
Why not?
Why not?
If we could go back to that third slide, though, I think we skipped that.
Yes.
Just look at it really quick, just to look at. So this is what happens after the August WASD for the past 5 years, going back to 2020. 21, 30, 45, and 60 days out, you're at an average gain. Every year, except for that 2021, after the August WASD, you are up after 21 days. And then, 4 out of 5 times, if you took a long trade, 80% would be your win rate if you took a long trade.
That sounds good.
Yeah, I mean, if you look at last year, 2024, you get a negative reaction out to 14 days, and then 21 days after, you're at a pretty good gain. But
Yeah.
I mean, the market is priced in so much weakness. I think this report is a little shock that's going to drive a little bit more weakness. But I think if this export pressure keeps up, and I mean the lower prices might give it even more of a boost, maybe we recover in 2 weeks. But for now, I think this is probably a negative report into the weekend at least.
Well, I'm getting long.
Again?
I have to. At these low levels, I think it's a digestible risk
at a
for
price
70
extreme.
days. Yeah. With a 70-day long and a 45-day short for $500, like that's if you get up to 420 on the Z contract, that would basically double the value of the spread. So we'll take a shot at it. The U contract was a loser, but I like at these levels, I like taking the defined risk directional shot to the upside, even if it's just for a short-term short covering. Like I'll just keep my eye on it and take it off. I do have a question for you. If we can go back to the first slide. Did you design these to look like pieces of corn?
A little bit.
That's what I thought.
The colorway.
I made some for soybeans too. I made it green.
There you go.
But yeah, I figured the thematic element.
Yeah.
Little artistic.
This is the first thing I thought. I was like, these are literally corn cobs.
Little that, putting my classes from high school with Microsoft Paint into use.
Oh,
As you should.
They look good.
So yeah, I'm getting long corn. I'm buying the 400 October call, and I'm selling the 420 September call against it, and the net cost is like $500, somewhere around there. But yeah, if you look at the curve analysis tab, you can see if you get up to 420, it'll pretty much be a double. But I'm just looking for a short covering here anytime soon, and we'll take it off. Fading the move. Cool.
Yeah, that's it for the WASD. I mean, now it's here, so
that's
it for.
Was CPI as much of a nothing burger as the market seems to be taking it as?
I mean, I was kind of surprised that yields continued to drop after the report, where ZB now down 0.5%, and still down a little bit. Oh no, I think the September rate cut is at like 94% now for the CME's FedWatch. So it looks like September is definitely happening. It's a little weird. I don't know if you guys saw this. The new BLS chief, he said he's thinking about not releasing jobs reports for a while. I'm not sure how the market's going to take that.
That's interesting.
Yeah.
Well, I mean, it's got to be good, right? I mean, if you have no idea,
it's a little scary.
I mean, I don't know.
The market
I don't think
just
that's ever happened before.
Yeah, that sounds like it's a setup for a big violent move once they're finally released, because the market just has to operate under assumptions, and then if the assumptions are wrong, those are now compiled over a period of time.
Right.
But that's kind of crazy.
Does PPI matter at the end of this week, you think?
Now that we got this,
a little bit, but I think the report this morning is more the PPI is like factory gate wholesale prices. It's a little useful, I think, for kind of projecting inflation more because you're going upstream a little bit more in the chain than consumer prices. But I mean the tariffs. I mean it's hard to keep track of all of them. The pause is on again for China.
I saw that the 90-day.
Yeah.
Is this the third?
Yeah, I think this
we've
is
had
third extension.
Nice. So this gets us through basically the end of the year, another 90 days.
Yeah, I mean,
we will be at all-time highs by the end of the year for the nice narrative.
And we'll move the next one 90 days. We'll just go 90 days.
Take it.
That's what it seems like. Everything just operates very, very short term now.
Yeah.
So I'll just one more week of this.
All we can do
Next
is
week.
All we can do is ebb and flow with the way that things move.
Yeah.
I mean, I think you just stay long equities.
I mean, volatility would tell you that.
Yeah.
Yeah.
Especially with
16
the
in the
move
queue.
today is pretty incredible. They're telling you
1489 in the VIX.
it's crazy. Yeah.
Jeez.
When you look at the vol curve too, I mean, it's a deep contango.
Yeah. But these are the times where, like, if you've ever been looking for a time to actually throw on something to try and play for a vol pop, like
It's as cheap
UVXY or
as it's ever
VXX,
been.
like these are the environments you would want to do that in if you're gonna do it, because these volatility products are percentage move products. So now with the VIX at 1487, if you get a VIX move from 1487 to 17, that's a 20% pop. In these products, that's a 20% move to the upside. Where if the VIX is already at 25 and it goes to 26 or 27, it's the same monetary move, 2 points or 3 points, but it's way less of a percentage move. So,
yeah.
But the problem is timing it is extremely hard, especially when you have really low volatility where volatility can cluster for
get some
long periods of
duration
time.
on there.
I was filled on some stuff, so I got long the ZCZ5 contract for an 8-point debit, which is $400.
Okay.
And then I was filled on the gold Broke-wing butterfly, so I took the risk off of that. I moved the 35.40 down to the 35.20 for $1.60, so I locked in $100 net credit. And now if we get a rally up to the spread, I can sell out of that for additional value. And then I got out of the live cattle futures for $100.
I'm still in the live cattle.
Nice.
Yeah.
Very nice.
Your views on gold and silver. I mean, you'd think move in bonds and just overall the rate cuts on the horizon would be a benefit to gold. Obviously, you had the tariff kind of headlines that moved it.
Yeah, yeah.
Are you any thoughts on gold or silver? I mean, they both have huge moves over the last week.
Yeah, I'm still long silver, not in gold. So I'm looking for silver to retake this like 9 and 21 day EMA.
Okay.
It's like in the middle of this range we've carved out from July, the July high and the July low. So I think a range trade for a while, but I'm in a long, so I'm going to try to stay there. If it gets above 39, I could get out of my position with a nice little gain.
Mm-hmm. I haven't traded silver in a while.
Corn already moving to the upside.
There we go.
Yeah.
Ooh. Yeah. Market's crazy.
It's hard to, it's kind of, I don't know how much there is more to short after the move we've had. So, I mean, if we got a less bearish WASD, even like a neutral one, I think we'd be up right now. But hopefully we get a rebound coming up here, in the next week or two.
I think I'm going to get back into an iron condor in gold. I was looking at doing something in SLV, but it's just there's just not enough juice to squeeze there.
Yeah, I mean, you got a nice range to play gold.
Like 22 or 32 to 35, 36-ish.
Yeah,
like that's kind of what I'm thinking, because we're right back
exactly in the middle of this. I mean,
Doing the 44 or 77?
I was thinking, so I was going to the 44 day, and I'm wrapped around 32.25 on the downside, just doing an iron condor, and then 35.25 on the upside. Yeah, you got 300 points of range, 150 basically on either side.
Yeah, I kind of like that.
Just kind of playing for, an inside move. Whether you do it $10 wide or $15 wide, they're all going to trade for around 1/3 the width of the strikes sort of thing. Ivy rank it near 20.
Yeah.
And there's not a lot of volatility around.
Yeah. I like that. I like these broke wing butterflies. They've been working out well. Just because even though we're in this little channel here, we're still getting two-sided action to where you can remove the risk.
Mm-hmm.
Like these moves are big enough to where if you have a broke wing butterfly on either side, you have opportunities to remove the risk and just leg into a free butterfly, which is nice.
All right, I'm in. I'm in on that.
He's in.
I did it 15 points wide, so it's $1,000 in risk. You use $400 in buying power because you get the span margin, which gives you a little added leverage to the position. So I did it at $5.30. So it gives you a risk of exactly 1/3 the width of the strikes, or just over it.
Cool.
Go 10 points wide. It probably trades at $3. Would be my guess. I could pull it up just to see where it's at.
That's probably right.
Yeah, 370.
Sounds about right.
Yeah. Little shot.
Yeah. Yeah.
Yeah, I did that too. I did a little different, but between 33.25 and 34.45.
Ooh, I like that. A little tighter range. A little risk one to make one type thing.
Yeah.
I like that.
Love to see it.
Cool.
All right. So yeah, we're all long, aggressively long corn, neutral-ish long, gold. You just got in. I just flied it off.
Yep. Did the iron condor. Yep.
Yep. Wheat. I'm still in this. Oh, but this is a long-term one. I've got the 560 November, 595 September.
Mm-hmm.
September's lost a lot of value, but it's still almost $100 of value, so I don't think I'm going to touch that yet. But yeah, natty gas, we need a rally there. Crude, we need a rally there.
Yeah, what's happening in those two pigs? Natty gas, this is new low.
Yeah, I mean, production's just going up, and the weather isn't supporting demand as much as it should. I mean, you're getting into the winter now, August, mid-August.
No, don't say that.
Yeah.
Don't say that yet. Not yet.
I mean,
It's true.
Are they prepping for like a absolute Arctic winter in terms of supply?
I mean, Europe has to do that now, but we're doing fine on supply in the U.S. with what's going on right now. So it's looking like that's being priced in beyond the short term now that we're getting into this shoulder season.
And is that the same thing in oil futures too? Like just more production coming on? Has
I mean,
been
OPEC actually released their monthly report, and they increased demand estimates. They lowered production for the U.S. I think some commentary, I'm not sure if it came from the monthly report, but they said part of their reasoning for increasing production this year has been to punish shale producers.
Ooh.
Yeah, it's shale producers.
Now they're coming after us. We got everybody.
Yeah.
We got everybody trying to take us down.
Yeah, they're doing it. So I don't know. I'm not trading crude right now. I'm going to be trying to look at getting neutral to long sometime soon, but I think I'm going to wait for the EIA numbers tomorrow and see how that impacts the market. You got this meeting with Trump and Putin on Friday.
Oh, that's happening now.
Yeah.
I know there's been like back and forth, like.
Yeah, so we'll see what comes out of that.
All right.
Interesting.
Is that our volatility?
Doesn't look like it. 50-point expected move through the rest of the week in SPX. So this was the move, and now we just chop.
This is it. Now it's over.
But that's why they're killing Vol. I mean, 10%, almost a 10% sell-off in VIX. Like this is what we're talking about. It's only a point move and it's 10%. VXX.
Yeah, those
down
things
3%.
Those things are dead.
They're gonna have to split. Like UVXY is gonna have to reverse split again.
For sure.
Pretty soon here.
Yeah.
Lovely. Well, I'm gonna pop over to the YouTube chat now. See what's going on there. Welcome.
Yes.
Let's see. A lot of people talking about BMNR.
Oh, that's the
IMS
Tom
trades.
Lee,
Yeah.
the Ethereum treasury company. I mean, all these things, they're all going nuts. I mean, Bitcoin was down like $3 or $4 grand in the overnight session. It's now higher. Risk on, man.
Yep.
Just buy it. You know, it's what it seems like. It's always just money print to go burr. We got that coming later this year. And what more do you want? We got the President Pump. Pump. So, war's going to be over on Friday. Hopefully. That'd probably be a positive thing for the world.
No more worrying about bad job numbers.
Bad job numbers. We don't even
They're
talk
gone.
about jobs.
We'll just revise those.
Yeah.
Getting butt kicked right now in these 0-day iron condors. Yeah.
Yeah, that'll
This
happen.
was, and I'm not sure what the expected move was going into this announcement, but.
Well, there's probably a little bit of, if we look at the VIX one day, you definitely got a little bit of a pop in volatility yesterday. You had a rare down day.
Yesterday.
So you did have a little bit of a pop in volatility, but you're I mean, 0-day stuff you should expect. A lot of them, if they go wrong, they're going to go fully wrong. There's not a lot of wiggle room there.
Yeah. Been trading around 100 lot of XLE shares. Shares are a year-to-date $100 loss, but because I sold premium around it on both sides, I'm up 200 overall.
Nice.
And he's at up. Yeah. I was talking to someone at the Seattle show, and he was saying how he basically just buys the micro crude contract or the crude contract, and he layers into contracts, and then he sells a call where he thinks it will eventually go, and just takes the premium, collects it.
Yeah.
Yeah, as long as you have it sized correctly, especially in crude has been a great two-sided trading vehicle where you can do that, and if you can absorb the volatility, whatever that is, you're eventually going to have an opportunity, especially if you're like right near the current. I think he was at 65. So yeah, you'll have an opportunity if it gets above 65 to take the profits and reestablish, but that is the nice thing. As long as you don't have a one-sided move that never comes back in either direction, the short premium plus the static delta can work nicely. Oysters.
They talking oysters?
Talking oysters.
The ones we liked were what?
Shinsei West Coast oysters. They were 10 out of 10.
Yeah, those were good. And the other one was the Olympias.
The Olympias.
Yeah.
Little tiny, like penny-sized oysters. But they were great. Are we going to the UFC Chicago on Saturday? I sure am, David.
Mike's been doing his research all weekend.
I did. Actually, on the plane, I watched an hour-and-a-half video, a fight-by-fight breakdown, and I took notes to make sure that I've got my DFS cards lined up right.
Yeah.
But let me know who you think is going to win, David. Yeah. I would love to see DDP win against Chimaev, but Chimaev's just a monster.
Mm-hmm.
But Drickus is the current champion. He's been just plowing through everyone. But there's going to be some sick fights on that card.
You got an underdog you like?
Yeah, I like Mearshart as an underdog. He's
what's
fighting.
His spread at?
He's like plus 250.
Okay.
But
like that.
His opponent is projected to win, but his opponent has lost 9 times via submission, and Mearshart is a ground game grappling specialist. So, and he's already had multiple upsets this year. So I like that a lot. And then who's the other one? Barbosa. I think he's a favorite though. There's a lot of old men fights. Like when I say old men, I mean like they're 40 years old.
Yeah.
But in UFC terms, like that is ancient.
Yeah, that's old.
So there's multiple 40-year-old fighters that are probably just going to go in there and just blast each
Where's
other.
all the young guys at?
They're there too. But yeah, I think Mearshart and then Cannoneer is another underdog. He's an absolute monster, but he's fighting this guy that's just like a little snake. He just like gets in and out real quick. So I don't like that fight for DFS purposes.
Cannoneer's 18-8.
Yeah.
So is that the guy that lost 8 submissions, or?
No, that's Olichuk. If you look him up. But Cannoneer and Conor McGregor are the only 2 people that have knocked people out in 3 different weight classes. So that's a fun fact.
Yeah, that's a good fact.
But yeah, let me know.
Did you learn that in your video?
Yes.
Oh, well.
Yeah.
There you go.
See?
All right.
Math.
Yeah.
Science. I got to bring Tom to the UFC fights? Absolutely not. That would be probably the worst
He definitely would
person.
not enjoy that. I don't think he's a UFC type guy.
No, I don't think so. I think he did like boxing at one point.
Yeah.
Maybe.
Well, the boxing is more like
old school. Let's see. Thanks for the LE trade. That is ripping. Yep. I got in that trade, out for $100 or so, and then back in the exact same trade for the exact same price, and then it ripped again. Got another $100 out of it.
Go.
It's been great.
Hogs are moving too.
Yeah. Pete's Coffee, infinitely better than Starbucks. I agree with that. The Sergeant Dickinson blend.
I think it's Major
Dickinson.
Yeah. It's
whatever it is.
That is.
It's top tier, especially for cold brew. Yeah. Cosmot's a lock, the equivalent of selling SPX points at 1 standard deviation. Lol. Yeah.
That has been a lock.
When the win rate's around 70%, but it's actually 100%.
Yeah.
Until it's not. But yeah, I will be locked and loaded. ALB premium, pretty good for a semi-speculative stonk.
I don't know. Maybe it's the same person that's obsessed with the stock, but I don't know why everybody keeps coming to this. I think they do chemicals or something. Isn't that like the space that they're in? It's all to put in Dow, which is DuPont, or formerly DuPont. I don't know what they're. Let's see, ALB. Yeah, special chemicals.
Special chemicals.
Yeah. I don't know. I think the last time we looked at this, markets were kind of junky here.
Yeah.
There's our volume.
I mean, it's tough. Ooh.
There we go.
Premium's fine. It's just, you just got to, these markets are 20, 30 cents wide, so you got to be able to manage that. MSOS moving too.
Oh, I saw
the old
this.
pot stock.
Yeah, but didn't Trump say he's looking into possibly
Downgrading it. The schedule or the DA schedule, which I thought is what they were doing the last administration. Then they canceled that review process earlier this year. And now it seems like they're starting the same review process with the same intent.
I will say, if it is legal, you got to think there's going to be a futures contract for it.
Why not?
Which
I mean, the thing is with weed, if you're making futures, you got to standardize the product. Is like an
ooh, that's true.
Are you gonna have an indica futures and a sativa futures?
Yeah.
/MJ.
Yeah.
Yeah. MJ is one of the other ones. The other ticker for one of the. But you got to be careful with these because they have like MSOS. A lot of the stocks that are U.S. based, the biggest, producers, sellers, distributors, are not part of this ETF because they're not publicly traded. A lot of them are like swaps and stuff like that. Like, let me look this up here. So, yeah, so a lot of these are, the holdings here are 75% derivatives, which tells me that a lot of them are like swaps or notes on the U.S.-based companies. So it's not, there is some drag there to it. It's not a pure play on like U.S. hot stocks because those aren't really tradable.
Yeah.
I mean, MSOS is up 68% in a month. So, I mean,
it's a gay. You hit a home run.
Yeah.
I can't knock it.
I've got some in my IRA. It's been down since
forever.
But this helps.
Yeah.
That's why I have Under Armour shares for the last 10 years, because I'm just waiting. I'm waiting for a potential day.
Ryan Grace had me slinging calls in MSOS.
Back in the day?
Let's zoom out on this. Because I remember him being like maybe the 50 strike. Yeah. Here, look at that. Nice. 2021.
Yeah. The heyday. Yeah, these, got to be careful with these stocks, the individual names especially, because they're just like, if you Google the location, it's just a shack on the road.
Well,
like for some of them.
The ones that are U.S. based aren't publicly traded.
Yeah. But yeah, there will probably be some movement in this industry pretty soon here. Maybe it'll be back.
So Cureleaf no longer trading?
I was just looking it up. I don't think so. I think they're all OTC.
Oh, okay.
So a lot of them trade, like I'm looking at Cureleaf. I think it trades OTC.
Yeah, it is. It's OTC. I thought that was listed.
Yeah.
Why is ZBZ cheaper than ZBU? So a little bit of backwardation here. 114.21 versus 114.08 versus 113.31.
Yeah, those are cuts.
Yeah. And normally, like when you look at this and you see this in like CL or VX, that is backwardation. That is an abnormal scenario where it is usually tied to heightened volatility in the near-term cycles. But with ZB, you have cuts and you have other things that play a role into it.
Yeah. Then those get priced in the markets.
Yeah.
Yep. And E-minis, it's dividends because there's no dividend pay. You don't get paid out on futures. The dividend is baked into the price, which is why the current futures are at 64.58. Our next contract is at 65.13. So that's the dividend baked into it.
Yeah. Ideas for going long ETH A, sell a put, performance covered call, Zebra. ETH A at 4,500.
Yeah.
Ethereum at 4,500. Big.
There you go.
Bigly.
I got my, did like an iron fly in this. I think I did this yesterday. Not yesterday, last week. On the 6th. Yeah, middle of last week. I got to do something here, roll this one up.
There you go. Yeah, I think implied volatility is here at 80% in September in ETH A. So if you wanted to sell a put, maybe try and get a lower basis than the current rip, you could totally do that. It does use a lot of buying power if you're going naked. But these are still pretty cheap for if you're diagonalizing them. So if you're like buying October, selling September, you can still reduce basis. Like you can do a 6-point wide for less than $3. It's pretty decent return on capital if it continues higher. Or if you're playing for the downside move, same story. But I think if you're doing a debit trade here, it makes a lot of sense to have a short premium component because you're getting a lot of premium to have that on. Sell the UVXY 13 put. I would rather just buy the call.
Can't. Right.
Like there's no money to be made here. If it rips, you make 50 cents. Where if you buy the call in December, let's say, and you put up a little more capital, like if it rips, you're going to make way more.
Yeah, but you with these, you have to trade them. You can't buy December because the way volatility is.
Yeah.
You can't. It's These are short term. So
And the September 13 put, like it's hard to make money on this because if nothing happens, that put's going to go in the money. With the way that
it's just going to
drag
slowly
down,
grind down.
Yes. So it's tough.
Yeah. And it's basically cash secured, so it's use a lot of capital.
ETH A Strangle, 3041 in September.
Yeah.
If you want. Yeah, it's just a little bit elevated buying power. I'm in IBIT. I've got
buy the wings 10, 15 points wide. I mean, you buy the 40, or I guess the 46. You don't really have the wings on the upside. I'm sure they'll open those up, but yeah. I think if you're trying to get long here too, I mean, you play this via calls, diagonal spreads, crab trades, those sort of setups play into this because there's a ton of skew here.
Yeah.
I mean,
are you doing anything with yours or are you leaving it?
I have to roll up the puts. But I'm having an issue here on the platform. I don't know what I'm doing here.
Why is the GC price different from the price of gold? And how much difference should we expect?
In what?
Gold futures.
Gold futures to spot gold?
Mm-hmm.
Spot gold, you have to go through somebody. And so there's always... So there's going to be a markup. I mean, usually, what's it typically like if you go through like a JM bullion or something like? Isn't it like a 3%?
Yeah, it's saying I thought 5, but 3% might be it. Yeah.
3 to 5%, and that's on both ways.
And then that's the same if you go to a pawn shop, right? They're going to take a percent off. There's always going to be something where if you're trying to sell at spot, there's always, someone's getting their cut.
Yes. So that is...
It's the cost of doing business.
Yeah. Yes.
There you have it. Let's see. Apparently, Veneta did something on ALB.
I'll have to go watch it.
Yeah. Earnings this week. I know we've got the News and Insights tab popping off. If you want some written content, I'll put a link there. What do we got this week?
We had
CoreWeave?
Circle. Yeah, CoreWeave. We had Circle this morning. That was kind of one of the bigger ones. We got CoreWeave, Kava. I've traded Kava a handful of times. I haven't looked at it recently. Kava is in there. You have basically over Cisco.
Cisco?
Yeah. Not the thong song, but the company. JD, John Deere is in there too. AMAT.
There were some youngins in the office that had no idea what the thong song was.
You know the thong song, I'm
and
sure.
we're like,
Yes.
what do you mean?
Come on.
You don't know who Cisco is?
Music
What do you
video
mean?
pops into my head right
Yeah,
now.
the silver hair.
the silver hair.
Yeah.
I think I was in junior high, and
Yeah.
that music video would always be playing on MTV. In the
MTV
Yeah,
every single day. True
Yeah,
classic.
you get home from school, throw on MTV as fast as possible, watch TRL from 3 to 3:30. Go skateboard outside. That was my daily routine. But yeah, we do have some earnings. Speaking of UFC, Paramount struck a deal.
Yeah, you getting long now?
$7.7 billion starting in 2026. You can watch all UFC on Paramount Plus.
That's
I
vaulted.
assumed.
Or is it vaulted?
PSKY.
Is it going to be a new...
I don't know. Yeah, PSKY is
Yes.
Paramount Skydance.
AY. Oh, so this is the new...
Potentially.
Was this always around? Or is it just a new...
I don't know.
I thought it was a different ticker symbol.
I thought it was
I thought it was
Para.
Para.
Yeah.
Yeah.
Maybe they changed it.
Yeah, because they have that halted. So there must be some sort of combined entity.
This thing right here.
Yeah. It looks like it might be. But Gus wrote a little article on the News and Insights app. You can check that out. And
Read
Thomas,
that, I'll know what I'm talking about.
yeah, Thomas did a core weave one. What do we got for core weave? Today after the close, I'll pop it in the YouTube chat. Today after the close, what's your analysis?
I mean, it's a big expected move, 20 points on, $143 stock. I think it could go either way. NVIDIA owns about 7% of it. They're like a data cloud leaser, if you want to use their data centers. So I think it depends on how strong that demand has been. But I'm not trading it, but.
Yeah, it's a mover. It's a little squeezy. Circle,
it's expensive.
Yeah, Circle had a big move to the upside. Or what looked like it was going to have a big move to the upside. Opened significantly higher. Where'd we open? 186. So another 20 points higher from here. Sold off there. So, are you doing anything in it?
I mean, I'm just looking at a 10-point wide butterfly, and it's for it's
Yeah,
a dollar.
it's nothing. It's not going to go anywhere when you have that high of implied volatility.
Yeah, you'd have to hold it to Friday, pretty much, if you're trying to get a big chunk out of there. I really want to just throw it on, but do I do a broke wing butterfly? I don't know. I'll mess around with that. Couple more here. Is SMH going to crack $300?
Probably. Why not?
Yeah, of course. It's $299.
It's the next stop.
It's obviously going to hit 300.
You can't go to 400 without going through 300.
Correct. That is actually correct. Yeah, I mean, this has just been an absolute
Not
tear.
getting participation from NVIDIA, though. NVIDIA chopping around here. It was red for a slight minute. It's every day. Anytime there's a dip in NVIDIA, you just buy that indiscriminately.
Yeah, I'm long NVIDIA right now.
It's just up and away. 15% tariff, who cares?
It's kind of crazy because I've been saying this like until proven otherwise is kind of like a joke.
Mm-hmm.
Like I was always
just say
saying
never.
like there's still risk to the downside, but now it's just like
no more risk.
Up only, VIX at 14. We are in La La Land.
That's it?
Oh yeah, 11:59.
Lunchtime?
Yeah.
Yes. Palantir, Iron Condor. I've got an Iron Condor. Do you have a broke wing butterfly? Or no?
I think I do have a broke wing butterfly. I did this for one of the cherry picks, I think. Yeah. 175, 180, 185. And
So
then
nothing to do
wing
there.
at 200. Right at the money.
Yeah.
Yep.
Nothing to do. It's
Sit,
right at the money.
chilling.
Just got to chill.
Yep.
All right. That's it for us. Thanks for tuning in. If you have any further questions, you can reach us on the Twitters. I'm a Trader Mikey B. Next to Trader Nikki Bat. Thomas is at FX Westwater. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same.
Oh, it's a thong song. There we go. Dong, 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 dong.
We'll see you tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Craig in New York City. What's up?
I just want to say I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We're back. It's still Tuesday, August 12th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, it looks like we're finding new highs today.
Sure does, man. Interesting day in the markets here, and excited to talk to you about it, is what I meant to say. I can talk to the markets too, though, I'm sure.
I talk to the markets all the time. They rarely speak back to me. It seems like a one-way relationship. At least this month of August, because I'm playing like the New York Mets out here, Jamal. Mets are 1-8 in August so far. It's a nightmare watching this team collapse. But that's how I feel about not being long, thanks to being intoxicated by the CTA excess positioning over the past few weeks. August being a seasonally strong month for volatility. NASDAQ here looks like it's going to poke into a new all-time high. The Russell's up over 2%. Why do I ever think about being bearish? How silly of me.
Yeah, I tried not to lean into too many ideas at times of seasonality, things like that. Like, I know it exists. I know that we've seen some bad Augusts, but how do we always say it? You got to trade what's in front of you. And until things change, I mean, that does mean lighten up exposure at times, but until things change, then I won't change.
Well, the market's telling us today that things aren't changing. In fact, we're going to replay what we did last year. We can go to the slides. It means that we're doing reflation rate cuts. The CPI data today had some good news and some bad news, depending upon where you sit. I think it was a little bit of mix of both, Jamal, but it's clear to me that the way the market's responding here today, we're going to get the reflation like we saw in September, October of 2024. Before we get there, though, and talk about the latest maneuverings here in the equity index futures, let's take a look at where inflation is going. And this is why I call them reflation rate cuts, because core goods, this would be where you see tariffs coming into effect. the rate of change month over month for core goods is increasing. Overall, the super core reading that you would look at, we would see that's now up at a new high over the past several months. So inflation is still turning higher at the top line levels. I say that these are reflationary because the tariffs themselves are providing the juice to the upside right now. What really is not is housing. There are areas within the CPI data that suggest, absent the tariff impact over the last several weeks and months, Fed may have already cut. Fed may have already cut in July. And so now the market's looking at the world where we see a 96% chance of a September cut, Jamal. I'm not sure we should be priced there yet because there's a whole load of data to come between now and again. What if the next reading we get weeks before the September meeting is way too hot, right? The market's probably going to have to back off that 96%. But I digress. Good news is good news for stocks. The economy's holding up-ish for now, even though things are slowing down. And we have information to suggest that the Fed is going to cut rates while inflation's still above its target level. Because after all, the end of the day, a 0.2% month-over-month run rate, annualize that over 12 months, 2.43%. That's still above the Fed's medium-term target of 2. So we're going to do what we did last year, Jamal. We're going to get rate cuts when the economy doesn't necessarily need them. If you look at the top-line data, bonds hate it, stocks love it.
That's exactly what happened last year. And I remember I was one of the main people saying, we don't really need a rate cut. Why are we going to get one? And then bam, we get a big rate cut that happened. So that was kind of strange to me. And even this report today, I'm glad you said it. I mean, it did seem, I know when I read the tea leaves of it, it just seems a little bit of a mixed bag as far as an inflation report, yet stock market certainly didn't take it that way. And it's just been kind of entertaining to watch today. So I'm still not really sure what to think of or make of the report, and who knows what PPI brings in a couple of days as well. But this is I don't know. This is one, again, trading what's in front of us. What else can you say?
Trading what's in front of us. Yeah, really. I mean, stocks here, 6456.75, poses a problem for me slightly. Yesterday, we were looking at the short iron condor trades, this broad range that the S&P has been in over the past several weeks, really going back to early July, 62.40 or so, up to about 62.60. I would like for this range to hold through the end of the week. Today is looking a little less certain if that will happen. But it's noted that the one standard deviation move coming into today was about 40 points. Today, we're sitting up 56. So this is beyond market response, beyond what was anticipated, Jamal. But I think that's the technicals here. I mean, what do you do up at these levels? Do you get long now and wait for a break? Wait 15 points to see if you're correct in getting long? Do you take a stab at the short side? I'm personally going to stay in this short iron condor position. But if this clears 64.60, we have a bold world ahead of us where the next upside targets start to look into the high 6600s purely on a measured move.
Yeah, we were looking at SPX expected move for today, yesterday on Engineering the Trade when I was on with Josh, and I remember it was about 43 points. And I said, I wonder if I should buy this because it felt like it was a little bit underpriced for whatever CPI was going to do, honestly. Look, there's two things. There's CPI, and there's a reaction that we're getting today. And then there's this chart pattern, which I think probably matters more than CPI, right? I mean, especially as somebody who's, sitting at Tasty Trade, we know how that goes. The reason why I say that is because this chart pattern is doing one of the things that we kind of talked about maybe it could do a couple of weeks ago, right? We said we needed to clear out some of the technical damage that has happened, but if we get that, we could get a nice kind of handle pattern that eventually we could explode off of. And that's actually what it looks like right now. As much as I would love to play into that, as much as I would love to get long some upside, I don't know if that's the prudent thing to do. Just because we still have a trading environment where the mention of certain things causes the markets to fall. You saw what happened at the end of July and the beginning of August, and we have these goalposts that keep getting pushed further and further back. We got another one that was pushed further back the other day for China in the U.S., and so because of that, it makes it kind of nerve-wracking to find the right idea. I would say you got to find the right term. Now, that being said, I still have that. That's one trade that I put on a while ago, and I'm still holding because of exactly what I explained. I have that Russell 2000 call spread, the 2400, 2500, and I've been holding that for a while. It's been September. It's 49 days at this point. It seemed like forever ago, but now it's less than 50 days. And I think that's one of the ways that you could do it, is go further out, try to find some cheap options, which options are fairly cheap right now. When you look at the VIX, I mean, the VIX index itself, where is that? Is it under? It's under 15. It's under 15, and you look at the difference between August VIX, which is the Q contract, and the September contract. It's a full $2.60. Like, that is contango if I've ever seen it. So vol is low. It's a ripe environment for buying upside, to be totally honest with you, which, again, is not something we always talk about doing at Tasty, but I'm not the normal Tasty person, as you know this. It's a ripe environment for possibly buying further upside. What I've mostly been doing is I've had upside, but not in big things like SPX or ES, or, the only one I have is the Russell 2000. I've mostly been doing the calendar call spreads at this time, Chris. Like, I think, that's one of the things I like to do in an environment where I still think we could be moving to the upside, but I don't want to commit too much capital in case we falter. And that's kind of the way I've been playing things, but it's mostly been in individual names.
I think that's been the right way to play it. Hindsight being 2020, certainly better than I've done here. My Russell exposure was trying to take a stab to see if the recent swing highs would hold up in this neighborhood.
Yeah.
Maybe we were going to get a dip back below 2,200. Nope. So I'm getting out. I'm out of the Russell short call spread. It's going to be like a $300 loss for me. Very well defined. I'm okay with that. This thing looks like it wants to break out. I guess we're going to go back to, and here as we punch into a new all-time high for the NASDAQ, I guess it's time to go back to last month's strategy, which worked out great.
It did, right?
It was just continuing to play up the short-term calls in the NASDAQ, keeping a longer-dated S&P 500 put in the back pocket in case something goes wrong. Net, July came out as a winning month in terms of the equity trading. So here breaking out, I mean, the measurement, 22,800, we'll call it 23,800, slap an additional 1,000 points on top of this bad boy. Right. See you near 25K.
Yeah. It looks tempting.
What else is there to do?
Well, let's talk about time frame. So the next Fed meeting is what?
September 17th.
September. And then what's the one after that? Because obviously we're going to get through that one. Is there an October meeting? I don't know why.
There's two more meetings.
Here we go.
The next two meetings,
the
October 29th and
so
December 10th.
You do have, for the NASDAQ, there is the October 31st expiration, end of the month. Maybe that's one of the ways to go. I don't know. This looks interesting now, all of a sudden. Is it too expensive? Yeah, I mean, that's what I mean. Like, is this what's going to happen? Is this the market we want to do? Do you go to October and do you say, I'm going to get on the 25,000, 25,500 because this market, even with a pullback, this is a viable trade. I think the markets are generally going higher. Things are going well. Look, Trump seems to be solving all the U.S.'s problems. And if you really believe that, then why wouldn't you look to get a call spread further to the upside? You're certainly not selling puts or put spreads right now. I mean, you could do that, but I feel like that's more risky personally than just buying upside in a couple of months out and sitting on it. That's just how I feel.
Interestingly enough, we talk about the October 17th expiry, and maybe you want to go further to October 31st, but looking for a
That's
move
what I would do.
Into the 25,000 area. We're not even talking about what the market's pricing as the one standard deviation move at these levels. That's closer to 26K.
Right.
Now, I don't know if I'd go that far out, but talking about these options being underpriced a little bit, 80 days out, risking 1 to make 9, 8, a little bit underneath there. I mean, it's very tempting, but this is the reality of the market right now. The structure here is very clean. July lows held up after the employment report. We bounced back. It looked like we were going to get a turn lower. No such luck. So we're punching into a new high. The series of higher highs and higher lows continues. I do want to note here, Jamal, and you and I have gone over this a bunch of times before, when stocks are above their 5, which are above their 21, the 1 week, the 1 month moving average, VIX is 15 or lower, and volumes are low, which the S&P today, we still have not crossed 1 million contracts traded despite it being CPI day. This is the steady float grind higher environment. And yes, it's getting frothy. And yes, there's a lot of complacency. But as traders, right, our job is to effectively predict an outcome And in that certain time horizon, the next few days, why would we want to be anything other than looking long? I mean, I think the S&P 500 short condor, it's got to go.
Yeah, I mean, I'm not looking to fade the market in a big way here, right? Like I can understand short term getting short, MES or something like that, just as this move is going to pull back 10, 15 points. But to your point, why would I look to do anything other than get long? Yeah, I agree. I don't see the reason to try and buy puts here. I mean, what is the wall of worry that you think that is going to that those puts or put spreads are going to benefit from? I really don't see it. I mean, again, it's still the tariffs obviously have still been the biggest thing in the market. Like I said, we have the U.S.-China tariff situation that was pushed back 90 days from yesterday. So who knows if that even comes to fruition, if that comes to a point where they actually solve something, or do they push it back further? Who knows? But outside of that, I mean, there's really no tangible thing that you could say that we need to buy puts for because I'm worried about the stock market. I just haven't seen it. So the only pullbacks we've mostly been seeing are either falls because of tariffs or just a natural pullback, and those are bound to happen. I see no reason not to stay long the market.
When we take a look at the market today, the sector performance is pretty good. Top performer, home builders, up 2.49% right now. Forget the fact that long and treasury yields are up. The market sees that Fed rate cuts are coming.
Yeah.
And whether or not that feeds into lower mortgage rates is another question, but reducing the prime rate ultimately should have downstream effects for lowering borrowing costs. That's the work in theory. People have more money, the economy's humming along, people can buy more homes. Okay, simple enough. But XTL telecoms, this is going to be what would be a new all-time closing high. We take a look at even retail. XRT, this is closing up, and we basically completely closed the gap from where we were in the December Fed meeting. This was such an important chart for us several months ago when we were going through the tariff situation, because XRT never was able to climb to new highs in January and February like so many other portions of the market. And it was hit hardest on the way down. And yet here it is today, up 2.15%, a leader. It's not exactly a name that's on the top of the scoreboard if things are struggling. You have your banks here that are poking up again. I mean, SMH, new all-time high. So where is the issue? Looking at this on a sector rotation basis, the growthy names are still getting all the love. The breadth today improving, you could argue, because it's not just tech leading. Your Russell, 2.21% higher. If I'm a corporate and I have short-term revolving debt, a Fed rate cut reduces my floating debt liability. It's as simple as that.
I'll tell you too, that home builder situation, that's a good one. I mean, honestly, I think we could eventually see some type of, you talk about sector rotation, you could see some out of tech and eventually into the home builder environment if this interest rate situation starts gaining more traction. I really think it's one of those areas where we haven't talked about a whole lot or paid much attention to over the last couple of years, obviously because of where interest rates have been, but that's definitely an area to take note of.
So funny how this is another bear trap last week in the Russell that I fell into. But I would point out the structure here has been maintained. So missing my part for not reading the tea leaves correctly. We've seen since, we can actually go to the continuous contract here to make this point a little bit better.
I almost closed my call spread, and then I was like, you know what? It's September, like whatever. It's September 3rd. I'm leaving it. It's annoying to watch being down on this, but I'm just going to leave it.
Patience is a virtue. Ever since we established ourselves back above the 1 month moving average here in April, there's been this tendency where there's a dynamic between the 1 month and the 50-day in the Russell. We've seen it be a catch point. We had it on the way up and on the way down and on the way down, and then here again on the way down. So the structure is still intact, despite the misgivings that it was indicating otherwise. And I think that's perhaps the lesson that one needs to learn here. Until the characteristics of these markets change in a meaningful fashion, right? We can look at the consolidation and see the data getting worse, and who cares?
Yeah.
Doesn't matter. So right now I'm looking for this close above the high in the NASDAQ, 23,845. If we were to close there today, I'm in. If tomorrow we reverse all the gains, then I'm probably out because it looks like a fake breakout and I want to eat those losses some more. But we just have to learn to love the bomb, don't we, Mr. Chandler?
We do, Mr. Vecchio. That's the thing, and I do like the idea of doing an October 31 call spread. I just I don't know. I don't know if I don't know if I want to do it today or if I want to just wait through expiration, or maybe on expiration Friday, put it on. I don't know. It could get a little weird till the end of the week. We'll see. But I do like the idea.
I just point out for some people, right, if that's an idea they wanted to execute on, maybe the NASDAQ futures aren't the best place to do this right now. I'm only looking at the open interest and volume around that 25,000 strike.
Mm-hmm.
This might be a triple Qs trade that could be easier to get in and out of, right? Just listen, we could go in here today by the 25, 26. We will be the 9th and 2nd person at each of those strikes.
Right. It's true. No, that's a good point.
So something to consider. But the upside here, right, if we were looking long 25, 26 in such a situation, it's basically a 3-to-1 no matter how you tinker with it. If you're anchoring at the long 25,000 and short the 25,250 or 500 or 75, you're still scaling up in these effectively 3-to-1 increments. Now, 80 days out, this is a sizable trade for most people, right? If your account is 25 to 50K, putting out $1,675 of buying power is not a small thing to do. And you're risking, if it's a 25K account, you're risking 6%. So this is also why triple Qs may be a better, more risk-attuned way for people to express equities are going to keep going up, whatever bumps there are. Let's ride the rails until they fall off.
Yeah, I just wanted to look at percentage-wise, just so people can really understand, because basically what we're calling for is, let's just call it 5% move, right, to the upside in NQ. Sure. So just do the same. If you want to do the same thing in Qs, just figure out 5%, which in this case, based off today's price, is like 28 points. And so you could say, okay, above 600, right? So that's one of the ways to think about it.
Exactly. So looking at that here, say like long 600, short 605, there's still not a lot of interest or trading volume, but there's more. And so it's not quite a 3-to-1, it's 2-to-1, it's a smaller buying power. You could scale this up a little bit more effectively, right? Let's say I wanted to go 3 contracts here. Okay, this is looking more like a futures kind of trade without that futures kind of risk, if you will. So expressing the view, it does matter a great deal, the way in which we do express it. But ES for me, this is my line in the sand. I'm out 6468.50. That's it.
Yeah.
And then it's just going to be lights out on, I know as soon as I get out of these positions, Jamal, volatility is going to bottom and start going up. I just know it. Yeah,
this market's been strong, man. And this formation, when I see this right here, honestly, you see it kind of forming a little bit of a cup, and it's coming right back towards the high of the range. I think has it eclipsed it? I mean, no, we haven't eclipsed the new high, right? So, but it's still right there. And the fact that that's happening, I tell you, a lot of times you do. It's a very precarious area because, like you said, there could be a false breakout, but if not, it does explode higher, and we see 6,500 in short order for sure. So it's you don't want to put too much capital into it, right? You don't want to sort of put yourself out there too much, but just know that it's possible that we could be breaking out higher.
The channel that's been in place since the U.S.-China détente in the middle of May was announced, May 12th. That has stuck around. This was actually one of the rationales why we were continuing to trade long in July.
Yeah.
But that was a missed opportunity not to buy the dip on August 1st at the swing low with channel support there. One of my deep regrets from the month of August, besides continuing to be a New York Mets fan, which really, what is going on? At least I don't live with the Phillies. No. But in 2007, in 2008, I lived with a Phillies fan. And that was a nightmare. It was an absolute nightmare watching the Phillies win and the Mets collapse each of those 2 years. Still one of my good friends. So bonds. This is the reaction in the market that tells me we have this reflation mindset. So when I say reflation, the idea here is that the Fed is cutting into a hotter economy than I think the Fed realizes. The market's judgment is what they are doing will either stoke more growth or more inflation, which on one hand, that's a good signal. If bonds collapsed after today, it would be the market saying, oh gosh, we don't have enough cuts priced in. I think the interpretation from my view is, oh, there is a cut coming. The context in which it is coming is not because of the economy sliding backwards too quickly. It's actually still warm. This might help heat it up a little bit more. So that's good news for stocks. That's good news for companies that need lower rates. It's not necessarily great for inflation and growth expectations. So there is a pullback here, but we are well off the lows. What do you make of this move here in the bond market today around this data, which has brought us back into a very familiar area around 114.5?
Yeah, it really was. This is the one thing that was really confusing me on the heels of the report, right? Like, yeah, I know when we cut rates, it affects 2 years more so than the 30 years. But this, I think your analysis is accurate, honestly. I mean, it seems to be that the market, the bond market is thinking, like, if we do end up cutting and there is one cut price in, which clearly, I mean, that has been one of the bigger changes. It was towards 90% chance of a rate cut for September at the end of last week.
Yes.
Came in at about 84 on Monday, and then now it jumped back up again. And we're not, we're not too far from the zone we're going to actually have the date, but still, this is a ways off. I was just a little surprised by this ZB move today, and I did wonder if it was something that I should buy. I don't have any ZB. I have nothing going on in either one of them. Been out of the bond game for the last couple of weeks here, but I don't think this is enough of a dip for me to decide to get back in yet. I think this is it's pretty low to be playing an Iron Condor, but I'm sure an Iron Condor is working right now because it's hanging out in the 114, 115-ish area.
Food for thought. When we look at the shifts in the 3-month SOFR futures contract, the December 2026 pricing has only given us about 6 more basis points here today, or 6 points. Now, what does that translate to? Roughly speaking, 24% chance increase in an additional cut by the end of next year. I don't think that's enormous by any stretch of the imagination, Jamal. Really what's happening is the market's pulling forward expectations for this year, right? Like September is probably more locked in. December incrementally, probably going to get another one. Although I'm of the mindset that if the Fed starts cutting in September, I do not see them not cutting in October. I'm going to have it just for everything happening right now. They paused. They did their thing. They did their deliberations. If they're resuming the cutting cycle, it's not going to be a one-off. So you get September, you get October, maybe you reassess for December, but even so, I think that you could pencil in a third one. The cutting begins, it doesn't stop. So to that point, we have this cut priced in. The market is now priced for 2 cuts here. For ZB though, for ZN though, what does this actually translate to in terms of a trade? The short Iron Condor positions, despite being incredibly boring trades themselves, they are ultimately working still. Given the 1 standard deviation moves, these are still trades that give you basically a 4-to-1 risk to reward. You're getting in that neighborhood of 60 to 70% probability of profit. Your max profit is what I think close enough worth the buying power. So even though today's in, right, for someone like me, we're continuing just to, and let's go over to the Z5 contract here because that is a legacy call spread that's absolutely worthless at this point in time, Jamal. At 45 days, is this acceptable price action? If I'm short the 111 put, yeah, this is still very much acceptable price action within the bound of what should be considered. Would I put this trade back on today? Again, logic. 111 clears you through the July 16th low. That's 3 points from now. If CPI didn't kill us today, I imagine that we're going to have enough warning to get back down to 111. And if I could bring up one more point, Jamal, about the bond market and how we traded yesterday and how we've traded in the wake of some of these trade deals or announcements. I thought that AMD and NVIDIA being able to pay only a 15% VIG to the US government to have access to China was a bullish development, because it means that we're not trying to restructure our place in the world of trade. Trump is prioritizing US corporations' market access over all else. And so for NVIDIA and AMD, 85% of a pie is better than 0% of a pie. But to that end, for the bond market, it means that if this is really where this is all going, we just want better deals. We don't want to become an autarky or isolationist. Then the spice will flow. Other countries, other institutions will continue buying US dollars, will continue recycling money into US dollar debt or assets. And so we really need not be concerned about another April type bond market that's getting a little yippy, as Trump may have said.
When you have, I thought that was a bullish development too, honestly, and I thought it was sort of the segue for the U.S. and China to come to an agreement on the kind of levies that they were going to have for each other. I was surprised that it was pushed back 90 days, but that being the case, I mean, that should create more revenue for the U.S. government, right? And it should be create a more of a situation where you do lean into those long bonds more at some point in time, I would think. I mean, obviously that's really good for our country. So I think today, again, this is just kind of a one-off based off of a sort of middle-of-the-road CPI report, if you will. Overall, I still would like to be long bonds. I'm just not going to choose to do it here. The Iron Condor definitely is the best play right now. I don't see why you wouldn't take it off.
I mean, I'm in at 40. Yeah, I'm in at 45 DTE as well for notes. And while this was established just slightly lower, closer to 111.5, we're still persisting in the midpoint of the range. And given the price action, you know, when it was getting up into the 112.5 area, it started making me a little uncomfortable because my short strike is at 113. So now that it's pulling back in, this is actually working out much neater. I think that whenever we're close to, at least for ZN, if you're close to your 1 month moving average, because of how this has just been meandering, that's a really interesting point. Forget any line in the sand, any level. We're back to our 1 month average, short Iron Condor. 1 standard deviation move out. We're close enough to it now. If we were to put it on today, like let's call 109.5, 108.5, then 113.5, 114.5. Well, it doesn't look too hot in terms of risk to reward, but the pop is right there. We need a little bit more vol than a minus 2.7. I guess that's the other consideration here. What do you make of bond market volatility now falling to levels that we haven't seen since January 22?
It underscores what's going on. There's really not much happening in the bond world, basically. I mean, we remember in 2022 how it was just constantly staying elevated, and this is the absolute opposite of that type of environment. Even though we did have a very disruptive one day move, right, or a couple of day move in the bonds a while back, but things have been fairly quiet. And I mean, there's nothing else to say about it, honestly. It's just been one of the quietest parts of the market.
Where do I want to go next with this? How can I, you know what, that's better saved for overtime. Let's move on to the metals here. Too much opinion. Metals mix vol is absent, right? We want to stick to the trade here on Futures Power Hour. Metals mix vol absent. Gold price is down 0.16%. Absolutely battered yesterday after we get our news that no tariffs in effect. Okay. Whatever. But here we have also the the AMD NVIDIA news, which gold really takes it on the chin afterwards. That to me was a very important telling reaction, because if you are in a world where dollars are going to be harder to come by, but there's no other alternative store of value, you're really forced into diversifying your FX reserves as a country, as a central bank, into gold. But directionally, if the US is saying, yeah, China's a national security threat, but we're still going to sell them our top-of-the-line GPUs, okay, maybe the US is just posturing and is not really going to be doing anything to shake up the global order, as has been so prescribed by President Trump and many of his cabinet members. So gold here loses its luster yesterday. My long calls that looked great a few days ago and now look like crap today, that's not working still. And it's been a lesson learned repeatedly over the past few months. What is interesting here, though, Jamal, is that we're basically at the midpoint of the trading range from where we peaked in gold prices during the panic of April and the swing lows once we all realized that things were calming down. So just going to use that Fibonacci tool. We'll go here, the halfway mark. We don't even need to have a line at 3,400.
Right.
We're basically pinned at it right now. So unlike what's worked for me, or rather what's not worked for me, I would lean on what's worked well for people like you and others here who have been trading gold the past few months. And that's been simply playing the range here, 32, 32.25, right? We'll go out here, 35.75, 3,600, 65% probability of profit, a little bit better. It's like a 2.5 to 1 risk to reward. it's been working. Who am I to say that it shouldn't keep working? We're at the exact place in the chart where you'd want to put on a trade like that.
Yeah, I mean, that's exactly what's been happening in gold. It's been sitting around that 3,400 level for some time now. And again, I think the odd thing about it is that I think you can play both. It's just frustrating, right? Like if you really want to, you can scalp it, right? In some way, shape, or form, meaning 3,400 or it's somewhere thereabouts. You get long, you try to pitch it somewhere around 3,500. It's probably not going to be an exact science, but that trade has worked at times. Again, the difference between that and what I mean by this, the difference between that is what we were doing late last year, the beginning of this year, playing the big moves that gold is going to give you. And I don't think we're going to get those. I don't know. I don't know. It's hard for me to predict to say we're not. But the reason why I am not playing gold right now is because that's the way I like to play gold, for those big moves, for those big gap ups. And I think it's a different instrument than it was earlier this year or late last year, and that's what I'm not playing for. So now you gotta play it for what's going to work, and it's probably an iron condor. It might take some time to really harvest the volatility on it because, again, gold is generally somewhat lower vol, right? Like absolute vol, it's usually in the teens. It's not like a 50 vol instrument that's going to come down to 45 or 10 ticks or something like that. It's going to be a little bit slower bleed, if you will, but that's the best trade to do right now, I would say, centered around 3,400 because that's what's going to work.
Set around 3,400 has worked. It's in hindsight, right? What's been the best move? I have my long-term doubts, even with the bond market. Even if we get rate cuts, we still have to issue $2 trillion of new debt next year to pay for government spending. That's a lot of treasury issuance coming into the market. And how has gold behaved over the past several years, even as yields have moved off their COVID lows? Gold has rallied. So this notion that gold needs low rates or rate cuts to do well, I think is a falsehood.
Mm-hmm.
Rate cuts coming, maybe that's a good thing, maybe that's a bad thing. Maybe one of the reasons why gold and silver have been struggling, there's a lot more exciting things going on in the market. The past few weeks, if you as a trader were trying to follow a trend and you had to invest an incremental dollar somewhere, these things are trendless. You've been chasing Meta, you've been chasing Microsoft, you're chasing NVIDIA, you're playing the game, you're putting coins into the Palantir machine because it keeps spitting out dollar bills. And so why would you put anything into gold right now? If anything, you've had a run up in gold. You see that the trade war is calming down, skim some profits, free up capital to go into the areas of the market that aren't just a stick in the mud. And this has been a stick in the mud since April 16th. We were at this level for the first time. We have done nothing in 4 months.
Yeah, I mean, if you were to ask me which one do I want to make a play on for 5% to the upside, whether it's gold or whether it's the NASDAQ, I'm going to say the NASDAQ, right? I mean, that's just kind of the truth of the matter. So that's something to think about. I mean, I think we touched on this before, but I think it bears mentioning. Gold is not moving in the same way that it was the beginning of this year or late last year. It's a different instrument now.
What's happening with silver? This is an interesting development. We've marked off the 37.73 high in the SI U5 contract previously. We saw swing lows in mid-July through there. When we did see a breakdown, it was a sharp break through that level. Ultimately, we have reestablished ourselves back through 37.73. And you can see these long wicks on this 4-hour time frame poking all below there. It's looking a little bit more constructive right now, though. I see on this 4-hour time frame 2 Morningstar candlestick cluster patterns. So there's a base being formed around 37.73 again. We have numerous touch points over the past month or two now, going back to mid-June, to establish this as a key level. The fact that we're holding up through there, I think, portends well. So yesterday, I'm still sitting long silver. I got caught in yesterday's move. That's never fun. But in terms of the action that we're seeing play out right now, this isn't exactly the kind of thing that screams bearish. And if we're getting rate cuts and reflation, Jamal, how have gold and silver done since last September? Oh, that's right. Yeah, I see no strong incentive from the macro level to not continue to play this. There's 77 days to expiration. I'm more than happy to stick that out.
Yeah, for me, it's the same in a way. I mean, again, these are both things that you can make money being long. It's going to be a little bit slower to do. It's not going to be the massive move that we saw earlier this year. And again, if that happens, I'm waiting for that to happen again. I would say I would like to see that happen before it piques my interest. That's just kind of how I roll. I like to see a name like things like gold and silver really make the huge moves, and everybody else wants to stay away after that. And I'm like, no, now is the time to get in. I want to ride that wave. And so that's the way I prefer to play them. And if they're not doing that in the meantime, then I just shift to other things that I think are more interesting. Like I said, I would rather put money on a 5% move in the NASDAQ to the upside right now versus gold or silver.
And that's the psychology I think a lot of people are dealing with. I got $100 to invest in a new position. I have $1,000 to risk on this options trade. Do I want to risk it in Palantir or in gold? Well, what's moving right now?
Palantir for sure. Palantir for sure.
Right,
That's me.
Yeah, these are the asset allocation decisions that people face. I mean, it's no different than like sports betting. Are you going to bet on the two crummy teams that are struggling to score runs when they play each other? Or are you going to go for the two teams who are, I'd rather bet on Warriors, Lakers than, Bobcats, Bulls. No offense.
Yeah.
Bobcats,
even
Charlotte
in the NFL,
Hornets.
right? Like you want to bet on the game where this is crazy, but the average score is the total score is going to be like 65 versus the score being, 35, right? Like that's just kind of if you're going to put something on there, that's the volatility. That's the kind of move we want to play volatility, even if it's short or long. A lot of times you want to play the volatility.
So we have this negative 0.1 IVR. IVR being effectively a Z-score. When it drops below zero, we are now 0.1% below where we've been in volatility over the past year. So it's cheap. If you wanted to get downside exposure directionally, it's cheap. Upside exposure, it's cheap. That being said, is this a vol selling environment? I mean, you could in silver. SI futures are not that juicy in terms of trading volume. So if we wanted to go 50 cents wide at the 1 standard deviation move, we could. You could get a nice trade. Whether or not you get the execution is another story, right? Only 6 contracts traded in the 41.5 today. A little bit more on the nearer term strikes to the downside. There's enough there to do it. You could make the case for it.
Absolutely.
But I'd rather make the case for gold. Sorry, I'd rather make the case in gold for the iron condor and use the low vol in silver that persists for some of the more exploratory, adventurous types of trades.
I mean, I think those are great strikes because, again, when you look at the chart pattern, you can see that completely is out of the area where you'd have any chance of possibly even getting touched on any of those strikes. You're right. Vol is pretty low. So this is going to be a slow bleeding trade, but it's a trade that's going to win right now because, again, I just mentioned the difference between getting long, whether it's in equity or gold, silver. On the flip side, I don't see a scenario where these are going to tank 5%. I mean, I don't see that potentially happen. It's not to say that it can't. Obviously, we saw what happened in April, but look what that was in April. That was something where everything dropped. So I'm not betting on silver to fall because, again, a lot of times people are like, oh, well, I'm not getting long. I'm not getting these long calls. Is it going to tank sometime soon? Do I want to get long puts or put spreads? Yeah, I just don't. I don't see that being the case. I still think overall the play for gold and silver is to the upside. It's just a slower, longer process, and along that way, you can play an iron condor that will harvest some vol if you want.
Speaking of harvesting vol, that's been a successful effort in crude oil here in recent weeks. We continue to bound around a place where we have been bounding around since the Israel-Iran 12-day war ended back in June. It's a level that we were familiar with in September of last year, and then again here in March, and then resistance in April, May. It's $63.50. Okay, so the CLU5 contract is pinned right now back to effectively the midpoint of its trading range, just a little bit lower than that. It's clearly an important swing area. The vol has disappeared, though, relatively speaking. We no longer have 30 IVRs. They're now down to 20. Jamal, if you're looking at this market, is it appropriate for someone to still trade this range bound, as it were? Do you think this is a good place for folks to put in new orders if they do not already have an existing position on for, say, something like a short strangle or a short iron condor?
Yeah, I think so. Oil has been very dependable in that it's been hanging around that $63.50 range. a lot of times. We've seen some moves at times, right, for different various reasons. We saw something in June. We saw something in July. For that reason, I don't really see it as a play on, a lot of times in the past I talked about trading MCL, right? When I want to play it for a move. And it just doesn't seem to have been as predictable. Like last year, you could almost count on the fact that if gold got around $70 or just a little below 68 or so, it would jump back up to 75 at the very least within short order. Sure. And I just don't feel like that's been as dependable this year. I feel like the vol harvesting, if you will, selling vol in here, whether it's Iron Condor or Strangle, that has worked a whole lot better. There's still some vol in here. I mean, you see 20 IVR, I think there's still a little bit of vol. This is one of the few places in the whole entire market where there's been some vol pretty consistently in the oil throughout this year. So I think that's been the play, whether you want to get to a Strangle or if you have the means to do that, or if you want to do an Iron Condor, that's been one of the better ways as well. I missed this trade. I'm so annoyed about it. You had it on. I missed this one.
Well, for every good trade I have, it's like 2 more bad ones for me. Okay, so it's not a bad trade. This is why I have my circuit breaker for getting out of being too mechanical sometimes. I know that's not exactly the line that we're supposed to toe around here. But if I'm doing something where it says buy the book, like if I do it this way, it's going to give me a 65% probability of profit and I lose on the trade, and then it happens again, I kind of step away for a little while. I want to just see if the market, if I'm misreading the market, if maybe, yes, while the probabilities are there, this is so directional that just being neutral, even if it's the high probability trade, is not the best bet on the board. And so I got out. I've been away from natural gas the past few sessions. The short Iron Condor wasn't really doing it for me. We broke below the November low before Election Day. I think this is the vindication why. So celebrating this insofar as got out of the way of a much worse position. And I think that's ultimately something that people need to just sometimes accept, right? Get out of a trade. It's a loss. Come back in a few days. Look, you may have saved yourself a few more dollars. So nat gas is down 6% today, 5.99% right now. If we're opening up all these deals with these other countries, if we're ending the war with Russia and Ukraine, or grinding these things down and coming to some sort of truce over the next few weeks or months, I have to imagine that demand for U.S. natural gas is not going to be so high because you'll have alternatives like Russian gas again available in the market without having to go to shadow fleets. So I don't see a great picture here. I see a 52.8 IVR. If I had to play this, which I'm not for the rest of this month because it's in the timeout box, 3.1, 3.2, you can get something above the most recent swing high, which puts you back above the 1 month moving average in that neighborhood of 60, well, now 73% pop. And a 73% pop, by the way, where it's almost a 2-to-1, that's pretty good. We just looked at a trade where the probability of profit was in the 60s and it was a 4-to-1. So all things considered, the higher vol is here. But directionally, there's no reason to catch a falling knife.
Yeah, I do like the idea of upselling upside versus the idea of selling downside. Honestly, I do like that idea overall. And again, you talk about nat gas. Look at the volume. There's a lot of volume in here. There's a lot of trade. So this is very liquid. It's just a matter of do you want to try to play it directionless, or do you want to try to pick a side here? And directionless might be the best way to go. It's probably the smarter way to go. But you can't ignore the vol. Like you said, a 52.8 IVR, that's pretty high in my book. And it does bear looking at. And now you got me looking at it again. You son of a...
Sorry. I really shouldn't have done that. The dollar is off today, Jamal. But this is what happened in September. When the Fed gave us their cuts initially, I would point to the dollar index's reaction last year. And unlike everything else, okay, so here we are in September, the dollar actually faded once the cuts arrived. It took a little while for the market to find the read-through and see, rates in the US are actually going to be higher across the curve than they will be in other countries moving forward. So while there's some dollar weakness today, and quite frankly, this is a bit of ugly dollar weakness. We try to pivot back through recent highs. Couldn't quite do that over here. So not exactly a strong looking chart. as we fail again. I could point to the euro, which get rid of that mess here. Point to the euro. It's still in a channel. That's a pretty clean channel. That's pointing higher. So another swing to the upside wouldn't be a surprise here. But if we're following the reflation path that the market followed last year, it's going to be a euro rally to fade at some point around the corner. And it has a 42 IVR. That Canadian dollar has a 30 IVR. Aussie has a 38.5 IVR. Maybe for the Aussie and the Canadian dollar, not the most liquid futures markets. You can go over to Tasty FX and look at the spot, if you will. But these are going to be opportunities, in my view. And so I'm currently leaning still short the yen here, and that's working fine. I'm not ready to jump back in with a short euro position. I already have a short Canadian dollar position on. I'm ready to push this. If we're going to do reflation, stocks up, yields up, dollar up. It could be coming. Just got to wait.
Yeah, I was trying to look and just see where I did my short currency trades before, where I got short delta anyway. You remember I was long put spread in the euro and long put spread in the yen. The yen was probably right about here. Euro was a little higher, of course. And so I'm with you. I'm trying to decide whether or not it's worth doing. I think I want to wait a little bit longer. I do want to get short both of them. Again, the idea of being long the dollar is appealing to me overall. I think I'm going to wait a little bit longer, but I think that's the play. And I think I'm going to wait a little bit longer, though.
Well, waiting a little bit longer may be the prudent thing. As Tony says, it's difficult to short the exact high of the market or buy the exact low, and usually you wait a day or two for a return to get some evidence that it's there.
Mm-hmm.
Tomorrow, a dollar that bounces back and you see that the yield differentials are the driving force, that'd be very positive. That'd be positive evidence in our corner that we're going to be replaying September, October 2024. Economy doesn't go into recession, so we're adding fuel to a fire. Stocks up, asset prices go up.
Yeah.
Tomorrow's calendar. Go ahead.
No, yeah. I mean, it's you're right. I'm not looking for the exact high. I think the reason I did them earlier, when we were looking back, late in June, when the dollar was just absolutely cratering and there was just piling on. That was the appeal before, right? Now it's just sort of, it's not. I want that same type of appeal again. You know what I mean? I want the situation where there's all these people who are all in short the dollar's getting pounded. That was the best time, and that's why the trade worked out so well and so swiftly. We didn't have to wait too long for gains. You know what I mean? And so that's the kind of trade I'm identifying. And I've gotten better with patience. It's something I know I was complaining about a lot for myself a couple of years ago. I feel like I've gotten better with it, and that's probably been the best thing for me this year.
This is one of the reasons why, and I just pulled this up. This is from the most recent Bank of America fund manager survey. The US dollar is still the most hated trade in the market right now.
Good. That makes it a lot more interesting.
Makes a lot. Talk about the real estate move today. REITs. It's the second most hated trade right now.
Yeah, and that's why that's another fascinating trade as well. Yeah, getting long
right,
those
and
two.
People see the rate cuts coming, wanting to lever up on emerging markets, because if you're an emerging market and you're getting Fed rate cuts, that's going to help your currency. That's going to help the credit flow into your economy. So you can see that it's shaking out, but yeah, dollar here. Still, who's left to jump on board? So the calendar for tomorrow is not really going to give us much of anything new or interesting. Of course, the earnings are still coming in, but 90% of S&P 500 companies have reported. We're really just waiting for NVIDIA at this point in time. Otherwise, a few Fed speeches tomorrow. Barkin, Goolsbee, Bostic, signaling for September cut. We've already heard a number of those officials get on board with it. Kashkari, Mary Daly out in San Francisco is more or less on board with it. We have Bowman and Waller. And, well, now we're going to have a new Fed governor who's going to come in and push in that direction as well. So a September cut seems possible. I would imagine these folks are going to allude to that as well. And then, well, Jamal, we have a second half of the week to cover here. We'll be back later today, though. I'm taking a quick break. So are you. You're going to be back at 2:45 Eastern, 1:45 Central for Engineering the Trade. I'll be back later for Overtime at 4 Eastern, 3 Central. Before then, though, we're going to take a quick break. Dr. J is up at the top of the hour with From Theory to Practice. So stick around. You're watching Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
I'm Jim Schultz, and this is From Theory to Wow. I am absolutely blown away at this market, man. This is unbelievable. Was the CPI print even that amazing? Like, was the CPI print like even that phenomenal? It was actually a wee little bit hot, was it not? And yet the market, man, all-time highs upon all-time highs upon all-time highs. So welcome to the show. I am glad that you guys are here and you are watching the program with us and you are out there helping us all commiserate if you're on the wrong side of this move. If you're watching on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and you can join the discussion and you can commiserate with your fellow bears. If there are any of you left out there, they're in the YouTube chat. And of course, you can ask me any questions if you would like to, and I will try to get to as many as I can. But again, guys, remember, for the umpteenth time in just the last week, the most important thing that you should take away from any one of my shows is just do the opposite of whatever I do directionally, and you will be just fine. So, John, bring us into the market here. Man, this is really something. It's just unbelievable, right? Even the S&P is up 63, right? Risk-free instrument, it's doing more than what you would expect a risk-free instrument to do. The NASDAQ up 280. Up to 23,916. Guys, like, is it going to happen on the show today? Like, is it going to happen right here for us in this very moment? NASDAQ, 24,000? I mean, aren't you glad you're here for this? Like, you can't find this anywhere else on the internet. Like, you cannot find this anywhere else in the world. Like, they all still think the NASDAQ is like 13,000. They all still think this thing's 15.5. Like, here we are together. We're going to get to celebrate or maybe commiserate the NASDAQ hitting 24,000. That's crazy stuff, man. It's crazy, crazy stuff. Got the boomers up 500. You got the Russell 2000 Futures Index, which I guess on a percentage basis is actually the leader in the clubhouse. Or maybe not even in the clubhouse. I think they're on like hole number 10 at this point. Russell up 56 on the day, up to 2280. You've got bonds are down a little bit as people are moving out of safe haven assets and into the tech bros, the semiconductor bros, the CPI bros. Man, they're all making money. They're all doing just well for themselves. Got notes down a little bit. Got oils even down 70 cents. UB40 getting smacked around. Man, got the shifties getting hurt a little bit today. Got gold down 4 points. Got silver actually up though, right? Yeah, silver up 19 cents. And so a little bit of a mixed market between gold and silver. They do normally follow each other, but not today. You've got gold down and silver up. I wish I knew what that meant, because if I did, I wouldn't tell any of you. I would just go trade that information myself and then maybe let y'all know after the fact. But you got the British pound is up, you got the euro is up, and you got volatility futures, of course, are going to be down on a day like today with the market just ripping. It is ripping, man. It's gripping and ripping. It's just the old 10 cup strategy, man. Just gripping and ripping, right? Like, no matter what you think is going to happen in the market, just gripping and ripping, man. Like, don't think about it. Like, don't worry about it. Just grip it and rip it. Just 100% grip it and rip it. And what could possibly go wrong? As, of course, the next tick in the NASDAQ is 24,000, right? Again, this is basic stuff. This is not my invention. This is just basic common knowledge. 24,000, 24,3, and then 21,005. These are going to be your next three ticks in the NASDAQ. Again, I don't make the rules. It's pretty obvious at this point. And so the Bitcoin, the Bitcoin, like the Facebook, the Bitcoin up $300 today, up to 119,000. And then, of course, you've got the VIX spot volatility. It's getting smashed to pieces today. Down $1.50, down to 14.70. Man, that's really, really something. That is really something. Man, we had them was it like a week ago? Was it like 3 days ago? We had the VIX at like 19, right? Yeah, look at that, man. That is like, how long ago was that? Man, we had the VIX at 21.90, almost 22. That was about 2 weeks ago. So August 1st. So August 1st, which is my little sister's birthday, actually. August 1st, we had the VIX up to 21.90. And so, man, that's, wow. Man, how the turns have tabled. Man, those turns have tabled quite a bit. And things have indeed changed. All right, so what I want to do though for the rest of the show, I guess, is man, we've got to talk about SPX. We've got to talk about GC. I've completely missed the mark on SPX, of course. Although, interestingly, I think you could have managed it for a winner like yesterday at the close and maybe even on the open this morning. I'm not sure because I wasn't paying attention during either one of those moments in terms of paying attention to this specific butterfly. And so we've clearly missed the mark. I mean, it's not coming back. Now, I mean, we still have an hour and a half left, so you never know. But I'm going to say this guy's going to go out to pasture, never to be seen again. Now, the gold butterfly, this one has still got a shot. This one still, believe it or not, has a chance because we have 3 days to go on that guy. So we'll talk about those guys individually. Maybe we'll do a couple new trades in the portfolio. Maybe not. I am feeling a little bit kind of just, man, I can't believe it. Like, I really can't believe it. NASDAQ up 275 on a number that wasn't even that great, I don't think. I mean, it's all made up anyway. It's all like made up and it's all just fictitious. But man, even for the imaginary status that we know the CPI always possesses, it did not look that amazing to me. But nevertheless, the market is always right. And so I'm going to get to you guys, though, in the chat. I see you guys, man. Chuck, Daniel Perkins, Sam L's in the house. Ash is in the house. Man, look at you guys. I appreciate you guys so much. Tony Bryant, Boulette's in the house. iPod Touch in the house. What's up, iPod Touch? I thought you might fade into oblivion there with your call the other week of Armageddon. That was about 30 points down in the NASDAQ, which, hey, I myself would have taken a victory lap too. So I suppose you and me are joined at the hip on this one. Got Dav Nico in the house. Sergio's in the house. Manny TP's in the house. Man, Matt's in the house. Scramble everything in the house. Man, let's go. All right, so let's talk about SPX first. I think you could have managed this for a winner on the close yesterday. Now, I didn't do it. I'm not saying you should have done it. I'm not going to necessarily chalk this up as a victory in my mind because it's not a victory. This is about as close as you come to a surefire stack of cash that has now been blown to smithereens itself and is yet just a pile of ashes at this point. But still, I do think with SPX, if we go up or go back to the chart of SPX, I'm going to do I'll just do like a 1 hour chart. Let's do a 1 hour chart, just a couple days here. So we did the trade after the show yesterday, right? So if you look at wow, man, that's crazy. So on the close yesterday, you would have had a chance to maybe get a couple bucks off of this butterfly. Again, I mean, obviously hindsight is 2020. I'm not saying that you should have done it. I'm not saying that this should have been a winner. Now it's a loser. I'm not saying any of that. I'm just pointing out the fact that, there was an opportunity to take this off as a winner at some point, because I think that that's a different scenario than something that's just wrong, like from the beginning, never had a chance, all those kinds of things. That was not the case for this butterfly. Also this morning, I think you also had a chance, let me see here. I mean, if we look at the 9 o'clock bar, I mean, you had a low of 63.85. That might be a little bit of a reach, honestly. I think your only chance on this one would have been on the close yesterday, which, I mean, you guys, if you've seen the show for any length of time, you've seen this program before, even if I had been watching it, I would not have taken it off. So just to be very clear with you guys, I would absolutely not have taken it off. I'd be like, okay, we're off to a really good start. We've got a couple bucks in our pocket. Like, let's see if we can't get, a print in our favor tomorrow morning and see if we can't ring the register for an even bigger win. Because generally speaking, with a butterfly, that's kind of what you're going for. You're not usually going for kind of the modest win, like something you might do with a more normal short premium trade. This is more of, all right, I'm going for a double. Like, I'm going for a triple. Like, I'm going for a little something, maybe off the monster, where I get some extra bases. And so it's not necessarily going to be just, singles and ground balls to second base to move the runner over. It's not really going to be that at all. It's going to be, I'm looking for something a little bit more out of this trade. Now, of course, that's how they get you, because that's how they got us. And by us, I mean just me or any of you guys who tell me, which again, if you're still telling me at this point, I don't know what I can do, man. I really don't know what I can do. Like, again, sight unseen, don't even care about the underlying. Don't even really care about the strategy. Just tell me what Dr. Jim is doing, and I'm going to do the opposite. You're going to retire 9 months early. Like, you're going to retire at least 9 months early, maybe more like 12. And so again, I've given you 2 more examples here today. I don't know what more I can do. But so no chance to manage SPX this morning, but we did have one yesterday on the close. If that means anything to you. And so this guy is going to go out to pasture, and it's going to be like it never happened, other than the fact that, it's about $6. We're going to be about $6 lighter, a little more than $6 lighter. Now with gold, this one is interesting because, if I bring up, if I click on gold, now remember, it can be confusing because, you're looking over here on the left-hand side, like to like the tasty default, and just have like the watch list that kind of populates there on the left-hand bar, which I typically use the tasty default. You might use something else, but obviously the active month right now is Z. So GCZ is going to be the active month. That's where all the activity is. But still, you have options that are tracking to V. We may have some options that will eventually track to X, which is going to be November. And so when we did this butterfly, that was 3 days away, which is going to be a Friday expiration. That was tracking to V. So we had to be mindful of the V price. And so I guess we're going to keep tabs on the V price along with the Z price for the remainder of this trade, which is only going to be a couple of days. Essentially, if you look at the strike here of 33.90, I mean, we need it up about 20 points, basically, right? Now, interestingly, we're at about a scratch on the trade, which is so interesting. I would have expected us to be down at least $1 or so. So the fact that we could essentially take off this gold trade for a scratch, I'm like, that's kind of interesting. It kind of surprises me a little bit. Now, am I going to take it off for a scratch? No, let's go ahead. I mean, now it's Tuesday, right? We know that butterflies are at their most effective near the end of the week and close to expiration. So, okay, if I could choose when I get the move that I need, I don't really want it on Tuesday. Like, if I could cherry pick, like, out of a hat, like, hey, you're going to get the move that you want. Do you want it on Tuesday or do you want it on Thursday? It's like, man, I want it on Thursday. I don't want it on Tuesday, because on Thursday, there's going to be less extrinsic value in the options. There's going to be, you're going to be closer to expiration, fewer DTE left in the trade. And so the move will help you more and generate more profitability. So maybe that's what we're signing up for here with GC. Now, the simple fact that I'm in this trade leads me to believe that's probably not what's going to happen. But theoretically, it is possible, so we have to address it. We have to be fair and balanced on this program. We're not just going to pigeonhole ourselves on one side of the aisle. And so for GC, let's sit tight and let's just see if we can't get a little bit of a miracle here in the next couple of days. So that's GC, and that is SPX. Also, man, look at Best Buy. Look at Best Buy. And I told you guys from the beginning, right? Always been a believer in Best Buy. Always been a believer. Ever since, I mean, you can check the tapes since day one, right? As long as today is day one. Been a believer in Best Buy from the very beginning. So Best Buy up $1.98. We've got our long shares. We're doing a little damage to the P&L open, right? So that's kind of nice. P&L day looking good. And so I'm going to sit tight. Like, let's see if we can't get a little bit more movement in our favor. I don't think I'm going to hang until we get all the way back to the assignment price of 85. Honestly, if we see Best Buy at 75 in the next couple weeks, I'll probably go ahead and just cut the cord at that point. For all my Shinedown fans out there, let's cut the cord. It's an amazing jam. And then we'll just move on to greener pasture. So Best Buy, that's our Best Buy commentary for the day. Look at Chipotle. Guys, look at Chipotle. All we needed was a 60-point face ripper in the E-mini S&Ps and a 280-point face ripper in the NASDAQ to boost Chipotle by $1 on a given day, right? It's overcoming the stale chips. It's overcoming the salmonella, from 8 years ago or 9 years ago or whatever. It's just overcoming everything. And so, for us here, we're still not assigned on the position. And you can see our extrinsic value is heading higher. Right, this was like $1 or $1.50 yesterday. And so now that it's $4.50, it's like, all right, we've got a little bit more room to work with. We've got a little bit more buffer in the position. But again, if we do take assignment, it's not that big of a deal. That is indeed what we're signing up for. And, I was thinking there was such a good question that came in yesterday, and I can't remember who asked the question, but it was such a good question about, I think it was it Madalena? I think it was Madalena maybe who had this question. And so it's just such a good question about, I have an in the money short put and I don't want to get assigned. What can I do? And I know we spent 5, 10, 18 minutes on it during the show. And I think it was a worthwhile discussion. But I thought about that some more after the show. And I really kind of came back to where I think I eventually ended up with the discussion on yesterday's show. If you have an in the money short put, if you're going to hold it for any length of time, you kind of have to be ready to take assignment. So if you don't want to get assigned, you probably don't want to be in that position in its current iteration. Now, again, sometimes you can roll out and pick up more extrinsic value and kind of, thwart off the potential assignment. That can work. If you're deep in the money, it can't really work that well. We looked at that yesterday with this very position here in Chipotle. And so I just think that, this gets back to understanding what you're signing up for. If you sell a put, and it goes deep in the money and you don't close it right away or do something to kind of mitigate not only the directional risk in the strategy, but the extrinsic value that's in that put specifically, you kind of are communicating to the market, hey, I'm okay taking this position if that's what it comes to. So if that's not what you want to do for whatever reason, whether it be buying power related, whether it be account type related, whatever, whether it be like, man, I've had enough of those stale chips. I don't want anything to do with this company. I totally understand. I would not hold that in the money short put for any length of time. A day or two until you can figure out what to do next. That makes sense. But once you have an in the money short put, you're kind of agreeing to, even if just, kind of tacitly, you're agreeing to take the shares if that's what it comes to. Now, again, if you don't want to take the shares and, if you're like, if I get assigned, I'm just going to close it out. That's also fine. Like, don't forget, Madalena and everyone else. I know we talked about this yesterday, but just to loop back around, because it's such a good question. If you are assigned, it's just not that big of a deal. Like if you are assigned, it's a couple of clicks, you're going to be made whole, buying power restored, like you're ready to go. It's really, really not that big of a deal. So I just wanted to kind of mention that for a couple of extra seconds. Yeah, look at the NASDAQ, 920. Yeah, it is going to hit 24,000. It's going to do it. And it's only happening on the Tasty Live network. Like you can't find this anywhere. You can't find this on CNBC. Like you can't find this on Fox Money. Like it's only here. Like this is the only place where you're going to be able to see and experience NASDAQ 24,000. Again, everybody else, they still think it's 18.2. And man, are they going to be in for a surprise when they open up their newspapers tomorrow morning to kind of channel our inner, 1986 vibes. And so, okay, there's Chipotle along with some 1986 vibes. I mean, I was 5, so, I got it all figured out. But let's go ahead and I think I had more figured out at 5 than I do now. Like, I think we've just been slowly regressing over the years. Especially when I look at like Amelia, who is our assistant, our intern for the show. She's my 5-year-old daughter. She's got a lot of things figured out. I'm like, she's at her peak right now. Like she is absolutely at the apex right now, at least in the apex in terms of the experience that I had myself. And since she is my spawn, it could be similar. But anyway, I digress. So, all right, let's go ahead and I want to get to you guys because, man, this is crazy, man. It's just crazy stuff. I can't believe it. I really can't believe it. Now, the other thing that I will say is, and I learned this from Tom, of course, so it's probably not true at all, but they don't ring a bell. They don't ring a bell, right? Now, of course, after the fact, They're going to attach news to it. It's going to be PPI. It's going to be, balanced budget statements. It's going to be Canadian durable goods prints, whatever it's going to be, right? But they don't ring a bell, right? Now, when is that bell going to get, when is that bell going to get not rung, I guess? Is it going to be later today? Probably not. Is it going to be tomorrow? Probably not. Is it going to be in the next 6 months? Apparently not, according to, the internet and this unstoppable bull market and all those things. But they don't ring a bell. And then the next thing you're 3 to 5% off the highs. And then it's like, okay, now all of a sudden we've got a little two-sided action. Now all of a sudden it's like, okay, the other side is allowed to win a little bit too. And so, it's just, I'm really, really surprised at the strength this morning. I would have been less surprised if the CPI number was a little bit cooler than it was. But from what I could gather, I didn't like dig up like the report. I'm not like looking at like, all right, what is the number X shelter and X food? I just kind of, I'm just like everybody else, man. Like, give me the headlines. Give me the headlines and like, let me go on about my day. And so just looking at the headlines, it did not look to be that amazing. I think it pretty much came in line. And so, in an inline print, I would have expected some strength in the market. But if you would have asked me beforehand, I would have probably said S&P 500 up 25 to 30, NASDAQ up, 80 to 120, not S&P 500 up almost 70 now, NASDAQ up almost 300 now. And so, anyway, those are my thoughts. You didn't ask for them, but you get them anyway. And so, all right, let's see here. I want to get to, oh wait, no. Let's do, let's do something. We got any earnings coming up here in the next couple of days? Give me something. I need something, man. Let me go to Tom's watch list. We got nothing tonight. All right. So, wow. Wednesday, we've got one. We've got Cisco on Wednesday. Cisco. Wow. Like, they're still in business? Like, seriously? That's amazing. That's really amazing. $71 stock. That's incredible. I mean, I'll sip on a little scissor. We'll do it for Wednesday. So this will be a trade. Now, if you were going to do this trade, I wouldn't do it now. I'd do it tomorrow. And so I'll just put that scissor up on the shelf for tomorrow. But I'm going to do it today because, again, tomorrow it's a Wednesday, so I'm with Arrow for today's assignment. So I won't be able to do this trade. But we've got Cisco for tomorrow after that. We've got, wow, look at Thursday morning. We've got, what is DE? John Deere? Man, has it gotten so bad that we've got to trade John Deere now? Like, have things gotten so dire that we're like, man, let's do a little John Deere? Like, I don't know, man. I think that might be what we need to do just to kind of cleanse the palate a little bit. I don't know. Let's go to Cisco first, though. NASDAQ is now 925. It's going to happen, guys. It's going to happen. Like, where's my hat? I need my hat. I need my NASDAQ 24,000 hat. Like, if that doesn't signal the top, like, I don't know what will. But let's go in here. I'm kind of thinking, man, I don't want to do another butterfly. Like, I mean, there's so much. The smoke detectors are probably going to go off like during the show. Like, there's so much smoke in the air right now. Like, I can barely even see the camera lens. And so I'm like, all right, let's wait on the butterflies until at least Thursday. Let's go into September with 30 days to go. Let's do something a little bit more strategic. Like, all jokes aside, it's like, man, like, let's tap into the strategy of short premium. Butterflies are great, like, all kidding aside. I still think we've done okay on them, over the course of the year or whatever. But it's like, man, it's still not going to be the bread and butter. It's still not going to be, the oatmeal and peanut butter. It's going to be something that you're doing as kind of an addition, like an addendum, like on the side. It's not going to be the foundation of what you're trying to accomplish. And so I think, man, let's go September 19th, right? 38 days to go. Cisco. CSCO. We're doing this for earnings on Wednesday night. I think we just sell both sides. Let's not overthink this. Let's just do it. I think we sell a 67.5 put and we sell, looks like about a 75 call. We're a little bit skewed to the downside, according to the delta on the trade bar. And so a little bit negative delta on the trade, but we're picking up about 211 in credit. My buying power is only $1,000. And so you could fit this into a smaller size account. If you had $20,000, this would be 5% of your account. That's not a bad position sizing. I would say that is small enough for an undefined risk position. Now, again, I mean, look at the risk of ruin segment we did yesterday morning with Tom and Tony. Kind of gives you a little bit more of a concrete foundation around, just how likely the risk of ruin might be for you, depending on how big your positions are, what kind of position size you might choose. NASDAQ at 930 now. Like, it's going to happen, guys. Like, we can't stop it now. Like, we cannot stop it now. You got the pop at 62%. You got P50 at 79, so we can round that up to 100 for our mental records. Obviously, you've got some nice positive theta on the trade. The maximum profit is going to be our credit collected, but just on the full contract basis. So that is why you multiply by 100. And then, of course, the maximum loss is going to be negative infinity, which means you are never in a state where you are not losing money if that happens. Now, what would have to happen for that to happen? We would have to wake up and see Cisco printing, infinity bid and infinity +1 offer. And so I don't know that that's necessarily going to happen. I'm going to push my chips in the middle on it not happening, at least in the next 38 days. And so this is going to be Cisco. This is going to be our earnings trade for Cisco. Now, this is actually kind of strategic, so you may not want to fade this one necessarily. I wouldn't be buying this strangle per se, but just wait. It won't take but another day or two, and we'll be right back on the directional wagon. Like, don't you worry about it. And we've got PPI on Thursday morning. We could do PPI today. But I'm gonna give myself 48 hours off of these butterflies, just so I can kind of rethink maybe like life and like what we're trying to accomplish here. Like, what are we trying to do? We've been looking for it for 9.5 years, almost 10 years now. I think it's time that we figured it out. Like, I think it's time we finally came to some conclusions when it comes to that. And so I'm not going to trade PPI for Thursday morning, but I will tell you this: if I was going to, 100%. I mean, if you're not in if you can't beat them, join them philosophy now. If you're not in a can't beat them, join them mindset now, I don't know what's going to get you there. And so I would 100% be playing PPI to the upside. 100%. Because I'm like, man, 24,000, 25,000 is next. 26,000 is next. And then we've got NASDAQ 30,000 hats, NASDAQ 30,000, which just means we can take those Dow hats from like 1997 and just cross out the Dow and just write in the NASDAQ. Same hat. Still got the inventory lying around. And it's like, man, let's do it. Let's 100% do it. We can just reuse the same hat. Just kind of repurpose that guy. And there you go. So that's Cisco. Let's see here. We're about halfway through. Let's go John Deere. Man, John Deere. Am I really going to trade John Deere? I don't know, man. I don't think things are that dire. Are things really that dire? If I just looked at a front week, I'm just shopping. Like, nobody's signing on any dotted lines. 3 days to go. John Deere, $500 stock. John's doing quite well for himself. Expected move butterfly. Ooh, man. Yeah, I'm going to pass. Look at these markets. Man, look at how wide those markets are. You could drive a John Deere through these markets. And so I've actually been waiting all show to say that. Man, yeah, I'm not gonna do this. No, it's like dollar-wide markets. These Tony Batista markets. Yeah, I'm not gonna do that. All right, so yeah, let's give the butterflies a rest. All right, so we did Cisco for tomorrow, and we lamented our SPX trade, and then the jury's still out on GC. But I would say, if I was shaking my magic 8-ball, the outlook does not look good. And so, all right, let's go to you guys though, man. Let me see, where are you guys at here? I got somebody in the middle. Oh, here we go. I got 2 comments. I'm going to surprise and delight 2 people kind of in the middle. I see Joel James just says, Dr. Jim, decent pullback in HIMS. Maybe a good time for a trade. Let me take a look at it really quick. I haven't traded HIMS before. I know it's kind of been in play as of late. But HIMS, do they have earnings coming up? They do not have earnings coming up. Could go into September. Yeah, you do have a decent little... Well, you have good markets is what I was going to say. The markets look pretty good. I mean, it's fairly tight. You've got a decent amount of premium for a $48 stock. If I go to the chart, yeah, you can see, that's a 1-hour chart. Hold on. Let's do a daily chart. Going back we'll do 6 months. Yeah, okay. That's a decent little drop in HIMS. Yeah, so I'll get bullish on HIMS. Sure. And so, yeah, I don't know. Maybe just sell the 30 delta put. Sell maybe the 44 strike. Yeah, your buying power here is only $550. This is another great trade. If you have, modest capital, smaller account, and you're looking for undefined risk options, this actually checks a lot of boxes. You have a lower price stock. It's only $48. The buying power is only $500. So if you had 12 grand, this is less than 5% of your account from a position sizing standpoint. The other thing that's nice is, now I know HIMS is a mover and a shaker, right? But remember, if you're selling a put, you only have risk to the downside. And so you only have risk if the stock goes down. Well, if HIMS goes down by $10, let's say, which would be a huge move, that would only be $1,000 for your account. Now, don't get me wrong. Like, that's going to sting. I'm not saying we're just flippantly throwing around thousands of dollars like left and right. Like, I understand that, but it's not going to be something that's going to really get you anywhere near like a risk of ruin type of scenario, which is what you ultimately want to avoid. I mean, pretty much all the time. But when it comes to a smaller account, you want to be very mindful of that, maybe more so than when you have more capital, because you don't have as much room for error. You don't have as much buffer and margin kind of built in. So I really like this trade, Joel. I'm going to do this trade. This is good. Let's do some HIMs. We don't have to worry about earnings, which is nice. And then, all right, so we got filled at 255. Thank you, Joel. I appreciate that. Let me write that down so that when it doesn't work out, I know who to blame. Joel James. HIMs. Got it. Beautiful. And now, since this is not my trade, you guys know this is probably going to work out. So thank you, Joel. You guys can all thank Joel. But also, I see Rick CR is in the house. So Rick CR says, I've been crushed today chasing the move up with 0 DTE puts. I learned a tough lesson today. Yeah, it's, I mean, that's the thing. Rick, so a couple of things, right? No, I mean, nobody knows, man. Nobody knows. It could have easily reversed. It could have easily been a back and forth day all day long. And so I wouldn't beat yourself up too much about, being wrong and learning lessons and things like that directionally. Because, hey, I mean, you take a shot. I mean, sometimes it doesn't work out, and that's just the way it goes. And that's what I kind of want to focus on related to your comment. If you're going to play the 0 DT game that's directional, you just have to understand, all right, this is a directional shot. Like, I don't really have any additional outs built into this. I don't really have any additional ways to kind of, adjust my way out of this. And so if you're going to be buying calls or buying puts or doing whatever as a directional play, you just have to understand, all right, if this doesn't work, there's really nowhere that I can go. There's really nowhere that I can turn that's going to be able to kind of remedy position gone bad. And so, apparently you kind of learned that today from just being on the wrong side of it. Maybe you already knew that beforehand, but I would just kind of, go easy on yourself a little bit, just from the standpoint of today could have just as easily been back and forth. I know it's obvious now. It's always crystal clear in hindsight. Just remember, if you're going to take directional shots, just know what you're signing up for. Make sure your position size is in check. Make sure that you understand, how leveraged you might be to the market or whatever. And you know what you're signing up for. Like, what you're doing, whether it works or it doesn't work. That's incredibly important. And in my experience, communicating with so many traders over the years, I think a lot of traders, especially newer ones, and I don't think this is you necessarily, Rick. I think you've been trading for a while now, if I'm not mistaken, but hopefully something that might help everybody out there. I'm not so sure that a lot of traders quite understand just what they're signing up for. I mean, I think a lot of you probably do, especially if you've been watching the show for a while, you've been trading for a while. I think you've kind of gotten to that point where it's like, okay, I understand what I'm signing up for. I understand what I'm getting myself into. I know the gimmies, I know the gotchas, I know what I'm going for, and I know what I'm willing to absorb to get there, right? These are very, very important things. But if you're brand new to the show, welcome aboard. Like, if you want to trade actively and you want to take more of an active approach in your portfolio, you are in the right spot, especially if you want to use derivatives to get you there. But any time that you spend, if you're brand new, anytime you spend saying, man, do I really understand what I'm getting myself into here? Like, do I really understand what I'm signing up for here? Man, that's going to be investments that you're going to make. They're going to pay big, big dividends down the road. Because I've just, in communicating with so many, especially new traders, it's like, all right, they're not quite there yet. They don't quite understand what they are signing up for. And so anytime you can spend thinking through, what am I signing up for? What are the gimmies? What are the gotchas? What's the return potential? What are the risks? These are going to be really, really good investments of time and resources, in my opinion. And so, but let's go ahead and, man, let's go all the way back to the beginning. Man, look at you guys. Look at all these comments, man. I'll tell you what, YouTube, they're going to think this is some quality programming. And man, are they going to be surprised? Like, they are going to be shocked. The robots are all going to be back there in the robot room, Robot HQ, and they'll be like, man, why did we push that out? Like, he's not going to trick us again. But you guys came to play today with the comments. And so I appreciate you guys so much. Ash Finn is in the house. Time for Dr. Jim. I just got home. Man, I appreciate you, my friend. Please say hello to your lovely wife for me. And yes, I thank you so much for all the support. And I know that, man, you're doing it, man. Like, you were in the arena. And yeah, you're doing it, man. I'm really proud of you, man. Like, you're doing it. And it's going to be Very exciting adventure. Very, very exciting adventure. I think you're on the earlier end of the learning curve, if I'm not mistaken, Ash. Correct me if I'm wrong. You can correct me in the chat or correct me on Twitter or whatever. But yeah, you have a very exciting adventure ahead of you, and you're just a young guy. Like I think you're younger than I am. I think based on your pictures on Twitter and stuff. I think you might be what 35, 34, 35, something like that. And so yeah, you got decades left. I mean, I'm gonna be gone pretty much any hour now, but you've got a long, long time ahead of you. And so Daniel Perkins in the house. Dr. Jim, I wish I faded you. This is what I'm saying. I don't want to hear this anymore, Dan. Not from you. Like you've been here since the beginning. Like you've been here for years, man. Like if anybody should know, it's you. It's you. Don't let the confidence and the conviction fool you. Like don't let it distract you from the mission. What are you trying to do? You're trying to make money. How do you do that? You do the opposite of everything that I do. Everything that I do. I mean, I just told you that I will be mega pint bullish for PPI on Thursday morning. So you know what to do. Now, maybe the fact that it's not an official trade for me means it would actually work. I don't know. You can play those head games if you want to, but I would genuinely, wholeheartedly be bullish. And so, so there you go. But he says, oh, well, I can't win them all. Size matters. So I'm only down 40 basis points. Despite incinerating all that SPX cash. That's good. It's a pretty good day, man, with the market being this strong, honestly. Let's see. Ash Finch says Chipotle up $1.05 today. Must have fresh chips. Well, come on. You and I both know that's not true. Like you and I both know there's some other reason to explain the up move. It ain't that. That's for sure. Scrum by everything. Hey, Dr. Jim, we survived another CPI. I mean, did we? I don't know. I don't know if we did. Although the VIX and NG did not. Natural gas? I haven't traded natural gas in a very long time. We've traded UNG. We've traded a little natty light ice with UNG, but I've not traded the natural gas futures, I don't think, in a while. Pound that LMNT and let's get ready to put on those expected move butterflies now, man. I'm putting myself in timeout. And again, the gold one still might work. And so maybe we'll just ride that guy for the rest of the week. I don't know. But it's like we need a little bit of a breather from the butterflies. But I appreciate you, my friend. Brian Dowdy's in the house. Hey, Dr. J. I'm here on time today. What's up, my friend? Looks like my Padres got you. They most certainly did. Are you coming to Legoland in San Diego? That's right where I live. That's pretty cool. Struggling to put on trades. Still thinking about XLV. Yeah, XLV. I think this was, oh, hold on. No, we're not coming to San Diego. I mean, that's like on the other side of the country, obviously. There's a Legoland that's basically right in our backyard, right by Disney. So it's only an hour and a half away. That's going to be the one that we're going to go to. But that's amazing. I don't know if you have small children or not, but I mean, it's so cool to live so close to one, which it sounds like you're in kind of a similar situation to what I'm in. But XLV, yeah, you've got the ID rank is pretty good. Stock is $130. Yeah, I don't know, man. Let's see here. What if we did, kind of wondering if we should mix it up a little bit. I haven't done a ratio spread in a very long time. What if we did a ratio spread? What if we buy a 130 and sell a couple 128s? Okay, the buying power is a little bit higher than I would like. It's about 7.5, almost 8% of the account. The pop is obviously super high. The P50 is even higher, of course. The credit collected is 65 cents. And then here's the ratio spread. Oh, I know you all were asking me about the 1-1-1 trade yesterday. That's just a special version of a ratio spread. This is the more traditional kind of Betty Crocker recipe ratio spread, the 1x2. And you can go as wide as you would like. Just understand that, the wider you go, the less you're going to collect on entry. And if you're going to, I don't think I'm going to do this trade because the buying power is a little higher than I would like, but I will make one quick little comment. In fact, here, let me bring up let's bring up the curve view because I think this might be helpful. If I bring up the curve view and, okay, yeah, so there we go. Hold on. Can I zoom in a little bit? I don't want to lose it. Hold on. There we go. I'm just going to leave it just like that. So if you look at it's really, I'm going to leave it like that because I don't want to minimize the trade bar either. So if you look at this trade, right, if you look at the curve view, you can see pretty clearly there's risk to the downside, no risk to the upside. This is generally how a put ratio spread is going to set up. Okay, how would I be looking to manage this? Well, usually I'm just looking for some chunk of the credit collected. So if I pick up 65 cents on entry here, if I could get 45 or 50 cents out of this, that would be a great trade. I'd probably just take it off. Understand that if you want to widen out the vertical spread of the ratio spread, then you're going to have greater profit potential. But the only way you're going to achieve that, so that would be anywhere like around, kind of this peak of the profit curve. The only way you're going to get anywhere near that is you have to carry it inside of 21 days to go. Like you have to. Like you 100% have to. It's not going to happen at 21 days to go. It's not going to happen at 27 days to go. It's not even going to happen at like 18 or 16 or 14 or even like 11. You probably need to go into that final week. And so one of the things about ratio spreads is if you want to widen out that vertical spread that's baked into the ratio spread to give yourself more profit potential, just be mindful you're giving up credit that's going to be easier for you to manage off of the position early in exchange for greater profit potential that's not really going to come home to roost until the end of the expiration cycle. And so just know that, hey, if you're going with a super wide ratio spread, $5 wide, $10 wide, whatever, just know that in order to achieve anywhere near maximum profit, you're going to have to hold that guy till the very end. Just don't tell Tom that you're doing that because he ain't going to like that at all. And so there's a couple comments about ratio spreads in general that still might be helpful, even though we're not gonna do that one. But I appreciate you. Joe says, yay, Dr. Jim time. Any ideas for Kava earnings? Kava has earnings today? Oh, wait a minute. We're back, baby. We are back, man. It was so over, but we are so back. Kava has earnings today? No. Are they really today? Hold on. I love Kava. We love Kava. It is today. We're back, baby. Okay, so I wasn't going to do this, but we're going to fire up. We're going to do it. We got to do it. Oh, man, it's drawing me in just like Kava does on Saturday night. Like Kava's solid, man. They're really, really solid. It's not as good as Fresh Kitchen. Fresh Kitchen is like numero uno. But all right, guys, let's go into the front week. Nothing crazy, right? I mean, the smoke has mostly cleared out of this room. Like I'm still squinting a little bit, but it's not too bad. If I look at and obviously we're bullish on Kava. Like if you're bearish on Kava, I'm not sure that I can allow you to watch the show anymore. Like if you're bearish on Kava and you make that public information, that's immediate block. Like that's immediate block. I mean, the hot pita chips are amazing. The hot pita chips are absolutely incredible. The regular pitas are solid. And so Kava is it's really, really, really solid stuff. And so if I go in here though, yeah, let's do it. We got 6 minutes left in the show? Yeah, we're doing it. If I buy an 86, sell a 94, buy a 102, can I do this for $1.75? $1.40? Man, guys, this is it. This is it. 86, 94, 102 for Kava earnings tonight. Now, because we don't have, and I'm 100% doing this trade, I'm going to push it through in a second, but let's talk through it for a second. There's no From Theory to Practice tomorrow. We do have Errol. We do have today's assignment with Errol tomorrow. So if this works, which I mean, come on, guys, do you really think this is not going to work? Bullish in Kava? Like, look, I understand SPX, I understand GCs and Lightning Stacks, Cash on Fire, but guys, we're talking about Kava now. Like, we're talking about practice. You really think this isn't going to work? Man, bullish trade in Kava. I've never felt better about something. It's been at least 12 to 18 hours since I have felt this good about a single trade. 86, 94, 102. If it works tomorrow or Thursday, whatever, I will probably be managing this before the show on Thursday. If it's not working or it's just kind of hanging out or whatever, then I'll try to leg it out until the show so we can do it all together. Because again, I think there's tremendous value in you guys kind of seeing all the things that happen. But just understand, since there is quite a time lapse between now and Thursday's show, there is a decent chance that this guy comes off the books between now and then. But of course, if you follow me on the follow page, you'll see all that stuff come through as soon as it happens. So, man, just when I think I'm out, they just pull me right back in, man. $1.36, $1.38. Well, let's try $1.38. It's fine. Okay, so no takers at $1.38. They're playing a little hard to get on the Kava markets. Let's try $1.40. No takers at $1.40. Okay. All right. Let's see here. If we can do, let's try $1.42. I don't really want to give away all my profits here, but I'll give away a little bit. No takers at $1.42. All right, Kava. Are these markets really bad? No, they're not too bad, really. $1.44. I think this will do it. All right. So we're filled at $1.44. So there you go. Kava earnings tonight. Hold on. Let me write that one down too. Joe. Kava. Got it. man, I'm off the hook. I'm absolved. I've been completely absolved of all responsibility of anything that you guys might do from this moment forward. But of course, if you do something that I suggested you do and it works, I will take full credit. So thank you there, Joe. I appreciate you. Sam L's in the house. Doc, not even a hot core CPI can stop this market. That's what I'm saying, man. What are we even doing here? I have no idea. Well, as a wise man once said, if you can't beat them, join them. Then hit chest A and ride the melt up. Yes, did a little chesting back this morning, feeling pretty good about it. And yeah, this market is unbelievable, man. It's unbelievable. I really can't believe it. So now we just hope it continues for a wee little bit more on our Kava butterfly tonight. And so let's see. Daniel says, hoping Trump will save my butterfly with a tweet. Yes, you're just one tweet away from greatness, my friend. You are just one tweet away. And so that's all we need. And so Brian says another butterfly gone wrong. That's right. Chalk it up in the pile of butterflies. I mean, that pile is so high now. Like, I mean, it's over the house. Like, it's over the tree line, right? But yet we got another one for it. We got another one brought to you by Kava and Joe, of course. So it's Joe's trade. So Chuck says, hey, Doctor, how about those Brewers undefeated in August? The Brew crew is amazing, man. That's quite a run. I have to be honest. They're like 30 games over 500 now, right? That's crazy stuff, man. It's really, I love seeing the small market teams like the Red Sox. I love seeing the small market teams do well. Like, I love seeing the small market teams that don't like to spend a lot of money, that have these small budgets and like the low payrolls, like the Red Sox, kind of do really well. So that's cool, man, to see the Brewers do it. You know, like the Pirates and stuff. I mean, the Brewers, Pirates, Red Sox, very similar payrolls. And so Gasman in the house. What's going on there, Gasman? It's good to see you too, my friend. Tony Brand says, I'm glad I did the opposite of Dr. Jim this time. This is what I'm saying. And I just gave you guys a Kava trade too. Now this one's a little bit different because I don't know that I have felt this good about a trade in a long time. Because again, it's Kava, guys. This isn't even me at this point. It's Kava. It sells itself, right? It can defend itself. It's like a wild animal. It doesn't need me to defend it. It's Kava. Like, y'all have been there. You know what I'm saying? And so, you know, but again, you know what to do. Like, you know what to do. So Emmett Morrison, let's see. Hey there, Dr. Jim. Thanks for your response to my email last night. You're welcome, my friend. I hope that it was a bit helpful for you. And yeah, thanks for all the support, my friend. It's my pleasure to help however I can. And so iPod Touch, Jim, don't be fooled by price. Underlying market is extremely poor structure. Yes, but I've been assured by all the internet bros that the only thing that matters is price. And so now I got you telling me not to be fooled by price. I don't know what to believe. Like, I don't know if I should believe you. I don't know if I should believe the internet. Like, now you've put me in a little bit of a quandary, my friend. But let's see. Bullets, the real expecting move butterflies are the friends we made along the way. What a great way to end the show. And Theta Trader, I see you, my friend. And I appreciate you. But that's a great comment to end the show on. That is correct. And so that's all that really matters. The wins and the losses and the this and the that and the profits and the whatevers. It's all about the friends we've made along the way. It's all about the options that we've sold for income along the way. Like, that's the only thing that matters at this point. So guys, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hey, what's going on, everybody? Markets are flying high off of that inflation print. We'll talk about what the things to look for there. A couple of things going on in the AI space, and they're really starting to get really fascinating. Of course, there was the mention today of buying Google Chrome. They didn't have enough money. It doesn't make any sense. The math doesn't math on that one. And Anthropic is doing a very similar move that was done the other day by OpenAI. So we'll talk about those three things and more. We'll take a look at earnings. CoreWeave is one of the big ones. It's one of the names that I have paid attention to a lot. And other than that, we're going to look around and I'm going to show you some of my portfolio here and some of the plays that I've had on recently, and you can tell me what you think about them. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. I didn't really update you guys about why I was out last Thursday, Friday. I was checking out my best friend. He's staying in Branford, Connecticut. I don't know if you've ever been there, but it is dope. It's really cool, actually. Really liked it a lot. First time I ever went there was in May when he graduated from pharmacy school. And so I went back out to check him out because him and his lady, they are renting this cool-ass Airbnb, actually. And it's in this really nice neighborhood. So we ended up hanging out. Honestly, I'll be honest with you, the neighborhood essentially kind of reminds you of kind of like the Hamptons or whatever in the summer. And it's funny because my friend and his lady, they've been working a lot this summer. So they're just like not into it. People are kind of loud there when they party, especially on the weekends. I enjoy stuff like that. That's just how I roll. And so it was cool to just be out there. But one of the things, too, so it's basically in the Long Island Sound. You know what? I forget. Maybe some of you guys know this. I don't remember what qualifies something to be a sound versus, any other type of body of water. I forget exactly what it is. I don't know if it's between two. I don't remember the deal. I'm sure you can look it up. But anyway, it's an interesting area because it's really rocky. Actually, even in the water, and there's like different rocks. And apparently, once upon a time, there was a lot of granite that was taken from that area and often used in other applications. As a matter of fact, a lot of the granite that was used on the bottom of what's the base of the Statue of Liberty comes from that area. It's really interesting, and they have these some of these interesting little islands around them. Literally, you can only get to them by boat. And there's these crazy mansions that are sitting on some of them. It is wild, dude. It is absolutely wild. So, it was just great to be out there. It's a lot of fun. Really enjoyed it. I took a bunch of pictures. I should have showed you guys some pictures, but I forgot. Whatever. It is what it is. Let's pull up the slides and take a look at some of the things before we get to the platform. Sam L. Sam L says, Dr. Jim just played Kava earnings to the upside, so naturally do the opposite and you're golden. Kava to the downside. Really? Okay. You know what? There's only a couple of earnings as we get to them. There's maybe three of them I was thinking about playing. Kava is one of them. And we'll see. So we had CPI this morning. I'll be honest with you. I don't know if you're like me. I'm really getting tired of how they put out these CPI numbers. The shit doesn't make sense. I'll be honest with you. It's either year over year or month over month, which is fine. And then you got to strip out certain things. Can you just tell me if inflation is higher or lower? It feels like it's still higher, okay? Right? So that's the weird part because it's still higher, I thought, seemed like. And yet, there's a lot of reports that say it was higher year over year or month over month, but it's slightly lower compared to certain things. If you strip out whatever. Well, if you just look at price action, the market feels like inflation came in and this is going to give the Fed the ability to cut rates. That's the confusing part for me because it looks like the market took it as inflation came in and that's why it took off. 43%, I'm sorry, not percent, 43 point expected move in the S&P 500 yesterday, we're up over 60 points. Okay, so that tells you that the move is underpriced. Speaking of priced, the CME FedWatch tool was showing about an 84% chance of a rate cut in September. That was down from Friday, which was over 90. 84 yesterday. Now it's back over 90. Matter of fact, it's about 94, 96% chance of a rate cut, and all of that is saying the market and the economy is in a good place, so that we don't have to worry about anything, and we can cut rates and we can bring them down, and that's going to take markets higher. Maybe it will. I just couldn't understand the connection between them today. I got to tell you, one time it really did not make sense. I thought inflation went up from what I saw on the report. Apparently, the markets took it as otherwise. So I don't know. Is this a move that you want to fade? I'm not entirely sure. Again, I haven't really been. Well, I'll show you my positions later. Perplexity. It's AI startup. They came with this low ball offer, and I find this. You can't trade Perplexity. Obviously, you can trade Google. I find this just very fascinating because Perplexity, for those who don't know, is only worth about $18 billion. Google Chrome is likely. I just put them together, by the way. Groom. That's right. You can use it. Google Chrome is probably worth about $50 to $60 billion, right? And that thing, just the math doesn't math there. If Perplexity is worth $18 billion, where the hell are they going to get the other 16 to be able to do a deal, let alone more than that what they actually need? You're not going to borrow that much, and so that's pretty crazy. It almost seemed like they were putting themselves out there. But the takeaway here, honestly, is that AI is not going anywhere, and so that's why the NASDAQ is continuing to outperform the way that it does. And these companies are showing more and more every day how this stuff is integrated into just about everything that we do. The next story and the last story here, Anthropic, they're giving their AI agent to Claude to the U.S. government for $1. That's the same thing OpenAI did the other day. These guys want to get more and more legislators and regulators on their side as these tools start to come out. So this is something to really keep an eye on. Obviously, there's Grok in there for those who use that on X. I mean, there's more of these different things, but it's really being a thing. So I don't want to hear any more about whether on earnings, NVIDIA, are they going to be good enough or all this crap. Look, it is basically infused in our everyday life at this point. NVIDIA and Microsoft have led the way for a while, but other companies are starting to catch up, and it seems to be that is the singular biggest thing going on in equity markets. Let's move to leftovers. Which branch of medicine receives the most pharma R&D? Let's move to the next slide. I see your trades, guys. See the things you're talking about. I can't wait to get to it. We're going to get to it in a little bit. Jackie W. Perplexity is going to make Google an offer they can't refuse. Yeah, I'm gonna get to those a little bit. I see you, Theta Trader. I see you, Agent. We're gonna be in the platform in a few. This is a chart of the number of drugs in the pipeline. Now, it's interesting because even though heart disease, which is cardiology, you can see the amount of cardiology drugs in the pipeline, 1,207, compared to oncology drugs, 9,476. So even though heart disease is the number one cause of death in the U.S., anti-cancer drugs dominate the pharmaceutical R&D market. Neurology is second with 3,868, followed by metabolic, 3,314, followed by infectious disease, 2,879. I bet that climbed up over the last couple of years after COVID. Musculoskeletal, 2,157 is next. Immunology, 1,469. Dermatology, 1,327. Dermatology, is more dermatology drugs than cardiology? What are we doing here? Oh my God. Sensory, 1,312. And cardiology, and then respiratory. So yeah, there's a ton of cancer drugs. Obviously, cancer is a big area of concern. Neurology clearly is next on the list, but cardiology, again, that's the heart disease is the number one cause of death. And I think a lot of times what we try to do to prevent is telling people, these are, I think maybe the reason why there's not as many drugs is because by the time you have heart disease, it's too late. By the time you get cancer, it's not too late, right? And so a lot of times it can be now. They're catching it early and earlier. Maybe that's why there's more oncology drugs, but it's still kind of interesting to look at this. It's almost like 8-1. Let's move to the next slide. Volatility risk premium. I put a little highlight and dotted line on the 10 level because we've seen a lot over the times that's been a good area to sell vol, and we just came off of that. And so I think it's clear that vol selling opportunities aren't as good right now. It's going to be more directional plays, if anything. VIX is under 15. The difference between August VIX and September VIX is a whole $2.60. That's some serious contango. Vol is low, and you can see vol was a little bit elevated here from this compared to historical vol. Some of it had to do with historical vol was just really low, but now this metric is dropping down. And then when you look, for those who don't know about this metric, volatility risk premium, the difference between VIX and historical vol, or implied vol and historical vol, when it's in the negative, that means things are moving around a lot, and usually vol is high. And so that's what we had here in May, April through May, right? Crazy time. But again, near term, you can see that it's back down to 5-ish, and that's not a whole big difference between his implied vol and historical vol, 5 ticks. You can still sell some stuff, but as you can look around the landscape here, you're not going to find a whole lot of ideas to sell vol. Let's move to the next slide. So speaking of the landscape, this is it. Implied vols versus implied vol ranks for all the major ETFs. I have taken the liberty of circling the 4 that represent the indices, the Dow, the NASDAQ, the S&P, and the Russell 2000. You can see, again, I got dotted lines for you. They're all below 30 IV, and they're all below 30 IVR. And, yeah, we had a moment there where they almost got up there, right, around the first of the month. I think if we had sold off on August 2nd and 3rd, these things would have definitely climbed above. But right now, there's not many things that are considered high vol, to be honest with you. I'm not sure why XLP is so high vol. I think consumer staples names have been lagging behind a little bit. And maybe there's some names that when, I'm not sure why this thing is so high on the IV rank, but you can see as far as implied vols, it's still fairly low. I mean, it's like 15 and change, 16. That's pretty low for implied vol itself. But yeah, there's really nothing above, besides XLP, above 30 IVR. Even gold has dropped down, right? Gold and silver vol dropped down, bank vol, metals vol, oil vol, all kind of dropped down. Let's move to the next slide. Yields bumped up a little bit today, which again is so kind of crazy to me. I would have expected yields to kind of fall after today. Because, again, if you're going to price in a rate cut, you would expect yields to kind of trail off, and they just didn't. That's a little strange to me. I don't know what to make of it, and I'm still trying to figure it out. But you can see before that, I mean, yields had been falling over the last couple of weeks. Today, I think, is just kind of a sort of dead cat bounce, if you will. Let's move to the last slide. Earnings, we got CoreWeave. We got one of the cloud computing names, RGTI. Kava has earnings. H&R Block, Laser has earnings. Eats. Those are the only halfway interesting ones for me. Other than that, most of them are not interesting. We have PPI coming out on Thursday. You got retail sales on Friday. Again, another look at, that should end up, both of those two should move interest rates. Again, it's all about the consumer now, and it's about what price exchange power that they have. August options expiration is on Friday. This is a rare one because we have options expiration coming up on Friday, but VIX expiration is not until next week, Wednesday. So just keep that in mind. Number of S&P 500 stocks above the 50-day moving average is 58%. Yeah. Let's move to the platform. All right, guys, what are we talking about here? Who was first? Aged, I see you. CRM, 210, 270, short strangle with earnings on 9-3. You will love the 7 bones, Jamal. Yeah? You know what's funny about CRM? I got to tell you, you want to do a SEP strangle. 210? 270, huh? I would probably be more inclined to do the 200, 270, but I don't dislike your idea. 65 vol. I just don't like to sell vol in front of earnings. I really don't. Even a name like CRM where things aren't looking too good more recently. To be honest with you, what I want to do in CRM, I'll tell you what I'm ironing up in CRM. And honestly, if I was paying attention this morning when the stock was on its butt like it was, because the stock went through most recent lows. This low was 230. I mean, yeah, stock was trading 226, almost 225 this morning. What I really want to do in CRM, be honest with you, is a zebra. I want to play it for a bounce back, and I want to give it some time. And instead of collecting, I mean, it's not a bad idea, but you could see similar, not too far off of risk. I shouldn't say that. Risk reward is totally different on this trade, obviously. Your trade, the strangle has a higher pop. Obviously, you're collecting money, and lower buying power, I think it was about 2,300 versus this one. I just want to play for a bounce back. I think at some point or another, this name is due for a bounce back. I mean, this is one of the largest names in the S&P 500, and stock has gotten absolutely rocked. And I think a lot of people have formulated the opinion that software is not going to matter as much now that we have AI, but I still think it is. I think it's going to be something. I'm not sure how much they're integrating AI into their stuff, but all that to say, this is on my list to get long, actually. I want to do it using a zebra. I'm looking forward to doing it at some point soon. So I like your strangle idea, Agent, but I'm going to do something a little different at some point or another. Somebody likes to do the put calendar. I'm curious, why? I mean, I don't care either way. I'm just curious, why are we bearish on Kava? Is it something that we should be bearish on? Is that what it is? I mean, maybe it should be. The 75, huh? So this is a what are it, $11 expected move. That's fairly volatile. What do we think here? The 75, that's not a bad one. The 75, well, you know, these calendar calls are definitely my wheelhouse. And yeah, I'll do it. Downside? August, September. You want to do the August, September. I don't know how much I want to. Oh, yeah, you're right. Sorry, RGTI is quantum computing, not cloud computing. I don't know how much I want to. The only reason why I don't want to do September. Well, I guess you could. It's decent. It's probably better, actually. It's not a bad idea. 131s. Okay. I'll do it. I usually don't do put calendars. I usually do call calendars, but I'll do this. I'll do that. 131. Can we get it? Well, it's working. I can go higher. 130. And we'll do a couple. We'll do the 70 kind as well. That's another one we'll do. That's pretty cheap. See if this thing really tanks. I don't know if it's going to really tank like that. Let's see. What else is there? CMG took a pooper. Maybe these fast casuals are going down. I know it did. CMG was one of the ones I was looking at possibly for a comeback as well, but I don't know. I don't know if it's worth it. I'd much rather do something like a CRM to see if it could happen. There was somebody else had another idea in here. Oh, there you go. Yeah. Sorry. Theta Trader, reverse engineer this trade. Looking at SPY, poor man cover call, low IV, long 600 in the Jan 2027. Okay, so you are in SPY. You're long this Jan 2027 600. I feel you. Right? And then you want to sell the 655 call in SEP. So, be honest with you, there are different rules. You want to sell the SEP. I'm assuming you want to sell the SEP. Yeah, I assume you want to sell the nearer term SEP. So here's the thing: a lot of times there are certain guidelines on a poor man's cover call. I feel like it's like you don't want to go more than a year out. I should say you don't want to. You want the trades to be within a year of each other. You know what I'm saying? So I think you would want, because you're not going to, especially for SPY. I just think you want to be. I know you're looking at how much premium you can collect a little bit, but I personally would do. I'd probably. Geez, I don't know if I do 655 there though. I'd probably do. like the 675. I'd probably do something like in Jan 2026, be honest with you. That's what I would do. Me personally, I know you're looking at this near-term SEP, but I would do something a little bit closer to my longer option. I realize that you probably don't feel as good about that, but I'd probably do more the 675 in Jan 2026 if I'm long the 600 in Jan 2027. That's how I would roll with that trade personally. So Jan are the most liquid, so I usually do the mid-year? Really? Okay. Well, I just like to do where the most liquid is, so I would do something like that. That's kind of how I would roll. Right now, what do I have going on? TTD, this is left over from the earnings trade last week that didn't pan out. So those are the long calls that are left over. They're way upside. I don't even, TTD is one after the way the stock got rocked. So here's the thing. I usually I have flipped the, I've used FinViz for this actually, and I've flipped it around such that I could look at worst performers on the year. And that's why I've done some of these zebras recently. UNH was one of them. CRM is one that I'm eyeing up. TTD is another. TTD though is the truth is like with my criteria, if I could just sort by everything, I would sort by larger names that are down more than 25% on the year in the S&P 500 that are at least let's just say at least 100 billion in market cap. And that's where something like TTD gets excluded because I want something that has a really sizable market cap, a name that people just won't throw away in the trash and you'll eventually pick up again. Adobe is another one that I'm eyeing up. These names are names that if I tell you soon that I've put on ADBE, that I put on zebras in those names, you'll kind of understand why and you'll understand my criteria. This is one of those names, again, that has been beat down more recently. I have eyed up something in here, something around, I don't know whether it's going to be October or maybe November, but they're all going to be something around 66 October, a little bit further out, because I want to give it time and to bounce back. And so that's kind of been my trade more recently. But I stopped doing some of them. I'm waiting. I mean, I don't know how much sense it makes at all-time high. So if we have another pullback for whatever reason, I'm going to deploy capital on a lot of those names. I did it in FIG. I mean, again, that doesn't hit that criteria, but it has a decent-sized market cap, and the name had gotten rocked, and so I decided to do it. So I'm long one of those in there. Oklo was earnings. This has worked out well. This is probably bigger net lick than I want to have in the name, and so this is something I'm probably going to close this at the end of the day. I don't know. I've been debating back and forth. There's been a lot of news to come out about Oklo and how much everybody needs that nuclear energy, especially in the AI space. And since AI is so hot, I was like, well, do I just keep this on for a little bit to the end of the week? I haven't decided quite yet, but that's earnings. Uber, I just thought, like, honestly, it faded. We've seen a lot, some of these names that I played on calendar calls for earnings. I've seen them fade throughout the day. And they'll start out the morning hot and then fade. And that's what we got on Uber earnings on Friday. I decided to hold on to it for a little bit longer. So that's what this trade is. It's still a calendar call spread. But I might be closing this by the end of the... Matter of fact, I think I'm going to close this now, actually. This is not... I almost, as we're getting here to all-time highs, I like that. But I think there's a few things that I just want to close out and then just reassess, right? And so I think sometimes you need to do that. It's good for the soul. It's good sometimes, like sort of reassess where we are in the market and be like, okay, I've got a bunch of different plays on, but now I need to sort of reevaluate things and let's just take in some capital. So that's what this is about. That's probably what I'm going to end up doing on a couple of other things. I closed my UNH earlier. I had, again, UNH was one of the first names where I did the zebra trade. I closed that. And so, yeah, that's it for the Uber trade. Close that. Using my follow feed. Yes. So I had a couple of those. And again, a lot of times, if a name is earnings, I usually play it for earnings, and then I'm done with it after that. I'm not trying to squeeze any more bit of a profit, but Uber was one of those rare ones. AMD was an earnings name. I'm still left with long calls. Netflix was the same deal, still left with the long calls. So that's what I mean. Sometimes when I'm like, ooh, do I really want to do this Kava all the way in SEP? I don't know. I'd rather just do the weekly to weekly situation because this is not a name I really pay much attention to a trade often. So yeah, let's go with the 75 here in that expiration and sell these. That's pretty cheap. I'm going to do the 70 as well. 25. There you go. At least I got one filled. Let's replace that. Come on. Don't be a cheapo. This is ridiculous. It won't fill me in that one. 30 cents as high as I go. If you're not going to give me that, screw off. Yeah, there you go, Theta Trader. And at the very least, you know what? You'll probably be able to, if the market pulls back, you'll probably be able to buy that back. Maybe, possibly. You know what's another one I like? We didn't even, I'm surprised none of you have mentioned it, but CoreWeave. CoreWeave is a name I just really like a lot. I like the way it trades. I'm going to play this to the upside. I am. This is definitely, you can't talk me out of it any other way. So look at that. Woo! I mean, that's kind of juicy in a way. You feel like you could almost sell that. I mean, that's a big expected move. $23? I mean, that's like 15%, right? We're right? 23, 146. Oh, let's see. Yeah, that's 15%. That's a big expected move. Why do I do the similar spreads, the calendar call spreads or calendar put spreads? I like to do multiple of them so that if it blows through the strike, let's just say that stock Kava trading 85. Let's just say tomorrow it opens up and it's down to $65. If it blows through the 85 strike, I'm not going to really make that much. I mean, the 75 strike, I'm not going to make that much money. The 70 strike, I might make a little bit more. And so a lot of times it's an earnings play. I have no idea how much it's going to move. The expected move is 10, but it could move 15. So I like to do multiple strikes such that if it blows through others, I don't have to put, I don't have to do 2, 3, or 4 contracts. I can just do one contract on those individual lines, and I'm still able to make money on those. So that's one of the reasons why it often works. Yeah. So this name, before I go, I want to play this to the upside as if it's going to move to 160. I do. Now this is a thing where I could 118. I could actually do further out on this. This is a name that I would hold for a while. And let's try the 160. Let's see how expensive these September options are. Oh gosh. $4 and change. I don't love that. Yeah, that's too much. What we're going to do, I think I'm going to do the 160, 165, 170, 175 in here, and that's going to suffice, and that's going to be my CoreWeave position for earnings. I'll put that into the follow trader page so you guys can see it. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. See ya.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
one of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. And I think that left a door open for us, which we really liked. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. Well, we have got the CPI. I've been waiting for the month, and it was exactly what they thought. As I said yesterday, for like 5 months in a row, I think I might have gotten this backwards, the actual number came in beneath expectations, and this one matched expectations. In spite of that, I guess they were worried about something much worse, particularly with tariffs kicking in, and the market has rallied mightily to lifetime highs. In most cases, pretty much across the board. As of this moment, the ES and NQ are up about 1%, and the small caps are blowing the doors off everybody. They're up almost 3%. And the RTY is up 63.5 points. So it's been a very green day. Precious little red on the screen today. So I've got some charts preloaded. I want to thumb through those with you. And as far as the rest of the week goes, there's no news tomorrow, no economic data. Thursday is the PPI, which in my experience, nobody really cares about. And then Friday is some retail data. And we're kind of past the cool part of the earnings season, as you well know. So that's kind of all we got. So let's start banging through these. Looking at the spider, we have finally a lifetime high on this. The prior peak was on the 31st of July and basically fell all that day. But the intraday high was that day. We have beat that. So we're going to wind up with a new lifetime closing high and a new lifetime intraday high. Because as I say, the ES right now is up 64 points. The diamonds, also green, although not quite at lifetime high territory just yet. The peak on that one for the ETF was on the 23rd. And just to emphasize, the cash market has a resemblance, but not as identical to the index itself. Because the Dow index itself, I believe, peaked back in December. And we've not beat that. The ETF incorporates the dividends. And so since those dividends are built in, the ETF does better than the cash index. Therefore, the lifetime high that I just showed you wasn't the lifetime high in the cash index, but ETF it is. Just a little bit of a distinction to make there. In the confines of that, I would mention, there's some items here and there which are on the weaker side, like IBM, Big Blue, is actually down today, which is quite a feat. And it's actually been very weak for weeks. Its own peak was set way back in June. As you can see, we sort of slowly sunk lower, had the big gap down based on earnings, and they've been banging down ever since. This is the fourth day in a row that we've had a pretty big red bar on this. And IBM has undone its gains. Pretty much we're back the price matching to where we were 8 months ago in December. And that also takes some doing in this market, but IBM quite weak amongst the big stocks. And then I said, small caps have been exceptionally strong today. IWM is up 2.7%. Zoom in on here, getting quite close to this peak here, which was not the lifetime high. That was the counter trend, if we can still say that, rally. 226.71 was the peak. We are $0.50 away from that now, and it would not take much to bust through that. So the lifetime high itself on the ETF was way back last November. So that'll take some more doing, but we are getting close to a prospective breakout on that. This is the biggest day cut on the IWM in months, it seems. Cubes are also up a little more than 1%. Lifetime high intraday, lifetime high close, almost certainly. We're pushing above this very long-term resistance line. And as usual, it's all about AI and NVIDIA and semiconductors, kind of the usual suspects. Some of the mega caps in there that are of aid to that is Alphabet, GWOGL, up about 1.5% and getting very, very close to its own lifetime high. Let's just mark that and drag it up like so. And this is the peak back in February of this year. And as you can see, we're getting very close to besting that high. Here's Meta, which is up about $24 lifetime high on this. This big gap here was, of course, on the heels of a very strong earnings report. It's been about 8 days or so just kind of digesting those gains, and then another leap today. I think it's kind of a combination of both the strong market and the news that their Threads product has exceeded 400 million active users. Another big one, which is just recently put on its running shoes, Apple. Apple had been a real laggard for a long time, and just in recent days had a huge burst higher on the 5th of August and another one on the 8th of August. We have busted through this descending trend line. Unlike Meta, which is at lifetime highs, and unlike Alphabet, which is near lifetime highs, it's a ways away from its own lifetime highs, which are way up here back in Boxing Day of last year. But nonetheless, it has had a real burst of strength just over the past week. Not in the Mag 7, but kind of an old school NASDAQ stock, also at lifetime high, eBay. This had done this formation here like so, based for a very long time, and recently has had a big burst higher, kind of like Meta, launched by a very strong earnings report. A little bit more of a laggard, it's still green, is Oracle. It seems to have stalled out a bit. Its own peak was on the 31st of July, but since then has been just kind of grinding away. So really not very inspired by these, by its compatriots after this big run higher. So this is stalled out. I put in a short position on this one about an hour ago or so. As far as semiconductors go, SMH, another strong day, another lifetime high, 2.1% gain here. We had pushed above this prior peak, spent a few weeks kind of consolidating those gains, and then recently have eased higher and then burst higher today. So very strong day with tech. There are some smaller firms, that is to say not NVIDIA, that are doing particularly well today. One is ON Semiconductor, ON, which is up over 6%. 51.53 is the line in the sand for me on that one. And Microchip, up even stronger percentage-wise, up 6.19%. And the line on that one is right along there. And we've got close to it, but we've eased off just a little bit. But you can see this topping formation is still intact on MCHP. This is one we haven't looked at in a little while, but Axon, you may remember, we had this long channel going on this one. Here's the resistance line, this red line here. And what's happened recently is they had their earnings that went blasting higher, and it actually peaked back on the 7th. And since then, it has really had a hard time of it. It peaked at 885, and then we had a big down day and another big down day and an even bigger down day. So we have lost $113 in the span of 3 days following that, which kind of makes sense because if you look at the long term, it had gotten very lofty relative to its long-term price like so. So it's probably going to settle down very soon because we're getting close to this price gap like so, right there, getting in the vicinity of that. That'll probably provide a measure of support and stop the plunge. Qubit, QUBT, short this. It's down a little, which is a big achievement in a market like this today. 17.24, the stop on that, and we have not violated that. Another one, just got into yesterday, Roblox RBLX. This one also managing a little bit of red, 0.71%. Importantly here, this is an island reversal pattern right here. This one bar whose low is higher than anything that followed it or preceded it. That's the nature of those automatic reversals. So this is still intact as well, so long as it stays under or does not exceed 135.65. So that's Roblox. I was looking at the various positions I've got, looking like what are the best gainers on the shorts that I've got right now. And there's a couple. They're probably both up today, but the amount of time I've held them, they've done the best. I just wanted to peek at those. One of them is Royal Caribbean. So it's up today 3%. But this is the best gainer so far. Zooming on this, it peaked up here. And since then, it had this nice gap down and has been slipping lower in fits and starts like so. And I'm going to stick with this one unless it exceeds 316.50. And the other one that's been doing well, which is up just a little bit today, just a few pennies, is FMC. This one's been taking a real nice tumble lately. Many red bars in a row. Today's the first speck of green we've gotten, but this one has been a good position. But the thing that's really surprising to me is the CPI came out and it was as expected. People clearly were worried about a higher number because of tariffs. That didn't happen. So they're celebrating by bidding up stocks. And yet the bonds are still down. The ZB is down about 0.5%. The TLT here is down about 0.6%. And the pattern that we look at pretty much every day is still in formation. As I've said all along, this is a huge pattern. It goes back for years. It may never complete. It is a long way from completing, but there's nothing that's happened to invalidate it. And it's a little odd to me that on a day like this, even this would be sinking. So worth noting. Its compatriot, which is based on a shorter term security, the IEF, this is the 7 to 10 year Treasury ETF. This one, if it ever does get above this enormous green base that's been building, it'd be a very good, strong bullish pattern. It hasn't done that yet, and it's actually, as with the TLT, although to a smaller degree percentage-wise, it too is selling off a little bit today. So just kind of unusual. As far as metals go, XME, very strong day. 2.6% gain here, lifetime high. This had been the peak way back in 2008, so 17 years ago, had this peak. Obviously had this calamitous fall, big reversal here, and here, and here, and here. So this security clearly has a tendency to top out and drop out. We haven't had any clean tops really since then. We did have one here, kind of a sloppy one, but it didn't produce much of a fall, and it's not very well formed. The last meaningful clear top was way back here in 2018, and as it is now, we have beat and bested by some degree the peak set way back 17 years ago. So that's XME. As far as gold goes, it's actually down today. GLD is down 0.12%. The front month is off a little over $5, and we're still kind of in this consolidation zone like so. We might just draw a little triangle pattern like so and neaten that up a little bit. So this right here, it is consolidating within this triangle, and what gold bulls want to see is for it to beat the peak set on April 22, 317.63. If it can manage to do that, there's going to be a whole nother leg up to this thing, much as was achieved back here. This is very similar to what happened back here. Once it finally cut loose, then it could start that new series of higher highs and higher lows. As far as Bitcoin goes, it's moving up a little bit. We're still kind of tethered for a couple of weeks now to this trend line, as you can see, very stuck right there. It needs to kind of put on its booster rockets to really escape from that. As it is now, it's just kind of glued to that zone. But back to the point I was making earlier, it's kind of all about the ZB long term to see if it ultimately breaks below that, because the market's really counting on persistently lower interest rates. And just as one last fun chart, because we did the CPI, there's the long-term one. This goes all the way back to, when does this start? 1913 or so. And as you can see, there was a period where we had inflation, then deflation. The inflation has really never looked back since. Either things are inflating or really inflating. And as it is here, as you can see, in spite of things not being terrible month to month, it adds up. Thus, a chart like this. Okay, well, having said all that, like I said, no economic reports tomorrow. We'll see how the market continues to digest this news on Wednesday. So I'll see you then. Take care. Bye-bye.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for the last call. The last call for the last seller of the Russell just left, Sosnoff. Russell up just about 3%. just about $65. Big move in the Russell, coupled with a big move by the NASDAQ, 291 points, a little about 1.25%. Even the S&Ps, you know what? They're up 65 handles, Sadler, with just about 1 million cars trading in the even the S&Ps. Like you said, a lack of sellers. We just stair-stepped higher day after day after day, and especially today. Dow up 450 and change, up 1%. Volatility weak all day, going to crash through 16 earlier to 1590. It's sitting at 16 right now. Bonds, surprisingly, never really caught a bid today, Sadnoff, down 15 to 114.22. They were as low as 114.10. Bitcoin back over 120. Remember this morning it was closer to 118 and a half. It's 120, almost 120 and a half. Ethereum equally up $178. That's a 4% move. You can see Ethereum really on a percentage basis the last week's had a much better week than Bitcoin. Oil down 74 cents and gold down $4 and change. Some of the big movers, some of the usual suspects. Meta up $23. Look at the IV ranking these. They're single digits in most really crowd CRWD with earnings coming in a week or so, a little bit more. Up $9, has a high IV rank. UNH up $9. SE for earnings yesterday up $28. AVGO up $8. Netflix, Microsoft all up $8. Even the Chinese stocks like Palo Alto Network, I'm sorry, not Chinese stocks, sorry, Palo Alto Network up almost $7. OKLO up $6 and change. Boeing up $5. It's pretty much everywhere. Very few buckers. MSTR surprisingly lower by $5 or so, and McDonald's lower by $3. Your beloved IBM down $2. That's all I've got, Sadnoff. You've got CRWV for earnings and Kava.
What'd you say? CRWV for earnings.
CRWV for earnings, that new stock, yes.
Yeah, CoreWeave. That stock was crazy.
Yeah, it's up $7. Disregard the IV rank. You don't have a full year's worth of...
The IV rank is meaningless in there, but the expected move is not meaningless.
Right, expected move $23. I mean, we beg for liquid stocks to have, a 10% move. That would be $14.
And let me tell you something. This is not a very liquid stock.
No, it's not. Markets are wide in the front month with 3 days to go on that $23 expected move. You've got 30 to 50 cent wide markets. If you wanted to go out to September with 38 days, you're looking at 50 and 70 cent wide markets. So, yeah, probably some sort of spread if you were looking to do anything.
Wow.
Like I said, a strangle. 100 would be the right thing to do here. Mm-hmm.
You can get wide in here, man.
With 3 days to go. The 100 strike has an 11 delta, trading for around $3.50. And the 220s, significantly further away, have the same delta. Let's just call
I
it
sold
12.
the 100 220 for 91 cents.
Oh, you did it. I'm sorry. You did it in the 3 days.
Yeah, that's all I do is 3 days. No interest in anything else.
Oh, the 100 220.
That seems pretty wide with the expected move of $23, doesn't it?
Yeah, still a lot of call skew here. Yes. Sold it at 91 cents average price. What'd you do?
Seems a little juicy, boys. Seems a little juicy.
Oh, I got the 110 up there. Sorry, 100. Wow.
Trying to sell some more. Didn't get it filled. Didn't get it filled.
I mean, you sold it basically the mid price.
No, I sold it above mid price because I can't sell it I can't sell anymore there now. Somebody saw that fill and they're like, "Oh, what the hell? Who the hell bought those?"
90 and 92 cents. Good job out of you.
I can't even sell it at 90 cents now. But I will tell you.
Oh, wah.
Wah. Take your profits. I will tell you. based on my trading today, I'm not bragging.
Well, no, you shouldn't. I mean, you're looking for down market when we haven't had a down tick. You're looking for a down market. I mean,
yeah, I haven't exactly done anything right. So let's not.
Oh, believe me, we're not making any statues for you. We're taking down the few that we've put up for you too. Don't worry about it.
Yeah, I haven't done anything good today. So there's no. I wanted one. I said I wanted two things for today. I wanted bonds to be higher. They're down 15, which is a half a point. I said I wanted stocks to be lower. They're up 65, which is 1%. So I got the exact opposite of what I wanted. So I could say, usually when you get the exact opposite of what you want, no bueno.
You lose money. Yeah,
no bueno.
Yeah. Mm-hmm.
But I didn't get short. Oh, wow. Can't believe they're buying this core wheat crap. I must be wrong.
Again.
Who the hell with 3 days to go is buying 2 times the expected move for, almost $1? Not even.
Those that are selling the bigger implied volatility side. I'm needed for a little bit of buying power. You know that.
I'm going to get my ass handed to me in the morning in this one. But
I can't wait to. My Taiwanese sources say all the stocks go higher. Why are you selling the calls?
What do you mean? What calls?
The 220 calls in CRWV.
They said the same thing about Circle this morning when it opened up $25. You know what it's up right now?
What?
Circle, $2.47.
$2.47. Yes.
Yeah, should have held everything at the right perfect play. That we made money in there, but still. Well, core weave, this is a gift from the gods.
You got to sell more calls to make money in there after the stock opened. Come on.
I know. This is a gift from the gods right now.
Oh, is that what they told you?
That's what they told me. This is a gift from the gods. They said, Tom.
Gift from the gods?
They said, Tom, with all due respect, this is a gift from the gods. And let me just.
Saj, you've been wrong for the last, about 6 months or so. Here's a gift from the gods. Yep, I got it. I understand.
Every once in a while, they throw you a bone, Tony. They throw you a bone.
And you know what? Only a few and the brave can realize that that's happening, and you're that guy. I so want you. I mean, they tried yesterday in Circle to hurt you a little bit. If they could do it today, please, baby cheeses. If you could do what you tried to do this morning, I would appreciate it. Please. Please.
I don't know if you know the story, but back in days, years ago, we had this, back when we owned Thinkorswim, we had this, you know what Secret Santa is, where they give you a present,
Yeah, I know what Secret Santa is. What do you think? Only the founders of Thinkorswim know what Secret Santa is? How freaking self-centered are you?
Well, I don't know. I never did a Secret Santa.
We do Secret Santa in the office, for crying out loud. We just don't invite you.
I know. I never did one before. So anyway, back in the day, we did a Secret Santa. So some...
What poor bastard got you?
Some woman got me and didn't she didn't really know me that well, whatever. So she got me and she's like, but the rule was you couldn't spend more than I think $20 or $25. $20
or whatever.
Yeah, 20 or $25.
It's a fun gesture.
Yeah.
It's like when you get to know people and you buy them something that, they would appreciate or laugh about or something like that. Like
Yeah. Anyway, so she gets me and she buys me a glove compartment box baby Jesus.
Right, one that kind of rattles around a little bit. You had it for a long time.
I still have it.
Oh, you still have it?
Yeah.
Really?
Yeah,
so that's a great Secret Santa gift.
Great Secret Santa gift. So I put it in my glove box. I've had it there for 20 years or 15 years, whatever it's been. My baby Jesus that I got in the, I don't know what it's good for, but I've never gotten an accident. Not like you, 3 accidents, which I found out, by the way, this weekend. Tony has, in his new car, has been in 3 accidents already, of which he claims none of them are his fault, but it is what it is.
I was parked each time.
That's what you say. You've been in more parked accidents Tree falls on your car. Guy runs into you.
Tree fell on my car.
Guy runs into you. Somebody hits you from behind.
The DoorDash driver backed into me. I was in a parking spot.
In your wife's car, you were parked at a stop sign. Somebody ran into you. It's amazing how people just run into you. You never did anything wrong. You have had 4 accidents in the last 2 years that I know of.
Now it's 4? It was 3?
3 in your car, 1 in your wife's car.
Got it.
So you've had 4 accidents where you claim you weren't in the car or moving. It's a little bit like,
It's just sus, as they say, the kids say.
It's a little bit sus. That's right. So there's a lot of questions going around the internet on Twitter about possibly, you were not exactly telling the truth.
I can see it. And this is why you have to know the person and not just the story. Now, you know me, and I'm telling the truth.
I don't know. There's no way you would cop to me.
You're not my character witness?
There's no way you would tell me the truth if you got in an accident. Anyway, all right. So it's 2:46. We just did our first earnings trade of the day, but we don't have any good trades on today. We did lose some deltas. And you know why we lost deltas today? Because the market went so high that some of my stuff just lost its deltas. Biggest loser for us. This is easy day. All I lost in futures, SPY options, Q options, nothing else, and bonds.
Yeah, well, that's where you were getting your delta from, right?
That's where I'm getting all my delta from. Everything else, no problem. The good stocks we had today, Intel was up another $1. Called the bottom in there beautifully. Some of the pigs.
As foretold.
They came for the pigs today. CMG, finally an up day.
They came for everything today, Tom.
They came for a lot of the pigs, though. ENPH up a little bit. Intel up. They didn't come for IBM, that's for sure.
ENPH, I don't know if you've noticed, but the volatility in there has really creeped up. IV rank of 43.
JD.com, we have a long position in. Yeah, they came for all the pigs. Lulu, what pig that has been. It finally came for that.
Did you sell puts in there just the other day?
Yeah, we're short puts. Yeah.
The stock's up $6. You never get a gift like that.
What?
I said the stock's up $6. You never get a gift like that.
That's right. TTD, we're long that. It's up a nickel. See, we got everything. Got them all. Got all the longs.
You got all the winners.
Got all the longs. Anyway, we did make a little headway today in some of the beaten up stuff, but we didn't do very well in our core short position and our long bond position. That did not help. I did not buy any more bonds today. I sat back, relaxed, enjoyed the show. I did not buy a one lot, and I did not get short any more. I literally didn't get short any more NASDAQ or S&Ps, none of that stuff. So
what are you talking about? At 2:30, you sold some MNQ.
I know. I already covered it. It was just a little fooling around. All right. So today, our quantitative newsletter comes out on.
You made a nice buck in that MNQ. Man, I'd love for you to have a scalpy.
Yeah.
Yeah.
So Nick and Mike write this Nick and Mike Reckentine write this newsletter, and the first piece is pretty interesting on how to volatility adjust your trading. You know, this morning we did a discussion on
confirm and send. Yeah.
Vol adjusted notional. Well, this is pretty interesting because they did a whole thing on vol adjusting trading, which is definitely kind of cool. And you can take a look at it. And that is the main piece on this thing.
I see they even mentioned this morning you answered a question about volatility adjustment for the pairs trades. Very good.
Yep. And they explain the whole thing, so it's kind of cool. If you
go through the math for you and everything.
We have some
wait, free cheat sheet. I like free. What's free? Oh,
that was last week's futures cheat sheet. Popular ETFs, futures cheat sheet. We've included that many times. But anyway, just to bring it up, just real simple stuff, and we have a daily Cherry Bomb newsletter that goes out. It's free. TP writes it 4 days a week. I write it on Sunday nights for Monday. TP writes it on Monday through Thursday night. And then Cherry Picks goes out every Tuesday. Dr. Data, Mike Reckentine, and Nick Batista put that one together. So you got those two going for you. And then, listen, the rest of the market today. I mean, I think the smartest thing we did was not get stupid.
Not get more stupid in your case.
Yeah, I mean, when they sold off this morning, I'm like, oh my God, I can't believe they're going to throw us a bone here.
Oh, you mean when you claimed to win the bet when the E-mini S&Ps were up 16 handles and the bet was that they would go negative on the day, but you said I consider this a win that moment?
Well, the NASDAQ was up 160 and went -5. And I thought at that
we
point...
didn't talk about the NASDAQ. We talked about the bet was on the E-mini S&Ps.
No, I know, but I said when the NASDAQ was up 160 and then was down 5, it dropped 160 points. Now it's up 300.
Scoopy, buying opportunity of a lifetime. You get yesterday's prices, Sadnov, which are always significantly less than today's prices.
Obviously, it was the buying opportunity of a lifetime because now it's up 300. So it went from down down 5 to up 300, which is not good for those that want to lean short. That would be another understatement of the century.
Again, not a huge amount of volume on the E-mini S&Ps. Is it really an absence of sellers? Is that really what it comes down to?
I think there's, what's weird is I just don't think that there's a huge retail participation on the short side or the long side up here. And I think it's mostly being driven by institutional buyers. I've thought this for a while now. I feel like most of the people I talk to are more looking for like those kind of long shot plays. I mean, it's hard to write a check here to buy Reddit at 225. It's hard to buy, Apple at 230 or Roku, whatever it is, or Palantir at 186.
Sure. When they were half as expensive,
Yeah, exactly. I just think it's hard, and I don't think there's. I mean, are you going to buy Meta at $800?
No. Why would I do that when I can buy Microsoft? That's so much better. Microsoft at $500. That's better. Up $8. You kidding
Exactly.
me?
Why buy Meta when you can buy Microsoft? Exactly. Right. I couldn't say it any better myself.
And equal, Microsoft's got another 300 points to run. You care about Kava earnings before we go away, because I know you like Kava.
No, I can't stand Kava. I think it's the most overrated fast food restaurant I've ever tried. It's more overrated than Chipotle.
Okay. I never knew Chipotle was overrated, but sure. I mean, it just seems like it's convenient.
Yeah, so no, I'm not going to trade Kava. I don't know if it even trades enough to.
No, markets in the one days where you've been living, or 3 days, there are. Yeah, you're right. Maybe 30, 40 cents wide. You're right.
Yeah, 4 million shares, not a lot. And if you go into the 0 days, there's. Yeah, sure.
3 days.
You can trade out of the money. It's kind of been a little bit of a pig. It hasn't really gone anywhere. No, I'm going to pass.
Yeah. Okay.
I don't love fast food restaurants, for trading. They're pretty tough.
Traded McDonald's in the past, but sure, that would be the big one.
All right.
You ready to talk to your friends?
Not yet. Oh, yeah. Sure, you can bring them in.
Oh, okay. So you are ready. It took a moment there, but now you're ready. All right. Overtime, guys. Tom said it's time to speak to you. Speak.
Gentlemen.
Hello, boys. We got the whole crew here today.
It sounded like he didn't want us to talk. That's why I was drinking water when you brought me in.
It's okay.
I think that this move today caught a bunch of us, caught me by surprise, because I thought that there'd be, I was expecting something a little different, not up 67 without a sell-off, especially after early morning sell-off. All right, what do we do from here? Dylan, you're first.
I mean, listen, this thing's going higher. It's always going higher. The supernova is real. Anything that's not higher, it's just an opportunity to get more of your favorite things. I don't even understand all the hand wringing. It's an absurdity. You just need to relax and enjoy the glorious technological revolution that has upon us, and just calm down. Thinking is your enemy. Thinking is your enemy.
Well, I can. That's a good title for your next book. Thinking is your enemy.
It will be.
Nobody wants to buy. Nobody can appreciate that more than a trader. Thinking is your enemy.
Nobody can appreciate that more than me. I've never thought about anything.
Yeah,
I agree.
There you go. See, that's why you're looking. Look at you.
That's right. Look at
never. No one's done better, Tony.
Yeah.
You are
Look at you, Pikachu. Look at you.
Yeah, 100%.
All that thinking will get you nowhere.
That's right. That's right.
It's
phone looks so smart today.
Yeah, there you go, Dylan. I think you summed it up. All right, Ilya, you got him right where you want him today.
Yeah,
I mean, I had to run away from my from at least some of my shorts. In lieu of thinking, I'm going to trade the price action here. Nasdaq broke out, so I'm out of that one. No thanks. I'm gonna get out of the way. Russell and S&P didn't break their highs. Those trades are valid until they do. So I'm sitting in those, and NASDAQ, goodbye.
So, Ilya, I think that just clearly paved the way for me to get short the NASDAQ here.
Beautiful. Beautiful.
I'm already short the NASDAQ. I'm not really going to add a lot to it. But, yeah, but I needed that a little bit of capitulation from you will help a lot of people. You know
Fantastic. Fantastic. Yeah. If you all can get together and push it back under the previous high, I'll quietly get back on the boat with you. But in lieu of thinking, I have to listen to what the price action says here.
That's my point.
Ilya, don't take his bait. Whatever happens is not your fault, and it never will be. Don't let.
I wish it was. My God, do I wish that I had the bankroll to move these things.
Sadnov has been doing this to people his entire life. This is what he thrives at, okay? His misfortune, all of a sudden he puts it all on top of you. Don't let him do that to you, my friend. You just trade the tape action. Don't think like Dylan said. Just trade.
Chris, it's your chance to be a hero here.
I'm not a hero. I'm a victim of thinking. You know, I had no problem in July being an idiot bull. But then there comes the 93rd percentile of CTA positioning and seasonal volatility for August. And I got spooked.
Cautionary tale. This is what thinking will get you.
That's right. You're 100% correct.
I mean, I was short an iron condor in ES coming into this week, thinking like 62.40 up to 64.60 could hold. Today's outside the range. We're looking at 40 points for CPI. We got 60 something. Yeah. So see you at 6,700, Tom.
Yeah, no, I'm not seeing it. But Dylan, this does raise an interesting question here. When is thinking valuable?
I don't know that it ever has been. In fact, every terrible thing always starts with "I thought."
Right, exactly. So, thinking
why,
is.
How did it? I thought. Oh, you thought. See, there's the number one issue. You thought. I mean, I did so much thinking in my younger years, I nearly lost everything. And just as a result of thought. I thought it was a good idea to get married. I thought it was a good idea to open my mouth on television. No. I thought it was a good idea not to buy Bitcoin at 1 cent in 2008 when I was the heroic rhetorician of the counterinsurgency. I'd have like $47 billion trillion right now if I was like Bitcoin. I'm going to buy this. This is the stupidest thing I've ever seen in my life. I still think it's stupid. Anyway,
there's a big difference, Dylan, between I thought it was a good idea to get married and I thought it was a good idea to buy Bitcoin. Those are two.
I don't know if there is. I don't know.
Those are two very distinct things.
I'm not speaking for Dylan here, but they hurt just as much. I'm not.
Yeah, I don't know. Either way, it's not. Either way, it's not good.
No, they're not even close, Tony. One you miss out on, the other you lose half of. There's a big difference.
Well, we just wait. Bitcoin can take half at any time. So.
Well, I can't believe you didn't tell Ilya that you just made 4 handles on your NASDAQ. Give him one of these. 4 handles. Anyway, thank you for your time, guys. Overtime is next. Peace.
Could have made 8 handles if I just held on.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
CPI comes in on the screws and non-farm payrolls may be canceled. It's Tuesday, August 12th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, taking you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. What a day it was for U.S. equity markets. S&P 500 clocking a move up to a new all-time high, right around 6470. The NASDAQ breaks through 23,900 here. CPI comes in right on the nose, 0.2% month over month for the headline and 0.3% for the core. While there's evidence of tariff-induced inflation, it's not running away, and quite frankly, weakness in other areas is paving a path for a September cut, possibly. Well, that's if you ignore the Fed speakers this afternoon who said that they're still not convinced a September cut is possible. I digress, though. Looks like we're back in reflation territory, gentlemen. Economy's still holding up. We're going to get rate cuts. Bonds break down today. We have dollar getting hit hard as was pretty similar actually to what happened in September last year after the Fed cut. Dollar doesn't really begin its climb until October. I digress though, Dylan. You deserve the floor. We've been talking and thinking far too much around here, my friend, and you have not.
I mean, I almost feel like I hesitate to speak because words tend to become correlated with thought. And if I speak too much, I'll get accused of thinking.
Should we sit here in silence for the next 55 minutes?
Quietly sit here without any thoughts in our head and just enjoy all the money we're making. No, I mean, listen. The problem with thinking, as we've discussed at great length, is that it leads to rational analysis of a potentially weakening economy, a potentially slowing economy, all these potential liabilities that ultimately are overwhelmed by basically trader investor sentiment. And I think you said it kind of perfectly there just a few seconds ago. The combination of sort of the overwhelming optimism on the artificial intelligence side, combined with the optimism for the rate cuts, put us in a tough place to be short as a worldview. Even though again, as I've said, I feel like I could make a great case for being short, but I feel like that's why I kind of make my joke about thinking, because once you're short, you're kind of nowhere because you're up against this sentiment issue, which is the real problem that we have right now.
It's a sentiment issue, but everyone's already long. Right. I mean, we discussed this earlier today, and let me explain, but UBS just put out their new report. CTA exposure to U.S. equities is in the 100th percentile now. Never been more long. Everyone's fully invested, and yet it doesn't stop the market going up today. I can't help but see that we have thus far maintained the rally that's been in place, the channel, Dylan, that we were watching last week and the week before. It carried us here since the U.S.-China trade war detente over in Geneva, Switzerland back in mid-May. Mm-hmm. I'm just looking at this. This is just very simplistic. We have a range. What's the size of the range? If we break out, add it to the top. If you break down, subtract it from the bottom. We could hit 6,700 here by the third or fourth week of August. And that would not be obtuse given how the path of travel has been going back to mid-May. So, Ilya, why is the market not caring at all about anything?
Well, I think it's straightforward, actually. I did not think this is obviously what we'd get today, but the market actually reasoned that this CPI data meant that a September rate hike, or rate cut rather, is more likely rather than less. If we look at the pricing for the latest in Fed funds futures, it's very clear. The likelihood of a rate cut in September today is 94.4%. Yesterday, it was 85.9%. The important thing between those numbers is that 94 is higher than 86. And so the markets are more convinced after this data that the Fed has enough clearance that essentially they will have the ingredients that they need to cut in September, which is, of course, what the markets want. They want the Fed to get on with it already. And the most important aspect of today's data was, will they get data that allows them to do it? And they judged, looking at this data, that yes, there is the fastest goods inflation that we've seen since June 2023. Yes, that goods inflation is growing, whereas services inflation, although higher, is diminishing. And they judged that although this is certainly at the core a 5-month high on inflation, it's not the kind of thing that's going to stop the Fed from doing something on stimulus in September. And I thought that was really it. And if you looked at the Russell, it's at its high, but very clearly much more alive today than it's been in days. If you look at the S&P, it's at its high. But if you look at the NASDAQ, it's actually taken that high out. And so, as we were just saying on last call, in the spirit of not thinking and trading the price action, if my assumption was back when we saw these highs on July 31st and into the beginning of August, if the assumption was that's a top, let's test that theory with a small short. That theory has not been invalidated in the S&P. It has not been invalidated in the Russell, but it has been invalidated in the NASDAQ. So the only thing to be done here is to get out of one's NASDAQ shorts, if one has them, which is exactly what I did.
The technical path here, though, I mean, if we're going to see the NASDAQ, which should be the leader, it's the tech. It's going to pull everyone along. But I'm just thinking if we're forget all the narrative, we're going to look at this purely technical. The NASDAQ's closer to channel resistance than the S&P 500 is.
Yeah.
And it would stand to reason that the S&P 500 and Russell, if we're really seeing a market move around this rate sensitivity, that cuts are coming, and whether or not that fans more inflation, be damned, because it's going to boost asset prices at the end of the day. At least Russell companies are going to have lower floating debt obligations, and they'll have a chance to be more profitable. So perhaps this is the jumping point for a breadth expansion, which quite frankly had been lacking in recent sessions. You can look at RSP today, the equal weighted S&P 500. That's up 1.3% compared to the big guys, 1.05. QQEW, likewise, 1.24%, basically on the nose for the headline one. But it ends the window. There was this window here where it's constantly the market cap outperforming the equal weighted. It was MAG 7, and then everyone else was kind of struggling. You're seeing that unwind a little bit today, Dylan. You're seeing a little bit more spreading of the love here. And I think we got to go back to the July playbook. I mean, for me in the NASDAQ, I have not touched it. I have not touched it since the end of July. So I really haven't missed out on anything. It had its big spill lower. It's about 120 points from where I got out at the end of July, but it's now broken out. It's just got to look out 4 to 6 weeks and say, hey, let's look at 25K, I guess. Can I entice you into that, Mr. Redigan?
I agree. I mean, yeah. I mean, I don't even think again, I believe you have to be long and get longer until proven otherwise. I sound like Ilya in reverse here, but I really believe. I mean,
it's a beautiful thing.
You can't argue with the fact that it is not proving otherwise here. So what can you do? I mean, you can have a question as to whether you want to be long or you want to not participate. If you get a breakout in the Russell here, it isn't near its record highs or setting record highs. So ostensibly you have more room. So if you wanted to get long something and you thought that, you know what, I don't want to get long the S&P at the highs. I don't want to get long the NASDAQ at the highs. From a trading perspective, and again, I want to be very clear in separating the trading perspective versus the investing perspective. The investing perspective, holding these things for the AI supernova to fully unfurl over the economy over a period of 3 to 5 years, something like that, obviously that's a different bet than do you want to tactically buy the NASDAQ here for the next 45 days. So just as nothing about this says that the NASDAQ is turning, nothing about it says that it's going to necessarily rally up a storm in the next 45 days. So
I'm just so pissed at myself that I've missed this.
So if you have some sort
Too
of
much thinking.
Did I tell you?
I'm saying, so if you're leery of saying I don't want to be a tactical buyer at the highs, then the Russell lets you be a tactical buyer not at the highs.
Well, here's the good news. If you like to look at sector rotation, today is the day for you to find zero warts. The worst performing sector today is staples, which still rose by 0.28%. Real estate, utilities are down there as well. Okay, healthcare near the bottom. Up at the top, home builders, regional banking, banking in general, home construction, metals and mining, retail, telecom, semiconductors, biotech. All that early stage growthy stuff, Ilya. And here's SMH.
Yeah.
2 days after the Trump administration slaps NVIDIA and AMD with a 15% VIG on their sales to China, the market says these companies are more valuable than ever, which Dylan, I think, comports the rate cuts, but also you're going to get looser monetary policy, and we're going to have trade open with the second largest economy. You're going to have 85% of a pie instead of zero. That the layer of infrastructure that undergirds the global AI arms race is going to be built on American technology. That's a good thing, isn't it?
I mean,
so we should be rooting for that outcome. From a trader's perspective, what's the news?
Which outcome? I'm not sure I'm tracking. You're saying we should be rooting for the tariffs in this context? Is that what you're saying?
No, we should. If you are someone who's been long tech stocks, I've seen a lot of people quibble about the fact that they have to give a 15% VIG to the U.S. government. And we may have political economic considerations to discuss, but from a trader's perspective, our job is to identify a situation and predict an outcome. And we make money whether or not we correctly predict that outcome here. So if you're a trader right now and you see that they still have open one of their biggest markets moving forward, and China's going to build their AI infrastructure on top of NVIDIA chips, stands to reason that NVIDIA chip demand is going to be pretty high moving forward. So as inference grows, you need more GPUs, and the more GPUs have, you can do more inference, which invites higher electrical bills for rural people in Pennsylvania and New York. But that's a different problem.
Or is it we have this folks? I think they're folks, not more than people.
I think that also constitutes a person, Mr. Radigan.
A folk.
Very elitist of you. We'll move on. So we have this exuberance here. I still think that we are chasing the sun, but there's nothing that says anywhere in this market performance that should be doing anything other than going back to riding the rails higher, Dylan. And kudos to you for sticking it out during that jobs market blip at the start of the month, which spooked me because I looked at too much data and thought too much about it. But by the
don't worry, we're going to cancel all that.
I mean, there's nothing like a bunch of data to get you to thinking.
Well, the good news is we're not going to have to do much thinking moving forward.
Thank God.
There's a new economist, EJ Antoni has been set forth to replace Merrick McCaffner, mispronouncing that name probably, from the former BLS commissioner. According to Axios and others, this gentleman is saying that we should suspend the jobs report entirely, Dylan. Forget seeing bad news and bad numbers. Bad numbers don't exist if the jobs report doesn't come out. Now, I understand there's going to be the quibbling. If it's not accurate, there's all these revisions. Why should they report it in real time? Why not do it quarterly with more accurate info? Sure. But the jobs data has been bad. And suspending the jobs data at a time when it's been looking worse, I don't know, Dylan. This all just seems like, I saw this headline today and I said, are we really doing this? This is all kind of crazy.
I don't take it that serious. I mean, I'm sorry to be sort of, I don't take this very seriously. I think that, I believe that there will be no suspension of the jobs report. Like this is clickbait. That's what the kids call this, is clickbait. Obviously there is no world where there's not a jobs report. One, and two, there's no world where the jobs report is not a sloppy, messy, miserable number. It's always been a sloppy, messy, miserable number, and it's easy to criticize, and it's always revised. And I think Trump is just sort of exploiting that to his benefit, because it's in general to Trump's benefit to diminish the perceived credibility of all data or all facts, because Trump likes to exist in a world where what he says is what is true, and the only thing that can potentially contradict his preference to have what he says be true is some other observable fact. And so the degree to which he can sort of compromise the perceived integrity of anything is to his benefit. But I don't believe that that means that he will actually suspend the jobs report, or even if his nominee wants to suspend the jobs report. It just doesn't.
You can say it doesn't matter.
I don't. What I believe doesn't matter is the rhetoric. In other words, I believe the employment market. It is empirically observable that the rate of employment, the compensation offered for employment, and the demand for labor is one of the most fundamental economic economic gauges or components of any economy on earth. To not measure it is not an option. Let's say the government says they're not going to measure it. Let's say that, then it'll just make the ADP number or some other private market number more important. Like it'll just be to someone else's. There will always be a measure of the jobs market, I guess is my point. Even if in the sort of most extreme expression of the United States government deciding they don't want to measure it, it will be measured in a way.
I bring this up because I could see this becoming something that people say, oh, I'm not going to, it's part of the wall of worry for stocks. We're still going to have jobless claims data. Those are collected on the state level. And there's a lot of research out there that would suggest, and I'm not saying I necessarily believe in this, but there are data points out there to suggest that following jobless claims as a recession indicator is much better than following non-farm payrolls, because jobless claims are released weekly and they're based on actual applications to state labor departments. Whereas the non-farm payrolls reports have to be revised a few times before they collect a big enough sample to make an accurate assessment. Mm-hmm. So, Ilya, even if, let's just say, run through the exercise, we lose non-farm payrolls for a month or 2 or 3, looks horribly politically. There are other ways for us to infer this data and to get a gauge of what's happening.
Of course.
Right?
The markets will just look elsewhere. They'll look at the employment components of the PMI numbers. They will look at jobless claims. They will look at other things. The markets will find a way. The issue is that you do this and you score political points, in the sense that the next time that you go out there and you say this is the greatest economy ever, and people go, well, says who? And you go, well, we don't have data to say otherwise, not official data. And if people then turn to ADP, well, ADP is easy to cow because it's a private company and you're the government. And as the Soviet saying goes, the government always has one round in the chamber extra. So you look at this and you go, okay, well, look at how the administration has been able to cow other companies into basically saying what they need saying. They surely would have no problem doing that with either ISM or with ADP or whatever else. Obviously, jobless claims then become just another thing that can be canceled if need be, if it tells an inconvenient story, et cetera, et cetera. It's a slippery path. But will markets still find themselves a gauge? Of course. They'll find something.
Dylan, let's just get rid of all the Trump-related BS in the market today. Trump told Goldman Sachs CEO that he should fire their chief economist. I don't recall another time a U.S. president telling a bank CEO how to do their job. I'm certainly thinking how that would be perceived in the
More
Obama
so
era.
the other way around.
Yeah, right. Are we in the loony bin yet?
My question is, I don't know. I don't think people take Trump seriously.
Is that why Goldman's up 3.36% today?
It'd be one thing if like a president that was taken seriously was saying these things. Then I could understand where people are like, well, this is a real concern. The president's trying to manage the staffing at the bank. It's crazy.
He called out Goldman. Goldman was the best performing bank today. Jamie Dimon wasn't called out. JP Morgan's only a wimpy 1.13%.
Do you think people take Trump seriously when he says these things?
Yeah, I do.
Do you think?
Do I take them seriously?
Going to fire their economist because Trump said this?
No, but doesn't it speak to this greater level of exerted centralized control or effective control over the economy? Or attempts to sway the economy?
No, it just speaks to he is a known quantity. This president is a very transparent and known quantity. And the only thing that's unknown is the degree to which his intent to have total centralized control of all things, his ability to consolidate power is actually achievable.
Were we overthinking things yesterday or underthinking things yesterday, Dylan? We were joking like, well, if they're replacing the BLS commissioner and the BLS replaces, does the CPI report, why do we bet on a hot number? Should we be that kind of cynical people around every federal?
The numbers are rigged.
I think a trader has to be
by the
cynical.
president.
Yeah, if it's going to be a number and it comes out and helps Trump make the case for rate cuts, shouldn't we assume it's going to land in that corner for the next few months? Like jobs will be good, but not great. And it's going to show slowdown, but not weakness. CPI will come in on the screws. Claims will edge up, but not scare anyone. It's kind of like our CEO strategy. Shouldn't we just be looking for all the CEOs whose companies need to go to the White House?
The numbers
tariff
are
exemptions?
just a scripted sequence.
I'm saying, should we be that cynical? Because that is something, if I look on Reddit, I would encourage actually, chat, go look on Reddit. See what people are saying in Wall Street Bets, on Super Stonks, on all the various little iterations of the investing and trading subforums there, and see what people are saying about the data. A lot of people are saying the data doesn't matter because it's cooked. There are people who are saying that the data is all cooked now. You can't trust it one way or the other. So just buy the dip because it's all going to be good. I'm curious because this is not just like one of my crazy thoughts that I feel the need to bring into the world and force upon the overtime viewers, but it's something that I've seen in other media forums among retail traders. So I'm generally curious to see how other people are approaching this particular issue. If you never trust
issue being the suggestion that all the data is a scripted,
unscripted, do you respect it more now, less? Have you ever cared? Does this make you want to look for different sources of data? Does it reinforce the view that if you're just a purely mechanical options trader, this is why I never looked at the data to begin with? Right? I mean, that's certainly a Sosnoffian perspective that I've talked to people about off air. He's like, yeah, you can't ever trust the government's data. That's why you don't look at it. You only look at the volatility.
Mm-hmm.
So I'm struggling.
It is a different thing, which is just the general that by the time you see he's not suggesting that the data is not real information. He's suggesting that the real information is already priced into the market before you can do anything. That's a different, maybe the same sort of headline, which is ignore the data, but it's a very different rationale for why.
Yes.
That's fair. That's a better explanation.
Yes. And also, and not to put words in Tom's mouth, but to my mind, it's that, and it's the markets are so, the markets will read that even when the markets respond to the data and there's some sort of an event risk component, it's not consistent in the sense that data up doesn't mean market up, data down doesn't mean market down, data down doesn't mean market up, depending on what the data is. There's not a consistent relationship. So you either do what you and I do, Chris, which is agonize and read and watch the flow for years and years and years and try to get a pulse on what the context is for a given piece of data. Like, oh, well, there's going to be a rate cut. Does that mean that the markets are going to go up and the currency is going to fall? Textbook, yes, but does that mean it's going to do that now, here? Who knows? It's context. What's already priced in? What's not priced in? How do you gauge that? What's the market's reaction function? Like, you can agonize about those things or not agonize about them. But if you're not constantly watching, if you're not looking at how the market's reaction function evolves and what you think that means, you might as well not look at the data, because there is no formula that says if CPI this, then XYZ markets that holds consistently over time. Or if the central bank does this to rates, that will happen. But that consistency doesn't exist. And of course it doesn't exist. It shouldn't exist. But because market consensus changes, things that are prioritized at a given time change. It's a liquid chessboard that we're operating with. It's not just the pieces moving, it's the board itself. But if you're not going to account for that, and if your critique of fundamental analysis or looking at this type of stuff is it isn't consistent, well, congratulations, you're right. It isn't consistent. Those of us that look at it aren't looking at it because we think it's consistent. That's not the thing that we're engaged in. But if your bar for its usefulness is it's consistent, don't look at it at all, because you're not going to get it.
The CPI report obviously extended beyond the equity market here. Bonds are a bit weaker. Dylan, I keep bringing up the reflation topic because I think of what happened last September. The Fed gave us 50 basis points of cuts. Stocks went up. Ultimately, the dollar goes up. U.S. Treasury yields go up in the wake of it. That's not to say that gold didn't continue to benefit. But here today, we get this set of data. It's in line. And I'd remind everyone, 0.2% annualized on a month-over-month basis is a 2.43% year-over-year reading. At 0.3% in the core, that's a 3.66% annualized reading. So we're not really in the Fed's target zone if we're thinking about cutting rates here, just on the top line numbers. So we're going to get rate cuts when inflation is above target. We just saw this movie last September. Are you worried about the bond market at all, Mr. Radigan, here? We have $2 trillion in new debt issuance due, plus this potential reflation coming down the pipeline. Why would we want to be long U.S. government debt if we're going to avoid a recession thanks to the largesse of the Fed's balance sheet?
Why would we what? Why would we what?
Ilya and I are long bonds because we think recession could be coming.
Right.
If we're getting cuts and we're reflating the economy,
right?
What rationale does someone have to be long bonds in the face of or ahead of $2 trillion of new net debt issuance to pay for government spending? Like, what's the bull case here?
I don't know if I can make it. I'm not sure I can make a bull case. I mean, I don't know. I mean, the issue with the bond, so the stock market is actually very easy right now just because of the overwhelming sentiment combined with the rate cuts. The bond and the dollar, for that matter, and gold and all the sort of super macro stuff that's normally in some ways easier to at least have an opinion on. I feel like, I guess I would put the question back to you, or at least sort of dodge the question and send it to Ilya and say, one, do you believe rate cuts are more likely today than they were yesterday in September? And if they are more likely today than they were in September, does that not support a long bond thesis as rates come back in? So, sort of academically, I suppose it does. Mm-hmm. But more than enough times we've seen, especially with the inflation kicking around and these other things, what's up is down and what's left is right. So I guess I would flip it over and say, why wouldn't you be long bonds? If you believe rate cuts are coming sooner, the probability of rate cuts are coming sooner than it was, which the market believes, why wouldn't you want to be long bonds?
Just from the contours of the data, it looks like we're going to see even higher inflation figures coming down the pipeline for the August reading. And then we're going to have an August print that gives you warmer inflation coupled with a Fed that then is going to cut.
See, this is what happens.
It's our thinking. Yeah.
See, this is what happens. You're doing it. You're doing it again. You're doing it again. Look at CME Fed funds futures pricing.
Well, hold on a second. Let's not think for a quick second then. If there's no thinking involved here with bonds,
Right.
4.0 IVR makes this not even worthwhile. ZN.
Cheap. Super cheap.
Well, if you want to be directional, yes. But in terms of like a typical tasty vol harvesting.
Oh, there's no vol to extract here.
There's not. This is not even worth it then.
There's just nothing.
Why are we talking about it?
Here's why we're talking about it. Because directionally, the trend holds. And at the long end, there is a trend, especially in ZB. It's flatter in ZN, but it's there too. But from the lows in May, there is a slow series of higher highs and higher lows. That is not upset by the price action today. The price action today was most impactful at the front end of the curve, where the bonds went up. And they went up because Fed rate cut odds for September increased nominally from, as we said, 86 to 94 and change. So this is where thinking gets you. They get the highest core inflation in 5 months. They get the highest core goods inflation, that thing you're worried about if you're worried about tariffs, since June 2023. Service sector inflation actually cools a little bit month on month. Goods inflation goes up by a good margin for a second consecutive month. That does not in any way prevent the markets from thinking a rate cut is more likely. Why? Don't start thinking now. Don't do it. So, how that makes any sense is not what I am going to attempt to unpick. I am instead just going to say, well, they think a September rate cut is more likely. La-di-da.
So then, the theory with that, if you think less, you buy bonds on the very premise.
They also seem to think Fed funds futures, the pricing, again, this is not an opinion.
Okay, not us thinking. This is the market sentiment.
This is the market's collective thinking.
Okay.
That next year we're going to get 3 cuts, whereas the Fed has only owned up to 1. So there's still more room for the markets to pull yields down at the long end. And you're not in that thing where the markets go, okay, they're going to front load everything. This is where the front end should be where the rate cuts are. And then at the back end, the thing is going to be higher because by the time you get to those maturities, by the time you're that far into the future, you're already into a new rate hike cycle after whatever's occurred. We're not there yet, obviously. And so if the market is still way more dovish than the Fed is looking out into next year, and the long end hasn't invalidated in price action that it's slow, arduous, annoying, but upward sloping trend is intact, then it's intact. Think less.
Dylan, can we change our focus here for a second? There was an interesting data point that I saw, and I want to go into a different realm here, sector-wise, perhaps an area of expertise for you. Saw a data point today showing that through the end of July, the TSA had logged record checkpoint travel numbers. When you have record checkpoint travel numbers, that's probably going to be good for some of the airline stocks, one would think. And you see today, airlines have a 7.27% boom per the Jets ETF.
Oh, thankfully, in the CPI numbers, this was one of the reasons CPI is up. One of the biggest contributors was the transport component in which airlines live.
Well, and I'm looking across the board. It just seems like travel in general had a really good day. You could go to Royal Caribbean. You could go to Airbnb. We could talk Carnival Cruise Lines. That's why I had a booking before BKNG. Is this the surest sign, Dylan, right? The fact that all these travel-related companies that require the conspicuous consumption of wealthy consumers to power their earnings, isn't this the prime example why we really shouldn't be so worried about the broader stock market right now?
I don't know if it's the prime example, but it's certainly a prime. I mean, I believe you are interpreting the data correctly, which is it's impossible to have this level of velocity in hotel rooms and airplane tickets and have the economy in trouble.
That's kind of.
I don't know whether it's a great idea to own the names only because of price valuation things, but for sure the internal metrics on the velocity of hotel rooms and airplanes is smoking. And there's rate leverage. You know, anybody who's booked a hotel room or an airplane ticket in the past few months is surely aware that prices are more expensive in general for pretty much everything. So it's not just that there's sort of occupancy rates or seat utilization rates are up, but the price per seat or the price per room key is also up. It is a boom.
And all of the adjacent stuff, by the way, just even anecdotally, but you can see it in the recreation price numbers in the data. But all of the adjacent stuff. I mean, I live in a major city. Chris, you're in a major city often enough. Dylan, you're in a major city that's not in the U.S. Even anecdotally, restaurants are full, cafes are full, people are out in the street. Life is there. Consumption is occurring. Now, when you look at the GDP data, it's occurring at a worryingly slow rate. And so you wonder kind of where the wall is. And I suppose we'll find out. We have retail sales and consumer confidence numbers later on this week. That's probably the biggest question of all, is can the Fed cut soon enough, and can those cuts appear in the real economy soon enough to backstop what appears to be a slow rollover in consumption? At least that's what the GDP data is telling us. But anecdotally, spending on services seems to be holding up.
It's holding up right now. I'm not sure if there's a ton of volatility in any of these stocks. I'm not sure there's a ton of volume to substantiate anything in any of these stocks. But again, across the board, American Airlines today, boom, 12.1%. Alaska Air Group today, up 9.95%. United, up 10.2%. Forget the problems in Newark. This is one of those little things we don't even talk about the travel or airline ETFs all that much here, but in terms of where the money went as a result of today's report, it's very hard to overlook. Regional banks, home builders, travel, things that Americans do. They borrow money to spend it and buy things when they're confident. They buy new homes when they're confident. They travel on vacation when they're confident. Dylan, I can't help but think the smartest thing that was said on air recently was when we all agreed that if the Trump tax bill is cutting taxes for the top 20% and raising them for the bottom 80%, and if 90% of the stock market is owned by the top 10% of wealth in this country, aren't we just giving the people who are playing in the stock market more money to put into the stock market?
I mean, haven't I been saying that? Haven't we been doing that? I mean, that's why you confused me.
It's been a hellish 12 days being confused, Dylan.
You confused me over the last few weeks with your bizarre and un-Vecchio-like caution and thought. I mean,
I'm tortured.
I don't understand it. This is coming from the man who declared in October of 2023 to go ape shit long and just cleaned house.
In the immortal words of Walter Sobchak, you're being very undued.
Yeah, very undued. That's right. What's the deal, Vecchio? Have you started using like soy milk or something? What's going on over there?
Oh gosh, please. Come on. No, I try to be a very thoughtful person in terms of how I look at how I trade. And the last few years, I just have not done well in the market on the long side in August or September. And the last few years, I've been able to mostly get out of the way. I mean, I did have a spike position on in the NASDAQ going to that August sell-off last year because Ilya was bothering me, but I held through it and it ultimately made money. So outside
I made money
of
on the sell-off, it's okay.
Right?
By the time that thing turned around, I was already out. Like a thief in the night.
It just hasn't been a good run. And so maybe, with the NASDAQ, at least I got out of the way. I wasn't there for the pullback. I didn't buy the dip. I haven't partaken in the rally. Now it's moved up to a new high. Is it too far, too fast? No, 25K seems reasonable if we just follow the preordained path. As we've been in since May, we're kind of on autopilot here. So next dip, we get a 2% pullback. You're going to got to stay on top of it right now. Whatever candlestick clustering there, Ilya, about that evening star on the 12-hour time frame. See you later. Invalid. Goodbye.
Nope. Totally invalidated. Good night.
There's nothing here to look at.
The cleanliness of the break in NASDAQ is made more clean because you tested that high over the course of multiple days, and you're kicking at it, you're kicking at it, you're kicking at it. You see the resistance work. 1 day, 2 day, 3 days. And then you get the break, which adds validity to the break.
It was eating all the supplies.
Recognized there was a barrier there. It showed you, I see the barrier. Today I see it, and now I see it, and now I see it, and today I'm punching through it. Good night. You don't see that in the S&P. You don't see that in the Russell, so I still have those on. But this one, good night. I'm gone. It ended up being a loss of less than 1% of equity, which is exactly the type of risk management that my naysaying of the stock market here requires. And by the way, the naysaying will continue.
Oh, we know. No, don't worry.
It will
we
continue, but it will continue in a responsible, risk-mindful kind of way, whereby those things that don't work will be cut without causing more than a paper cut, and those things that work will be scaled by as much scale as they'll take.
Dylan, it's not 1 penny anymore. But how good does this look right now? Are we thinking that crypto's the canary in the coal mine for all this? Ethereum back above 4,600 an ounce for the first time in several years?
Man, if I could be short anything, I'd be short crypto. I just think the whole thing is a boondoggle.
Because you didn't buy it at a penny.
I mean,
because it's uncollateralized, there's no enterprise. It's the whole thing. I would rather own a tulip bulb. At least then I get a flower.
I totally agree.
Gosh, this thing really is going a million.
We've both been totally wrong, and that's okay. I'm okay not participating in this, because if I was, it would eat a hole in my brain, wondering when is it time to finally get off the stupid pills. So I'd rather just not participate. It's fine.
Okay. I can't confirm this to be true to the audience, but if Ilya was a moderator at Buttcoin on subreddit, that wouldn't surprise me, which is the anti-Bitcoin.
I don't use Reddit.
It's the anti-Bitcoin subreddit. It's called Buttcoin.
Yeah, I don't use Reddit either, because again, if I allowed myself to engage in these conversations, I would have no time for anything ever, because I would be arguing with people until the end of time.
Well, it's not something that's broken, and we don't fix non-broken things around here. A few months ago, we were outlining a bull case in Bitcoin where I at least was thinking that this could be going up towards 135K. Simple measured move, swing lows that you have in August of last year, highs in January of this, back down to the lows in April. A, B, C, 100% extension gives you with 135,000 or so price target. In the short run, this is best expressed perhaps through IBIT, which in IBIT that translates to roughly $75. It's one of the reasons why for the past several months, I've been sitting in this position. Now, whether or not we're going to get to 75 in the next 38 days is another story, But I think that we have a very clear path here, Ilya. Just forget the ticker, just pure up, sideways, up, sideways. There is a clear cadence to this market right now.
Yeah.
And the cadence is
technically this is very clean. This looks very much like the kind of pennant flag whatever thing that you just had a few weeks back, where you have a thrust higher, sideways consolidation, thrust higher. Now you're back into sideways consolidation. You don't have the risk reward yet because you're still at the top of that consolidation. You haven't actually broken out. So maybe you wait for that to happen and then reload. But ticker agnostic, just looking at the chart, appears to be a market that wants to keep going. Maybe not. Maybe you wait to sort of action that view for better risk reward, but I'm obviously not going to participate on grounds having nothing to do with the technical setup, but sort of philosophical issues aside, I think the chart looks up and to the right.
Well, I mean, one of the reasons why I like technicals in crypto, and maybe this is not just a Bitcoin thing, but I really do think this applies to crypto more generally, is that the fundamental analysis is so difficult for people to all agree on for crypto. There's no like central touch point.
Yeah, nobody even knows what that means.
Well, I mean, I point this out because several years ago was it 2020 or 2021, I was tasked with giving a presentation to special group of clients internally. On-chain metrics, and I have it up here, on-chain metrics, you're looking at transaction count, transaction value, active addresses, fees paid, hash rate, and the amount staked, and then the staking as if you're doing proof of stake. The project metrics for some of these altcoins, you're looking at what's known as tokenomics and initial distribution, the white paper and the technology used. Okay. People generally fall back on market cap, liquidity, and volume supply mechanisms, but you just don't see any uniform set of metrics that people like to follow because, again, who really is basing a meme coin trading strategy around a white paper?
This is the whole thing. Have you ever talked to anybody that cites any of these things in actually doing anything?
Yes. And I think that like okay, can you point to me previous examples when this has led to this? Like, what's the fundamental precondition for you to believe in this indicator?
Yeah.
And sometimes it's like, well, 6 months after a Bitcoin halving, Bitcoin tends to peak for the cycle. Right. And that's something that has been fairly reliable. We haven't had a ton of halvings, but we're coming up to a 6-month window soon. So maybe Bitcoin is ending its next bull run. Maybe we get to 135, Ilya, and then we have a protracted slowdown like we've had after all the other halvings getting past their 6-month mark.
Maybe.
That's a compelling study that I should pull up here. We should put that on the blog. I digress, though. I still think if Dylan, if we're going to be running the NASDAQ hot, if we got a 25K target now, if we have an S&P that looks at 6,700 over the next few weeks, it's probably going to be bad news for gold and silver. Why on earth are you going to allocate to shiny rocks when the stuff that sings is soaring through the sky? It's probably going to be good for Bitcoin, good for Ethereum. So we're just going to keep running it hot. And if only to underscore why we're going to run it hot, Ilya, we had that trade data that came out talking about our trade balance.
Yes.
So yes, the U.S. government is indeed collecting a lot more tariff revenue. Here's the deal.
Of course it is.
The pace of government spending is actually faster. The increase in government spending is faster than the uptick in tariff intake. So our deficit is still widening out, even though we have all these tariffs in place.
Well, and also, who is the intake coming from?
We're robbing the Peters to pay the Pauls.
Right. We're robbing ourselves. This is just a tax. This is a tax increase. Like, you see this revenue go in, and the moment that the inside of your head says, I guess this was right, I guess this is going to pay for stuff, well, okay, so you're a believer in tax hikes. That's all. And you can be that. That's okay. But the moment you change your thinking and say this is not what this is, you're wrong. Because all that's happened is there's been a consumption tax that U.S. companies and consumers now have to pay. We'll see, by the way, in the PPI data to what extent companies are willing to continue to swallow it on behalf of consumers, because that's a big reason why the CPI numbers aren't much, much worse, because companies are eating it. So we'll see how much that continues. But the moment you think that this revenue is coming from anyone other than you, you're wrong. So, okay, I mean, yeah, there's a lot of revenue because taxes have been raised.
That's it. Well said. Dylan, I want to give you the final closing thought here today. It's hot here in New York. Probably time for a swim. Are you still going to be swimming in long? When do you get out of the long stock trade? I really wonder that's the question, because I know I'm about to jump back in with you.
The bane of my existence. I mean, that's a question. My entire history as a trader, if you want to call it that, is entirely based on not knowing when or how to get out. My marginal edge in getting in is average or above average. My experience in knowing when to get out, especially when something's working, actually it doesn't matter. Working, not working. My problem is my inclination is always just to keep staying in. It's like staying at the blackjack table until all the money is gone, no matter how far up you get.
You never walk away from a heater. What was I doing?
So certainly with this one, I mean, I feel like this could go on for the next 5 years.
Elliot, I think we kind of got to take a screw it trade here to, it's not going to get filled, but we're going to do it for the show sake. 35 DTE, 6,700, 6,750. That's going to give us basically a 10 to 1-er. When does this line up on the chart? August 22nd?
Mm-hmm.
Yeah. Dylan, I'm going to have to jump back on board here.
There we go. That's my boy.
Now, if tomorrow the NASDAQ breaks below its high, right, and the S&P 500 fails up here, because this is not going to get filled in the final 2 minutes of the day, so there's no point in putting it on now. But in the event that the NASDAQ is failing overnight and the S&P fails overnight, like I'll sit on it for a second. But if we pull back into the former resistance turn support, right? If we're all of a sudden looking at a market that's hanging around 83, 23, 80, 850, we've pulled back in tomorrow overnight and then we're just sitting there. That's the retest. It's almost like one of these that we've seen in recent weeks. Mm-hmm. It sounds stupid. I've missed out. I'm missing out. Short iron condor on the S&P has not worked. See you later. Short call spread on the Russell has not worked. See you later. Been avoiding things in the NASDAQ after being long for such a period of time. But now you have a new cycle high. So what are we calling it? The Icarus strategy. In the market for 5 days, roll the position just slightly out of the money and keep spinning the wheel until it works, because vol is low, volume's low, technical drift is positive. Volatility is, of course, the foundation for everything we do here at Tasty Trade and Tasty Live, I should say, rather, on air. 14.73 in your VIX right now. Ilya, we've gone over this metric hundreds of times. Mm-hmm. If we look at the performance on daily returns, downside risk, standard deviation of returns, when VIX is 15 or below, the single best thing you can do is be long stocks. It's better than being short a strangle or short a put spread or short an iron condor. It gives you a higher daily return on average with lower standard deviation of those returns. So you know what? Maybe we just go fishing. Maybe it's time to just follow Dylan into the supernova and just go fishing. So that's what I'll be doing. Hopefully I don't get burned up again. You're going to be back, though, in a minute. Wings. Yeah, you'll be back in a minute, though, for macro money. You'll break down the CPI report, I presume?
I most certainly will, and then we'll look ahead to PPI, which may be the next test of this thing, because it's not just the end result that matters. It's what went into the cake, and we'll see if that changes anything. It's been a lot spicier in recent months.
Well, overtime's out of time. You can go see what Ilya's cooking on Macro Monday next. So for Ilya Spivak, I've been Chris Vecchio. He's been Dylan Radigan. See you tomorrow, same time, same place, here on Tasty Live, right after first call. Good luck trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the open night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
It'd be nice? Nice.
The best part...
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because we're gonna, the reason we need to get there early is because we gotta start the tailgating on the balcony early because we're going on the field, most likely before the game.
You're going on the field, most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are gonna hold hands tomorrow before we start the show.
We're gonna take a quick 90-second break and come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Well, the stock market got to see that inflation data it was waiting for, and it got its answer. Not surprisingly, that answer is very clearly apparent in the price action given what we saw in the numbers. NASDAQ breaking to a new high, the S&P at its high, but certainly up. So what is it that was in this data? Why was this the reaction? We're going to take it apart here, take a look at how the markets responded, but more importantly, take a look at what comes next. Because perhaps the biggest question, as ever, for anybody that's actually participating in markets is, okay, so we got what we got today, and we can have any kind of academic conversation about it that we like, but the real question is, what has this market done for us lately? Where are we going next? That's what we're going to explore here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. Here's a view, first and foremost, on the day's performance to get a sense for what the price action told us this data was all about, because as ever, that is the most important of all the perspectives, and we can clearly see stock markets liked it. S&P up 1.07%, NASDAQ up 1.27%. The view on rates clearly seems to suggest that the markets read this to be generally supportive of rate cuts. We can see barely any change at the long end. In fact, a touch higher on rates there. But at the front end, the 2-year rates come in meaningfully. The 2-year down almost 0.9%. Gold basically doesn't go anywhere. Crude oil still doing its own thing, down 1.3%, but really not deviating from its recent ranges, just oscillating the past several days. The dollar, though, matching the overall mood here, a little bit weaker. Euro up 0.5%, yen up 0.2%. Bitcoin also taking a positive step here in the context of a generally risk-on day and a weaker dollar. So it seems like the markets looked at this data and said, oh, okay, this is fine. Rate cuts on. And on that basis, risk on, dollar down. So what did this data have in it that took the markets in that direction? The headline number comes in a little bit softer than expected, 2.7% versus 2.8% expected. The core reading comes in a little bit hotter, 3.1% versus 3% expected. So choose your own adventure. That's really the name of the game for this jobs report, because if you wanted to be concerned, as the Fed is, about tariff-based inflation, you got your report. But it wasn't consistent enough for the market to conclude that it will derail a September rate cut. And in fact, when we look at the pricing, we can see that the likelihood of a rate cut in September has increased today versus yesterday. Here was yesterday. We were sitting at about 86%. We've now gone up to 94%. The likelihood that we stay unchanged went down. The possibility that we might get a relatively larger rate cut fallen off the menu here. And indeed, we can see that this spook in and around the U.S. jobs data and sort of adjacent things that got us thinking that ahead of the jobs data, that Fed announcement and sort of things that revived a more hawkish perspective. We can see here we were much closer to 50-50 a month ago. Well, that is nowhere on the board here. So, in the context of whatever occurred here, the market said, yeah, this September rate cut is going to happen, and its chances have become likelier. If we look at the overall outlook for policy, it hasn't changed very much. Markets are still at about 50 basis points for this year, and they're still at about 3 rate cuts for next year. That's 2 cuts this year. Ostensibly, that's September, and then another one sometime either in October or December. That's when the meetings are. And for next year, markets are at 67 basis points, which essentially comports to at least 2 cuts. That would be 50 basis points. And most of the way to another cut after that, to a third cut, such that the likelihood of that third cut is about 68%. So better than even. Needless to say, what this does is continue to mark a dovish contrast with what the Fed's own thinking is. As we've said before, the markets and the Fed are basically on equal footing for this year. The market thinks 50 basis points. The Fed agrees. 3.9 would be down from 4.4. That's 50 basis points for this year. For next year, however, the Fed sees just 1 additional cut, and the markets are on the dovish end of that still. So the lens through which we are looking here seems still to be what the markets want is more easing. What the markets want is more rate cuts. They don't necessarily buy the Fed's argument for delay. And their thinking is all of the cutting that the Fed is not going to do this year, they're going to have to play catch up with next year. So at least that much remains unchanged. Now, what was it in this inflation data that got them thinking that this cut is coming? Well, looking at the internals, they continue to look generally supportive of a status quo. Most inflation still sitting in the service sector, but the share in goods continues to increase. In fact, at a contribution of 0.22 percentage points, this was the biggest contribution from the goods sector to overall inflation since June 2023. Moreover, the thrust of where inflation is coming from is very clearly more potent in goods than it is in services. So while services continue to be the biggest overall component of inflation, it actually diminished in terms of its contribution to the headline a little bit, whereas the contribution from goods increased. This is not to say that services didn't power the increase in inflation. It did, because it's a much bigger part of the whole. But there does appear to be some kind of a handoff here, and the kind of handoff that you would expect were you to be concerned that goods inflation is going up because we've increased sales taxes on those goods. Because lest you get confused, that is exactly what tariffs are. They are a sales tax on imported stuff. That, of course, makes the price of imported stuff go up. And so, not surprisingly, the inflationary thrust is on the goods side. Moreover, if we disaggregate CPI, we set shelter aside by itself because it is something of a separate component onto its own. Obviously, this is not as responsive to the usual sort of import-export and certainly tariff dynamics that you might expect. So we take housing and set it aside. We look at core goods and core services, excluding housing, and obviously in that they are core, they are also excluding the price of stuff set on global markets, food, energy. Okay, what do we see? Inflation has been going up in both instances, goods, services. In goods, it is now the highest in over 2 years, going back to here, June of 2023. In services, it's also increasing. These year-on-year readings are also increasing, but this one is only the highest since December of 2024. Moreover, if we look month-on-month wise, that's the bars, not the lines, goods increasing in July, services decreasing. So if you wanted to see that goods are becoming a bigger part of inflation because of tariffs, you can see it. Tentatively, early days, but you can see it. If you look at the Fed's perspective on the level of force behind the trend, as it were, you can see what happens to these annualized readings that the Fed looks at, where it takes the 3-month reading and annualizes it, the 6-month reading and annualizes it, both headline and core, to get a sense not just at the year-on-year readings, but where the immediate thrust is. And you can see that, indeed, month-on-month, core inflation has been going up, and it's been going up since May. It went up in June, it went up again in July. That hasn't yet shown up in 6-month core, which is holding relatively steady. If you look at what's going on in 6-month headline, it's actually continuing to cool. In fact, it's been cooling since February and continues to. And if you look at the 3-month headline, it popped in June and hasn't really gone very far in July. So if nothing else, what you get here is kind of a mixed bag. The 6-month trajectory for headline still is favorable. For the 3-month is starting to tell you that maybe things are starting to turn in the wrong direction. But it's not convincing and it's not consistent. What you certainly don't have is a clear sort of inflationary ascent here. Instead, you have a descent into what, broadly speaking, looks like a leveling out, but not exactly a meaningful melt-up. And so with that, it looks like the markets go, okay, well, nothing has changed, but time is moving. And this is another piece of data that then will help to get us to a September rate cut, because as long as this isn't going the wrong way, the Fed is going to start running up against its calendar, and it only has but so many meetings to do 50 basis points, which it's been arguing for all year. So why wouldn't that cut occur? Especially as you get more dissents on the FOMC. Now, what then becomes interesting is whether these numbers can be taken at face value. And by no means are we saying that the data is somehow corrupt or manipulated. All that nonsense, I think, is generally irrelevant. for the most part, because you can have an academic conversation about the veracity of the numbers, but from a trading perspective, everybody just needs a single yardstick. And as long as everybody's operating from the same yardstick, that's what markets are going to do. And the yardstick hasn't changed. The quality of the data in that yardstick may have been degraded, and almost certainly is degraded, because we're using about 30% imputed values in CPI now, which is way off the charts for the historical norm. Even during COVID, it was lower than this. And when you reduce staffing at the BLS by significant amounts, when you cut BLS resources, you end up with less of an ability to get accurate data. Shock of shocks. But from a trading perspective, if the yardstick is there, that's what the markets will use, and just operate as though they will take it at face value. No, when we say whether this data is real, what we mean is the absence of greater inflationary risk from the tariffs, though, of course, as we see, it's not like it's not there. It's there. But it's not anything scary at this point. And so the question is this absence of a much stronger thrust actually reflective of the tariffs being relatively benign, or is somebody else footing the bill? And in this sense, we're going to be paying close attention later this week to PPI data, the Producer Price Index, a measure of wholesale inflation, to see if we can tease out just how much we can take the end CPI result at face value. And you can see the expectation here is higher inflation across the board. Higher for the headline from 2.3 to 2.5, higher for the core from 2.6 to 2.9. Month-on-month changes all expected to be positive, whereas, of course, in June there was standstill. And we've already started to see goods inflation creep into PPI. This is PPI final demand, and you can see that over the past several months, it's already started to arrive. In fact, in June, we had the highest wholesale goods inflation since January. So it's starting to happen. But much more importantly, at the beginning of the curve, here, what we find is that we have wholesalers eating the tariff cost. In fact, what you see here, this is note, whereas this is final demand, this is intermediate demand. And what this is the price for trade services. In this case, this is the cost of doing business at the front end of the curve. This is margins for wholesalers. And at the intermediate demand level, this is the very beginning of the US-based supply chain. So stuff arrives from wherever it arrives from. The people that receive it and begin its journey through the US supply chain, be it to the distributors downstream, which then deliver it to stores, be it to people that need whatever inputs have arrived to then make final goods. This is the very, very beginning of the supply chain and the margins there. And you can see massive margin contraction at the start of the year. In fact, the sharpest that we'd seen since going all the way back to 2013. So we're talking a 12-year reference point here. And over the subsequent months, things haven't maintained the cadence, but they've certainly maintained the direction. Margins continue to deteriorate. What this is telling us is that there's your inflation costs. They're just being eaten. They're being subsumed into margins at the beginning of the supply chain. ostensibly because firms at this level of distribution do not want to undermine demand downstream, and so they're not passing on the costs. They're eating as much of them as they can. And even then, by the way, as we can see here, this is increasing. So goods inflation going up at the wholesale level, goods inflation going up at the retail level. So it's starting to break through. But one might surmise it would be breaking through much more so if you were to have a straight pass-through here rather than these companies eating the costs. What does all this mean? Well, we can see here that we started this year with a growth scare around the introduction of the Trump administration's tariff policies. We know that this happened in the context of a growth scare because if it had happened otherwise, it would have happened back in November during the election cycle, and obviously it didn't. Markets held up here. In mid-February, the S&P 500 started to go lower. Against that backdrop, not surprisingly, Fed policy expectations became more dovish, all around this idea that what you'll have is some sort of a growth scare on the back of these tariffs, and maybe even something structural. That would be this panic right here. What we've seen since then is that we've basically held on to all of the net easing that we're looking for. It's reshuffled somewhat from being mostly, oh my God, we're going to need it in 2025, to no, it's going to be mostly next year as the Fed is catching up, since they don't really want to jump the gun here. Stocks have obviously recovered because, in large part, whatever institutional and market structure risk ran out of steam as a concern here once it became clear that the administration is not, after all, immune to market discipline and will put tariffs on even a 90-day hiatus when the market gets quote-unquote yippy, to borrow from the president's terminology. Sentiment has obviously recovered, but rate cut expectations have not moved back up. So it's not like we are seeing the case for rate cuts be diminished. Sentiment is just improving. And so one might surmise that if the PPI numbers told you something whereby this had to move in and you had to diminish the case for easing, then stocks wouldn't like it. But for the moment, that isn't what we're looking at, and ostensibly, as long as this continues, stocks remain in the trend that they're in. We're just going to have to look at that PPI number and see if it gives us any rationale to think otherwise, because it can, depending on what's in it, suggest that what we just saw in CPI is smoke and mirrors. And on the flip side, there is the US dollar. And this is perhaps where things get a little bit more interesting. As the outlook has become more dovish, the dollar has weakened. But as it's anchored around these dovish levels basically since June, the dollar has stopped falling and now appears to be trying to carve out some kind of a bottom. And so, were there to be one takeaway from this current environment, it is that whatever is happening with near-term rate cut expectations, even when they get more sure of themselves, as they appear to get today, the overall outlook for policy is relatively stable, and the dollar's sell-off seems to be leveling out against that backdrop. So whatever one thinks of stocks, the dollar at least seems to be showing signs of what could amount to a trend change versus this blistering sell-off in the beginning of the year. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime. That's a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go from there. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays. On the news and insights portion of tastylive.com, putting all of this same analysis into writing rather than video. Commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Today is Tuesday, almost midday of the week in the market. We had a pretty aggressive sell-off today, and then got bought back up like nobody's business. But we'll get into all of that, get into some of the topics we got for today. But before we do that, Gus, my brother, how we doing today?
Doing well, yeah. All-time highs. You know, I'm Mr. Long Delta, so anytime we're hitting all-time highs, these things tend to go well for me. Sophos, you were making me laugh and chat with your thrusting commentary earlier. We acknowledged that pre-stream here. Very funny stuff. But yeah, and we had it's a kind of a sleeper earnings week this week. You feel like you're done with earnings season, but there's been one call every day that has kind of, I guess I should say, there's been at least one large company having a call every day. We had Applied Materials go off, Kava and CoreWeave go off today. CoreWeave, obviously a highly discussed name right now. So yeah, it's been interesting, but it hasn't really brought much vol, and I'm here for it.
Yeah, I mean, I'm pretty bullish on Kava. Kava was one of those was one of those food spots that was like a good replacement for Chipotle. When it's like, I've been hitting Chipotle a lot. Kava seems like it's a little bit more polished.
I think people don't talk enough, and maybe Chipotle didn't even do it, but who invented the Chipotle model? Like where you walk along, is it Subway? Because Subway is the other one that I feel like is really early to market with that.
I think probably Subway, but who did Subway take that from? Maybe like the buffet style? It reminds, I know it's not buffet style where you don't serve yourself, but in the way of where the
It's cafeteria style, yeah.
It's cafeteria style.
Yeah.
So maybe it's been around for a while.
Yeah, perhaps.
Yeah,
If
probably
anybody has any insights, please let me know in the chat.
I think it was Subway, though.
What?
Now that you mention it, I think it was Subway.
Have it your way, man. And now somehow
Is that Subway? No,
that
it's
was
BK.
Subway. No, because Burger King stole it. It used to always be
BK.
Subway's thing.
Have it your way.
That was always Subway's thing. Like the have it your way, $5 foot long. Like you don't remember those
I remember
commercials?
the have it your way, but like the tonality of it.
Yeah. Burger King has taken this over for sure.
Subway was like 5. I'm not even gonna get into it right now.
Well, no. But they had the Subway would say "Have it your way." That was like their thing.
Was it?
Yeah. I remember
it makes
that.
sense because it's Subway. But
I remember
didn't
like
know
the
it was
commercials
Subway.
that were like specifically catered towards kids on like Disney Channel and Nickelodeon and stuff. It'd always be like a kid walking along, then it'd be like a kid's voice at the end. They'd be like, "Subway, have it your way." That's my child voice. So I think that was passed around a little bit. Are they both same ownership group? I don't even know.
I mean, they're both really successful.
Burger King, an independent company. It feels like none of the fast food companies are.
Yeah, no, we'll shift gears there though. But no, Kava absolutely blown up over the last few years. They've been killing it with their earnings too. Started having Kava a couple years ago. It was a nice replacement for Chipotle. Then after a while, after like the 4th or 5th time, I got absolutely tired of eating Kava and didn't go back for like another year. So it's like Chipotle gets very redundant, but it's consistent. I know what to expect. I know what I'm getting every single day, every single week if I go there. But
yeah,
Kava's doing well. They're killing
Kava
it.
was certainly a popular spot in College Station, while I was in school. And we also had another place, Piata. You ever heard of Piata?
What kind of spot is that?
It was the same style, but it was Italian food. It was Piata Italian street food. But you like walk along and you could make a wrap or like a pasta bowl or whatever you choose to do. But I feel like that lends itself very nicely to Italian food as well.
Have it your way with Subways?
Thank you, Sophos. I appreciate the reinforcement.
How does BK get away with that?
I don't know. Did Subway never trademark it? Is that maybe it's too broad to be able to get a trademark or something?
Because there's no way. Anyways.
Yeah, I don't know. I would think it'd be common law trademarked or something, but I guess that's over a decade ago too. I don't know.
We'll see.
Maybe they bought it.
They might have. A little bit about pay-per-view though. Before we get into today, UFC or boxing, what do you prefer to watch and why?
Oh, UFC for sure. I just think that there's more to it. I mean, that's kind of always been my view, is that in UFC they do what they do in boxing and then a whole bunch more as well. Right. And I mean, there is, I suppose some people find the wrestling aspect of UFC to be very boring, and we have a lot of current champions that are wrestlers and are lay on top of you type of guys. Yeah. They just want to get you to the ground and lay on top of you the whole round. And I understand that not many people are into that. I like the technical aspect of BJJ, and yeah, I've been a big UFC fan for maybe 3 years now, I would say.
Yeah, I've been getting a little bit more into the boxing scene. I've been a little bit more of a boxer fan, but one thing those two have in common is the pay-per-views.
Yes.
These guys are mostly getting paid, or their big paydays are coming from those pay-per-views. We've seen Gervonta Davis and Ryan Garcia whenever they marketed that fight. We're seeing these fights marketed on social media left and right all day. Ryan Garcia clearly has a massive personal brand, and he came in, I forget what he was, top 3, I think, for pay-per-view sales and what they grossed after their event. But it seems like that model is changing. So what are we getting into today?
Yeah, we're going to talk about this Paramount acquisition of UFC and all the implications that go along with that. Perhaps we're seeing the start of the death of the pay-per-view model as a whole.
Yeah.
But yes, for those unaware, Paramount, which is now Paramount Skydance, announced yesterday that they acquired the streaming rights for the UFC. They're going to be abandoning the pay-per-view model. All UFC fights will be available to Paramount Plus subscribers at no additional cost. This is a major move for the UFC. It's the first time they've ever moved away from the pay-per-view model. And Paramount is paying them $7.7 billion over the next 7 years to hold these rights. So yeah, $1.1 billion a year. But yeah.
Was this a long time coming?
I think so. And I mean, I've been saying this about the UFC for a while, and I think it extends to boxing as well. It's really tough to grow the sport with that kind of barrier to entry. If somebody wants to, get into football or baseball or any other sport, you can just watch a game. Sometimes you might need a streaming service to do it, like EPL is on Peacock right now, for instance, or that sort of thing. But holistically, you could just turn on the TV and watch it. And I mean, especially before streaming services, that's just how it was. But these two sports have always been pay-per-view forever. And I think that really stunts your growth, especially among young people. Like when I was 18 in college, I'm $80. Are you kidding me? That's like 8 meals at Taco Bell.
100%.
So yeah, there's no way I'm going to spend that just
It's funny when you're in college or when you're in school, you think about money so different. You know what I mean? We'll go ahead and jump into this first slide here and gain a little bit more context. But Paramount's Knockout Punch, pun intended, formed from the merger of Paramount Global and Skydance Media, secured exclusive U.S. rights to the UFC events beginning in 2026. And you can go ahead and take that third bullet point there, guys.
Yeah, let's go for it.
Sorry.
No, you're good. You're good. I was going over to read the chat.
All good.
Yeah, it's all pay-per-view and fight night events, and this is a strategic shift towards high-value live sports content, at least in Paramount's context. For the UFC, they were just offered enough money that they're comfortable jumping off and abandoning their pay-per-view model for the time being, and I dearly hope it does not return at the end of this contract. Emmett, to your point in chat, yeah, absolutely. I respect the hell out of the BJJ. I enjoy it. I've watched UFC BJJ. I go out of my way for it, but it's just I understand how the lack of appeal to some people. But anyway, yes, as I said before, this is a gigantic move for the UFC and for Paramount.
It's huge.
Yeah, both are abandoning their conventional business models to an extent.
Just for the future of the sport. There's a lot of guys right now, 15, 16, 17, becoming professionals now in their sport and figuring out what that structure on the business end is going to look like. So, this is huge for the whole industry. Will it stick? I hope so. At the end of the day, if it's a good business model, if it's making more money and someone's happy, it'll stay.
Yeah, absolutely. And yes, to your point, Lone Sofos, no more free sports. I think that kind of sums it up. We are, everything now is behind a paywall, is behind some subscription service. And we're going to get into a little more into this, and I'll go on my soapbox later on here. But yes, it is becoming progressively more difficult to watch sports, and this is actually kind of a breath of fresh air that suddenly it has become easier to watch this sport and cheaper. I don't know the last time that has happened with any sport at all whatsoever, and it manages to work out for all parties. And I think that this is a great deal for both parties.
Let me ask you something. You think a part, maybe it plays a role, but do you think a part of the lack of viewership with boxing in UFC is more to do with the lack of access to watching the sport on a regular basis?
Oh, I think so for sure. Yeah, absolutely. I think
that plays the largest role, because I'm kind of on the other end of the spectrum a little bit. I don't want to bring too much into it, but the WNBA, for example, people have always had access to these sports. What's the difference?
How do you mean?
In the terms of, we've always had access to watch WNBA games. Viewership has always been down. Is it directly tied to the barrier of being able to watch said sport? Pretty much what I'm getting at is UFC interesting enough, or is boxing, especially boxing, interesting enough to pull a large crowd?
I think I would say yes. And I think that if nothing else, this at least gives us the opportunity to find out.
Yeah. That's a great point.
Because unlike, the WNBA or any low viewership sport, like I think tennis probably has fairly low viewership, pulling something
100%.
out of my
I was thinking of bowling as well. Those other sports.
Sure. Swimming, whatever.
Right.
But yeah, I think that all of these things, the market has been tried and tested, and things need to shift within the leagues or whatever it may be to increase viewership. But in terms of boxing and UFC, that's never something that we've gotten a chance to look at. But I do definitely think that viewership will increase. The UFC averages 500,000 pay-per-view buys per fight. And that's just all the people who actually fork over the money.
Go ahead.
I was just going to say that I will say without giving too many details that I have been a UFC fan for some time and have never paid for a fight. And I think that there are many others in my demographic who have access to the same resources who are doing the same thing. So we're not just talking about 500,000 per fight. this could be upwards of 1-2 million people we're talking about.
No, 100%. And if you were in college with especially a group of guys, you guys figured out how to watch every single sport that was being played, especially on every single weekend. So we understand we had our workarounds on the pay-per-view anyways. It was time to change that model.
Yeah.
There's too much of a black market already, and they need to destroy the black market. It reminds me of the verifications on Instagram, for example. They destroyed that black market.
Sure.
Right? By now making it accessible for everybody else, take down the wall. Even the playing field now, that black market is completely destroyed. And it was kind of similar for these pay-per-view streaming services, because now somebody's out of business on the black market.
Yeah, no, absolutely. I agree. And and I said to you earlier, and I'll say again now, I will become a Paramount Plus subscriber because of this.
No, 100%.
And I never would have been before, unless I wanted to rewatch iCarly or something. There's no reason I ever would have gone out of my way to subscribe to Paramount Plus. I don't watch TV. I watch YouTube.
You know what's funny from a different perspective? I signed up for Paramount Plus for the first time over the last, I think, 12 to 24 months. And it was because I wanted to watch the Champions League. If we got anybody from the UK out here, or anybody in Germany, anywhere, wherever you might be, you notice that a lot of these games are now signing new deals with things like Paramount. Peacock is another one, but we're gonna actually jump into that topic on the next slide.
Yeah, absolutely. And Emmett, to your point, it is a niche sport. 1 million views is kind of nothing in the broader scheme of sports, but also, is it niche because it's been behind the paywall, or was it behind the paywall because it was niche?
I think both play a role. I mean, we will never be able to really. The question is, how much of a role did each of those variables play into it?
Absolutely, absolutely. It's tough. It's a tough relationship to.
That?
Yeah, and we're about to.
Yeah.
I mean, once they get it on Paramount, we're gonna see. What's going on, Big Deal? Happy to see you. Other streaming services. So the push for paid subscription streaming services into the market for sports is nothing new. Amazon Prime secured NFL, what is it? Thursday Night Football, straight up. I was going to say Thanksgiving Day games, but Thursday Night Football straight up from 2022 to 2033. So we'll be watching Thursday Night Football on Amazon Prime from here on out. Excellent deal for Amazon Prime, I might add. If I was going to target any of them, I think I would target Thursday Night Football. It always opens the week. It's a nice midweek thing. You get good viewership. And then, yes, obviously ESPN. They've bundled with Fox now. $39.99 a month offering launching in October, which I think is also probably going to wind up being a pretty profitable move for them. And they've locked in a $1.6 billion 5-year deal starting in 2026 with the WWE to stream events like WrestleMania and SummerSlam. You ever been into WWE? I haven't.
No, I got into WWE. I went to go visit my family down in Texas a long time ago. They were watching it, and I was hooked for the week. We left after that week and never watched it again. But the time I did, I mean, I was hooked. My cousins were watching. I was like, I thought it was real. I was arguing the fact that it was real.
It's interesting because I've never done anything to keep up with WWE, but it's like kind of become so merged with like the cultural zeitgeist or whatever that I just somehow know lots and lots of WWE fighters. I mean, I could name like 10 plus fighters probably.
Yeah.
Wrestlers.
What's funny with the WWE fights, have you heard of Banana Baseball? Anybody else hear Banana Baseball that's blowing up?
Yeah, the Savannah Bananas.
They're killing it, right?
Yeah.
WWE reminds me of that. The Harlem Globetrotters. It's almost like an entertainment / acting / business, but mixing it into the sport. Baseball's finally doing it. WWE was the first one around to that kind of shtick.
Yeah, it's true. And yeah, they've been doing it for forever. It feels like, since before we were born.
They've mastered the craft too, it looks like.
Absolutely. But then anyway, yes, Netflix also, Women's World Cup for 2027 and 2031. And additionally, they have a contract with the NFL to stream NFL Christmas Day games through, I believe, 2028. So, yeah, this is becoming increasingly more common, and I don't like it. I mean, it's just it just creates.
It's annoying.
It is annoying, and I think it would be fine if leagues would commit, like how I said with the EPL and Peacock. Like, I think that's fine. But when the NFL wants to sell their Christmas games to Netflix and their Thursday Night Football to Amazon, it starts to get to be too much. And I feel like at a point it has to hurt the growth of your sport. I
completely agree. I mean, you have to draw the fine line. It's like, where are we going to start sacrificing quality, sacrificing where we're sending our viewers for some extra dollars? It's like, when does it come to a point where we start sacrificing a little bit of this for a little bit more of this? And I feel, in my opinion, by outsourcing to all these different types of streaming services, you don't make it easier on the viewer.
Yeah, absolutely. And not even to mention that also all of these leagues offer their own subscriptions that you can get your NFL Sunday ticket, your MLB, I don't even know what it's called, MLB subscription for the year, NBA League Pass, all these things, and then you can't watch any of the games on.
Yeah,
which that's always been crazy to me. Like, NBA League Pass, one of the most worthless subscriptions that there is, straight up. I mean, like on a night with a slate of 10 games, you get 2 of them, and it's never. And then you have the stupid local blackouts. That's what frustrates me about MLB TV, is that you get pretty much all the games. They block you if there's an Apple TV game or anything nationally televised, but you get pretty much all the games. But you can't watch the team in your own city. You can't, like when I was living in Houston, you can't watch Astros games. I've never had problems watching the Reds, my team, because I've never lived in the same city since we've had the subscription. But yeah, if you're gonna offer a subscription, proprietary, the sport, you should be able to watch all the games.
100%.
And you can't. It's just mind-boggling to me.
Again, it's the money.
Absolutely, yeah. And there's obviously projections for all this, but this soapbox leads us into our third slide.
Some future implications. Last week we spoke a little bit about AI and the future implications. Let's talk about the implications for this new potential model. Well, we got bidding wars. I know a lot of the times bidding wars pretty much starts whenever we have any type of new model of some sort. Sports first strategy to boost subscriber growth. We got more bundles and hybrid pricing models emerging, which things are always going to get a little bit more competitive. People are going to get creative, produce new models, whatever the case might be. That's expected. fragmented viewing may frustrate fans. Wow, it's almost like our whole gripe about this in the last 5-10 minutes, or mine at least, was about the frustration on fragmented viewing. I mean, trying to go, I know sometimes I'll go on Google for some games just so I could see where they're streaming it.
Yes.
I'm like, okay, these 4 have it. And it's like, I've never had to, we're going back. You know, things are getting a little bit less convenient. As a kid growing up, I just had to literally click watch the game. There's a little bit more friction now. Lastly, we have global expansion through international sports rights. And I mean, we're just going to continue to see a little bit more of that, especially if this, and to the point made in chat, I mean, Dana got the deal, right, to make. Others are going to be watching, too, to see how it pans out, you know, to see if that's a structure they should, you know, take, if it's a new approach they want to try out. But I digress. And with that being said, I think fragmented viewing is going to be the most frustrating, as it already is right now.
Yes, that was also the point that I was going to draw attention to. And the funniest part about all of this is that the viewing is so fragmented, and especially with the NFL, you got to chase games all over the place, figure out where they're on and how to watch them. But if you go to these third-party sources that are, you know, streaming the games, you don't have to do any of that searching. Right. You just click on the 2 teams that are playing and click watch. So, yes, I just feel like as this happens, these people just continue to give further legs up to the piracy sites, right, and that we may actually see a gradual, like, decline in ratings. And it's not that viewership has gone anywhere. It's just that so many people are being outsourced. I mean, I remember during the playoffs, I saw a picture of LeBron James watching a game on Stream East. Like, are you kidding me? Yeah. Because he don't want to do it either. You don't want to figure out where he's got to watch these games and everything, and they make it so easy. So, yeah, it's just like when you have...
The thing is, they know this is an issue.
Oh, yeah, right. For sure. For sure, yes. I mean, you have to. It's impossible to be unaware of, and these sites get shut down all the time, and then a new one just pops up and takes over the traffic. Yeah. But
in terms of the fragmented viewership, right? It's like they probably understand. They probably understand this is an issue right now. And my kind of thing is it more so one of those things is you as a CEO, whoever's leading these pushes, recognize other CEOs are also probably frustrated and recognize the issue at hand. Is it one of those things of like, yo, who's going to act first?
Yeah.
Who's going to provide the solution for all of us, because we all see where this is going? I wonder if it's just kind of a game of chicken when it decides to change the industry, because you guys all know each other. So when are we going to see change with this fragmented viewership? Because it's such a small detail, but it is so frustrating.
I agree. I mean, I've been shouting for years, like, and this is not something I ever root for in any other industry, but somebody monopolize this. Please. Somebody create a monopoly on this. I mean, I would pay $250 a month if I was just able to be guaranteed to watch everything all the time at the highest quality, maybe more.
Yeah.
But because I think it costs more than that now if you wanted to get all of these different services going and be able to actually watch everything. So yeah, somebody monopolize this. Disney, buy the NFL or something. I mean, what do we got to do here? I don't know.
Yeah. No, I mean, we'll see what we get. I don't watch too much. I don't even watch too much TV as much anymore. If I ever turn on the TV, I ever turn on cable, it's because of news or I accidentally turned it to that channel.
Oh yeah, never. I mean, I don't have cable, and I never I have Hulu with live TV, which is how I get most things, and I do think that that's the best offering in the market right now in terms of holistic live television and live sports. But
you remember when cable had on demand? I remember Comcast. After a few years in, they started to have an on-demand button on the remotes they started producing. And I was like, this on-demand feature is really cool. You just go on, choose whatever you want to watch, and watch it on demand. And on-demand ended up being the streaming services. But I remember just looking back, like that was the first go-around in testing the proof of concept, watching whatever you want to watch when you want to watch it.
Yeah, absolutely. And then, and then Netflix evolves into what it is now, and yeah, it's just we are far from where we used to be with cable, where it was just, is the game on CBS? Okay, cool. I'll turn on CBS and watch it. It's just there's so many more steps now. It's gotten out of hand.
No, most definitely. Looking forward to these next seasons. We got a lot of preseason games going on out here. Shador and the Browns. They had a pretty solid preseason game the other day too. So I'm always going for the young dogs. So I'm excited for Travis Hunter, them down in Jacksonville. I hope they kill it. I hope I know what streaming service to watch them on this season. But I'm looking forward to that.
Yeah, no kidding. Yes, I'm very excited for football as well. I think the first few weeks of college football is some of the happiest times of the year for me. I would say used to be able to do that. It was called cable TV. Yes, precisely.
It's just full circle again, because you mentioned the idea. Like I would be, like if they just put this in a bundle, like I'm paying more, and it's like people think of those models already. Like, oh, I can create a bundle to where it's cheaper for everybody, and it's just funny because I feel like bundles is a solution to a problem. It's not like, oh, we're providing this cool thing. It's like, if we're looking at bundles, it's because there's an issue right now, or there's a problem right now that we're trying to address. So
yeah, I see a shout out to TiVo in chat. I do remember TiVo.
TiVo. Refresh my memory.
It was just like where you could record something that was on live and then watch it later. Like most people, everybody started calling it something different. But TiVo was the original name where you could say, I want to record tonight's episode of The Office, and then it would do it.
My dad was, I don't even know if he's watching, but my dad was such a proponent of recording stuff all the time. I never minded, right?
You record over one of those things one time, though, and
what's that?
I said suddenly you record something else or fill up the space or whatever.
No, quite literally. I know, literally, it's all filled up. But no, I remember. So growing up, soccer was like a religion with my family. My dad's from Jamaica. If you guys don't know, he's from Jamaica. Playing soccer was like a religion. Went to college to play soccer. But growing up, I remember I'd asked to go do something. He was like, "Did you watch a soccer game yet? Or did you go in the backyard and practice?" Before I would ask to do something. But anyways, long story short, we got into the habit of just recording every sports game. I hate watching recorded sports.
I do too.
Dad, I know what happened. I already know who won the game. So
got to do live sports. The only time recorded sports work is if I'm going to I know I'm going to be getting home like an hour after the game starts or something, and I'm able to watch it and slowly catch up and kind of put my phone away. I will do that from time to time, because it's still live enough. Mm-hmm. But yeah, to me, sports lose all their appeal as soon as it's not live anymore.
Look, all I'm saying is, and my brother can attest to this. One time we were running late and my dad wanted to record the Super Bowl. I said, "Dad, this is the one thing we can't record. I promise I'm going to know the results. I'm going to know who it is." He's like, "Just don't go on your phone." I was like, "I promise I'm going to know who won the results. Let's not record the Super Bowl." But I love my dad.
Something I recently learned that I think is interesting is that companies have yearly bidding wars to get their buttons on the smart TV remotes. I didn't know that was a thing.
You know, that's so funny. It's like selling sponsorship space.
It is.
And it's
limited. You literally are. And you give them the quick access buttons. And I'll tell you what, I accidentally press the HBO button on my TV all the time, and I don't even have HBO. And then it's like this annoying 10-second thing where I got to wait for it to boot so I can go back home. But yeah, people pay a lot of money to have one of those hot buttons on their remotes. I think that's an interesting thing. Sleepy Mocha, everyone wanted a la carte, and this is what we got. I was kind of one of those everyone's, and I will be the first to admit that I was wrong in the state that we're in now. But also, it's not really a la carte. Like when I have to have Amazon Prime and Netflix and Sunday Ticket and something else to be able to watch every NFL game in a season, that ain't a la carte. I wish I could just pay for the NFL and watch the NFL, but they don't make it that simple, and nobody does. Now MLB's got the Apple TV games. You got to have Apple TV to be able to watch those, and their commentators are horrible on Apple TV. The broadcast is good though. Try making a decoder box from Radio Shack.
Remember seeing Muhammad Ali fight on that service?
Had no idea about the buttons. Yeah, Sophos, big thing.
I mean, I'm so extremely curious to what they're selling their businesses on the buttons for.
I'm curious too, and I wonder how it even works. I mean, I guess you just get it for that make and model of
and then also
Roku TV or whatever.
What is their collaboration? What is their contract? Because I mean, that's a pretty big deal if they want to remove or switch companies that's sponsoring their remote, because you're manufacturing your hardware with their brand on it, which is completely different from a digital sponsorship. So I'm kind of curious of the logistics on that point now that you bring it up.
Well, yeah, I've always noticed throughout my life as well that it's just those buttons are so random. Every time you get a new TV, it's just 4 really random services. I actually still have
just 4 random services.
Yeah, I have an old smart TV that I don't have hung up anymore. It's just in my closet. But that remote has a button for Stars, Stars with a Z, which was a service that came and went in 2 years or whatever. But yeah, I guess they were doing their big marketing push right when that TV came.
Is Stars not related to HBO?
I don't know. I have no idea.
I don't know.
I don't know.
We'll see how we wrap. Anything else to add before we hop on out of here?
Need Palantir to go down tomorrow.
Yes. We will see what happens. United Airline absolutely popped off today. We still got some time on those contracts.
Yeah, airline sector as a whole, big move up. CPI data said airline prices were up.
I mean, especially after United Airlines had all that news and their bad earnings, I think a few weeks ago, to see them recover like that. Anyways, we'll see how the market opens up in the morning. Thanks for taking the time to hang out with us today. We will be back on Thursday with Gus and E for Risk of the Ward at 4:30 Central Time. Be sure to stay tuned with more segments coming on next, and we will catch you guys next time. Peace.